Okay, hi, hello everyone. So this is a financial accounting EO batch, paper number 6. Target of 70 plus marks. So in this EO batch, we are trying to cover 80% of syllabus. What is the meaning of 80% of syllabus, sir? So we are trying to cover in the day 1 of EO batch of single entry, NPO, BRS, capital and revenue and AS1. By the end of this day 1, we will get 21 plus 5, that is equal to 26 marks from the examination point of view. Then we are discussing the day 2 topics regarding bills of exchange, consignment, hire purchase and insurance claims. By the end of the day 2, you will get how many marks, ma? 21 marks. So from day 1, 26, from day 2, 21. So nearly 50 marks in your hand by the end of the day 2 syllabus coverage. Then we are going to discuss in the day 3 rectification of errors, provision for bad debts, departmental branch including AS11. By the end of this day, how many marks in your hand, ma? 21. So AS11 7 marks, from branch and departmental 7 marks, from rectification 7 marks. Totally how much, ma? 21 marks. So by the end of the day 3, you will get 60 plus marks in the financial accounting paper. How many marks? 60 plus. If you learn up to here perfectly also, you will get 60 plus marks in the financial accounting. Then after, we are going to discuss standards in the day 4 and partnership in the day 5. So in the partnership, we will cover admission, retirement, death, admission come retirement, death come retirement, and next one is called as dissolution and JLP calculations. Okay, now we are not going to cover the remaining topics. So because the financial accounting is a vast syllabus, within a few 5 days, we cannot cover the 100% syllabus. So this is the disclaimer. When come to the examination point of view, in the question number 2A, they can ask BRS and depreciation from the both of the topics. We'll get at least one question in the examination. Then in the 2B, rectification of errors, capital and revenue and bad debts. From these 3 topics, we'll get one question in the examination of question number 2B. Next, in the 3A, we'll get consignment or bill of exchange. From the both of the topics, we'll get one topic in the examination. And next one, when come to the bills of exchange topic, the accommodation bills is the most important topic. They will ask only from the accommodation bills point of view. Then, in the 3B, we will get hire purchase or leases. In the fourth question, we will get most important called as incomplete records. After that, if in case incomplete records is missed in the examination, then they will ask NPO concept. So please don't leave NPO, final accounts and incomplete records while going to the examination. So do not take the risk, because these 3 are easiest topics. Easily we can get 14 out of 14. So next one. In the 5th question, they will ask partnership. In 6A, branch or departmental one. In 6B, insurance claims. 7th question totally of standards. So the most important standards are AS1, AS10, AS11 and AS19 are the 4 most important topics, and AS12. From these 5 standards, they will ask, they are more focusing on the examination. And next, partnership theory and accounting basics, one question will ask in the 8B and 8C. This is the paper pattern regarding to the financial accounting. This paper pattern was the conclusion. So to get the conclusion, I have made the analysis regarding to the December 2024 and December 2023, as well as previous attempt called as December 20. What is the previous attempt? December 2024. I have observed the last 3 attempts papers and I come to the conclusion of this one. So most of the times the paper will get same pattern. So please don't worry. You can take the choices based on your observations. Okay, na guys. So this is the overall discussion about the paper pattern which was getting in the examination. So in the day 1, we are going to start with the chapter called as what, ma? Single entry. So from now onwards, we are going to discuss the single entry. So please be very focused in the single entry. Why, sir? Because in the single entry, we will get the basics. What are the basics regarding financial accounting ma, journal entries, ledger posting and trial balance preparation. These are the basics we can focus with the help of this single entry chapter. So before going to starting of the single entry, we need to know the following accounts. What are the accounts are? How to prepare the asset account, how to prepare the debtor account, how to prepare the creditor account, income account and expenditure account. Okay na guys, let us participate. We are going to discuss about the asset account, how to prepare the asset account, what are the items will come into the asset account. So first, in any particular account, while preparing the particular account, firstly we need to find out the opening balance and closing balance. Here asset is an debit balance or credit balance amma? We are having the modern approach. So I think you remember the modern approach, right? So asset is having a debit balance, liability is having a credit balance, expenditure is having a debit balance and income is having a credit balance. Okay sir, what is the meaning of debit balance and what is the meaning of credit balance sir? Debit balance means in a particular account, debit side is more than the credit side, then the account is called as what ma? Debit balance. So in a particular amount, credit side is more than the debit side means then that particular account is called as credit balance. Sir, we are not getting. I will take an example. So imagine this is a particular account. In this particular account, left hand side is called as debit record and right hand side is called as credit record. Imagine in the debit side we are having the 1,000 rupees. In the credit side we are having the 2,000 rupees. If you do the balance of this particular account, so what is the amount we need to note down in the total column? 2,000, 2,000. So what is the balancing figure? 1,000 will get on the credit side. Sorry, debit side. 1,000 will get on the debit side. So this account is showing debit balance or credit balance ama? Credit balance. How we are saying a credit balance ma? Because the credit side amount of 2,000 is more than the debit side amount of 1,000. So this particular account is having a debit balance or credit balance ama? Credit balance. So in vice versa means, what is the meaning of vice versa? In the debit side we are having the 2,000 and credit side we are having the 1,000. In that situation this account is showing the which balance? Debit balance. So to conclude, debit side is more than the credit side means then we will get the debit balance. Credit side is more than the debit side means then we will get the credit balance. So what is the meaning of this 1,000 ma? What is the meaning of this 1,000? Closing balance or opening balance? Closing balance. So while recording anything in the debit side, we will put the word called as what ma? 2. While recording anything in the credit side, we will put the word called as by. Okay, do you know? Yes or no? So we can write what is the closing balance means? C by D or B by D? Closing balance means C by D. Opening balance means B by D. So what we need to write here? 2 balance carried on. 2 balance carried on. That means for the credit balance, closing balance will be on the debit side. Closing balance will be on the debit side. For which balance ma? Credit balance. That means opening balance will be on the credit side. Opening balance will be on the credit side. I am repeating once again guys. Please be participate. So for the credit balance, opening balance will be on the credit side and closing balance will be on the debit side. In the same way, for the debit balance, opening balance will be on the debit side and closing balance will be on the credit side. So opening balance we will call it as B by D and closing balance we will call it as C by D. For debit balance, opening balance will be on the debit side. So that what we need to record, 2 balance brought down or by balance brought down? 2 balance brought down. And closing balance will be on the credit side. What we need to record, by balance carried on. Guys, are you getting it or not? In the same way, when come to the credit balance point of view, in the credit balance, opening balance will be on the credit side and closing balance will be on the debit side. So for the opening balance, what we need to write? By balance brought down and 2 balance carried on. Guys, are you getting it? This is the overall discussion about debit balance and credit balance. What is the meaning of debit balance? Debit balance means debit side is more than the credit side. What is the meaning of credit balance? Credit side is more than the debit side. The debit side opening balance will be on the debit side. What we need to write? 2 balance brought down. Okay, now for the debit balance, closing balance will be on the, what we will write? By balance carried on. When come to the credit balance, opening balance will be on the credit side. What we will write? Closing balance. These are the main rules and regulations while going to prepare any account. So to conclude, asset means which balance ma? Debit balance. Okay na. Liabilities are credit balance. Incomes and expenditures are debit balance. Sorry, income is credit balance. Expenditure is a credit. Expenditure is a debit balance. Income is a credit balance. Once again, asset debit balance. Expenditure debit balance. Income credit balance. Liabilities credit balance. Okay. Now, we have learned all the things. So, asset account. What is the starting point of the asset account? We are going to write the opening balance. Asset means debit balance or credit balance? Debit balance. So, that what we need to write? Two balance brought down. This is called as opening balance. When come to the asset account, closing balance will be on the credit side. What we will write? By balance carried on. So, this is the main rule we are going to discuss. We have already discussed. Just a minute. Next one, what are the transactions will be appeared in the which account, guys? Asset account. First one is called as purchase of asset. While purchasing the asset, what is the entry ma? Asset account debited to cash or bank account, or otherwise we can purchase asset on creditor. We cannot purchase the asset on creditor. We can purchase the asset on credit. In that situation, what is the entry, guys? Asset account debited to creditor account. Asset account debited to creditor account. So, asset debit balance increases, okay na, debit. Comes in na, goes out, comes in. So, when come to the real account point of view, asset comes in, so that what ma? Debit. So, when come to the same real account point of view, cash comes in na, goes out, goes out. So, that we are doing the credit. If you apply the modern approach, cash is also in an asset. Asset debit balance decreases credit. From the asset point of view, asset debit balance increases debit. So what is the entry, guys? Asset account debited to cash account. If you think the creditor point of view, creditor means asset liability. Credit balance or debit balance? Credit balance. Increases or decreases? Increases. While making repayment, the creditor value will be decreases. So here we are repaying or we are not repaying? We are not repaying. So that the creditor balance is increases. So that crediting. So what is the entry? Asset account debited to cash account. Asset account debited to cash account if you purchase the asset on the cash. Okay na. If you purchase the asset on the credit means what is the entry? Asset account debited to creditor account. That means we are preparing which account ma? Asset account. We are preparing which account, guys? Asset account. So in the asset account, we have to record on which side ma? So first one, what is the starting point? Two balance brought down. Opening balance or closing balance? Opening balance. Why we have recorded the two balance brought down on the debit side? Because asset having the debit balance, opening balance will be on the debit side and closing balance will be on the credit side. So what is the entry for the asset purchases? Asset account debited to cash account or asset account debited to creditor account. If you think the asset point of view, while posting into the ledger, okay na, asset in a particular journal entry, asset is debited or credited? Asset is debited. So that in the asset account, we need to record on the debit side or credit side? In the asset account, we need to record on the debit side. Why, sir? Why we are recording in the debit side? Because in a particular journal entry, what is the journal entry? Asset account debited to cash account or asset account debited to creditor account. In the both the entries, asset is debited or credited? Asset is debited. So that we need to record in the asset account which side? Debit side. Okay na, guys? Sir, why you are saying in a this much slow manner? Because we are learning the single entry. Okay na? With the help of the single entry, we are revising once again what ma? Basics. So, in the asset account, which side we need to record? Debit side. So, with the name of to cash or creditor account. Guys, are you getting it or not? To cash or creditor account. So, next one. What is the next journal entry, guys? Depreciation. What is the next one, ma? Depreciation. What is the meaning of depreciation? Depreciation means the value of diminishing of asset. Okay now, whether we use whether we are not going to use even though if you use or you not use, the value will be decreases. Okay now. So Depreciation is a non-cash expenditure. Depreciation is a non-cash expenditure. So expenditure means having which balance? Debit balance. All the expenditures or incomes are increases or decreases? Increases. In except some situations, purchase value will be decreases. We will discuss in some other class later point of time. So till now remember, all the expenditure and incomes are increases or decreases? Increases. So non-cash expenditure, depreciation, debit balance increases. What we need to do, ma? Debit. So debit balance increases means debit. Debit balance decreases means credit. What, ma? Debit balance increases means debit. Debit balance decreases means credit. In the same way, credit balance increases means credit. Credit balance decreases means debit. Sir, once again, debit balance increases debit, debit balance decreases credit. So credit balance increases credit and credit balance decreases debit. Okay na? So expenditure, debit balance increases, what we need to do? Debit. When come to the asset point of view, asset is a which balance? Debit balance. Increases or decreases? Decreases. So what is the meaning of depreciation? Value increases or value decreases? Value decreases. So asset debit balance decreases, what we need to do? Credit. So what is the entry, guys? Depreciation account debited to asset account. So in the asset account, in which side we need to record? So in a particular journal entry, asset is debited or credited? Credited. So that in the asset account, we need to record on the credit side. In the depreciation account, we need to record on the debit side. But we are preparing which account, guys? Asset account. So what we need to write? By depreciation. By depreciation. Next one is called as a sale of asset. We can sell the asset for cash or we can sell the asset for credit. So first we are going to see whether the asset sold on cash basis. So what are the two outcomes? Cash and asset are the two outcomes. Okay na, guys? Cash and asset are the two outcomes. So cash is an asset, debit balance increases or decreases? Increases. Comes in or goes out? Comes in. Comes in means increases, goes out means decreases. So increases means what we need to do? Debit. So asset means which balance? Debit balance. We are selling the asset means comes in or goes out? Goes out. So goes out means credit or debit? Credit. So what is the entry? Cash account debited to asset account. Cash account debited to asset account. If in case we are selling the asset on a credit basis, that means what are the two outcomes? Debtor and asset. So debtor, again what, ma? Asset, debit balance increases or decreases? Increases. While making the repayment of debtor value will be decreases. So until the repayment by the debtor value will be always increases or decreases? Increases. So we can discuss at which point of time debtor value decreases. We can discuss at the time of discussion of debtor account. Okay na, no problem. Okay, until now debtor value increases or decreases? Increases. So what is the entry? Debtor account debited to asset account. Asset comes in or goes out? Goes out. Goes out means increases or decreases? Decreases. So we know what is the entry for the cash sales? Cash account debited to asset account. What is the entry for the credit sales? Debtor account debited to asset account. So we are preparing the asset account or cash account? We are preparing the asset account. So in the asset account, we need to record on which side? Credit side. By the name called as what, ma? By cash account or by debtor account. By cash account or by debtor account. Okay na, guys? At the time of selling the particular asset, we may get profit or loss. We may get what, ma? Profit or loss. So what is the meaning of profit or loss, sir? Imagine we are having the book value of asset. What is the meaning of book value, sir? Book value means original value of asset minus depreciation. What is the book value, guys? Original value of asset minus depreciation. What is the meaning of original value of asset? Purchase of value of asset. Nothing but cost of asset plus direct expenditure. Plus what, ma? Direct expenditure. So capital expenditure. You know the meaning of capital expenditure. In that capital expenditure, we are having the second point. What is the second point, guys? Okay, na cost incurred to bring the asset into the current location or condition. Up to put to use or after put to use? Up to put to use. So taking an example of AC installation, we purchased the AC for 30,000 rupees. How much, ma? 30,000 rupees. So after purchasing a particular asset, okay, now we are incur the transportation expenditure of rupees 1,000. What is the meaning of rupees 1,000? Transportation expenditure. Okay, after that we can use directly AC or we need to install? We need to install. For the installation, I have incurred 4,000 rupees. What is the total value of asset? Only 30,000 or 30,000 plus 1,000 plus 4,000? 30,000 plus 1,000 plus 4,000. This 30,000 is called as a cost of asset. This 1,000 plus 400 is called as a capital expenditure. Capital expenditure. What is the accounting treatment for the capital expenditure? We need to add back to the particular asset. We need to add back to the particular asset. So what is the amount? Total amount is called as 35,000. This 35,000 is called as a original value of asset. This 35,000 is called as what ma? Original value of asset. From this 35,000, we are reducing 5,000 rupees of depreciation. Then we will get what ma? Book value of asset. Okay na? For the original value of asset, if you reduce the depreciation, then we will get what ma? Book value of asset. Okay na guys? So what is the book value? Book value means original value of asset minus depreciation. What is the meaning of original value of asset? Cost of asset plus capital expenditure which was incurred up to put to use or before? Up to put to use. So imagine we are having the book value of asset is equal to 1 lakh rupees. What is the amount of book value ma? 1 lakh. But we have sold the same asset. We have sold the same asset for 1,50,000. We have sold the same asset for how much ma? 1,50,000. That means we are getting a profit or we are getting a loss? We are getting a profit of rupees how much? 50,000. Guys, okay na? So, okay sir. Profit means nothing but nominal account or real account? Nominal account. At the end of the year, all the nominal accounts we need to transfer to P&L account. Yes sir, no ma? Transferring to P&L account. Profit means credit balance or debit balance? Profit means nothing but income. We will record on the credit side or we will record on the debit side? Credit side in a particular journal entry. Guys, are you getting a point or not? So what is the entry sir? So what is the book value ma? 1 lakh. We are sold for how much? 1,50,000. Imagine this is a cash sale. Imagine this is a cash sale of good asset ma? Asset. Can anyone in the class, can you say the journal entry for this? Okay guys, do you remember the I am preparing here in a small format. So what is the entry guys? First of all, the 3 outcomes are 2 outcomes? 3 outcomes. How many outcomes ma? 3 outcomes. First one is called as a cash, and second one is called as asset, and third one is called as a profit. First one cash, second one, third one asset. What is the book value of asset? 1 lakh. How much value we have sold? That means in the cash form we will receive 1,50,000 or 1 lakh? 1,50,000. Cash comes in or goes out? So increases or decreases? Debit balance or credit balance? So debit balance increases means debit. So in a particular journal entry, cash will be debited. So what is the entry ma? Cash account debit. Cash account debit, how much? 1.5 lakh. 1,50,000. Next one, 2 asset. 2 asset. How much ma? 1 lakh. Only 1 lakh. Why sir? Why we are recording only 1 lakh? What is the book value of asset? Only 1 lakh. So cash account debited to asset account. 1,50,000 and 1 lakh. Sir, what is the double entry rule? Debit must be always equal to credit. But tallied or not tallied? Not tallied. What is the 50,000 rupees meaning? Profit will be transferred to P&L account. Or I will say, okay, no problem. So I will write what ma? Profit. Profit on sale of asset. So this entry, this particular entry we need to post in which side ma? In the asset account. We need to post in what ma? Asset account. So please be very patient. This is a different scenario. Okay na? Please think from the asset point of view. What is the book value of asset? 1,50,000 or 1 lakh? 1 lakh. So what is the meaning of book value? Nothing but opening balance or closing balance? Opening value. Nothing but what ma? Opening value. In the asset account, opening value will be on which side? Debit side. So I can write like this. To balance brought down is equal to 1 lakh. To balance brought down is equal to how much ma? 1 lakh. We have sold the asset for how much rupees? 1,50,000. So in the credit side, I am recording by cash 1,50,000. Will you accept it or not? We have sold for asset how much ma? 1,50,000. Okay now. Please remember like this only. Okay na? In the asset account, opening balance will be on the debit side. What is the book value of asset? 1 lakh. What is the book value of asset? 1 lakh. Okay na? We are getting a profit or loss? We are getting a profit. For how much amount we have sold ma? 1,50,000. That means buy cash or 2 cash? Buy cash. What is the entry? Cash comes in na goes out? Cash comes in. Okay na? So that what we need to record? Sir, cash account debited to asset account only, yeah? Cash account debited to asset account. Okay now, if you think from the asset account point of view, asset is debited or credited? Credited. Okay now, in which side we need to record? Credit side. By cash we can record or we cannot record? We can record. But how much amount we need to record? Normally, as per journal principle or ledger principle, we need to record only 1 lakh. We need to record how much more? Only 1 lakh. But except in this situation, we are recording 1,50,000. Why sir? We are getting a profit or loss. We are getting what ma? Profit or loss. That profit or loss we should adjust in the asset account itself. We should adjust in the asset account itself. Are you getting the point or not? Normally how much amount we need to record? 1 lakh. Because cash account debited to asset account. After the beside the asset, how much value we have presented? Only 1 lakh. That means how much amount we need to post? Only 1 lakh. Even though I need to post only 1 lakh, how much amount I have posted? 1,50,000. Because that profit we need to adjust in which account ma? In the asset account itself. So that means we need to reduce 50,000. We need to increase 50,000. We need to reduce 50,000. We should not record 1,50,000. We should record only how much ma? 1 lakh. But we have recorded how much? 50,000. 1,50,000. That means I need to reduce the 50,000. I need to increase the 50,000. I need to reduce the 50,000. In order to reduce the 50,000, I need to record in the opposite side or same side? Opposite side. That means in the debit side, I will record like what ma? To P&L account. To P&L account. How much? 50,000. That means now how much amount I have recorded? 1 lakh. How much amount I have recorded ma? 1 lakh. Are you getting it or not ma? Okay na? Sir, normally I need to record only how much? 1 lakh. But I have recorded how much ma? 1,50,000. Because that 50,000 in order to adjust the profit, that one should be transferred to P&L account. That profit adjustment we have shown in which account ma? In the asset account itself. Okay na? Guys, are you getting it or not? I have recorded how much? 1,50,000. I need to record how much? 1 lakh. Why I am saying 1 lakh, sir? Because beside the asset account, how much amount we are having? Only 1 lakh. That means how much amount we need to record? 1 lakh. But how much amount we have recorded? 1,50,000. That means we have recorded the more amount or we have recorded the less amount? We have recorded the more amount. That means we need to decrease or we need to increase? We need to decrease. In order to decrease anything, we need to record opposite side or same side? Opposite. So we need to reduce the creditor, we need to reduce the debitor. We need to reduce the credit. That means in order to reduce the credit, we are recording on the debit side. Debit side how much ma? 50,000. What is the meaning of that 50,000 profit? We need to transfer to which account? P&L account. So in this way we need to post the profit on sale of asset. Guys, are you getting it or not? Now we are going to discuss the loss scenario. We are going to discuss what ma? Loss. Sir, here the book value of asset is equal to how much? 1 lakh. Book value of asset is how much ma? 1 lakh. What is the book value of asset? Meaning, formula for the book value of asset. Original value of asset minus depreciation. What is the meaning of original value of asset? Cost of asset plus capital expenditure up to put to use. Okay, next we have sold that particular asset for 75,000. What is the book value? 1 lakh. We have sold for how much ma? 75,000. That means we are getting a loss, we are getting a profit. Loss. We are getting a loss of rupees how much? 25,000. Okay na guys? Okay. What is the entry for this, sir? Cash account debit. How much? 75,000. We have received only 75,000 or 1 lakh? Okay. Asset comes in or goes out? Goes out. What is the book value of asset? 1 lakh. To asset account, how much I am recording ma? 1 lakh. The difference is 25,000 is called as loss. Loss on sale of asset. Now this particular entry we need to post into the asset account. How I need to post? So please see here. What is this one? Asset account. So asset is debited or credited? Asset is credited. That means which side we need to record? Credit side. By the name called as buy cash. How much? 75,000. And by P&L account how much? 25,000. this is simple. Okay na guys, loss is simple, but in order to understand the profit, we are doing, we are recording the more amount in the credit side, and then we are reducing the profit on the debit side. Okay na, loss is simple. This is called as contra entry, simple entry amma. This is called, sorry, compound entry, simple entry, compound entry. How to post the compound entry? Sir, asset is debited or credited? Credited. So that we need to record on the credit side. We are having two items in the debit side, we are having only one item. We are having two items. That means to cash account how much? 75,000. To loss should be transferred to P&L account. So by cash 75, by P&L account 25,000. So these are the items will be appeared in the asset account. Okay na, at the time of sale of asset we may get what ma? Profit. Profit will be appeared in the credit side or debit side? Debit side of asset account, but in the P&L account which side ma? Credit side. Loss will be appeared in the asset account credit side, but in the P&L account debit side. So this is the overall asset account. Is there any doubts? First we are going to start with the opening balance, to balance brought down, and closing balance, by balance carried on. Because asset is having which balance? Debit balance. For the debit balance, opening balance will be on the debit side and closing balance will be on the credit side. Next we are purchasing the asset. What is the entry? Asset account debited to cash account. Cash account or creditor account. So to cash or creditor account. What is the next entry ma? Depreciation. What is the entry for the depreciation? Depreciation account debited to asset account. So by depreciation or to depreciation? By depreciation. At the time of selling of asset we can get the profit or loss. What is the just entry for the sale of asset? We are receiving the cash. Asset comes in or goes out? Goes. So cash or debtor account debited to asset account. So in the asset account we need to record on which side ma? Credit side. By cash or debtor? By cash or debtor. So profit will be recorded on which side ma? Credit side. And loss will be recorded on which side? Debit side profit and credit side loss. This profit will be transferred to P&L account credit side. This loss will be transferred to P&L account debit side. This is the overall asset account. Okay na guys. Next one, debtor account. Next one what ma? Debtor. So debtor means again asset or liability? Asset. Which balance? Debit balance. Opening balance will be on the debit side. Closing balance will be on the debit side. For the opening balance what we need to write? Debit side no. So to balance brought down. Closing balance will be on the credit side. By balance carried on. To balance brought down, by balance carried on. What are the journal entries will be appeared in the which account ma? Debtor account. First one is called as credit sale or cash sale? Credit sale. What is the entry for the credit sales? Debtor asset debit balance increases debit. Cash income credit balance increases credit. So what is the entry? Debtor account debited to sales account. So next, sales returns. What is the meaning of sales returns? We are reducing the sales, we are increasing the sales. We are reducing the sales. That means we need to record opposite entry for the sales, same entry for the sales. Opposite entry. What is the opposite entry? Sales. But we need to write the sales returns. Okay na. Sales returns account debited to debtor account. Okay na. We are decreasing the sales so that we are reversing the entry called as debtor account debited to sales, but we should not write the sales, we should write what ma? Sales returns. So sales returns account debited to debtor account. Next, bad debts. What is the entry for the bad debt ma? In the four situations the debtor value will be decreases. How many situations sir? Four situations. Sales returns, bad debts, amount collected, amount paid? Amount collected from the debtor. Second one, fourth one is called as discount allowed. In these four situations debtor value will be decreases. In these four situations debtor value will be increases or decreases ama? Decreases. So okay, first one what ma? Bad debts. Bad debts is a loss or gain? Loss. Nothing but expenditure. Having which balance? Debit balance. Always increases or decreases? Increases. So kabatti em chestam? Sorry. Expenditure, debit balance, increases debit. Next, debtor value increases or decreases? Decreases. So debtor asset debit balance decreases credit. In how many situations debtor value will be decreases? Four situations. First one is called as sales returns. Second one is called as okay now. Third one discount allowed. Fourth one collection from debtors. Okay, now next there is a scenario called as bills receivable also. What ma? Bills receivable. Okay, what is the entry for the discount allowed? Discount allowed account debited to debtor account. Again, discount allowed is a loss to us. So loss nothing but expenditure. Debit balance increases debit. So debtor means what ma? Asset, debit balance decreases credit. So what is the entry? Discount allowed account debited to debtor account. Next one, collection from debtors means what ma? We can collect by way of cash or by way of check. So cash or bank account debited to debtor account. So cash or bank called as assets or liabilities are assets. Having which balance ma? Debit balance. Increases or decreases are? Increases. So cash or bank account debited to debtor account. So next one, bills receivable drawn on debtor. Bills receivable drawn on debtor. Why we are drawing the bills receivable ma? Because having security or not having security? Not having security. If in case debtor is not making the payment, we need a security in order to file a suit against him on the court. So we need a security. For that purpose, we are drawing a bill on a particular debtor. In the bills, at the time of bill drawn, the bills receivable value will be increases and debtor value will be decreases. So in the case of bill drawn also, debtor value will be increases or decreases, some decreases. I am repeating once again. At the time of bill drawn, which value will be increases? Bills receivable value will be increases. Once again, bills receivable is asset or liability? Asset. Which value will be decreases? Debtor value will be decreases. That means in how many situations debtor value will be decreases ma? 5 situations. Once again, first one I will repeat, okay na? So sales, returns, bad debts, collection from debtors, and fourth one is called as discount allowed, and fifth one is called as bills receivable drawn. In how many situations? 5 situations. Easily I can teach you the which account ma? Debtor account, without remembering the journal entries. How sir? Sir, debtor means asset or not? Asset. Okay na? Asset means which balance? Debit balance. So asset means which balance ma? Debit balance. In order to increase the debit balance, which side we need to record? In order to increase the debit balance, we need to record on the, that means in order to increase, I will record on the debit side. In order to decrease, I will record on the credit side. Okay na? Increases means debit, decreases means credit. So with the help of any situation, debtor balance increases means where we need to record? Debit side. Debtor balance decreases means where we need to record? Credit side. In how many situations debtor value will be decreases? 5 situations. What are they? First one is called as sales returns. Which side we need to record? Credit side. Which side we need to record ma? Credit side. Next one, bad debts. Decreases or increases? Decreases. We need to record on which side? Credit side. Next one, collection from debtors. Which side we need to record? Credit side. Next one, discount allowed. Which side we need to record? Next one, bill drawn. So easily, how many items will come in the credit side ma? 5 items. What are they? Buy sales returns, buy cash and bank, buy bad debts, buy discount allowed, buy bills receivable. Closing balance available on the credit side because it is a debit balance or credit balance? Because it is a debit balance. Are you getting the point or not? So easily, if in case debtor balance decreases means we need to record on the credit side. Why we are recording on the credit side ma? Because debtor means which balance? Debit balance. So debit balance increases means we need to record on which side? Debit side. Debit balance decreases means we need to record on which side ma? Credit side. For how many items the debtor value will be decreases? 5 items. Those 5 items I have recorded on the credit side. Easily. Without knowing the journal entry also we can prepare the debtor account. Are you getting the point or not? Okay. In which situation debtor value will be increases ma? At the time of sales. Which is sales? Credit sale. So I am recording on the credit side or debit side? Debit side. To sales. In the case of dishonor of bill drawn. In the case of dishonor of bill drawn, we need to cancel the bill, we need to increase the bill. Cancellation means decreasing the value or increasing the value? Decreasing the value. So in order to decrease the bills receivable value, I am recording on the debit side. I am recording on the debit side. But 2 bills receivable, buy bills receivable. 2 bills receivable. Nothing but honor or dishonor? In the case of honor, no entry. In the case of honor, nothing will be presented in the debtor account. Nothing will be presented in the debtor account. There is another point called as recovery of bad debts. Recovery of bad debts. What is the entry for the bad debts recovery? Nothing but cash or bank account debit. Why sir? Why we are recording on the debit side? Because cash here comes in or goes out? Comes in. So Next one is called as what ma? Bad debts recovered. Okay, now which item we will credit? Bad debts recovered. We should not credit the bad debts account or nothing debtor account. We should credit what ma? Bad debts recovered. At the time of bad debts recovered, no entry will be presented in the debtor account. Only these items will be presented in the debtor accounts. Except these items, no items will be presented in the debtor account. Are you getting point or not? So because of 5 reasons, debtor value will be decreases, so that we are recording on the credit side. Because of 2 reasons, debtor value will be increases. What are they? Credit sales and dishonor of a bills receivable. Guys, are you getting it or not? Now, what is the next one? Creditor account. Okay, na? So creditor means asset or liability, ama? Liability. Liability means which balance? Credit balance. Opening balance will be on the credit side. Closing balance will be on the debit side. That means for the opening balance, what we need to write? By balance brought down. For the closing balance, to balance carried on. Okay. Now I will ask one question. You need to answer. Sir, creditor account means nothing but liability. So creditor increases means which side we need to record? Creditor decreases means? Okay, na. In the 3 situations, the creditor value will be decreases. How many situations, ma? 3. What are they? Purchase returns, discount received, paid to creditors, payment made to creditors. In the 3 situations, creditor value will be increases or decreases? And another one called as bills payable. Another one called as what ma? Bills payable. In these 4 situations, creditor value increases or decreases? Decreases. That means where we need to record? Where we need to record ma? Debit side. Okay. In the case of purchase returns, what you will record? 2 purchase returns or by purchase returns? 2 purchase returns. Guys, are getting it or not? Creditor means liability. Liability means credit balance. If the creditor increases, we will record on the credit side. If the creditor decreases, we will record on the debit side. In how many situations creditor value will be decreases? 4 situations. First one, purchase return. What that means? What we will record? 2 purchase returns or by purchase returns? Next one, payment to creditors. Payment to creditors. That means 2 cashier bank or by cashier bank? 2 cashier bank. Next one, discount received or allowed? Discount received. 2 discount received or by discount received? Next one, bills payable. Next one, what ma? Bills payable. 2 bills payable or by bills payable? In the case of dishonor, by bills payable. In the case of dishonor, by bills payable. In the case of bill accepted, 2 bills payable. Okay, na guys. That means in which situation creditor value will be increases? 1 situation. Credit purchase or cash purchase? Credit purchase. So we will record 2 purchases or by purchase? By purchase. Super guys, excellent. So this is the overall account for the creditors account. In any situation creditor value decreases means we will record on the debit side. Debit side or credit side, ama? Debit side. Because creditor value, creditor means which balance, ma? Credit balance. So in any situation creditor value increases means credit side. Because of 4 situations creditor value will be decreases. What are they, ma? So purchase return. So 2 purchase returns, payment, 2 cash or bank, discount received, 2 discount received, 2 bills payable. In the case of dishonor, by bills payable. In 1 situation the creditor value increases. What are they? Purchases. So by purchases. So what is the entry for the purchase returns? Creditor account debited to purchase return. What is the entry for the cash payment to creditors? Creditor account debited to cash or bank account. What is the entry for the discount received? Creditor account debited to discount received. What is the entry for the bills payable? Creditor account debited to bills payable account. What is the entry for the dishonor of a bill? Bills payable account. Bills payable account debited to creditor. What is the entry for the credit purchases? Purchase account. And that's all. Okay, na? So now be focused on the income account and expenditure account, because these 2 accounts is helpful for not only for this chapter but also for the NPO. If you know these 2 accounts, you can do 2 chapters, weightage of what ma? 14 marks. So the main accounts are these only. Okay, na? Remaining asset account, debtor account, creditor account, we know na? We don't know na? We know already. So in the income account is a different perspective. Is not like a creditor account, is not like a what ma? Debtor account and asset account. This is a different perspective, both the income account and expenditure account. In the income account we are having the 3 scenarios. What are they, sir? Income received, income receivable, income received in advance. What are them? Income received, income receivable, income received in advance. After discussing the income account and expenditure account, I will give the break, no problem. Okay na? So next we can solve the questions regarding to the single entry, and next I will target to the NPO. Okay na? So these are the basics. If you know these basics, you will get 10 marks in the examination paper. You get how many marks ma? 10 marks, because we will get MCQs, 5 MCQs from the basics. How many MCQs? 5 MCQs. If you know these basics, how many marks you will get add on to the your previous marks, means 10 marks. Okay na? So what are the 3 items? Income received, income receivable, income received in advance. What is the entry for the income received? For example, we have received the commission. We have received the commission. What is the entry for the commission received? Cash account debited to commission. Cash asset debit balance increases or decreases? Increases. Because comes in or goes out? Comes in. So income means which balance? Credit balance. Increases or decreases? Increases. Always income and expenditure increases or decreases? Increases. In except such situations, I will explain you, no problem. Okay na? So what is the entry? Repeating once again. What is the entry ma? Cash account debited to income account. Okay na? So in the income account and expenditure account, we are not going to have the opening balances and closing balances. We are not going to have the opening balance and closing balance. Why sir? Because the income account and expenditure accounts, the balances are carried forward to the P&L account. Income account and expenditure account, the balance are carried forward to the P&L account. Because, okay now, so that we are transferring to one account to another account, so that we are not having the opening balances and closing balance. Remaining assets and liabilities and personal accounts, nothing but real accounts and personal account, will have the opening balances and the closing balances, because we will carry forward to the next year by way of transferring to the account statement. But we are transferring to the balance sheet statement. Okay na? We are transferring from account to statement, so that we should not close that particular entry. While going to transfer from one account to another account, we need to close the particular entry. Guys, are you getting it or not? So that means normally income means which balance ma? Income means which balance? Credit balance. If in case for the income, credit balance means opening balance presented, means what we need to write? By balance carried on or to balance brought down? By balance brought down. But we should write we should not write we should not write. Okay, if in case we are having the closing balance, means to balance carried on. We should not write the to balance carried on. We should write the word called as what ma? To P&L account. We should write the word called as what ma? To P&L. Guys, are you getting it or not? That means the closing balance of income will be transferred to which account ma? P&L account. So what we need to write? To P&L or to balance carried on? To P&L. Normally what we need to write? To balance. But the income account is a nominal or real? Nominal. So nominal account, in the place of closing balance, we need to write what ma? To balance brought down. That means in the expenditure account, in the expenditure account, by P&L account or to P&L account? By P&L. By P&L account. What is the entry for the income transferred to the P&L account? What is the entry for the income transferred to the P&L account? Income account debited to P&L account. Income account debited to P&L account. In the expenditure account, which side we will get? In the expenditure account, P&L account debited to expenditure. Guys, are getting it or not? Expenditure having which balance ma? Debit balance. Will have or will not have? Will not have. If in case having means to balance brought down. If in case closing balance means by balance carried on. But we should not write the by balance carried on. We need to transfer that balance to the P&L account. What is the entry? P&L account debited to expenditure account. So one thing we have clear, we have learned the closing balance transfers. Okay na? Income account transferred to the P&L account, and in the same way expenditure account transferred to the P&L account. You can remember like this also, guys. Imagine this is a P&L account. In the P&L account, debit side we will record expenditures and credit side will record incomes. So expenditure will be on the debit side, income will be on the credit side. What is the expenditure entry? P&L account debited to expenses account. What is the income account? Income account debited to P&L account. You can remember like this, or from P&L point of view, or we can remember from the income point of view or expenditure point of view. Once again, what is the entry for the income transferred to the P&L account? Income account debited to P&L account. What is the entry for the expenditure transferred to P&L account? Opening balances will be there or will not be there? Will not be there. Closing balance will be there or will not be there? Will be there, but we will transfer to the P&L account. Okay, now. So we are transferring to the P&L account so that we are not having the opening balances. So one thing is clear, I think so. So okay, we are discussing the income account. What is the first point, ma? Income received. What is the entry for the income received? Cash or bank account debited to income account. That means in the income account, which side we need to record? Cash or bank account debited to income account. So income is debited or credited? Credited. So that we need to record on the income account which side? Credit side. What we will record? By cash or bank. Normally in the NPO point of view, this amount will be presented in the account called as receipts and payments account. This amount only will be presented in the receipts and payments account. Okay, now. In the NPO point of view, we should not write the P&L account, we should write the word called as income and expenditure account. Are you getting the point or not? In the NPO chapter, we will transfer to P&L account, we will transfer to income and expenditure account. We will transfer to income and expenditure account. In the NPO chapter, what we will write here? Receipts and payments account. This amount will be presented in the receipts and payments account. This amount will be presented in the income and expenditure account. Guys, are you getting it or not? Okay, next we are having the two words. What are the two words, ma? Income receivable, income received in advance. These two scenarios are somewhat different. Okay, na? Okay. Income receivable means asset or liability? Asset or liability, ama? Asset. Okay. Asset means which balance? Debit balance. Opening balance will be on the debit side. Closing balance will be on the credit side. That means in the opening balance, to balance brought down. Closing balance, by balance carried on. So, what is the meaning of opening balance are? Related to previous year or related to current year? Related to previous year. That means income receivable during the previous year. What is the meaning of opening balance? Income receivable during the previous year. Okay, now normally they will give the question also. They will give the question. Income receivable for the current year means what, ma? Closing balance. Income receivable for the previous year means what, ma? Opening balance. Previous year means opening. Current year means closing. So for the opening balance, what we will write? To balance brought down, by balance brought down. To balance brought down. Okay, to balance brought down, we are recording the receivables in the bracket. And by balance carried on, we are recording the receivables in the bracket. Okay, now to balance brought down means what, ma? Nothing but. Sir, this is not an income. Okay, na? For the income perspective, we are not having any opening balances and closing balances. In the income account, we are having how many situations? 3 situations. Okay, now what are they? First one, income received. What is the entry for the income received? Cash or bank account debited to income account. For that purpose, we are recorded on the credit side. It was completed. Next, what is the scenario? Income receivable. Income receivable means asset or liability? Asset. In order to remember, we are remembering like this. In order to remember, we are remembering what, ma? To balance brought down and by balance carried on. To balance brought down means that income receivable for the current year or previous year. That income receivable for the previous year. By balance carried on means what, ma? The income receivable for the current year. Why you have recorded like this, sir? Why you have recorded like this? Sir, in the accounting we will follow. We are having how many methods, sir? 2 methods. Accrual method and cash method. Okay, now, but 99.99% we are following the accrual basis. What is the meaning of accrual basis? Anyone in the class? Whether received or receivable, paid or payable during the current year we will consider. Yes or no? Okay. Income receivable for the previous year we will consider. Income receivable for the previous year. That means that income receivable for the previous means not related to current year. We will consider, we will not consider. That means we need to reduce or we need to increase? We need to reduce. Income means which balance? Anything increases, which side we need to record? Credit side. Anything decreases, which side we need to record? Credit side, debit side. Anything income decreases means we will record on the debit side. Income increases means we will record on the credit side. So income receivable for the previous year, we should consider or we should not consider? That means what we need to do? We need to reduce or we need to increase? So that we are recording on the debit side. So that we are recording on the debit. If you want the logic means remember like this. So we don't want logics, we want only marks means what, ma? To balance brought down, by balance carried on. To balance brought down means previous year. By balance carried on means current year. Okay na guys? Okay. Receivable received in advance? Receivable received in advance? Okay. Next one, received in advance. Asset or liability? Asset or liability? Can you please explain why? Because it is a liability. Obligation. There is a obligation. Yes or no, ma? Imagine, please take example of BCCA. We are having how many levels? 3 levels. CMA, foundation, inter and final. But the most of the students will pay total fee in the foundation itself. Yes or no, ma? But here the BCCA having the obligation. BCCA is having the obligation to provide the goods or to provide the services. Sir. So this is called as a liability. This is called as liability. You have paid the prepaid. What, ma? You have paid the prepaid. Think from the organization point of view, BCCA. Imagine we are the BCCA means we have collected fees from the students. That one income or expenditure? Income. In advance or correct time? In advance. So that one is a liability. That one is a liability. For the liability, opening balance will be on the credit side and closing balance will be on the debit side. What we need to record? Buy balance brought down and to balance carried on. Okay, why you are recorded same like this scenario? Okay, now income. What is the meaning of brought down, ma? Income received in advance in the previous year, in the current year. Opening means previous year. Opening means what, ma? Previous year. Closing means current year. What is the meaning of this one? Income received during the previous year only. Advance or correct time? Advance. Advance means related to current year, related next year. Received during the previous year but related to current year. We should add or we should decrease? Add means which side we need to record? Credit side. Okay, now if you want logic, remember like this, or if you don't want logic means what, sir? Buy balance brought down, to balance carried on. Opening balance means previous year, closing balance means current year. So this is the overall information about what, ma? Income account. In the income account, we are not going to have the opening balance because we already transferred the income account in the previous year to the account called as P&L account. In the account called as what, ma? P&L account. So normally, if in case the income having the opening balance means will be on the credit side, what we will write? Buy balance brought down. Normally, if you are having the closing balance means what, ma? To balance carried on. But we should not write the word called as to balance carried on. We should write the word called as to P&L account. The same scenario, if you apply in the NPO chapter means instead of P&L account, we need to write what, ma? Income and expenditure account. Guys, are you getting the point or not? Okay. Next one, we are having the three situations. Income received, income receivable, income received in advance. Income received means during the current year, next year, current year. Related to current year. We need to increase or we need to decrease? Increase. Which side we need to record? Credit side. Okay, na. So credit side means what we will write, ma? By cash or bank. By cash or bank. Then come to the income receivable. Opening balance means previous year. Closing balance means current year. Anything related to previous year, we should consider or we should not consider? We should not consider. That means we need to increase or we need to decrease? We need to decrease. Income decreases means which side? Debit side. So to balance brought down, by balance carried on. When come to the advance point of view, income received during the previous year itself but related to current year. So that by balance brought down, to balance carried on. These are the informations. With the help of this, we can find out the closing balance will be transferred to the P&L account. Okay, now what is the balance figure we will get, ma? Closing balance. Easily we can transfer to the which account? P&L account. Guys, are you getting it or not? Okay, na? So now apply the same logic for the which account, ma? Expenditure account. In the expenditure account, we are having how many parts? Same 3 parts. Expenditure paid. Okay, na? Expenditure outstanding. That means what, ma? Payable, paid in advance. Payable, paid in advance. What is the entry for the expenditure paid? Okay, na? Expenditure paid account debited to cash or bank. In the expenditure account, which side we need to record? Debit side. So expenditure means which balance, ma? Debit balance. So if you want to increase the expenditure, which side we need to record? Debit side. Increases the means debit side. Decreases means credit side. Okay, now apply the same logic. Okay, outstanding means what, ma? Asset or liability? Liability. Outstanding means what, ma? Liability. Liability for the previous year. We should consider or we should not consider? We should not consider. That means which side we need to record? Credit side. Normally or otherwise what, ma? Liability means what is the opening balance? By balance brought down, to balance carried on. Liability means what, ma? By balance brought down, to balance carried on. Okay, na? Next one is called as what, ma? Paid in advance. Asset or liability? Expenditure paid in advance means asset. Asset opening balance will be on the debit side. To balance brought down, by balance carried on. The same logic. Okay, now related to previous year, we should consider or we should not consider? We should not consider. Paid in advance. Okay, now previous year paid in advance means related to current year, related to next year? Related to current year. That means we should increase or we need to decrease? increase, so that we are recording on the debit side. So that we are recording the current year on the credit side. So asset means to balance brought down, by balance carried on. Liability means by balance brought down, to balance carried on. There is a slight difference for the debtor account, creditor account in relation to what ma? Expenditure account and income account. Okay na? Did you get the point? Overall point. So these are the 5 accounts. What are the 5 accounts, guys? Asset account, debtor account. Okay, at the final point, final conclusion. So debit balance means opening balance will be on the debit side. What we will write? Credit balance means by balance carried on. By balance brought down. For the debit balance, closing balance will be on the what we will write? By balance. For the credit balance, closing balance will be on the to balance. Income account will have the opening balance. Okay, will be transferred to the P&L head. Which side we need to record? What we will write? What is the entry? Income account debited to P&L account. For the expenditure, in the expenditure we are having how many types? 3 types. Expenditure paid, expenditure outstanding, expenditure paid in advance. Paid will be recorded on the debit side to cash or bank. Outstanding means liability. What we need to write? By balance brought down, to balance carried down. Okay na? Paid in advance means asset. To balance brought down, by balance carried down. Okay, if you want logic means if you revise once again you will get the logic. Okay na? So we'll get ultimately what ma? The final closing balance will be transferred to P&L account. In order to find out that one, we need to prepare the account called as expenditure account and income account. Okay na? So if you want, still we are having the 20 minutes. We'll focus. Okay, please be very patient. Please take a break of 5 minutes. You can have a sip of water or you can chit chat with others. Okay. Okay, so after discussion of the ledgers, what are the ledgers we have discussed? Asset account, debtor account, creditor account, expenditure account and income account. We are going to discuss the single entry, the most important topics. From the last 3 attempts, we are getting how many marks ma? 14 marks. So 14 marks after discussing of 2 hours of discussion, we will get 14 marks in our hands. Okay, I will give the break after 1 hour, no problem. After 1 hour, I will give the break, no problem. Please be very patient. Half an hour. 30 minutes. Yeah. Okay, first of all, what is the meaning of single entry? Can anyone in the class? One side love means single. Both side acceptance means double. What love? Both sides means double entry system. One side love means single entry system. What is the difference between what is the difference between single entry and incomplete records? Same. What you are saying, same but triple X like that. Okay, I am asking the question to the Rakesh, the senior most executive of this class. Okay, Rakesh, what is the difference between single entry and incomplete records? Sir, the single entry means from the initial stage onwards, we are following only single entry method. What is the meaning of single entry, sir? Recording only one asset, two asset, one asset. We will see this single entry type of accounting in the buddy shops like Babai shop, we have canteen. Yeah. What we will record the Babai? He will record only the personal accounts. First, in the Babai book, there will be the account name called as Abi and Co. The balance will be like 10,000, 11,000. Okay, the most of the time they will spend in the canteen itself. They will eat again in the in the mess also. Okay, na? In Telugu we can say they will use Nyayam for the both hostel fee for and kind. Okay, not only in the canteen, if you observe in our villages, like if you observe the tiffin shops, today morally one bhaji, two idli, one dosa, one chutney. Okay, only one account means what ma? Single entry. Only one asset, both the assets are one asset. Single entry, we are having the three methods. First one is called as pure. Pure single entry, simple single entry, and quasi. You may get the MCQ. You may get the MCQ. What is the meaning of pure, sir? Pure means we will record only what ma? Personal account nature of transactions. We will record only what ma? Personal account nature of transactions. What is the meaning of simple? We will record the personal account nature of transactions and cash related transactions also. We will record the cash transactions and personal account transactions. What is the meaning of quasi? Quasi means we will record the personal account and we will maintain certain subsidiary books. Certain subsidiary books. What are the subsidiary books? Ma? Purchases, purchase returns, sales return. Okay, na? So pure means only personal account. Simple means personal account plus cash. Next one, quasi means what ma? Personal account plus some certain subsidiary books, including cash book. Okay. So single means what ma? Single entry means from the initial stage onwards, we are following the single entry or double entry or single entry. What is the meaning of incomplete records, sir? Incomplete records means initially we have followed the double entry. But due to some abnormal reasons. What are the abnormal reasons, sir? Like fire accident, like earthquake. Due to some abnormal reasons, we may lose the information related to the accounts. Nothing but we may lose the books of accounts. In certain situations, there will be a riot situations. What is the situations, ma? Riot means if you see one politician, if they have died means what they will do? They will give hangama like this. What ma? They will throw the stones. Okay na? They will come with the sticks on the shop. They will take whatever they want. It's called the abnormal situations or normal situations. The situation is called as riot. The situation is called as what ma? Riot. Riot means what ma? In Telugu we can say Gandravalam. Gandravalam means they will do whatever they want. Whatever they want. So in that situation, some person taken away the goods, some person taken away the books of accounts. Okay na? That taken away the books of accounts. Initially we have followed the double entry system or single entry system. Double entry system. Now that double entry situation, the double entry books is there or not there? Not there. Even though we need to prepare the financial statements. So that situation is called as what ma? Incomplete records. Single entry means what ma? From the initial stage onwards we are following only single entry. Incomplete records means what ma? Previously we have followed the double entry, but the information was missing due to abnormal reasons. Okay, I have told the meaning of the chapter. So in this chapter, the ultimate objective of this chapter is to find out the profit or loss. Ultimate of an organization. What is the accounting objective ma? To find out the profit or loss. And second one is called as what ma? Financial position. Okay, here also from this chapter, what is the main objective? To find out the profit or loss. In order to find out the profit or loss, in the single entry, we are having the two methods. In the same way like what ma? Branch. In the branch, dependent or independent? Dependent. We are having how many methods? Three methods. It's okay. Previously only we have discussed. What are the methods ma? Debtors method, stock and debtors method, and final accounts method. In the same way, here also we are having how many methods? Two methods. First one is called as capital comparison method, and second one is called as financial statements method. When we are going to follow the capital comparison method and when we are going to follow the financial statements method is the objective. In the question, they have provided the information related to prepare the trading account, P&L account and balance sheet. They will give the information what ma? You need to prepare the trading account, P&L account and balance sheet. Then we will follow the which method? Financial statements method. I will show you an example. Okay. If you observe this one, what is the question they were asking ma? Okay, what is the question? Requested to you prepare the trading account, profit and loss account and balance sheet. If the question having the information like this means we need to follow which method? Financial statement. Otherwise we need to follow the capital comparison method. Capital comparison method. Okay, what is the meaning of capital comparison method, sir? Okay, we know how to prepare the financial statements. What are the financial statements? Trading account, P&L account, and but the information, they will not give the trial balance. They will not give the trial balance. They give the sum of the information which the information presented in before us. Okay, now they will give information with using that information. We need to prepare the accounts, debtor account, creditor account, and next one income account, expenditure account. If you prepare that accounts, we'll get the some purchases information or closing balances, opening balances. With the help of information, we can prepare the financial statements. That thing we can discuss in which method, ma? Financial statement method. Now we are going to targeting what, ma? Capital comparison method. This method is also asked in one two attempts. In 1-2 attempt. It is the simplest method, difficult, simple. Both are simple only. Both are simple. If you know the asset account, debtor account, creditor account, income account, and expenditure account. So, what are the steps we need to follow in the capital comparison method, sir? First one is called as calculate the closing capital as well as opening capital by way of preparing what, ma? Statement of assets. What is the meaning of statement of assets, sir? Nothing but balance sheet. Estimated values will be there or exact values will be there. Estimated value. The values which they have given in the question, we need to take those values only. We should not change any values. We should not change any information. We should take the opening balances which they have given, and we should take the closing balances which they have given. So with the help of opening balances, we can find out the opening capital. We can find out the opening capital. With the help of closing information, we can find out the closing capital. What is the meaning of statement of assets? It is nothing but what, ma? It is all the assets and liabilities are recorded with the estimated values or exact values. Estimated value. All the assets and liabilities are recorded with the exact values. Okay, is called as a balance sheet. Next one. The main objective to identify the capital as on that date. If you prepare the opening statement of assets means we will get the opening capital. If you prepare the closing statement of assets means we will get the closing capital. How to prepare, sir? Same like balance sheet. In the liability side, what we will get, ma? Liabilities. In the asset side, what we will get, ma? Assets. We should change any values, or we should not change. We should not change any values which was given in the question. Which was given in the question. Even though they ask us to prepare they ask us to charge the depreciation also, but we should charge or we should not charge? We should not charge. They will give the opening balances in one column. They will give the closing balances in another column. We should take those values only. We should not change any values. If you solve one question, you will get the complete clarity. Please wait for 5 minutes. Please wait for 5 minutes. So what is the first step, ma? What is the first step? We need to prepare the opening statement of assets and closing statement of assets. Opening statement of assets for in order to find out the opening capital. Closing statement of assets to get the closing capital. Okay, now we need to know the capital situations. Okay, now what are the items we need to add it to the capital, and what are the items we need to reduce from the capital. Okay, now guys, our focus is on this one. Now I am showing the capital account. What is the account, ma? Capital account is somewhat worst handwriting. Please bear with me. Okay, capital means again what, ma? Asset or liability? Liability. Liability means which balance, ma? Credit balance. If anything we record on the credit side means capital value increases or decreases? Increases. If anything we record on the debit side means capital value will be decreases. Okay. The opening balance will be on the credit side or debit side, ma? Credit side. Closing balance will be on the debit side. So by balance brought down, to balance carried on. One thing it was clear? Okay. Next, we are having the situations like, I will say the situations. Additional capital. Because of the additional capital value increases or decreases? Increases. Okay, now which side we need to record? Anything the capital increases means we need to record on the credit side. Why? Credit balance. Why, ma? Credit balance. Credit balance increases means credit balance decreases means debit. Anything credit balance increases means credit side, and credit balance decreases means Debit side. So that means capital increases means credit side, capital decreases means debit side. Okay, simply we can write the posting. Okay na? So additional capital, because of additional capital, what they will do? Increases or decreases? Increases. Okay, what is the additional capital, sir? We may bring the cash, or we may bring the bank balance, or assets, or goods. What are the items we can bring? Cash, bank, assets, or goods. What we can write? Buy cash, or buy bank, or buy goods. Buy goods means nothing but purchase. Buy goods means nothing but what? Purchase, or buy assets, or buy assets. Why we are recording on the credit side? Capital value increases or decreases? Increases. Okay, next one. Interest on capital. Firstly, what is the meaning of interest on capital, sir? Firstly, capital means liability or asset? Liability. So, for example, if we take the loan from the outside parties, we need to repay na? We don't need to repay na? We need to repay. On that interest, we need to repay na? We don't need to repay na? We need to repay. If you're not repaying means what they will do? They will add it to the loan amount. And that on the interest they will charge again what? Interest. That one is called as what? Interest on interest. In Telugu we can say what? Chakravaddi, Boo Chakravaddi. Are you getting the point or not? That means interest on loan. So due to the interest on capital, the capital value increases or decreases? Increases. Which side I need to record? Credit side. What we will record? By interest on capital. I am not going to teach you the journal entries. I am going to teach you the account. That's all. If you know the account, you will get the entry. Okay, once again, capital means liability, having which balance? Credit balance. Anything if you record on the credit side, the capital value will be increases. Anything if you record on the debit side, the capital value will be decreases. So because of additional capital value will be increases. So what are the things we can bring in like additional capital? We can invest in the form of cash, we can invest in the form of bank balance, we can invest in the form of goods, and we can invest in the form of assets. So what we can write? In the form of cash means buy cash, in the form of check means buy bank, in the form of goods means buy purchase, in the form of asset means buy asset. Next, due to the interest on capital, increases or decreases? Increases. We will pay na? We have paid. We will pay in future. That means the capital value increases or decreases? Increases. So buy interest on capital or to interest on capital? Okay, next come to the drawings. Because of drawings, capital value increases or decreases? Decreases. Which side I need to record? What we will record? Two drawings. Okay, next one. Interest on drawings. Decreases or increases? Decreases. To interest on drawings or by interest on drawings? To interest on drawings. Okay, next one. Then we will get the balancing figure is called as net profit or net loss. Okay guys, if we are having the credit balance, we are having the credit balance of a particular capital account, we are getting a loss or profit. We are getting a not loss or net profit. Okay, simply, okay, we can discuss in another point of view. Okay, net profit we will add. Okay, now net loss we will decrease. Okay, anything we want to increase means which side I need to record? Credit side. By net profit or to net profit? By net profit. Anything if you want to decrease means debit side, to net loss. Okay, this is an account. But we need to prepare a statement. But we are going to start with the closing capital. Generally we will start with what? Opening capital. Okay, why we are preparing the statement? In order to find out the profit or loss. What is the main objective for the two methods? To find out the profit or loss. What is the first method? Capital comparison method. We are comparing the closing capital and opening capital. Then we will find out the profit. Profit. We are starting with the closing capital. We are starting with the opening capital. We are starting with the closing capital. Why, sir? If you start with the closing capital, if you get the positive result means it is called as a net profit. If you start with the closing capital means if you end up with the positive result means what? Profit. If you end up with the negative result means net loss. So that is favorable to the student only. Favorable for the student. Otherwise we can start with the opening balance. No problem, you can start. But we are getting a positive result means net loss. If you are getting a negative result means net profit. Are you getting the point or not? Yes, sir. Okay, we are starting with the closing, opening, closing. Okay, closing means buy balance carried on, to balance brought down. Buy balance carried on, to balance brought down. By balance carried on. We are starting with this, which closing balance. To balance carried on. Okay. We are starting with the to balance carried on. So we are starting with here now, so that anything presented on the debit side means what we will do? Add. Okay, now so that we are adding the two things. What are the two things we will add, ma? Drawings and interest on drawings. Okay, now I am saying the logic, otherwise you can remember the statement, no problem. Okay, now guys. So generally drawings we will do reduce, but we are starting with the closing balance, we are starting with the opening balance. We are starting with the closing balance. Closing balance presented on which side? Debit side. And what are the items are presented on the debit side means what we will do? Add. What we will do, ma? Add. Okay, that means we will add the drawings, we will add the interest on drawings. We will reduce what, ma? We will reduce the additional capital and we will reduce the interest on capital. We will reduce the additional capital and we will reduce the interest on capital. And again we will reduce the opening capital. Then we will get the net profit or loss. Positive means net profit, negative means net loss. Sir, are you understand or not? Okay, now we are starting with which balance, ma? Closing balance. Closing balance should be on the debit side. What are the items already presented in the debit side? Drawings, interest on drawing. What we will do? Add. What we will do, ma? Add. What we will reduce? Additional capital, interest on capital and opening balance. Additional capital, interest on capital and opening balance. If you reduce these things, we will get a result. The end result, we are getting a positive means net profit. We are getting a negative means net loss. Or otherwise, if you want, you can start with the opening balance. In that situation, what we will do, ma? We will add interest, additional capital, we will add interest on capital, but we will reduce drawings, we will reduce interest on drawings, we will reduce closing capital. At that point of time, we are getting a result of positive means net loss, result of negative means net profit. But generally in the outside scenario, we will follow what, ma? We will start with the closing capital. We will start with the closing capital. So that is the statement is available in the concept book as well. So what is the statement, ma? If you see the statement, okay, na? Closing capital and add back what, ma? Drawings. Please rectify this one. This is not a capital. Interest on drawings. Next one, minus additional capital, minus opening capital, minus interest on capital. Get the positive means what, ma? Net profit. Negative means what, ma? Net loss. So these are the three steps we need to follow. What are the three steps, ma? Opening statement of affairs, closing statement of affairs and statement of calculation of profit or loss during the year. Okay, now we need to prepare the what, ma? Statement of profit or loss during the year. We need to put the heading called as what, ma? Statement of profit or loss. Statement of profit or loss. In that we will calculate the profit or loss during the year. Okay, now in certain situations, they will give the some other information related to indirect expenditure. Indirect expenditure. At that point of time, we will take this profit as a gross profit. We will take what, ma? This profit as a gross profit. Sometimes they will give what, ma? Indirect expenditures and indirect incomes information. What are there? Indirect expenditure and indirect incomes related information. At that point of time, this profit is called as what, ma? Gross profit. This loss is called as what, ma? Gross loss. So expenditure what we will do? Minus. Incomes what we will do? Add. Then we will get the net profit or loss. So these are the steps we need to follow while going to calculate the profit or loss of an organization. In which method, ma? Capital comparison method. We are starting with the closing capital, we are starting with the opening capital. We are starting with the closing capital. So closing capital, drawings add, interest on drawings add, additional capital minus, interest on capital minus, opening capital minus. Then we will get the result. That result is called as positive means net profit, negative means net loss. For sometimes they will give the information related to what, ma? Indirect expenditures and indirect incomes. At that situation, this profit is called as gross profit or gross loss. Indirect expenditure we will reduce from the gross profit. Indirect incomes we will add it to the gross profit. Are you getting the point or not? So based on this, we are going to solve one question. Okay, now we are having how many questions, sir? We are having 4 questions related to this method. How many questions, ma? 4. Question number 1, 2, 3 and question number 11. 1, 2, 3 and 11. I am going to solve question number 3. For your sake, you need to solve question number 11, that's all. No need to solve question number 1 and 2. No need to solve question number 1 and 2 of this chapter. Once again, what are the questions we need to solve, ma? I will discuss question number 3. You need to solve question number 4. No need to solve question number 1 and 2 of related to this model. So please open the workbook. Okay na? Within 10 minutes we can go, no problem. Okay na? Guys, let's start. Okay, no problem. I am thinking today's syllabus will complete it or not. So, okay, what is the question, ma? Question number 3, page number 187. The financial accounting workbook, which was given by what, ma? BCCA, which was brought to you by what, ma? BCCA, prepared by Bhanu Vemendra. Thank you. The following information is available from the Mr. Shashi, who maintain the books of accounts on single entry system. They only said the hint point, what, ma? Single entry system. So they have given the information. First one is called as particulars on 1/4/2021 and 31st March 2022. 1/4 means starting, ending, amma, starting. That means this information related to previous year, current year, previous year. This information related to current year. They have given information related to assets and liabilities. Assets will be recorded on the asset side, liabilities will be on the liability side. So there is a difference between the assets and liabilities. Then we will get the difference called as capital. We need to prepare in a statement format. What is the statement, ma? Statement of assets, balance sheet, statement of assets. Because we are recording estimated values, exact values, estimated. That means we should not change anything, or we should change. We should not change anything. Okay, they have given the information, what, ma? 20,000. We should take the same 20,000, we should change. We should change. Okay, then we'll get what, ma? Opening statement of opening capital and closing capital. If you see here, statement of assets. Okay, na? The same statement of assets. This column is called as previous year. This column is called as current year. Okay, what is the column? 1/4/2022, ma? 2021. This one is called as 31st March 2022. So 1/4/2021 and 31st March 2022. Okay, na, guys? Okay. Liability assets are recorded on which side? Asset side. Nothing but right hand side or left hand side, amma? Right hand side. So if you see here, they did not change even one amount also. What is the cash and bank balance? 20,000 and 21,000. So here also 20,000, 21,000. The same amounts. Next one, debtor value 17,000, 25,000. Here also how much more? 17,000, 25,000. Next one, stock 40,000, 60,000. Here also what more? 40, 60. Next to furniture 29,000, 29,000. Here also how much? 29,000, 29,000. It's the same amounts we need to take. Even though in the question they have given the charge of depreciation also, we should not charge the depreciation. We should not charge the depreciation. Same amount of 29,000. Here also how much amount we need to take, ma? 29,000. We should change the value, sir. We should not change the value, sir. We should not change the value. Even one value related to current year or related to previous year, we should not change. Guys, are you getting? So if you take the same amounts, then we will get the what, ma? Opening capital of what? 44,000. Closing capital of 83,000. Okay, na, guys? Opening capital how much? 44. Why we are calling it opening capital? Previous year. Previous year closing balance will be the current year opening balance. And year ended balance is how much, ma? 83,000. In the statement, we are starting with the closing capital or opening capital? Closing capital. So where is the statement, ma? Here they did not given the statement. We can prepare the statement type also. We can prepare the statement. So what is the statement starting point? Closing capital. How much, ma? 83,000. How much? 83. For this opening capital, we will reduce or we will increase? opening capital will be reduced, additional capital will be reduced, interest on capital we will reduce, drawings we will add, interest on drawings we will add. So reduce how much? 44,000. Guys are getting a, so up to now we are going to read the some other information which was provided in the question. So what is the information presented in the question, ma? Mr. Sesi withdraws 5,000 from the business every month for meeting her household expenses. Why we are withdrawing the expenditure, ma? For business purpose or personal purpose? Personal purpose. So that it is called as a drawings. Per month how much? 5,000. Per annum 60,000. Per annum how much, ma? 60. So drawings, what we need to do? Add. So add back drawings. Add back what, ma? Drawings. Next one, we are doing the another point. During the year, she sold investments held by her privately of rupees how much? 35,000 and invested the amount in her business. Okay. Sir, here she is having some other private property. He has sold that investment. That amount is putting into the business in the form of additional capital. What we need to do the additional capital? Okay, na? What, ma? Minus or plus? Minus. How much? 35,000. Okay, next one. Next point I am going to read. So at the end of the year 21-22, it was found that the full year interest on loan from Mrs. Sesi has not been paid. We have paid the interest on loan, we have not paid the interest on loan. Not paid the interest on loan. Okay, na? So interest on loan, what is the entry? So, okay, if you don't know the entry, no problem. How to calculate the interest on loan, ma? 10% loan or 13% loan? 10%. So 30,000 into 10% is how much? 3,000. Okay, related to current year, related to next year? Related to current year. We should show as an expenditure, we should not show na. We should show as an expenditure. Already we are having the interest means we will add back to the interest. Already we are having the interest means what we will do, ma? We will add back the interest. Otherwise, we will not going to add. Okay, nothing but expenditure, gain, expenditure. What we need to do? Reduce from the gross profit. We need to reduce from the gross profit. First of all, we need to find out the gross profit. First of all, we need to find out the gross. In this information, we are having the indirect expenditure, direct expenditure, indirect expenditure. So put the hold of rupees how much, ma? 3,000 or 30,000? 3,000. So next one, depreciation, how much? 10% is, it was to be provided on furniture for the full year. What is the furniture value, ma? 29,000 into 10% is 2,900. Again, direct expenditure, indirect expenditure. Indirect expenditure. From which amount we need to reduce? Gross profit. We have find out the gross profit. No, we are having the still another information we are searching. Okay, na? So next one, 5% of profits ascertained before charging the search. Okay. We are having the shop assistant. We are having what, ma? Shop assistant. We need to give the share of 5% of profits ascertained before charging such share. Okay, we need to give the profit on the share. Profit to the share of to the assistant. Okay. Now we can find out what, ma? Gross profit. There is no another information available in this question. We are having only what, ma? Closing capital, opening capital, drawings and additional capital. There is no information related to interest on drawings and interest on capital. Then we will get what, ma? Gross profit and net profit. Gross profit. How much? 64,000. From this we need to reduce the interest on loan and depreciation. Reduce the interest on loan, ma? How much? 3,000. Reduce the depreciation, how much? 2,900. Both are expenditures or income? Expenditure. So that we are reducing. Then what we will get, ma? 58,100. From this amount we need to give the commission. How much? Before charging sir, here before or after? 5% of the profit ascertained before or after, amma? Before. That means both the bases are equal or unequal? Both the bases are equal. This profit is also called as before charging the commission. This profit is also called as what, ma? Before charging. The percentage is also given on before charging or after charging? Before charge. So that means both the bases are equal or unequal? Equal. Then we can calculate directly by adding what, ma? By multiplying the 5%. What is the amount? 2,905. If you reduce the amount, then we will get the ultimate net profit. 55,195. Guys, are you getting the point or not? Sir, we can prepare the statement, no problem. We can prepare the statement. But in this question, they have prepared the what ma, same like trading and P&L account they have prepared. We can prepare what ma, we can prepare the statement. What is the statement? Statement of P&L. We have started with the closing capital, we have reduced the opening capital, we have reduced the additional capital, we added the drawings, then we have got the gross profit and net profit. Gross profit, from there onwards we have reduced the interest on loan, depreciation, and we have charged the commission. Sir, both the bases are equal or unequal? Equal. If in case in the question they have given the after charging, means what we need to do? After charging means that 5% we need to charge on after, means what we have to do? 5% on after. 5% on after. That means after is equal to 100 or before equal to 100? After equal to 100. We know the one formula, right? What is the formula ma? After plus commission is equal to what ma? Before. After plus commission is equal to what ma? Before. Before is the more amount, after is the less amount. We already discussed. Before is the more amount, after is the less amount. So after is equal to 100, before equal to 100. After. If in case in the question they have given what ma? 5% on after charging or before charging? After. So then we will do after is equal to 100. Commission is equal to how much ma? 5. That is equal to how much? 105. That is equal to how much ma? 105. At that point of time, 58,100 is equal to how much? 105. 58,500 is equal to how much ma? 105. So 58,100 into 5 divided by 105. Into 5 divided by 105. How sir? 58,100 is equal to 105. Then what is the amount for the 5? That means we need to do the cross multiplication. 58,100 into 5 divided by 105. What is the amount? Okay, na, did you get the point or not ma? Sometimes they can ask like that also. Okay na? So after means what ma? We need to assume after is equal to 100. We know the formula of after plus commission is equal to before. After plus commission is equal to before. So this is the overall discussion. Now you can solve the which question ma? Question number 11 on your own. Okay na? We should not change the values. Please remember the most important point is we should not change the values which was given in the question. The most important points. So generally the students will do mistakes what ma? They have given the depreciation. Okay na? They will write 29,000 on the opening balance, but they will reduce the depreciation from the closing balance. We should do like that. We should not do like that. We should follow the same amounts. We should take the same amounts which was given in the question. If you apply the adjustments given in the question, then you will get the wrong answer. We should not make any adjustments from the given values. We should make we should not make We should not make. That adjustments we should consider for the, in order to find out the net profit or loss. That adjustments we need to consider for what ma? Net profit or loss. That adjustments we should not consider for calculation of opening capital and closing capital. So this is the final conclusion. In this we have discussed the method called as what ma? Capital conversion method. So after the break we can discuss what ma? Financial statements method. So totally we have discussed 6 accounts. How many accounts ma? 6 accounts. So we are starting with the closing capital. Why we are adding, why we are reducing also we have discussed. If you want to know the logic, means remember the logic, otherwise you know what we have to do. Okay na? So thank you. We can meet after the break. Okay, next we are going to discuss about the question number 11. The same model regarding to the previous one. What is the method? Capital conversion method. In this question, what is the question ma? If you read, a retail trader had not kept the proper books of accounts from the details given below. You need to require to prepare the profit and loss account for the year ended 31st March 2018. So we need to prepare the profit and loss account. So directly we need to prepare the profit and loss account, means what is the starting point of P&L account? Gross profit. What is the starting point of P&L account ma? Gross profit. First of all we need to find out the gross profit. How we will get? Statement of profit and loss. Okay, now we need to prepare the statement of profit and loss. We need to start with the closing capital or opening capital? Closing capital. How we will get the closing capital? By considering the 31st March 2018 information, 1st April 2017 information, 31st March 2018 information. So stock in trade asset or liability ama? Asset. We will record on the asset side. Sundry creditors liability. We will record on the liability side. Sundry debtors asset. Cash in hand asset. Bank overdraft liability. Bills receivable asset. Furniture and fittings asset. Motor van, asset. Next one is called as bank balance. This is also an asset. Okay, now straight away we can prepare like previous method. In the previous question, they have prepared the opening statement of affairs and closing statement of affairs in same account or different account? Same account. Okay, now did you remember the format? What is the format? Liabilities, previous year, current year, and in the same way, assets, previous year and current year. Guys, are you getting the point or not? Okay, if you prepare like this, you can prepare like that or like this, no problem. Do you want, we can prepare the opening statement of affairs separately and closing statement of affairs separately. Before adjustments or after adjustment? Always we need to prepare the before adjustments which was given below. Guys, are you getting it or not? Then we'll get the opening capital. How much ma? 12,950. How did we get? 250 plus 11,200 plus 16,000. 250 plus 11,200 plus 16,000 plus 16,700 plus 1,500 plus 1,900. What is the total amount? 47,550 minus 15,400 and minus 19,200. Then we will get the value how much ma? 12,950. What is the meaning of 12,950? Capital. Opening capital or closing capital? Opening capital. In the same way we need to prepare the closing statement of affairs. Then we will get the closing capital or opening capital? Closing capital. How much? 20,300. We need to start with the opening capital or closing capital? Closing capital. So closing capital how much? 20,300. After that, what are the adjustments we need to do? Drawings means we will add or we will reduce? Add. Which side it was presented? Debit side. Next, interest on drawings, add. Next one, interest on capital, less. Additional capital, less. Opening capital, less. Then we will get the gross profit or gross loss? Gross profit or gross loss. If you get the positive result, then we will get the gross profit. If you get the negative result, then we will get the gross loss. So in the same way, we are having the drawings amounts to how much? 2,400. Where it was given ma? It was given in the additional points. Drawings during the year per month. During the year amounts to how much ma? 2,400. That means for the whole year, how much? 2,400. We should not multiply with the 2,400 into 12. We can, in the before sum we have multiplied. Why ma? Because per month or per annum? Per month. They are given per month how much? 12,000. Per month how much ma? 6,000. 6,000 into 12, 60,000. There we have multiplied because they have given information related to per month. But here information related to per annum or per month? Per annum. So that we should not multiply, we should multiply. We should not multiply with the 12 months. So directly we need to take how much? 2,400. So drawings, what we need to do? We need to add or we need to less? We need to add. So that we have added how much ma? 2,400. What is the statement? Statement of profit or loss for the year end the 31st March 2018. The same heading we need to put in the examination also. Okay now. Even though if you do the small mistakes, they will reduce the half mark. They will reduce the half mark. Half mark is not a matter. Not a matter. How many questions we will write totally? In the second question we will write 2 questions. In the third question 2 questions. In the fourth question 1. In the fifth question 1. That means how many questions ma? 6. 6 plus 2, 7, 8. Nearly we are going to write 9 questions. 9 halves. 4.5. 4.5 into 8. 36 marks. That means not for single subject ma, for total 8 subjects. If you get 185, why will you get the 185? Because of silly mistakes. If you get the grand total of 185 means what you have done ma, you did not put the headings, rupee symbol, you did not put the particulars column amount, you are not going to draw the accounts. Formats also you are drawing you are not drawing. While checking the weekend examination papers, which was written by your juniors, I think so, they will not put the words like particulars, they will not keep the word like rupee symbol, they will just write AMT, that's all. What we need to write ma? No need to write amount also, just keep the rupee symbol. Just keep the rupee symbol. You need to write the debit record and credit record. You need to write the headings. What you are doing, for what thing you are doing, for what purpose you are preparing the account. You need to write the heading or not. Otherwise we will understand, we are not going to understand. We are not going to understand. We should avoid the words like what ma, 20L like that. For example, 20 lakhs means how did we write? 20 and 5 zeros we need to put. Yes or no? But they will keep what, how they will know? 20L, 20K, 1K, they will put like that. For total also they will not draw two lines. Imagine what how we have to record the total like this na. They will put just total like this, that's all. We need to understand that one is a total from the particular account. If you do like this, they will reduce how many marks? Half mark. Simply half mark means how many marks we will nearly 30 marks from the grand total. If you reduce means we will end up with the failed result or pass result, end up with a failing of result. So please be very careful while presenting your examination. Okay na? Okay. Next one. We are reducing the debtors. We have got what ma? 22,700. Sorry, we added the debtors. We added the drawings. Then we will get amount of how much ma? 22,700. What is the further information they have given? Opening capital. What is the amount of opening capital? 12,950. We need to reduce or we need to increase? Reduce. What is the result we are getting? Minus. So what is the result ma? 9750. Positive result or negative result? Positive. Gross profit or net loss? Gross profit. So where we need to record in the gross profit of P&L account? Debit side or credit side? Debit side or credit side? Credit side. Okay. We are having the further information. What is the further information we are having? Depreciation. How much? 10%. What is the asset value? 1500. 1500 into 10% how much? 150. Where we will record? Debit side or credit side? Debit side. Bad debts how much? 600. We should not follow like this. We need to prepare the which account ma? Provision for bad debts account. Do you know the provision for bad debts account? Yes sir. Okay. What is the starting point? T shape. Rakesh, where he is? Okay, I am going to discuss provision for bad debts concept right here. Okay na? Nearly how many marks we will get from provision for bad debts? 5 marks. Okay, I am explaining here itself. I am not going to explain this concept further classes. Okay na guys? What is the concept name? Provision for bad debts. Provision for bad debts. Okay. Provision for bad debts account we are preparing. Which account we are preparing? Provision for bad debts account. Already we have discussed so many times in the final account chapter, and we are having a separate concept related to provision for bad debts also. Okay. So first of all, we are going to discuss the provision for bad debts account, having which shape ma? T shape. As Rakesh said, it is a T shape. Left hand side is called as debit record, right hand side is called as credit record. So normally we are having the opening balances and closing balances. Provision is having which balance? Credit balance. Why? Liability. Who said liability? Contra asset account. It is an account called as what ma? Contra asset account. Okay, we are having normally which balance? Credit balance. Credit balance means opening balance will be on the credit side. By balance brought down or to balance brought down? By balance brought down. This will be given information in which where ma? Trial balance. Okay, now the opening balance will be given in the trial balance. We need to calculate. Will be given in the trial balance. So this will be given in the trial balance normally in the question. And we need to find out what ma? Closing balance. To balance brought down or carried down? Carried down. We need to calculate. We need to calculate the closing balance. They will give the percentage. Okay now. The percentage we need to apply on the debtor or creditor. On the debtor we need to apply the percentage. So in the same way, in the question also they have given, where is it one? What is the amount of percentage we need to calculate? 5% on doubtful debts. So where we need to apply this 5% on closing debtors or opening debtors? On closing debtors. What is the amount of debtors presented here? Where it was? 10,600. Straight away we need to reduce, we need to apply or we need to reduce the bad debts. bad debts. So we need to reduce the bad debts given in adjustment or given in trial balance, amma. Given in adjustment. This 600 is called as what, ma? Bad debts. So imagine this information given in adjustment or trial balance, adjustment. First of all, we need to reduce the bad debts given in adjustment. Then after, we need to apply 5% on closing debtors value. What is the closing debtors value, ma? Once again, 10,600. So how we need to calculate this one? So 10,000, just wait, ma, just a second. Okay, 10,600 minus 600. This is the closing balance. This is the closing. On this amount, we need to apply how much? 5%. What is the amount? 500. Guys are getting the point. Sometimes they will not give the bad debts in the adjustment. Then straight away we will calculate that 5% on the closing debtors value. Okay, na guys? Okay. Next, we need to write off bad debts. We need to write off. What is the meaning of write off, sir? Closing balance transferred to P&L account is called as a write off. What is the normal meaning of written off? Written off means nominal account closing balance we need to transfer to where, ma? P&L account. So previous class, okay, now initial class we have discussed that. We know the expenditure account, right? Yes. In the expenditure account, in the expenses account, where will be the closing balance? Debit side or credit side? Sir, expenditure having which balance, ma? Debit balance. Generally, opening balance will be there or will not be there? Will not be there, because in the previous year we have transferred to which account? P&L account, so that we are not having any more of opening balance. But we are having the closing balance. But what we need to write the closing balance? Generally, by balance carried on or to balance carried on? By balance carried on. But here we are going to write what, ma? By P&L account. By P&L account. So in the place of expenditure, keep the word called as what, ma? Bad debt. Keep the word called as what, ma? Bad debt. So what is the return of entry for the bad debts? Transferring to P&L account. P&L account debited to bad debts account. But in case we are having the provision, means we will transfer to which account, ma? Provision for bad debts account. In case we are having the provision, means where we need to transfer? Provision for bad debts. Then instead of P&L account, we are going to write the word called as by PBD account. By what, ma? PBD account. Normally we are going to transfer which account? P&L account. In case of having provision or not having provision? Not having provision. If in case we are having the provision, means, in case we are having the provision, means where we need to transfer? Provision for bad debts. Why, sir? We are created the provision in order to cover the risk of bad debts. In order to cover the risk of bad debt, so that we need to transfer to provision for bad debts account instead of transferring to P&L account. Instead of transferring to what, ma? P&L account. Guys, did you understand or not? Now what is the entry for the return of entry for the bad debts in case of provision, sir? Provision for bad debts account debited to bad debts account. Guys, okay na? Now in the provision for bad debts account, which side we need to record? In the bad debts account, credit side, means in the provision for bad debts account. So what is the entry? Once again, can you please explain? Provision for bad debts account debited to bad debts. Okay na guys, are you understanding the concept or not? Okay, provision for bad debts account debited to bad debts account. Okay, we are creating which account, ma? Provision for bad debts account. So provision for bad debts account debited or credited? Debited in the journal entry. So that in that particular journal, in the ledger, where we need to record? Debit side or credit side? Debit side. That means two bad debts or by bad debts? Two bad debts. We need to write off them. We need to write off the bad debts given in trial balance and bad debts given in adjustment. What is the what I am saying? We need to write off the bad debts which was given in trial balance and which was given in adjustment. Both are only one na? Both. Bad debts will be given in trial balance or will not be given in trial balance? They will given in trial balance and they will give in the adjustment also. Now the bad debts given in adjustment are trial balance? Adjustment. Okay, now here we are not having any trial balance. That means the amount given in adjustment or trial balance? The amount given in adjustment. How much? 600. So can I write like this? Can I write like this? Or I will use certain example, no problem. So now we are having only one bad debt amount. How much? 600. Okay. Now we need to close this particular account. We need to close this particular account. The balancing figure we need to transfer to the P&L account. The balancing figure we need to transfer to which account, ma? P&L. So here we are having the opening balance, or we are not having opening balance? We are not having the opening balance because there is no trial balance. because there is no trial balance. In the question they have given the trial balance, they are maintaining double entry, they are following single entry, they are following the single entry. That means they will give the trial balance, they will not give the trial balance, they will not give the trial balance. In the case of final accounts, they will give the base what trial balance. Based on that, we need to do the trading account, P&L account and balance sheet. But now we are not following the double entry system, so that we cannot pass the journal entries, we cannot prepare the ledger account, and we cannot prepare the trial balance also. So that they will give the information what rough information. What is the information is provided, what are the information available to them, they will give to us. Based on that information, we need to find out the profit or loss. Guys, are you getting it or not? So that they did not given the trial balance, so that I am keeping how much? 0 in the opening balance. The information given, that one we need to assume as what adjustment or trial balance, adjustment. So okay, for written off entry, what is the entry for the written off? Provision for bad debts account debited to bad debts account. How much? 600 what 600. So now close this particular account. How much it will be there? 1100. Here also how much 1100. Here how much we will get? 1100. This balancing figure we need to transfer to where P&L. So by P&L means in the P&L account where we need to record? In the P&L account where we need to record debit side. Okay, that means in the P&L account we need to pass. In the P&L account, credit side what will be there? By gross profit. And next one what to provision for bad debts. How much 1100. We are having the depreciation also. We are having the depreciation. To depreciation by depreciation. To depreciation how much 2400. Depreciation 10% is on the closing value. 150. We are having the some other information, right? Provision on bills receivable. We are having what provision on bills receivable. That balance also we need to transfer to P&L account debit side. How much? 200. Then we will get what ultimately net profit or loss. How much? What is the gross profit? 9,750 minus 1100 minus 150 to provision for bills receivable. 8,300 is the net profit. Are you getting point or not? Really? So they have given the another information called as what provision for bills receivable. Provision for bills receivable. In shortcut I am writing what PBR. What is the meaning of PBR? Provision for bills receivable. Opening balance will be on the credit side. All the provision balances will be on the credit side or debit side? Credit balance. Nothing but credit balance or debit balance? Credit balance. So by balance brought down. Information given or not given? Not given. So that we are keeping it as what 0. But they are given the closing balance. Yes or no? By to balance carried on or brought down? Carried on. How much they have given 200. How much they have given? 200. Then we need to close this particular account. At the time of closing this particular account, the balancing figure we need to transfer to which account? By P&L means in the P&L account debit side or credit side? Debit side. Guys, are you getting it or not? Sir, why I have taken 0 here? Because there is no trial balance, there is having trial balance. There is no trial balance. So that we are having opening balance, we are not having opening balance. We are not having any opening balance. Okay na? Are you getting it or not? I will take another example. So please be very careful. With this example, I will clearly explain how to prepare the provision for bad debts account once again. So imagine this is a trial balance. What is this one trial balance? In the trial balance, debit side, what is the information will be there? In the trial balance, debit side, expenditures and assets will be there or another things? Expenditures and assets. In the credit side, incomes and liabilities. How, sir? Because expenditure will have which balance? Debit balance. Assets will have which balance? Debit balance. Next, liabilities will have which balance? Credit balance. And income will have which balance? Credit balance. So that in the trial balance, debit side, expenditures and assets will be there, and credit side, incomes and liabilities will be there. Okay na? Debit balance means debit side will be there, credit balance means credit side will be there. Are you getting it or not? Once again, debit side, what are the things will be appear? Expenditures and assets. Credit side, incomes and liabilities. Guys, okay na? Okay, please participate, then only I can understand you are getting it or not. Otherwise, I cannot understand. I will repeating. I am go on repeating once again. Okay na? So we are having certain things here. Bad debts. Bad debts means what, ma? Expenditure, loss or gain? Expenditure, nothing but loss. Which side I need to write the amount? So imagine 1,000 rupees. Imagine how much, ma? 1,000. So PBD account. What is the balance? Debit balance or credit balance? Credit balance. I am writing 2,000 having the balance. What is this one? Trial balance or balance sheet? Trial balance. And next one, we are having the debtor. We are having the debtor of rupees 1 lakh. Debit side or credit side, amma? Debit side. Because it is an asset. Because it is an asset. And we have the adjustments. We are having adjustments. And in the adjustments also we are having what, ma? Bad debts of rupees 1,000. So I will take 2,000. You may get confused. 2,000. And in the adjustment, second adjustment they have given, provide 10% on provision for bad debts. Provide 10% on provision for bad debts. We will charge this 10% on closing debtors or opening debtors. Closing debtors. So now we need to prepare PBD account. Now we need to prepare what, ma? PBD account. You need to say the information. Which one we have to take. So imagine this is a PBD account. Provision for bad debts account. Opening balance will be on which side? Credit side. What we need to write? By balance brought down. Okay na, guys? So now by balance brought down means we need to take trial balance amount or adjustment amount. Trial balance amount. In the before example and the before sum, we have taken the opening balance as 0. Why? We are not having trial balance. But now we are having trial balance. We are not having trial balance. We are having trial balance. In the trial balance we are having amount or not having a amount. Which balance it is? It is credit balance. That means credit side means what is the opening balance? By balance brought down. How much we need to take? How much we need to take, ma? 2,000. Okay na, guys? Trial balance amount or adjustment amount? Trial balance amount. Okay, next. We need to calculate the closing balance. What is the closing balance? To balance brought down or carried down, amma? Carried down. How we will get the closing balance? We need to apply this percentage. Yes or no, ma? We need to apply this percentage. On which amount we need to apply this percentage, ma? Debtor or creditor? Debtor. Closing balance or opening balance? Closing balance. What is the debtor closing balance? 1 lakh. What is the debtor closing balance? 1 lakh. And again in the adjustment they have given the bad debts. What is the meaning of adjustments, sir? Adjustments means we have not recorded that particular bad debts in the books of accounts. We have recorded or we have not recorded? We have not. What is the meaning of trial balance, ma? Trial balance means we have recorded in the books of accounts. What is the meaning of trial balance? We have recorded in the books of accounts. What is the meaning of adjustment? We have not recorded in the books of account. So that means these bad debts of 2,000 we have recorded or not recorded? Not recorded. If you record means what is the entry? Bad debts account debited to debtor account. If you record means what is the entry, ma? Bad debts account. What is the main reason in order to write the bad debts account debited to debtor, ma? What is the main reason? In order to reduce the debtors. Sir, here bad debts means we already passed the entry, we did not pass the entry. We already passed the entry for this 1,000 or 2,000? 1,000. That means already we have reduced the debtor or we have not reduced? Already we have reduced. That means this 1 lakh is after reducing the 1,000 or before reducing the 1,000? After reducing the 1,000. Why we are saying after reducing? What is the entry we have passed? Bad debts account debited to debtor. Debtor means what is the actual balance of debtor? Debit balance. What is the actual balance of debtor, ma? Debit balance. So now in this journal entry, debtor balance is reducing or increasing? Reducing. That means we already reduced now we are going to reduce. Already we have reduced. Already recorded means already reduced. Already recorded means already reduced. Now in the adjustment means what ma? Now we are posting. Now we need to pass the entry. Now we need to pass the entry. What is the meaning of adjustment? We have not recorded this information. Okay na? After preparation of trial balance, we have find out that we need to pass this entry. We need to pass this bad debts entry. And after preparation of trial balance, we need to they set us to calculate what ma? Provision for bad debts closing balance. These two things after preparation of trial balance or before preparation of trial balance? After preparation of trial balance. Now we need to pass what is the entry ma? Bad debts account debited to debtor account. Bad debts account debited to debtor account. Now I am going to prepare the debtor account. I am going to prepare what ma? Debtor account and bad debts account. Debtor account and bad debts account. Okay na? Now you need to answer. Okay na? So which account I am going to prepare ma? Debtor account. So debtor account. In the trial balance, debtor is available on which side? Debit side or credit side? That means which balance ma? Debit balance. That means which balance ma? Debit balance. Okay. Debit balance means what is the opening balance? To balance brought down. Okay. I can take like this. To balance brought down. How much? To balance brought down how much ma? 1 lakh. Now I am going to prepare which account guys? Bad debts account. Which account ma? Bad debt. Bad debts. Bad debts available on which side ma? Debit side or credit side? Debit side. That means which balance? Debit balance or credit balance? Debit balance. Still we are not closed ma. Now we are in the stage of trial balance. We are in the stage of trial balance, we are in the stage of final account, sir. We are in the stage of trial balance. So still opening balance will be there or will not be there? Will be there. At the time of preparation of P&L account, the closing balance will be transferred to P&L account. So still we are not prepared, so that we are having the opening balance, we are not having the opening balance, having the opening balance. I can write to balance brought down or by balance brought down. Why we are recording the to balance brought down? Debit side or credit side? Debit side. How much amount is presented? 1000. I should take 1000 or 2000. In the trial balance, how much amount is was presented? So I am repeating once again. Bad debt is available on the debit side, so that we are having the debit balance. To balance brought down how much ma? 1000. PBD is available on credit side, so that we are having which balance ma? Credit balance. So that by balance brought down how much? 2000. Debtor is available on which side ma? Debit side. So that we are having which balance? Debit balance. In the debtor account we have recorded on which side ma? Debit side. Okay, and up to here. Now we have recorded all the opening balances. Now we have recorded all the opening balance. Okay na? Can you justify? Can you accept it or not? Okay na? Everyone in the class, is there any doubt or clarified? Okay na? Now we are going to do the adjustments, two things. What are the two adjustments given in the question? Bad debts of 2000 and provision for bad debts 10%. We have recorded the entry. Now we need to record. What is the entry we need to record ma? Bad debts account debited to debtor account. Okay na guys, how much? 2000. Okay, can you say the posting? In which accounts we need to post ma? Bad debts account and debtor account. Okay na? If you think from the bad debts point of view, we need to record in the bad debts account debit side or credit side? Debit side. So with the name of two debtors. So in which account ma? Bad debts account to debtor. How much? 2000. In the debtor account? By bad debts. Okay na guys, up to here. How much? 2000. Okay na? Now we need to calculate the closing balance. How much more closing balance? 10% on closing balance of debtors. 10% on closing balance or opening balance? Closing. What is the amount of closing balance? We need to find out. I am having the opening balance. I am not having the closing balance. Now I am going to find out the closing balance. What is the amount of closing balance ma? So 1 lakh here. Here also how much? 1 lakh. So what is the closing balance? 98,000. So what we need to write here ma? By balance carry down. This is the closing balance. Now we need to charge the 10% on 98,000 or 1 lakh? 98,000. So can I write like this? What is the calculation, ma? 98,000 into 10%. How much? 9,008. What is the meaning of this one? We need to maintain the closing balance of provision for bad debts. How much? 9,800. Who said to maintain, ma? Question given that we need to maintain how much? 9,800 as a opening balance. Okay. Next. We are having the provision, no? We are having the provision, so that the closing balance of provision for bad debts need to transfer to P&L account or provision for bad debts account? Provision for bad debts account or P&L account? In the case, we are not having the provision means the nominal accounts will be transferred to P&L account. In which case, ma, having provision or not having provision? Not having provision. But in this question, we are having provision or we are not having provision? We are having provision. So that the closing balance of nominal account, which nominal account? Bad debts account. So if you see the bad debts account, what are the amounts available here? 1,000 rupees and 2,000. What is the total amount, ma? 3,000. Okay, na? What is the total amount? 3,000. Here also how much, ma? 3,000. So generally this closing balance of nominal account, we need to transfer to which account? P&L account. Normally what we need to write here? We need to write by P&L. But here in this case we are having provision or not having provision? Having provision. Now we need to write what, ma? To provision for bad debts. Okay. By provision for bad debts account. What we need to write, ma? By provision for bad debts. In the provision for bad debts account, in the one account credit side means another account debit side. In one account debit side means another account credit side. Here we have credited the provision for bad debts. In the provision for bad debts account, or otherwise we need to write the entry. What is the entry, ma? Provision for bad debts account debited to. Okay, now all of you, I think you need to write the entry also. You know the writing of entry with the help of ledger. Okay, now. So what is the meaning of bad debts account credit side means? In that particular journal entry, bad debt will be credited or debited? Credited. So that we have credited the bad debts account. We have debited the provision for bad debts account. What is the entry, ma? Provision for bad debts account debited to bad debts. In the provision for bad debts account, which side? Debit side. What we need to write? How much? How much, ma? 3,000. Like this, we are transferring the amounts to the provision for bad debts. So we are having the opening balance. We are having the closing. What is the meaning of opening balance, ma? Initially, I am having the provision amount of 2,000. Initially, I am having how much, ma? 2,000. In order to write off the risk of bad debts, in order to cover the risk of bad debts, I need how much? 3,000. I need how much, ma? 3,000. In order to maintain the closing balance, I need how much? 9,800. Totally, how much amount I need? 3,000 plus 9,800. 12,000. I need 12,800. Sir, I want to purchase one shirt. I want to purchase one shirt. Or I want to purchase clothes. Okay, na? I am having the amount of rupees 2,000. I am having the amount of rupees how much, ma? 2,000. After purchasing the clothes or dresses, I need to maintain 9,800 in my hand. I need to maintain how much amount, ma? 9,800 for my expenditure of monthly expenditure. Okay, na? So the purchase of clothes amounts to how much, ma? 3,000. Initially I am having how much? 2,000. Okay, na? For the purchase, how much cost I will incur? 3,000. After purchase, how much amount I need to maintain? 9,800. That means total amount of need how much, ma? 12,800. I am having only 2,000. That means how much amount I need to ask my mother? 8,000? 10,000? 10,800 I need to ask to anyone. Okay, na? I need to ask, I can ask to my mother, I can ask to my father or something. Here, who is the father or mother, ma? Here, P&L account. So by P&L account, we will transfer. Are you getting the point or not? Sir, initially in my hand, he is having how much? 2,000. Okay, in my hand is having how much, ma? 2,000. I need to purchase the clothes of rupees how much? 3,000. After purchase, I need to maintain the closing balance of how much, ma? 9,800. That means how much total fund I want? 12,800. But I am having only how much, ma? 2,000. That means how much extra amount I need to ask to 10,800 I need to ask to P&L account. Are you getting the point? If you want, this is a concept. Otherwise, you can remember opening balance will be on the credit side, closing balance will be on the debit side. Two bad debts. Okay, now two bad debts means not only the trial balance but also what, my adjustment. Trial balance plus adjustment, only trial balance. Trial balance plus adjustment. Are you getting the point or not? So if you want, remember like this. If you understand the concept means, it's fine. Okay na? That means what we need to write ma? Adjustment plus trial balance bad debts. So in the P&L account, how much amount we need to record? 10,800. Debit side or credit side? P&L account, debit side. Sometimes we may get balancing figure here also on the credit side. What we need to write here also? P&L only. If you want amount means we will ask for mother or father. If you have excess amount means we will give to father or mother or someone. Father or mother only. Okay na? So at the time of asking also from P&L account. At the time of having excess amount also from P&L account. Here P&L, to P&L means in the P&L account credit side. By P&L means in the P&L account debit side. Are you getting the point or not? So this is the overall discussion. Next, this closing balance we need to transfer to balance sheet. This closing balance we need to transfer to where ma? Balance sheet. And this closing balance we need to transfer to balance sheet only na? This closing balance we need to transfer to where? Balance sheet. Okay na? This is a liability, this is an asset. This is a liability and this is an asset. But in the accounting treatment, in the balance sheet, how we will show? Do you know? In the balance sheet, debtor, how much ma? 98,000, 1 lakh. What is the closing balance? 98,000. You need to record the closing balance or opening balance, sir? Closing balance. What is the PBD balance? PBD. We are reducing. Why, sir? Generally it is which balance? Credit balance. Credit balance means liability, asset, liability. But we need to show in the accounting how, sir? We need to reduce from the debtor. How much ma? If you reduce means how much amount will be there? 18,001. 88,200. Okay now. What is the amount of closing balance of bad debts? Closing balance of bad debts how much? 3,000 we need to record in the balance sheet asset side or liability side? Come on. In the balance sheet asset side or liability side? Already we have transferred to which account ma? Provision for bad debts account. Once again we need to record we no need to record we no need to record in balance sheet. We already transferred to provision for bad debts account. This is the overall discussion about what ma? Provision for bad debts account. Did you get the point? Or otherwise I need to explain once again? No na? Okay, please take a note of it. Fast. Okay na? In the evening time we are having the chapter called as what ma? Provision for bad debts. Okay na? From that chapter we are having 4 sums. We are having how many sums ma? 4. I will explain the 4th sum right now. I will explain which sum ma? 4th sum. Okay na? So please take a note of it in a faster manner. Completed this one. So next time చేద్దాం. PBD అకౌంట్ PBD చాప్టర్ ఓపెన్ చేసి లాస్ట్ క్వశ్చన్ 4th క్వశ్చన్ చేసుకుందాం. 3rd క్వశ్చన్ సేమ్ ఇదే సిమిలర్గా ఉంటుంది, మీరు చెక్ చేసుకోండి. ఓకేనా? సో ఓపెన్ పేజ్ నెంబర్ 52 ఇన్ ద వర్క్ బుక్. అండ్ అగైన్ విల్ కమ్ బ్యాక్ అండ్ వీ కెన్ డిస్కస్ ద ఫైనాన్షియల్ స్టేట్మెంట్స్ మెథడ్. ఓకేనా? నో ప్రాబ్లం. పేజ్ నెంబర్ ఎంత? 52. Sorry, page number is how much? 52. So question number 4, this is a different model. regarding to the provision for bad debts. So what is the question number 4? Do you open, Amma? So these questions are we have taken from the BCCA material. Okay, now if you want this material, you can purchase from the BCCA app. Those the viewers you are seeing. How much? The amount details will be available in the app itself. Okay. Question number 4. On 31st March 2020, a sundry debtors under provision for bad debts amounts to how much, ma? 50,000 and 5,000. What is the meaning of 50,000? Debtor. Debtor how much, ma? 50,000. Provision for doubtful debts how much? 5,000. Opening balance or closing balance? How did you know? In the case of present situation, we don't know whether it is a opening or closing. We need to read further information, then only we can say opening or closing. So respectively, during the year, for the year how much, ma? 2001. So 2021, 3,000 are the bad and written off on 39/2021. Sir, here bad means what? Okay, bad debts. Written off means? Written off means we have recorded entry in the books of accounts. What is the meaning of here written off? We have recorded entry in the books of accounts. What is the entry? Bad debts account debited to debtor account. That means we already recorded, we have not recorded. Already recorded. The amount of rupees 400 was received on an account of bad, which was written off as bad last year. We have written off as a bad debt in the last year. We have received in the current year. What is the meaning of this one? Bad debts recovered. What is the entry for the bad debts recovered? Cash or bank account debited to bad debts recovered account. This particular account we will show directly in the P&L account, credit side or debit side? Credit side. Okay, now because it is a nominal account or real account? Nominal account. On 31st March 2021, the debtors left was verified and it was found that a sundry debtor should get in the books of how much, ma? 40,000. That means 50,000 is the opening balance or closing balance? Opening balance. That means that information related to previous year or current year? Previous year. Now what is the new opening balance, ma? 40,000. What is the new opening balance? 40,000. Out of which a customer of X who owned of rupees how much, ma? 800 was to be written off as bad. Was to be written off means we already recorded or we are not recorded? We are not recorded. Given in adjustment or given in trial balance? Given in adjustment. This bad debt of rupees 400 given in trial balance. Sir, what I am saying is this 400 given in trial balance and this 800 given in adjustment. So 400 given in trial balance means we already recorded the entry in the books of accounts. What is the meaning of entry passed, ma? We already reduced it, we already not reduced it. Already we have reduced it from the debtor. That means now we need to written off. Next we need to prepare which accounts, ma? We need to prepare the bad debt account, provision for bad debts account, assuming the same percentage should be maintained for the provision for bad debts as it was on 31st March 2020, 31st December 2021. Previous year percentage we need to take. What is the meaning of previous year percentage? We need to maintain provision for bad debts, we should not maintain the provision for bad debts. We need to maintain. But percentage given, we need to find out. We need to find out the percentage based on previous year, current year, based on previous year. So now I will convert this information into our familiar situation. What is our familiar situation, sir? Trial balance. Imagine the trial balance. This one is a trial balance. In the trial balance, bad debts was given or not given? Given. How much, ma? 4,000 or 600? 400 or 600? 400. Debtor value is how much? 50, not the 50,000, 40,000. We should take the debtor closing balance of how much? 40,000. Okay, na guys? That 50,000 is the opening balance. That 50,000 is the opening balance. What is the amount presented in the PBD? What is the opening balance of PBD, ma? 5,000. Guys, are you getting it or not? Sir, why we have taken the 40,000 instead of 50,000? We need to take the updated value. We need to take the update. So here 400 we have reduced the, not reduced the, reduce. In adjustment, what is the information was given? Bad debts how much? 800 800 only, yeah? How much ma? 800. We have recovered how much of bad debts? Array, here 3000 is the bad debt, 400 is the bad debts recovered. Here how much we need to record? Guys, did you get the point or not? Sir, 300 we have recorded in the books of accounts, we have not recorded in the books of accounts, recorded. Okay, na? If in case we have recorded means that information will be available in the trial balance. Otherwise it will be available or will not be available? Will not be available. So that we have recorded, so that the information presented how much? 3000. So in the credit side, what is the information will be available to us? Bad debts recovered. How much? 400. Did you get the point or not? In the adjustments, there is another, bad debts is how much ma here? 600, 800. So PBD percentage we need to find out. We need to find out the percentage for the PBD. Are you getting do you have a clarity or not? Here, why we have not taken the 50,000? That is only our question. Why you have taken the 40,000? That is only our question. This 50,000 belongs to previous year. That means it is a opening balance for the previous year. Okay na? So from the previous year, we again prepared the account. And we have find out the fresh value of rupees how much? 40,000. That means 50,000 will be available in the trial balance. 40,000 will be available in the trial balance. 40,000. That 50,000 is the opening balance of debtors. Okay. We have taken the opening balance of debtor. We made certain adjustments. After that, we have got the amount of rupees how much? 40,000. So that in the trial balance, 50,000 will be presented updated balance. Updated balance. Then why you have taken the provision for bad debts only 5,000, sir? There is no information related to provision for bad debts. Only information we are having what ma? Opening balance. That will be the closing balance. That will be the closing balance. Are you getting it or not? Sir, for the provision for bad debts, we are having only opening balance. That is only the closing balance will be recorded and will be taken to the trial balance. For the debtor point of view, we are having the opening balance of 50,000. We are having certain informations. They did not given certain information. They directly given what ma? Updated balance of 40,000. So in the trial balance, 40,000 will be presented, 50,000. 40,000 only will be presented after certain adjustments. They have given or they have not given? They are not given. So we want we don't want we don't want. We want only what ma? Closing balance of debtors. How much? 40,000. Are you getting it or not? Okay na? Now we need to find out the rate. Yes or no ma? Okay. How to find out the percentage of provision for bad debts we need to maintain? What we are going to find out ma? Percentage. How to find out the percentage, sir? What is the formula? General formula. Debtor into rate. Then we will get the PBD. Debtor into rate. Then we will get what ma? PBD. How much provision for bad debts we need to find out. Now we are not having the rate. We are having the rate. We are going to find out the rate. We are going to find out the rate. Now this formula I am going to convert into rate is equal to PBD amount divided by debtors. Rate is equal to PBD divided by debtors. That is equal to how much ma? What is the PBD amount of opening balance? Now we need to take that amount of opening balances. What are the amount of opening balances? 5,000 divided by 50,000. Okay now, for that purpose they have given the opening balance of debtors. For that purpose they have given the opening balance of debtors. What is the amount? Into 100. How much ma? That means we need to maintain 10% provision at the end of the year. Are you getting the point or not? Sir, what are the meaning of this 3,000? Closing balance or opening balance? Closing balance. What is the meaning of 40,000? Closing balance. What is the meaning of 5,000? Closing balance. What is the meaning of 400? Closing balance. Then again you are taking as opening balance. Why, sir? Still the information we need to provide, there is no information. Still we are having the information, so that we are not taking it as a closing balance. Still we are having the information, so that we are starting once again. We are starting the preparation of those accounts which was closed. Once again we are going to start the recording the entries. Are you getting the point or not? Okay, then we need to prepare which accounts. What is the first account? Provision for bad debts. Next one. Next one, which account, ma? Bad debts account. Next one. Debtor account. Next one. Bad debts recovered. Okay, now we are preparing the totally 4 accounts. Don't smile. If you want smile, go outside and laugh and come. Okay, now, or otherwise if you want, really you are getting the doubt, means you can ask anything in the class itself. Why you are laughing? Somebody is laughing. Here there is no need to laugh, I think so. If you are having doubt, you can raise the hand, you can ask here itself. Okay, na? Okay. Sir, the trial balance information means whether they are closing balances or opening balances. Closing balances only. They are closing balance. They are estimated that there is no further information and they have closed. Now again we are opening. Why we are opening? There is a further information available. Okay, now we should not close this particular account and carry forward to the trading account or P&L account or balance sheet. We should not carry forward, or we should carry forward. We should not carry forward. Again we are opening. So for the opening purpose, we are taking the closing balance as opening balance. We are taking the closing balance as what, ma? Opening balances. Okay, now 2 balance carried on means by balance brought down. Okay, now by balance carried on means 2 balance brought down. Yes or no? Okay. Now generally, what is the balance of this one? Debit side means what? Debit balance or credit balance? Debit balance. That means what is the closing balance in that particular account? By balance carried on. Now we are opening or closing? Opening. So again we will take what, ma? 2 balance brought down or by balance brought down? 2 balance brought down. Why we are opening once again? Because there is a further information or there is no further information? There is a further information given in adjustment or given in trial balance? Given in adjustment. So that we are opening once again. Otherwise no need to open. Otherwise these balances are called as what, ma? Opening balances or closing balances? Closing balances. We can directly transfer to either trading account, P&L account and balance sheet. Are you getting the point or not? Why we are opening once again, sir? There is another information given in adjustment. So that these closing balances once again became what, ma? Opening balances. Are you getting the point or not? Now I think so. I have clear your doubt in your mind. So what is the amount of 2 balance brought down, ma? 3,000. What is the next one? Debtor opening balance. What is the debtor opening balance, ma? 2 balance brought down or by balance brought down? 2 balance brought down. How much, ma? 40,000. Next one. What is the next point? PBD, provision for bad debts. Provision for bad debts given in credit side or debit side, amma? Credit side. So credit balance or debit balance? Credit balance. So what is the opening balance? By balance brought down. How much, ma? 5,000. Next one, what is the closing balance? Opening balance 400. Will be on the credit side or debit side? Credit side. What is the amount? By balance carried on or brought down? Brought down. How much? 400. We have posted the opening balances. Now what are the adjustments given in the question, ma? What is the first adjustment? Bad debts amounts to how much? 800. We have passed the entry. Now we need to pass the entry. What is the entry, guys? Bad debts account debited to debtor account. In the bad debts, which side? Debit side. In the debtor account, credit side. So in the bad debts account, what we need to post? To debtor. How much, ma? 800. In the debtor account, by bad debts, how much? 800. Completed? Okay, na? Now we need to calculate the closing balance. Closing balance of provision we need to calculate on closing debtors or opening debtors? closing debtors. Now close the particular account called as debtor account. So how much ma? 40,000, and here also how much? 40,000. 39,200. What is the meaning of 39,200? By balance carried on. On this amount we need to calculate the provision for bad debts on 40,000. On 39,200. So where will be the available of closing balance ma? To balance carried on. 39,200 into 10%. We have find out that this 10% given. We have find out. What is the formula for the rate ma? Provision for bad debts divided by debtors. Previous year percentage is applied on current year. So that we have taken the 30,000. 5,000 divided by 50,000 into 100. That is equal to how much? 10%. So how much ma? 3,920. Next we are going to close the bad debts account. Okay na? So for closing of bad debts account, normally we will transfer to which account? P&L account. But in this case we are having the provision. So what we need to write? 3,800. Here also how much ma? 3,800. Here this closing balance we need to transfer to which account? Provision for bad debts P&L account. In the case of not having the provision, we need to transfer to P&L account. So to by PBDL or P&L account. In the PBD account, which side we need to record? Debit side or credit side? Debit side. To bad debts by bad debts. How much? 3,800. Okay na guys? So next, we have closed the debtor account, we have closed the bad debts account. Now we are going to close the provision for bad debts. What is the amount ma? 7,720. Here also 7,720. What is the balancing figure? 2,720. What we need to write? That means we are having money, we are having surplus money. We need a amount, we are going to ask the P&L account. Okay na? So now we need to close which account ma? Bad debts recovered. How much ma? 400. Here also how much? 400. So 2. Balance carried on. Yes or no? Yes or no? Yes or no? This is a nominal account. We need to transfer to the P&L account. So to P&L account, how much? 400. After this we are going to prepare the P&L account and balance sheet. Both are extracts or complete information? Extract. So next P&L account we are going to prepare. You need to say the P&L account. So what is the information will be available in the P&L account? Please check the first account. What is the first account ma? Provision for bad debts. By P&L to P&L? By P&L. That means in the P&L account, debit side, to PBD. How much ma? 2,720. Now see the second one. There is no P&L account. There is having P&L account. There is no P&L account. And see the debtor account. How much? Having P&L, no P&L, no P&L. See the bad debts recovered. Having P&L. So by bad debts recovered. How much ma? 400. Now we need to prepare which account? Balance sheet. Okay na guys? So balance sheet means the closing balances of PBD will be transferred to balance sheet, and there is no, the closing balance of bad debts already closed and transferred to which account ma? PBD. The closing balance of debtor we need to transfer to balance sheet. Carried on or brought? Carried on. Where we, in the debit side if you get the carried on means which balance it was? Credit balance. So here we are having the credit side of balance carried on. That means which balance? Debit balance. Debit balance means asset. Credit balance means liability. So how we need to adjust ma? Debtor. How much? What is the closing balance? 39,200. Then PBD is having which balance? Credit balance row. PBD is having which balance ma? Credit balance. Generally on which side we need to write? Liability side or asset side? Liability side. But as per accounting purpose we need to reduce from the debtor itself. So minus PBD plus PBD? Minus how much ma? 3,000. 35,000. So this is the overall information. Are you getting the point or not? So here in this question, we need to find out the percentage, and there is information related to bad debts recovered also. So like this, we need to calculate the provision for bad debts. In the examination, they will give for how many marks, ma? 5 marks only for the preparation of bad debts account, provision for bad debts account. That's all. Only provision for bad debts account and bad debts account. In case they can ask for 7 marks also. At that point of time, we need to prepare the debtor account, bad debts account, provision for bad debts account, P&L account and balance sheet. If you prepare the 5 accounts means 7 marks. If you prepare the 2 accounts means 5 marks. If we are having the luck means they will give in the examination calculation of provision for bad debts. Otherwise, at least they will ask what, ma? One MCQ related to provision for bad debts. Not only for the examination perspective, if we are having the further information, we are having the chapters like what, ma? Single entry, we are having the chapters like final accounts and NPO. We need to solve the provisions. Whenever the provisions we have got, we need to solve how, ma? Same like this or different way, na? Same like this only we need to solve. Okay, na guys? So, I think so. You have got the clarity. You are going to write, or no need? Is there any doubts? If you are having the doubts, you can ask, please. So, okay. Now we have completed up to here what, ma? We have completed. Firstly, we have started with the discussion of accounts. Okay, na? Asset account, debtor account, creditor account, income account, expenditure account. Then after we have discussed the capital account for the purpose of capital conversion method. We are going to start with the closing capital or opening capital. For the closing capital, we need to add back drawings. We need to add back interest on drawings. We need to reduce additional capital. We need to reduce interest on capital. Then we need to reduce about opening capital. Then we will get what, ma? Net profit or net loss. Otherwise what, ma? If they are given information related to indirect expenditure and indirect income, then this profit is called as gross profit or gross loss. After that, find outing of gross profit or gross loss, we will adjust. For the expenditure means we will reduce, income means we are going to add. So this, what is the first step before doing the statement? What is the first step? We need to prepare the opening statement of affairs and closing statement of affairs. We should not change the information. We should change the information according to the given adjustments. We should not change the amounts given in the question. Directly for the same amounts we are going to calculate the opening capital and closing capital. Opening capital will be get by way of preparation of opening statement of affairs. Closing capital will be find outed by way of preparation of closing statement of affairs. What is the meaning of statement of affairs? Exact values or estimated values? Estimated value. What is the main objective for the preparation of statement of affairs? To find out the capitals, opening capital and closing capital. So next we are going to discuss about the method called as, what is the method, ma? Statement of affairs method. Sorry, financial statements method. Please open single entry. Sir, in the single entry, totally we have completed how many questions? 4 questions. Question number 1, 2, 3 and 11. Okay, na? Okay, next we are going to discuss question number . Sir, question number 9. This is the most important question. In this question, the overall information will be provided. The overall adjustments will be covered in this question. Question number 9. Related to bills receivable, related to bills payable. The total information will be available in this question. Now we are going to solve this question. Sir, first of all, what are the steps we need to follow for the preparation of financial statements? What is the method, ma? Financial statements method. Yes or no? What is the method? Financial statement. In the capital conversion method, we are having how many steps? 2 steps. What are the first step? We need to prepare the opening statement of affairs and closing statement of affairs in order to find out the opening capital and closing capital. What is the second step? We need to prepare the statement of profit. Statement of profit or loss account. If you are having the indirect information, that profit is called as a gross profit. If you are not having the indirect information, that profit is called as a net profit. Okay. Now we are going to see the method called as financial statements method. So in this method, what is the first step, sir? In some of the questions, they will give the opening balance sheet. In some of the questions, they will give the opening balance sheet. In that situation, we no need to prepare the opening balance sheet. What is the meaning of opening balance sheet, ma? Previous year balance sheet. Okay, na? Why we are going to prepare the previous year balance sheet, sir? In order to find out the opening capital. In order to find out the opening capital. That capital will take the base in the current year balance sheet. That capital will take the base for the current year balance sheet. What is the first step? In the question, they have not given the opening capital, opening balance sheet means we need to prepare, we no need to prepare, we need to prepare. Okay. What is the starting point, ma? What is the main answer? In the main answer, we need to prepare the trading account, P&L account and balance sheet, as well as which balance sheet we need to prepare? Opening balance sheet also. If the question provided or not provided? If the question is not provided, in the main answer, how many accounts will be there, ma? Trading account and P&L account and balance sheet. What is the first working note? First working note is called as a opening balance sheet. What is the first working note? Opening balance sheet. What are the step? What is the first step? In the question, they have not given the opening balance sheet. Means what is the first working note? The opening balance sheet is the first working note. Why we are preparing the opening balance sheet? In order to find out the opening capital. That capital we will take in the current year balance sheet as a, okay, na? We will write now in the capital, in the inner column we will write something amount. That amount is called as what, ma? Opening balance sheet amount. Opening balance sheet capital amount. Are you getting the point or not? Or otherwise you will get understand while doing the question. What is the first working note? Opening capital. What is the second working note? Generally the second working note we will take the debtor account, next creditor account, next fixed asset account. Next what, ma? Fixed asset. Second working note is called as debtor, third one creditor, and fourth one fixed asset, and fifth one what's our expenditure account, and sixth one what, ma? Income account. Okay, na? So these are the accounts we need to prepare. What is the first working note? Opening balance sheet. In case given or not given? In case not given, first working note is called as opening balance sheet. Second working note, debtor, creditor, fixed asset, expenditure and incomes. So if there is any further information regarding to bills receivable, then bills receivable and then bills payable. These are the accounts we need to prepare. Working notes are main answer, amma. Working notes. What is the main answer? The main answer is only trading and P&L account and balance sheet. So, okay, na? Under the main answer, we need to prepare first working note, opening balance sheet, debtor, creditor, fixed asset, expenses, income. Okay, na? At which point of time we need to prepare the fixed asset account, sir? In the case of sale of asset. In the case of sale of asset or purchase of asset, information given in the question now. At that point of time, we need to prepare the fixed asset account. At which point of time we need to prepare the fixed asset account, ma? In the case, in the given question, the information related to sale of asset and purchase of asset. Then only prepare the fixed asset account. Otherwise, no need to prepare the fixed asset account. Are you getting in the point or not? Okay, now. If you see here, what are the amounts they were given, ma? You will get a clear clarity after, by the end of the section, by the end of this calculation of this sum. The following information related to business of ABC Enterprise, who request you to prepare the trading and P&L account for the year ended 31st March 2017 and the balance sheet as on that date. What is the main answer, ma? Trading and P&L account and balance sheet is the main answer. They have given the opening balance sheet. They have given information related to opening balances and closing balances. They have given information related to opening balances and closing balances. That means we need to prepare the opening balance sheet or no need to prepare the opening balance sheet. We need to prepare the opening balances. Each and every transaction will be posted 2 times. Each and every transaction will be posted how many times, ma? 2 times. Because they have given trial balance, they have not given trial balance. They have not given trial balance, so that each and every transaction we need to post how many times, ma? 2 times. That means all the things given in adjustment are given in trial balance. All the things given in adjustment only. Okay, na? So, opening balances means opening balance or closing balance? Opening. 1/4 means opening. 31st March means closing. We know the furniture opening balance and furniture closing balance. That means we need to prepare the furniture account or no need to prepare the furniture account? We need to prepare the furniture account. No need to prepare the stock account. Please remember, no need to prepare the stock account. Opening stock will be recorded in trading account and balance sheet. Opening stock will be recorded in trading account in opening balance sheet or closing balance sheet? Opening balance. Closing stock will be recorded in trading account, credit side or debit side, amma? Credit side. And as well as in the closing balance sheet or opening balance sheet? Closing balance sheet. Guys, are you getting it or not? Each and every transaction will be recorded twice or once? Twice. First, the opening stock will be recorded in the trading account debit side as well as in the opening stock or opening balance sheet or closing balance sheet? Opening balance. That means working note 1 main answer? Working note 1. Next one, closing stock will be recorded in the trading account credit side and in the balance sheet, opening balance sheet or closing balance sheet? Closing balance. That means main answer or working note? Main answer. Are you getting the point or not? So, then furniture account opening balances will be recorded in the furniture account as well as in the opening balance sheet. Furniture account as well as in the opening balance sheet. Then furniture account closing balances will be recorded in furniture account as well as closing balance sheet. As well as what, ma? Closing. Guys, are you getting the point or not? Okay. Next we are going to discuss the sundry debtor. Sundry debtor, we are having the opening balance, we are having the closing balance. Having the opening. Okay. Where we need to record the opening balance? In the debtor account and in the opening balance sheet or closing balance sheet? Opening balance sheet. Okay, now we don't know the closing balance. That means we need to find out, we don't need to find out. We need to find out the closing balance of debtor. Okay. Next one. Creditor opening balance given or not given? Given. Closing balance given. Where we need to record the creditor opening balance? In the creditor account and opening balance sheet. In the creditor account and opening balance. Where we need to record the creditor closing balance? In the creditor account and closing balance sheet. Closing means main answer, working note, main answer. Next one, prepaid expenses, outstanding expenditure. Where we need to record this prepaid expenditures outstanding, ma? In which account? Expenditure account. We have discussed in the morning section about how to prepare the expenditure account. Now the expenditure account will be helpful to us. Okay, na? So we can discuss at the point of question. Next one. Here the combined cash and bank balance was given. Individual cash and bank balance was given. Combined. So that we need to open only one column. Double column. One column. Okay, now if in case they have given the information related to cash separate and bank separate, means we need to maintain double column or single column? Double column. But here, how many columns we need to open? Only single column, because combined balance given, only individual. Combined balance was given, so that we need to open only single column cash book or double column cash book? Single column cash book. There are certain transactions related to cash and there is some another information available in the question. So each and every transaction, how many times it will be recorded, ma? 2 times. So which are the accounts we need to open? First of all, we need to open the trading account and the P&L account and the balances. What is the working note 1? Opening balance. What is the working note 2? Debtors. What is the working note 3? Creditors. What is the working note 4? Fixed asset. What is the working note 5? That's all. There is no need to prepare the income account. Why is our income related information given or not given? Not given. So how many accounts we need to prepare, ma? 5 accounts. First one, opening balance sheet. Second one, debtor. Third one, creditor. Fixed asset. Expenses. How many accounts, ma? 5. So if you want, based on the further information, if you want, we can prepare the another assets also, another accounts also. Okay, na guys? So we are going to solve this question, and after this question, I will give the remaining questions as a homework. Okay, na guys. So in this question, we are having the complete information, we are not having the complete information. We are having the complete. So please focus on this question. Then we can solve on your own. What ma remaining questions? If you solve on your own only, you can write in the examination. Otherwise, you cannot write. When you practice, you can write. Otherwise, okay, na easy or hard? Hard. If you practice means easy. Otherwise, it will be difficult. Okay, na. So okay, we are starting doing the question. Please open the books. Please open the notebooks. What do you want? Do you want break? No. Okay, what is question number? Okay, if you do like this, imagine your situation. You are presented in my situation, then you can understand my situation. You are talking like this means how can I explain? Huh? Question number? If you cooperate, then only I can explain, otherwise I cannot explain. Please be patient. ఏం కావాలరా మీకు? అరే నాకు వాటర్ అవుతున్నాయి, నేను చెప్పట్లేదా? ఆ బాటిల్ ట్రాన్స్ఫర్ అవుతుంది తప్ప ఆ బాటిల్లో వాటర్ పట్టుకొని రావాలని తెలీదా? ఇంట్రెస్ట్ ఉంటే క్లాస్లో ఉన్నాను, లేకపోతే వెళ్ళిపోండి. ఒకటే చెప్తున్నా, ఇంట్రెస్ట్ ఉంటే ఉన్నాను, లేకపోతే వెళ్ళిపోండి. నేను ఒక్కనే రికార్డ్ చేసుకుంటా. What is the main answer? Trading and profit and loss account of ఎంతమ్మా? What is the name of the person? ABC Enterprise. For the year ended 31st March 2017. నేను ఇక్కడ హెడ్డింగ్ పెట్టా. పవన్ ఏమనుకోమ్మా, హెడ్డింగ్ పెట్టా నేను. నువ్వేం చేస్తున్నావు? So what is the format? So particulars, please take total 1 page of trading and P&L account. Balance sheet of ABC Enterprise as on for the year end amma, as on 31st March 2022 2017. Sir, closing or opening? Closing. Then what is the first working note? Dharmaraj, what you are doing? You are writing, So what is the first working note, ma? Nothing but balance sheet of ABC Enterprises, balance sheet of ABC Enterprise as on 1st April 2016. What is the second working note? What is the second working note? Debtor account, creditor account, furniture account, next one expenditure account. So please prepare working note number 2, Atma. Completed this account. Balance sheet of ABC Enterprises as on 1st April 2016. Completed, Amma. Next one, what is the working note number 2? Debtor account. Particulars amount rupees. Particulars amount rupees. What is the second working note, ma? Creditor account. Third working note, creditor account. Have you completed the second working note? What is the third working note, ma? Creditor account. What is the fourth working note? Furniture account. What is the fifth one? Expenditure account. What is the fifth one, ma? Expenditure account. First working note is opening balance sheet. Second one, debtor account. Third one, creditor account. Fourth one, furniture account. Fifth one, expenditure account. Okay, now why we are opening all accounts at a time? Because easily we can post simultaneously in all the accounts. Okay, now not only in this chapter, we will open in all the chapters. What are all the chapters? NPO, single entry, final accounts, Then in the case of consignment, joint venture, in all the chapters we need to open what are the required accounts at a time. Then only we can answer. Then only we can write in a faster manner. Then only we can complete the examination on time. Or otherwise, if you start the preparation of trading account first, and again you are doing the P&L account, means it will take time. It will not take time. It will take time. So we should follow like this only. Okay na? First trading account and then P&L account like that. Or we need to open all the accounts. We need to open all the accounts. We need to post simultaneously. We need to post what ma? Simultaneously. Completed? Have you opened all the accounts? Shall I start? First we are going to post the opening balances and closing balances. So DR and CR. Particulars, amount rupees. Particulars, amount rupees and amount rupees. What is the first opening balances ma? Furniture. What is the opening balance? 60,000. And what is the closing balance? 63,500. Sir, furniture asset or liability? Asset. Opening balance will be on the debit side and closing balance will be on the credit side. So 2 balance brought down, buy balance brought down, 2 balance brought down. So how much? 60,000. Buy balance carried on. How much? 63,500. Okay, we are going to post in which account ma? Furniture account. So what is the working note number? 4. So in the working note number 4, 2 balance brought down. How much? 60,000. Buy balance carried on. How much ma? 63,500. So one time you have posted. Okay na? What is the second time posting? Opening balance will be on the opening balance sheet and closing balance will be on the closing balance sheet. Guys, are you getting it or not? Okay, go to the opening balance sheet. In the opening balance sheet, how much amount we need to record? 60,000 or 63,500? 60,000 in the working note number 1, 63,500 in the main answer. So we are going to transfer recording in the working note number 1. How much ma? So this is an liabilities, this is an asset. Okay, furniture, how much guys? Opening balance sheet 60,000. Directly I am recording in the outer column. Okay na? Next, in the main answer, these are liabilities and these are assets. So furniture, how much? 63,500. Okay, completed all of you. And then next, what is the opening balance ma? Stock 80,000. Where we need to record the opening stock? In the trading account debit side, and again we need to record in the opening balance sheet or closing balance sheet. Opening balance sheet. So we are opening the trading account. So first we need to record our last first. To opening stock, how much ma? 80,000. And again this amount we need to record in opening balance sheet or closing balance sheet. Each transaction how many times? 2 times. So now we are going to post in the opening balance sheet. Working note 1 na main answer. Working note number 1, stock, how much? 80,000. So we have completed the opening stock. Now we are going to post the closing stock. What is the amount of closing stock ma? 70,000. Where we need to record the closing stock? In the trading account. Debit side or credit side? Credit side. By closing stock. How much? 70,000. And again this closing stock we need to record in opening balance sheet or closing balance sheet? Closing balance sheet. Asset or liability? Asset. So stock how much ma? 70,000. Completed up to here. Okay, next one. Sundry debtors how much? 1,60,000. We are having only opening balance. we need to find out the closing balance. In the debtor account or creditor account? Debtor account. Debtor means asset or liability? Asset. What is the opening balance? To balance brought down. So in the debtor account, we are going to post debtor account. To balance brought down or by balance brought down? To balance brought down. How much ma? 1,60,000. Okay na guys, up to here. And again, where we need to post ma? Opening balance sheet or closing balance sheet? In the opening balance sheet. Asset or liability? Asset. So debtor, how much? 1,60,000. Okay na guys, up to here. Okay. We are having closing balance, we need to find out. We need to find. Again, what is the opening balance given in the question? Creditors. How much ma? 1,10,000. Opening balance or closing balance? Opening balance. So creditor means asset or liability? Liability. For the liability, closing opening balance will be on the credit side. To balance brought down or by balance brought down? By balance brought down. So we are recording in the creditor account. By balance brought down. How much? 1,10,000. Okay na guys, up to here. One time twice? Twice. Where we need to record this opening balance? In the opening balance sheet. So creditor asset or liability? Liability. So liability side or asset side? Liability side. How much ma creditor? 1 lakh. Okay na? Okay na guys? We have posted only opening balance. What is the closing balance? 1,50,000. Where we need to record this closing balance? Creditor account. Closing balance will be on the debit side or credit side? Debit side. What we need to write? To balance carried on. How much? 1,50,000. Again, where we need to record ma? In the closing balance sheet or opening balance sheet? Closing balance sheet asset or liability? Liability. So closing balance sheet where it was? Main answer or adjustment? Main answer. Okay. Creditor. How much more? 1,50,000. Okay na? Guys, completed up to here. All of you. Okay. Next one. Sir, prepaid expenses. Okay, we are stopping here. Sir, 6,000 is the opening balance. 7,000 is the closing balance. Prepaid means asset or liability? Asset. Where we need to record? In the expenditure account or prepaid expenses account? In the expenditure account only. Okay, in the morning section we have discussed. In the expenditure we are having the 3 items. Expenditure paid, prepaid expenses, outstanding. Asset or liability? Asset. To balance brought down, by balance carried on. To balance brought down. So go to the expenditure account. So to balance brought down. Why we are recording to balance brought down? My asset or liability? Asset. In bracket prepaid or outstanding? Prepaid. How much? 6,000 is the opening, right? What is the closing ma? So by balance carried on. Can I write? Prepaid or outstanding? Prepaid. How much? 7,000. This 6,000 we need to post it to opening balance sheet. 7,000 we need to post it to closing balance sheet. Asset or liability? Asset. So go into the opening balance sheet, working note number 1. Prepaid expenses. How much? 6,000. And going to post in the current year balance sheet. Prepaid expenses. How much ma? 7,000. What is the next one given in the question ma? Outstanding. Outstanding means asset or liability? Liability. So that by balance brought down, to balance carried on. In which account? Expenditure account. So we are going to write the expenditure account. So working note number 5. By balance brought down. Outstanding or prepaid amma? Outstanding. How much? 20. 20,000. And to balance carried on. 80. 18. Okay, in bracket. Sir, outstanding means asset or liability? As liability. Opening balance in opening balance sheet, closing balance in closing balance. In the opening balance sheet, how much? 20,000. In the closing balance sheet, how much? 18,000. So we are going to record in the opening balance sheet. Working note number 1, outstanding expenditure. Asset or liability? Liability. How much? 20,000. So in the opening balance sheet, again outstanding asset or liability, amma? How much? 18,000. We have completed. Is there anything left? Cash in hand. Oh, we have opened the cash account. We need to open the cash account. So please open the cash account. Working note number how much, ma? Please prepare somewhat big. Completed, amma? What is the opening balance? 12,000. What is the closing balance? 26,250. Okay. So opening balance of the cash means 2 balance brought down or by balance brought down? 2 balance brought down. How much, ma? 12,000. And what is the closing balance? By balance carried down. 26,250. Opening balance in the opening balance sheet. Closing balance in the closing balance sheet. Asset or liability, amma? Asset. Okay, na asset side. Completed? Okay, go into the opening balance sheet. Working note number 1. Cash how much? 12,000. And main answer, cash how much? 26,250. So we have completed all the opening balances and closing balances posting into the all accounts. Okay, now we need to discuss the adjustments given in the question. Okay, now within a less time we can complete, no problem. So please see the heading. What is the heading given my here? Cash transactions during the year. So these are all information related to cash transactions. So after reading a particular transaction, we need to identify the journal entry. We need to identify what, ma? Journal. Then only we can post into the ledgers. Otherwise we can post or we cannot post. We cannot post. So first of all, while reading the transaction, we need to identify the journal entry. Then we can easily post into the particular ledgers. Okay, now what is the first step? In the main answer, trading account and P&L account and balance sheet. In the working note, first working note is called as opening balance sheet. Second working note, debtor, creditor, asset, expenses. If you want remaining accounts means we can open. Cash account also will be opened in each and every sum. Okay, now opening balance sheet given means no need to open the working note number 1 because already they have given. Okay, now in that situation, opening balances will be recorded only one time. Okay, now in the situation of opening balance sheet given in the question, in that situation, opening balances will be recorded twice or one time? One time. If you prepare the opening balance sheet, then only the opening balances will be recorded twice. Otherwise, the opening balances will be recorded only once. Okay, na guys? Okay. What is the first transaction, ma? Collection from debtors after allowing a discount of rupees 50,000 amounts to how much, ma? 5,85,000. What is the transaction, ma? We have collected amount from the debtors of rupees how much? 5,85,000 after allowing discount to the debtor. After allowing discount to the debtor of rupees how much? 15,000. So here we are having the two things. What is the first thing, ma? Discount allowed. What is the second thing? Collection from debtors. In the both the scenarios, debtor value increases or decreases? Debtor value will be decreases. Yes or no? So debtor decreases means, debtor means what, ma? Asset or liability? Asset. Asset value decreases means which side we need to record? Debit side or credit side? credit side with the name of by discount allowed and by cash account. By discount allowed account and by cash account. Okay na guys? So now we need to record these amounts in which account ma? Debtor account. So debtor means asset or liability? Asset. Anything debtor increases means where we need to record? Debit side. Anything debtor decreases means where we need to record? Credit side. So because of these two things, debtor value increases or decreases? Decreases. Can I write like this? By discount allowed account and by cash account. Okay na guys? Discount allowed how much? 15,000. 15,000. How much amount we have paid? 5 lakh? Sir, each and every transaction, how many times we need to record? Twice. But we have recorded only once or twice? Only once. Discount allowed we have recorded only one time, and cash also we have recorded only one time. Okay. Here the cash account is credited means in which account we need to do debit? In the cash account only. What is the entry ma here? Cash account debited to debtor account. We have posted in the debtor account. We have posted in the cash account or we have not posted? Or not posted. Go into the cash account. Go into the which account ma? Cash account. Which was prepared at last. To how much ma? 5 lakh? Okay. Then we need to post what is the balance one? 15,000. Sir, this is a nominal account. This is a nominal account. Only the nominal account closing balance will be transferred to which account? P&L account. We are not going to open once again discount allowed account and we are transferring to P&L account. That is a waste of time. Okay na? Directly we can transfer this amount to which amount ma? P&L account. Direct expenditure means trading account. Indirect expenditure means P&L account. Are you getting the point or not? This is an expenditure. In the debit side, what we need to write? To discount allowed account. How much? 15,000. Okay na? So there is some situations like this will be happen. Even though if you know the 15,000, we will write in the examinations what ma? 10,000. The answer will get wrong. Okay na? So like this will be happen. Completed? Sir, discount allowed is a nominal account. Nominal account closing balances will be transferred to the P&L account. And again we are opening the discount allowed account and we are writing to debtor the closing balances by P&L. Mala again in the P&L account to discount allowed. Like this, if you want, you can open the discount allowed account also. Or otherwise directly you can write what ma? Discount allowed in the P&L account. Okay na? Are you understanding it or not? I think someone. Okay. Imagine this is which account ma? Discount allowed account. In the discount allowed account we need to write what ma? To debtor. How much? 15,000. There is only one transaction. So 15,000 and 15,000. The closing balance how much ma? 15,000. This is a nominal account. The closing balance need to be transferred to what we need to write? By P&L. In the P&L account to discount allowed. So that one only I have directly transferred to the P&L account what ma? To discount allowed. Okay na? Now satisfied? Okay. Next. Second one. Okay na? So that only I am requesting the seniors, please go to the study hall and read. But they are saying what? There is no EO batch, sir. In the EO batch, from EO batch onwards we will study. For sitting 1 hour, for Rakesh is uncomfortable feeling. Okay. Collection from discounting of bill of exchange. Collecting from discounting of bill of exchange after deduction of discount of rupees how much? 1250 by bank. Totally how much ma? 6125. We have received how much? 61,250. What is the discount amount? 1,250. Can anyone in the class? What is the entry for the bill discounting? We are having a bill. That bill was given to bank. Bank given to money to us. Is called. Please wait a second. Imagine this is a person. Okay, now we are having the bill. We are having what, ma? Bills receivable. We are given to bank. Okay, now given to bank means bill comes in, na goes out. Goes out. What we have got? Cash. Okay, now what you have got, ma? Cash. What is the bill total value, sir? Huh? 61,250 plus 1250. How much? 61,250 plus 1250. Huh? 62,500. But we have received only how much, ma? 61,250. What is the meaning of 1,250? Loss or gain? Loss. What is the entry? Okay, we need to think from this boy format and from this point of view. Tillu. Imagine this is a tillu. Okay, we are having the bills receivable. Comes in, goes out, goes out. So debit, credit, credit. You have received the amount. Comes in, goes out, comes in. So debit, credit, debit. You have received only 1,250. That means cash account debit. How much, ma? 61,000 to 2 bills receivable. How much, ma? Okay, now both are tallied. What is the difference amount? Discount. What is the different amount? Discount. First of all, we need to open which account? We need to open which account, ma? Bills receivable account. Okay, please open the bills receivable account. What is the working note? What is the working note number 7? What is the entry once again? Cash account. 2 bills receivable. Okay, Shrisha. In the bills receivable account, how we need to post? In the bills receivable account, we need to post how much amount? 62,500. So how? These both are debited. These both are debited. But the bills receivable is debited or credited? Credited. In the bills receivable account, we need to record on debit side or credit side? Credit side. With the name of 2 cash, how much, ma? 61. By cash 61,250, by discount 1,250, because in the particular journal entry debited or credited? Credited. Okay, na? Okay. By cash how much? 61,250. By discount 1,250. Only once. Fasaka, or we need to write another time? Another time. In the cash account, in the discount account? In the cash account. Here credited means debited or credited? Debited. So what we need to write? 2 bills receivable account. Abba, super amma. 2 bills receivable. How much? 61,250. Where we need to write the discount? P&L account or trading account? P&L account. Again, this is a nominal account. So the closing balance will be transferred to P&L account. To discount, by discount? To discount. If you want to get the clarity, please prepare the which account? Discount account. How much? 1,250. And yes. Completed. How many transactions you have completed? Only 2 transactions. Okay guys, next third one. What is the third one? Creditor of rupees 4 lakhs was paid off rupees how much ma? 3,92,000. Totally how much amount we need to pay? 4 lakhs. Full settlement or normal? Full settlement. Okay na? What happened? How much discount received? 8. What is the entry? Creditor account debit to cash account to discount received account. Creditor account how much? 4 lakhs. To cash how much? 3,92,000. To discount received 8,000. Sir, no? Okay, now having a clarity, yeah? No, I think so. Yeah. Yeah means yes, sir, no? Yeah means yeah. What is the entry, sir? Creditor account debited to cash account. What is the creditor value? 4 lakhs. 3,92,000. Okay, na guys. Creditor liability, credit balance decreases debit. Creditor liability. Okay, if you want, we can follow the morning method. What is the morning method, ma? Creditor account. Liability, asset, liability. Liability means which balance? Credit balance. If the creditor increases, where we need to record? Debit side. Credit side. If the creditor decreases, where we need to record? Debit side. So because of these two assets, the creditor value increases or decreases? Decreases. What are the two assets? To cash account. How much? 92,000. To discount received. How much? 8,000. This discount received means income or expenditure? Income. So that we need to post it to P&L account credit side, and in the cash account by or to by creditor. How much ma? 3 lakh? 3,92,000. 4,92,000 kaadu. 3,92,000. And going to post the 8,000 in the P&L account, which side? Credit side. By discount received. How much ma? By discount received 8,000. Okay na guys? Completed? Next one. Freight inward paid or what ma? Freight inward paid. Trading account, debit side. First of all, what is the entry? Freight inward account debited to cash account. Okay, now freight inward will be transferred to trading account, debit side. Okay, now in the cash account, which side? Debit side or credit side, ma? Go and record first in the which account, ma? Cash account. Okay, na? Cash increases means debit side, cash decreases means credit side. Receipts are debit side, payments are credit side. Payment or receipt? Payment. So that by freight inward, how much? 13,000. And again this freight inward we need to record in trading account. Okay. Trading account debit side or credit side, amma? Debit side. To freight inward. How much, ma? 30,000. Okay na guys? In the expenditure account we are not recording. Why, sir? It is a specific expenditure. It is a specific expenditure. Next one. Amount withdrawn for personal use. What is the entry? Drawings account debited to cash account. Okay. In the cash account, which side? By drawings. Open the cash account. By drawings or two drawings? by drawings. Again, how much? 70. 70. Okay. 17 or 70 na? 70. Where we need to write these drawings, ma? In the balance sheet. Liability side, we need to reduce or we need to increase? Drawings how much? 70? 70. Okay, write in the inner column itself. Okay, now under the drawings, please write the 70,000 here itself. Why, sir? There are additional drawings, we will get further. Okay, na? Okay, na, guys? Sir, there are another drawings information also. Afterwards, we can add it to these drawings and we can write directly on the inner column. Okay, next. What is the next one? Payment to office furniture. Office furniture means drawings or asset? Asset. We have purchased the asset, we have sold the asset. Purchased or sold? Entry. Furniture account debited to? In the furniture account. By cash? To cash. Assam. How much? In the cash account. In the how much? 10. Guys, are you understanding it or not? Okay, next one. Investment carrying a annual interest of how much, ma? 6%. Were purchased for how much, ma? 95. This is the important. This is the important point. Please see once again. Sir, investment carrying how much, ma? 6%. Would purchase for how much? 95 rupees. Carrying how many shares, ma? 200 shares. What is the face value? 100. So, even though the face value is 100, we have purchased for how many rupees? 95. What is the investment value? 200 shares into 95. That is 90. 19,000. So purchase of investment, what is the entry? Investment account debited to cash account. Okay, na? So by investment or to investment? In the cash account, by investment account. How much, ma? 19,000. So how did we get 95 into 200? Okay, where we to write this 19,000? Directly in the balance sheet. Current year balance sheet, previous year balance sheet. That nothing but closing balance sheet or opening balance sheet? Closing balance. So in the previous year we are not having any investments. If you are having the investment means they will give what, ma? Opening balance. So we are directly recording in the balance sheet. Asset side or liability side, ma? Assets. What is the investment value? 19,000. Okay, na? Okay. On this, how much interest we need to get, ma? 6%. At which date we have invested? 1st October. That means in the current year, how many months of interest we need to get? 6 months. How many months of interest we need to get, ma? 6 months. October, November, December, January, February and March. How many months, ma? 6 months. Okay. Calculate the interest for the 6 months and say. We need to calculate the interest only on the face value. We need to calculate the interest only on the face value. While going to declare the dividend also, we need to calculate on face value or purchased value. Face value only. So interest and dividend calculations will be always calculated on the face value or on the purchased value. On the face value. What is the face value, ma? 200 into 100. That is equal to 20,000 into 6% into how many months? 6 months divided by 12 months. 600? Interest received, interest to be received. Interest to be received. Interest to be received. Okay. What is the entry for the interest receivable? Interest receivable account debited to interest account. Interest receivable account debited to interest account. So interest receivable will be transferred to balance sheet. Interest account will be transferred to the P&L account. Debit or creditor? Credit side, because it is an income or expenditure? Income. So balance sheet, interest receivable. How much? 600. What is the calculation? 200 into 100 into 6% into 6 by 12. Okay. Interest received how much? 600. We are going to record that one in the P&L account by interest. How much? 600. What is the entry? Interest receivable account debited to interest account. Interest receivable will be transferred to balance sheet. Interest received will be transferred to P&L account credit side. Guys, are you getting it or not? Okay, now this is an inevitable adjustment. So very, 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 very important. Next one. Expenses including salaries paid how much? 95,000. The overall expenditure. What is the overall expenditure? 95,000. In that expenditure we are having the salaries also. Okay. What is the overall expenditure? 95,000. What is the entry for the expenditure paid? Expenses account debited to cash account. Now we can record this amount in the expenditure account. We can record in the expenditure account. So we are going to record in the cash account. Please open the cash account. By expenses, sir? Two expenses, Sama. By expenses. How much? Sir, these expenses are miscellaneous expenses, same like that. Okay, now we are having the expenditure, in that we are having the salaries also. There is nothing to think about it. Okay, now we are having certain expenditures, in that salaries also included or not included? Included. So salaries included means that kind of expenditure is called as indirect or direct? Indirect expenditure. That's all. Okay, now. So how much? 95,000. Again, where we need to record in the expenditure account, debit side or credit side? Debit side. To cash. How much? 95,000. Okay, na guys, all of you. Salaries included in that particular expenditure means direct expenditure or indirect expenditure? Indirect expenditure. So that we need to record in which account? P&L account. All the balances. Okay, now in the expenditure account, balance will be transferred to where? P&L account. So that we are recording in the which account? Expenditure account. So next one, miscellaneous receipts, how much? 5,000. What is the miscellaneous receipts entry? Cash account debited to miscellaneous receipts account. In the cash account, debit side or credit side? Debit side to miscellaneous receipts. How much? 5,000. Where we need to record this one? P&L account, credit side or debit side? Credit side. By or to? By miscellaneous, by miscellaneous receipts. How much? 5,000. Completed? Okay, na guys? Sorry. How much? In the P&L account we need to record, but I am recording in the balance sheet, no problem. Okay, next one. Completed the receipts. What are the receipts and payments? Completed or not completed? Not completed. We are having only 4 adjustments. We can complete. Bills of exchange drawn and accepted by customer during the year amounts to how much? 1 lakh. What is the entry for this? We are drawn on debtors. Bills receivable drawn on what? Debtors. So that means bills receivable value will be increases, debtor value will be decreases. What is the entry? Bills receivable account debited to? So in the debtor account, which side? Credit side. 2 bills receivable, by bills receivable. How much? 1 lakh. How much? 1 lakh. Again, where we need to record? In the bills receivable account, we are having we are not having 2 debtor, by debtor? How much? 1 lakh. Completed point is still there. Still the point is not completed. Okay. What is the next one? Of these bills of exchanges, 20,000 were endorsed in the favor of creditors. So of these bills of exchange means in that 1 lakh we have given certain bills to whom? Creditor. Okay, na? The bill given to creditor. The bill given to creditor. Bills comes in, goes out. Goes out. Value increases or decreases? Decreases. Who is the receiver? Who is the receiver? Creditor. Endorsement. In the case of endorsement, what is the entry, ma? So creditor account debited to bills receivable account. So bills receivable comes in, goes out? Goes out. Who is the receiver? Creditor. So creditor receiver means debit or creditor? Debit. So bills receivable goes out means value increases or decreases? Decreases. So that means what is the entry, ma? Bills creditor account debited to bills receivable. By creditor or to creditor? By creditor. How much? 20,000. Again in the creditor account, two bills receivable. How much, ma? 20,000. Okay na, guys? Okay na? If you not understand means in next day, in tomorrow we will discuss about the bills of exchange, then we will understand, no problem. Okay na? So what is the next one? Is still there? And endorsed bill of exchange 4,000 was dishonored. How much amount was dishonored, ma? 4,000. In the case of honor, we will record we will not record we will not record. Already bill is there, bill is not there. Bill is not there with us. So in the case of honor, no entry will be recorded in our books of accounts. In the case of dishonor, we will record. In the case of dishonor, we will collect the amount from the debtor. We need to pay to the creditor. We need to collect and we need to pay. Again, debtor balance increases or decreases? Increases. And again, creditor balance also increases. Okay, now we need to collect and we need to pay. So debtor balance increases means debtor asset debit balance increases debit. Creditor balance increases means creditor liability credit balance increases credit. What is the entry? Debtor account debited to creditor account. Debtor account debited to creditor account. What is the amount? 4,000. 4,000. So in the creditor account, by debtor, how much more? 4,000. In the debtor account, to creditor, how much more? Guys, are you getting the point or not? How many bills we have drawn? 1 lakh. How many bills we have drawn, ma? 1 lakh. At the time of drawing the bill, what is the entry? Debtor balance will be decreases, bills receivable value will be increases. Both are assets or liabilities? Both are assets. So debit balance increases means debit, debit balance decreases means credit. Bills receivable account debited to debtor account. In the bills receivable account to debtor, in the debtor account by bills receivable. After that, from the 1 lakh, we have endorsed how much worth rupees of bills, ma? 20,000. So at the time of endorsement, bills receivable comes in, goes out? Goes out. Who is the receivers? Creditors. So creditor receiver means debit or creditor? Debit. Bills receivable decrease means debit or creditor? Credit. So creditor account debited to bills receivable account. In the bills receivable, to creditors. In the creditor account, by bills receivable. Okay na, guys? So next one. In the case of endorsement of rupees 20,000, how much worth rupees of bills was dishonored? 4,000. What is the dishonor entry? Dishonor means who need to pay, ma? We need to pay to the creditor. From whom we will collect? We will collect from the debtor. So again, debtor balance increases and creditor balance increases. Debtor increases means debit side, creditor increases means credit side. What is the entry? Debtor account debited to creditor. Okay na? So we have posted all the 3 things. What is the next point? Goods costing 9,000 which were used for the advertisement purpose. Goods distributed as free samples. Goods distributed as free sample. What is the entry? Advertisement account debited to purchases account. Here the purchase value increases or decreases? Decreases. We should not write 2 sales. We should write the word called as 2 purchases. Already discussed this entry in the foundation cat somewhere. Okay. What we need to do? Purchases, advertisement account debited to purchase. Where we need to record the advertisement? In the P&L account. Debit side or credit side? Debit side. To advertisement. How much, ma? 9,000? 9,000? We need to reduce the purchase or we need to increase the purchase? We need to reduce the purchases. So 2 purchases are by purchases. From the purchase, reduce the advertisement. How much ma? From the purchase, we need to reduce the advertisement. How much? 9,000. Guys, are you getting the point or not? What is the entry? Advertisement account debited to purchase account. So purchase is normally will be on the debit side. It is presented in the credit side means what we need to record? Entry. Advertisement account debited to purchase account. Why we have credited the purchases? In order to increase or in order to decrease? In order to decrease. So that we have decreased it from the purchase. We don't know the purchases. From the purchases we need to increase or we need to decrease? We need to decrease with the name of advertisement. And again advertisement was recorded in P&L account debit side. Because it is a nominal account, closing balance will be transferred to P&L account debit side. Okay na guys? Okay. Next, what is the further information? Goods are inevitably sold to be shown as a gross profit of rupees how much? What is the gross profit ma? 20%. Given. It will be useful to find out. We can find out anything. Okay, please be kept on another side. What is the amount of gross profit? 20%. Difference in the cash book, if any, it should be treated as further drawings or introduction of a capital by a proprietor of an ABC enterprise. In the case of any balancing figure in the cash account, we need to treat it as what ma? Drawings or additional capital. If you are getting a balancing figure on the debit side means, receipt of payment, receipt. Receipt means additional capital, receipt means drawings, receipt means additional capital. If in case we are getting any balancing figure on the debit side means, it is to be treated as what ma? Additional capital. If in case we are getting any balancing figure on the credit side means, we need to treat it as drawings. Okay, now what is the entry for the drawings? Drawings account debited to cash account. What is the entry for the additional capital? Cash account debited to additional capital account. Okay na guys, what I am saying? Debit balancing figure means additional capital. Credit balancing figure means drawings. Okay, next one. Provide provision for 2% doubtful debts on the closing debtors. Okay. These are the things, ultimately there is no further things. Okay, please close the first which account? Debtor account. First close the debtor account. Sir, here from the one particular account we can find out only one missing figure or two missing figures, sir? One missing figures. So in the cash account balance, either we can treat it as drawings or either we can treat it as additional capital. That means we are having the cash sales. We are having the cash purchase. We are not having the cash sales. We are not having the cash purchase. Are you getting the point or not? Once again, in a one particular account, we can find out one missing figure or two missing figures. One missing figures. So in the question they have given clearly, if you are getting a balancing figure in the cash book, if you are getting a debit balance means it is a additional capital. If you are getting a credit balance means drawings. That means if you see in the cash book whether we have recorded any sales or purchase, we have recorded any sales or any purchase. No. That means we are having the cash sales. No. We are having the credit sales. No. We are having only the cash purchase, credit purchase and credit sale. That's all. Okay na. For the debtor, opening balance given or not given? Given. Closing balance not given. So the full-fledged information was provided in creditor account. Yes or no ma? If you close the creditor account, what is the balancing figure? Purchases. What is the purchases? Which purchases? We are having the cash purchase? No. Why sir? If in case any balancing figure means it is called as a capital or drawings. So that there is no cash purchase and there is no cash sales. So that means close first of all which account ma? Creditor account. If you close, what is the balance? $4,56,000. 4 lakhs. 5 lakh. 17. 5,70,000. 4 lakh What is the meaning of 4,56,000 ma? Purchases. Two purchases or buy purchases? Where we need to transfer this purchase amount? Trading account, debit side or credit side? Debit side. What is the amount? 4,56,000. Guys, are you getting it or not? Okay na? Where we need to transfer this one ma? In the trading account, 4,56,000. If you reduce, what is the amount ma? Huh? 4,47,000. Okay na? Then what are the accounts available ma? Debtor account. We can close or we cannot close her? We cannot close because we need to find out the sales. Okay na? Okay. Please wait one second. Close the furniture account. $70,000. 6,000. What is the meaning of 6,500? Closing balance, sir. Purchase, sir. Depreciation. By depreciation. In the case of sale, here the sale happened, not happened. Then there is no profit, there is no loss. What is the only thing will be left out? Depreciation. Guys, are you getting it or not? Depreciation where we need to record? In the P&L account, debit side or credit side? Debit side. To depreciation or by depreciation? How much? Working note number 4. Purchase working note number 2, 3, 4, 5, 6, 7. Completed. What is the next account? Expenditure. We can close her, we cannot close her. We can close. All the information was available. 6,000, 95,000. 1 lakh? 19,000. 1. What is the meaning of 92,000? Closing balance or opening balance? Closing balance. Where we need to transfer the closing balance? P&L account. In the P&L account, debit side. How much? 92,000. What we need to record? 2 expenses or by expenses? Working note number. How much ma? 92. Sir, are you understanding the closing? Okay, next one. Cash. We can close the cash or we cannot close? We can close. If you are getting a debit side balancing figure means additional capital. We are getting a credit side balancing figure means drawings. What is? Debit balance, how much? 6 lakhs, 63,250. Here also 6 lakhs, 63,250. What is the balancing figure? What is the meaning of 21,000? Drawings are additional capital. By drawings are 2 drawings. Who said to us? Question. As per the question, we are treating it as what ma? Drawings. Otherwise, we can treat it as? Otherwise, we can treat it as? Purchases. Otherwise, we can treat it as what ma? Purchases. Okay, now as per the question, we are treating it as drawings. Otherwise, we need to treat it as purchases. If in case we are getting a credit balance means, we will treat it as sales. But as per the question, we will treat it as additional capital. Are you understanding the concept or not? Okay. Where we need to record? drawings, add back to the drawings, so that only I have recorded in the inner column. 21,000. How much? 91,000. Okay na? This is from working note number 6. Guys, are you understanding it or not? Oh, okay. What is the next account? Completed, huh? Please close the bills receivable. Where is the bills receivable? What is the amount of bills receivable, ma? 1 lakh 70. What is the meaning of this one? Closing balance. Where we need to transfer this closing balance? Current year balance sheet, previous year balance sheet. Current year. Main answer or working note? Main answer. Asset or liability? Asset. We need to record in the asset side or liability side? Asset side. Asset side. Bills receivable. Working note number 7. How much? 17,500. Then please close the opening balance sheet. 3 lakh 18,000. That's all. What is the balancing figure? 1 lakh. What is the meaning of this one? We need to transfer to 1 lakh. Working note number. No, there is only one thing is left out. What is the first one? That one, ma. No net profit, no net loss. Please wait a second. We need to find out the net profit or net loss. Please wait a second. Completed up to here. Okay, na? Then otherwise we will close. So there is one adjustment is still pending. What is that adjustment, ma? Gross profit. Half rupees, how much? 20% on sales. Okay. If you see the debtor account, we can find out. We can find out the sales. We cannot find out the sales because we are not having the closing balance and we are not having the sales information. So both the things we cannot find out in one single account. That means what we need to do, sir? There is one hint is remaining here. What is that hint, ma? Gross profit percentage. So please open working note number 8. What is the working note number 8, ma? Calculation of sales or purchase. Calculation of sales. Okay, now I will ask certain formulas. You need to respond. What is the gross profit formula? Sales minus cost of. Okay, what is the cost of goods sold? Direct expenditure. Opening stock plus purchases. What is the meaning of direct expenditure? Which is that? What is the meaning of direct expenditure, Rakesh? Rakesh, what is the meaning of direct expenditure? The expenditure which are incurred to bring the good into the current location or condition. There are totally 5 types of direct expenditure. First one is called as carriage inward, cottage inward, freight, octroi, marine. So these are the 5 types of direct expenditures. Okay. What is the opening stock? What is the opening stock? 18, 18, 80,000. What is the purchases? Net purchases. 4 lakh 4,47,000. What is the direct expenses? 30,000. Freight only. 30,000. What is the closing stock? 70. What is the amount of cost of goods? 4,87,000. We have given the gross profit percentage, that is equal to how much, ma? 20% on sales or on cost? So they no need to mention 20% on sales, because gross profit is always calculated on sales or on cost? On sales. We are having the information related to cost or sales? Cost. We have information related to cost. What is the meaning of 20%, ma? 20 divided by 100. That is equal to 1 by 4 or 1 by 5? 1 by 5 on sales means on cost. 1 by 4. That means we can find out the gross profit. So gross profit is equal to 4,87,000 into 1 by 4 or into 1 by 5? Into 1 by 4. That is equal to how much? 1,21,750. So we know the gross profit means the missing figure is called as sales. Okay na? So please write the gross profit in the trading account. Completed? Sir, they no need to mention gross profit percentage on sales, because always gross profit percentage will be on sales or on cost? On sales. What is the gross profit percentage formula? Gross profit divided by sales into 100. That means always gross profit percentage will be on sales or cost? Sales. Okay na guys? Completed? Okay. Now this gross profit we need to record in trading account or P&L account? Trading account. So 1,21,750. So to gross profit or by gross profit? 1,21,750. So by gross profit is equal to 1,21,750. What is the balancing figure? 6 lakh? Total? 6 lakh? 6,08,750. So what is the total amount? Okay, now up to here. Then we can find out net profit. Then we can find out what, ma? Net profit. This is working note number 8. Then we can find out net profit. Okay, what is the amount of net profit, ma? 8,000 plus 600 plus 5,000 plus 1,21,750. Sorry, we have forgotten the provision. Please wait. 2 provision for bad debts. How much? What is the closing balance of debtor? Closing balance of debtor. We not closed. Okay. Buy sales or 2 sales, amma? 2 sales. How much? 6,08,750. How much we will get? 12,000. క్లోజింగే కదా. 72,000. What is the total? 7 lakh. 7,72,750. What is the balance? 72,000. 72,750. By balance carried on. Where we need to record this one, ma? In the balance sheet, current year, previous year? Current year. So asset, debtor how much? 72,750. On this we need to calculate what, ma? PBD. How much? 72,750 into 2%. 1455. Where we need to record this one? In the P&L account. Debit side also same amount or different amount? Same amount. We are not having the opening balance. We are not having the bad debts. Then we are only having what, ma? Closing balance. This amount only we need to transfer to P&L account. So in the P&L account, debit side or credit side, ma? Debit side. 1455. Okay. What is the profit? Total how much? 1 lakh. 1 lakh 30 total. 1,35,350. 1,35,350. What is the net profit? 10,145 is the net profit. Avuna kada? Credit side, debit side only. 10,145. Okay, we need to add or we need to decrease? Add back net profit 10,145. What is the balance? 1,07,145. Then do the 10%. Depreciation we are not calculated. We have calculated now. Balance sheet lo depreciation. You have directly recorded the closing balance in the balance sheet. That means you already reduced the depreciation. No problem. What is the 1,07,145? One lakh 7,145, right? We can reduce from the debtors, we can record on the liability side, no problem. If you want, you can reduce from the debtors or we can record on the liability side, no problem. Tallied or not tallied? How much? 2,73,000. 75,000. Give me one calculator, I will calculate. 70. First said 72, then 75, then 76. 2,76,600. Sir, completed. This is the overall discussion about single entry. This is the most important sum. If you do this sum without seeing and without any corrections, then that means you have thorough. You can do any type of sum like what, ma? Single entry. Completed? Okay, now if you have any doubts. Okay, now I will discuss certain calculations regarding to the gross profit percentage. Okay, guys. Completed all the things? Okay, now is there any doubts? Is there any doubts? Please see the calculation. Sir, this is an example. Sir, completed. Okay. What is the information given in the question, sir? Cost of goods sold is equal to 1 lakh. Gross profit percentage is equal to how much, ma? 25% on sales. What is the sales amount? $25,000 is the sales amount. Please see the question. I am not going to calculate the gross profit. I am going to calculate the sales. What is the amount of sales? 33,330. Okay, option A 33,333. Option B 25,000. Okay. 1,33,333. 20,000. Option D. Option E. All of the above. Okay. None of the above. Okay, how many members are accepting option A? Rakesh, can you please stand up? How did you get 33,333? Sir, I am asking about the sales. I am not asking about the gross profit. Please see once again. What is the answer? Option C is the correct answer. So please give the round of applause to Pawan. Okay. Sir, first of all, what is the cost of goods sold? 1 lakh. What is the gross profit formula? Sales minus cost of goods. Okay, then what is the amount of gross profit, ma? 1 lakh into 1 by 4, 1 by 5, 1 by 3. 1 by 4, 1 by 5, 1 by 3. 1 by 4, 1 by 5, 1 by 3. 1 by 3. 33,333. So 25% means 1 by 4. 25% means 1 by 4. 25% means not 1 by 5 or not 1 by 3. 1 by 4. 1 by 4 on sales or on cost? On sales. We need to get 1 by 3 on cost. That is equal to how much? 33,333. So we can find out the sales or we cannot find out the sales. We can find out the sales. Sales is equal to how much? Cost plus gross profit. What is the cost? 1 lakh. What is the gross profit? So 1,33,333 is the answer. That much small calculations. Why you are not doing? You will get how many marks? 2 marks. 1 MCQ will get. Okay na? Okay. I will show you the previous year exam paper. Okay na? Some of our seniors are not identified even that question related to single entry. They are asking about whether it is a partnership or whether it is a final accounts, like that. Okay, can you please calculate this one? Yes, sir. What is that one? Okay. Sir, goods are sold at a cost plus 25%. Cost is equal to how much, ma? Cost of goods sold is equal to 2,60,000. What is the amount of sales? Shall I say one thing? From morning onwards, Sirisha is shouting like that. Whatever the Sirisha answer is told, that one is a wrong answer. I have written 2 times in the on a belief, okay. 3 lakhs? Okay, please stand up, Sirisha. What is the calculation? Please tell me. So, what is the amount of sales, ma? How we will get? Sir, again cost of goods sold is equal to how much? 2,60,000. Sir, directly we can apply ya? Indirectly ya? Directly. Because this 25% is given on cost or given on sales? Given on cost. That means what is the gross profit? 3 lakh. Gross profit. 25%. That is equal to how much? Gross profit. 65,000. 2,60,000 plus 65, how much? 3,25,000 is the amount of sales. This one given in 2024 December attempt. Okay. So, how sir? See the information provided in the question. So, Rahul does not maintain the, sir, just I will read, I am not going to solve. I will read that, sir. Okay, na? So, proper books of accounts. However, he maintained the records on his bank transactions. He is maintaining only the bank transactions. That means pure or quasi? Pure, quasi, simple. Are you remember? Pure, quasi, simple. Pass. Open. Simple. What ma? Simple. Why? Because they have given the bank transactions. Okay. Also given the following information which was requested to prepare the final accounts. We need to prepare the final accounts. Sir, we need to prepare the final accounts means so many students have think this one is a final accounts, but this is not a final accounts, unfortunately. Because why ma? He has maintained a recorder, he has not maintained the recorder. He has maintained records of only bank transaction, that's all. So that this is a single entry or a what ma? Incomplete records. This is a incomplete records. Debtor balance given, we need to find out the closing debtor. That means which working note we need to prepare? Debtor account. Next creditor account. Next one what ma? Stock, opening stock in the trading account debit side and again in the closing balance sheet, opening balance sheet, opening. And closing stock will be recorded in the trading account credit side and again in the opening balance sheet, closing balance sheet, closing balance sheet. Bank balance was given, fixed asset was given. How many working notes we need to prepare? 4 working notes. How many working notes ma? 4. Debtor account, creditor account, as well as what ma? Opening balance sheet. That's all. They are given the bank transactions. So received from debtors. What is the entry? Debtor account. Bank account debited to debtor account. So in the bank account debit side, in the debtor account credit side. Additional capital introduced. Bank account debited to capital account. In the bank account debit side, we need to add it to the capital. Next one. Sale of fixed asset. What is the entry for the sale of fixed asset? Bank account debited to sales account. We have got the loss or profit. Loss. What is the amount ma? 2,500 is the book value, but we have sold for how much? 1,750. Loss will be transferred to P&L account. Where will be recording that loss? Asset account, credit side or debit side? Credit side. To P&L or by P&L? By P&L. What is the amount of the loss? 750. Paid to creditors. Creditor account debited to bank account. In the creditor account debit side, in the bank account credit side. So expenses paid. What is the entry? Expenses account debited to bank account. So directly only expenditure, only one expenditure is given. So no need to open the expenditure account. No need to open the expenditure account because outstanding given, not given. Prepaid given, not given. So directly this expenditure will be transferred to P&L account, debit side. So in the cash account, in the bank account, which side we need to record? Debit side or credit side? Credit side. By expenditure to expenditure? By expenditure. Personal drawings, what is the entry? Drawings account debited to bank account. We will reduce from the capital, we will record in the bank account, credit side. Next one, purchase of fixed asset. What is the entry? Asset account debited to bank account. In the fixed asset to bank, in the bank account by fixed asset. That's all. And there is a one calculation was left out. We need to find out this calculation. How many marks? 14 marks. When compared to this sum is simple or harder? Simple. As it is fourth question, open the fourth question and see. Except that last working adjustment, remaining all the thing is fourth question. The fourth question is same as 10th question. You can write there. Fourth question is same as 10th question. Guys, okay na? Same fourth question, there is a different. Same fourth, but here we are having the missing figures. More number of missing figures. There we are having only closing balance of debtors as a missing figures. I think so. Closing balance or opening balance, amma? Closing balance of debtor. Only one missing figure we need to find out. Creditors, sir? Okay. Same sum, different sum. Okay na guys? So there is another sums you need to solve. What are the sums, sir? Means open once again. Ninth sum we have discussed. Sir, ninth sum is the very important. If you solve the ninth sum, you can solve any type of sum related to single entry system, no problem. If you solve the which sum? Ninth sum. Please solve the question number 7. In the question number 7, for the 6th point, write by check. In the question number 7, which point ma? 6th point. Write there by check. Okay na? So you need to solve question number 7, that's all. Please try to solve question number 7 and question number 4. It is sufficient. 7 and 4. Okay na? Totally how many questions I have given the homework? Only 2 questions. Only 2 questions. 4 and 7. That's all. In the provision for bad debts, 3rd question. In the provision for bad debts, what ma? 3rd question. Okay na? So we have completed what ma? Up to single entry. So that means 14 marks in your hands. Not only the 14 marks, we have discussed so many things related to what ma? Provision for bad debts also. Okay na? So please take 10 minutes break. Sufficient? 10 minutes break. Okay. Take the 10 minutes break. Then after I will start the NPO, but I will say the different way of using the same asset account for the NPO point of view. Different way of using the same expenditure account for the NPO point of view. Till now we have discussed only single entry point of view. Now the same accounts we are going to discuss from the point of view of NPO. Okay na guys? Okay. Please come first or take otherwise 15 minutes. No problem. 15 minutes. 1 o'clock. Okay na? I will discuss only for the half an hour and I will give the break. No problem. Okay na? 1 o'clock. Okay, the next topic is called as NPO. Sir, single entry for that sums are sufficient. You need to learn like a conceptual. Okay na? We should not keep remembering of question for answers. Okay na? In the examination, they will ask the different question, same question, amma, different question. But the amounts are different, so same model only they will ask. Same adjustments will be repeated. You need to remember the adjustments, but not the amounts. Okay, now one thing I have clarified. So now we are going to discuss the NPO. The same asset account, we are going to discuss about the NPO point of view. Same asset account, a different account, amma, same asset account. We know already in the asset account, opening balance will be on the debit side. Yes or no, ma? 2 balance brought down, buy balance brought down, 2 balance brought down. And closing balance will be on the credit side, buy balance carried on. If you purchase the asset, will be recorded on the asset side. If you sell the asset, will be recorded on the debit side. If you sell the asset, will be recorded on the credit side. So profit will be recorded on the debit side of particular account, and loss will be recorded on the credit side of asset account. Next, depreciation will be recorded on the debit side. Now, in the NPO, how many accounts we are having? We are having the 2 type of accounts. What are the 2 accounts, ma? Receipts and payments account, income and expenditure account. Okay, na? So first, the opening balance will be recorded in the opening balance sheet. Opening balance will be recorded in the opening balance sheet. And closing balance will be recorded in the closing balance sheet. We will prepare the opening balance sheet and we will prepare the closing balance sheet there also. Are you getting the point or not? First one will prepare what, ma? Receipts and payments account. Next, income expenditure account. Third one, opening balance and closing balance sheet. In the receipts and payments account, we will identify the closing balance of cash and bank. In the income and expenditure account, we will identify the surplus or deficit. So, incomes are more than expenditure means we will get surplus. Expenditure is more than income means we will get the deficit. Okay, na guys? So, in the income and expenditure account, we will follow accrual basis. We will follow which basis, ma? Accrual basis. Same like P&L account or different? Same like P&L account. Debit side we will record expenditure and credit side we will record the incomes. Okay, na guys? In the cash and in the receipts and payments account, same like what, ma? Cash book. It is a summary of cash book or normal transactions. Summary of cash book. Why we are going to call it as it is a summary, ma? Because in the cash book we will record each and every transactions happened in the year. For example, if we paid the salaries for the May month means in the May month we will record what, ma? Buy cash or to cash, buy cash. And again in the April month, buy cash. And again in the April, May, June month, buy cash. July, buy cash. Like that. If you summarize the total amount, then we will record in the which account, ma? Receipts and payments account. So that is a summary of cash book. We will find out for the preparation of, we will prepare to find out the cash balance. Closing balance or opening balance, ma? Closing balance. What is the starting point of receipts and payments account? 2 balance brought down, buy balance brought down. 2 balance brought down. What is the closing balance? Buy balance carried. Same like cash book or different? Same like cash. Receipts will be recorded in the debit side or credit side? Debit side. Payments will be recorded in the credit side. In the receipt side, in the receipts and payments account, debit side will be same equal to the income and expenditure account, credit side. Receipts and payments account, credit side is same equal to the income and expenditure account, debit side. Yes or no? No. No. Why? All the things will be recorded in the income and expenditure account. No, sir. Certain things will not be recorded in the income and expenditure account. We are having the 2 types of transactions. Do you remember it? How many types of transactions are there? 2 types. Please open the concept book. What is the chapter name? Capital and Revenue Transactions, page number 24. After discussing this concept, I will give the break. Okay, now what is the concept? Capital and Revenue Transactions. We will get from this chapter also how many marks? 7 marks, or we can estimate 1 MCQ from this chapter. Please be silent. So what is the page number? 24. Okay, now guys, have you opened the page number 24? Okay. What is the going concern concept? Business will be continued in the foreseeable future. This is also called as fundamental accounting assumptions. What are the fundamental accounting assumptions? Going concern. Go CA. Remember the word called as shortcut word ma? Go CA. Going concern, consistency and accrual. So one of the fundamental accounting assumption is called as going concern. What is the meaning of fundamental accounting assumptions? Every organization will follow those assumptions. What are the three assumptions ma? Going concern. In case if you are not followed that fundamental accounting assumptions, you need to disclose. Not followed or followed or not followed. If you are following the going concern, consistency and accrual, no need to disclose in the notes to accounts as per AS1. As per what ma? AS1. What is AS1 sir? Disclosure of accounting policies. So policy means principle and method. Okay, we can discuss in the evening what is the AS1. In the AS1 we are having one concept called as what ma? Fundamental accounting assumptions. If you follow the fundamental accounting assumptions, then no need to disclose or need to disclose. No need to disclose. If you are not following the fundamental accounting assumptions, then you need to disclose in the notes to accounts. Where we need to disclose ma? Notes to accounts. What are the fundamental accounting assumptions? Going concern, consistency, accrual. So now we are going to discuss what ma? In that we are going to discuss the going concern. What is the meaning of going concern? Business will be continued in the foreseeable future. What is the meaning of foreseeable future? 1 year from the end of the financial year or from the date of preparation of financial statements is called as a foreseeable future. 1 year from the date of preparation of financial statements or 1 year from the beginning. 1 year from the date of preparation of financial statements, business will be there or will not be there? Will be there. So this is called as foreseeable future. So based on this foreseeable future, we are dividing the transactions into how many types? 2 types. First one is called as capital transaction and second one is called as revenue transaction. What is the meaning of capital transaction? Benefit more than 1 year or less than? Benefit more than 1 year. Then we were considering it as what ma? Capital transaction. If in case benefit we are getting less than 1 year means we are getting what ma? Revenue transaction. Guys, are you getting it or not? Now, this capital transaction and revenue transactions, we have bifurcated based on assumption called as going concern concept. Next one. Now we are going to discuss about the types of expenditures. We are having how many types of expenditures are? Capital expenditure, revenue expenditure, deferred revenue expenditure. If you understand this concept, then only we can understand the NPO. Otherwise, we cannot understand the NPO. Okay, now not only for the purpose of NPO, we will get how many marks ma? Nearly 7 marks in the examination, whether directly or indirectly. Okay na guys? Okay, please be very careful. First of all we are going to discuss about the capital expenditure. Okay na, from the foundation onwards we are studying what is the meaning of capital expenditure. We know the clear definition of the capital expenditure. What is the capital expenditure ma? Any expenditure. Okay. Any expenditure incurred on a benefit is greater than 1 year. Such expenditure are as follows. Okay, not all the type of expenditures, only certain type of expenditures we are considering it as what ma? Capital expenditure, even though we are getting benefit more than 1 year. So inclusive definition, exclusive definition. Inclusive definition. In the GST we can learn about what is the inclusive, what is the exclusive. In the same like that, this one is also called as what ma? Inclusive definition. How many expenditures are going to call it as capital expenditures? Are 5 expenditures. Benefit more than 1 year, less than 1 year? Benefit more than 1. First one what ma? Acquisition of an asset. For example, we have acquired this particular AC. Benefit getting more than 1 year or less than 1 year? More than 1 year. So acquisition of asset is a capital expenditure. Okay, and the capital expenditure will be recorded in the receipts and payments account or income and expenditure account or balance sheet. In the receipts and payments account, we will record all the capital nature of transactions and all the revenue nature of transactions. In the income and expenditure account, we will record what ma? Revenue nature of transactions. Whether what ma? revenue expenditure or revenue receipt will be recorded in the income and expenditure account. Both the capital nature of transactions and revenue nature of transactions will be recorded in the receipts and payments account. But when come to the balance sheet, only capital nature of transactions will be recorded. What is the meaning of capital and what is the meaning of revenue? We are going to learn this in this chapter. Then only I have firstly discussing about what capital and revenue. Then after I will discuss about the NPO. So what is the first one? What is the meaning of capital expenditure? Benefit more than 1 year or less than 1 year? More than 1 year. Okay now. Benefit more than 1 year. That too related to fixed asset or not related to fixed asset? Related to fixed asset. First one is called as acquisition of a fixed asset. What is the meaning of acquisition? Purchase. Purchase of fixed asset. In case we purchase the fixed asset means it is called as a capital expenditure. Okay. Next, any expenditure incurred to bring the asset into the current location or condition. In the place of asset, if you substitute the word called as good, then it is called as a direct expenditure. In the place of asset, if you substitute the word with the good, then it is called as what direct expense. So now, what is the meaning of any expenditure incurred to bring the asset For example, we have purchased the asset. Okay now. Directly we can use or we need to install. We need to install. The installation expenditure is called as capital expenditure. We are going to add back to the particular asset, we are going to reduce, we are going to add. Okay now, the capital expenditure means what we need to do? We need to add back to the particular asset. Are you understanding it or not? Current location means what Go down or workshop. Condition means what Should be in a passive use but not in active use. What is the meaning of passive use? Ready to use. What is the meaning of passive use Ready to use. First one, acquisition of a fixed asset. Next one, what Any expenditure incurred to bring the asset or to bring the good? To bring the asset into the current location or condition. Examples are called as what We have purchased one AC. For that AC, we need to incur a installation expenditure or transportation expenditure for the bringing the AC into the current location is also called as what capital expenditure or revenue expenditure? Capital. Okay sir, capital expenditure. What is the accounting treatment for the capital expenditure? We need to add back to the particular asset. We need to add back to the particular asset. Next one. Expenses incurred for renovation or extension of existing asset. Expenditure incurred for renovation or extension. What is the meaning of renovation Okay now, remodeling is called as a renovation or nothing but increasing the seating capacity is also called as what renovation. Extension is also called as what extension. For example, in an internet cave, imagine an internet cave, in a smaller age, you will go to the internet caves, yes or no So initially we are having only 4 cabins. Okay now, he is increasing the 4 cabins to 8 cabins based on demand. And this is called as what extension, renovation, extension. Extension is also called as what capital expenditure or revenue expenditure? Capital expenditure. Are you getting it or not? Okay, what we need to do the capital expenditure means add back to the particular asset. Initially the building value is equal to 1 crore. The building value is equal to how much 1 crore. How many floors we are having? 3 floors. On that 3 floors, again we have constructed another floor. For the construction of another floor, we have incurred again 1 crore rupees. Again how much 1 crore. Totally, what is the value of asset? 2 crores or 1 crore? 2 crores. Okay now, extension is also called as capital expenditure or revenue expenditure? Capital expenditure. You are incurred for fixed asset or current asset? Incurred for fixed asset. What is the meaning of fixed asset? Benefit more than 1 year is called as a fixed asset. Next one, expenses incurred for decreasing a operating cost. Any expenditure incurred, we are decreasing the operating cost. Okay now guys, for example, in this particular building, we are getting electricity expenditure of 1 lakh rupees. How much 1 lakh. But we made some electrical wiring. Okay now, because of electrical wiring, we are getting a electricity bill of rupees 50,000 only. Initially we are having how much 1 lakh. Okay now, we gone to the one electricity employee. So he has given one suggestion to us. What the suggestion Please change the wiring system. Please change the wiring system of overall building. We have changed that wiring system. Okay now, for that we have incurred certain expenditure called as 20,000. That overall wiring system, how much we have incurred 20,000. Because of incurring that 20,000, initially we will get what is the amount of electricity bill 1 lakh. Now how much we will get only 50,000. That means incurring a certain expenditure. In order to incur certain expenditure, the operating cost increases or decreases? Decreases. Are you getting the point or not? Sir, initially how much electricity bill will become 1 lakh. Okay, now we approach it to certain person. the person given advice to us. What is that advice? Please change the wiring system. If you change the wiring system, the electricity bill will be reduced, reduce. So that means here operating expenditure increases or decreases? Decreases. That particular expenditure is also called as capital expenditure or revenue expenditure? Capital expenditure. Are you getting the point or not? Okay, next one. Expenses incurred for the benefit of everlasting in nature. Okay, now there are certain expenditure if you get the benefit more than 1 year, that too related to fixed asset, then it is called as what ma? Capital expenditure. What is the meaning of capital expenditure? Benefit more than 1 year, that too related to 5 points or 6 points? 5 points. What is the first one? Acquisition of fixed asset. What is the second point? Any expenses incurred to bring the asset into the current location or condition. Expenditure incurred for renovation or extension of a fixed asset. Expenditure incurred for decreasing a operating cost. Next one what ma? Expenses incurred on a benefit more than everlasting in nature. More than 1 year or less than 1 year ma? More than 1 year. Imagine we have constructed one wall to the certain building. Okay na? We have incurred 1 lakh rupees for the construction of a wall. Okay na? Because of construction of a wall, we are getting benefit more than 1 year. Then it is called as what ma? Capital expenditure. So what is the accounting treatment for the capital expenditure? We are going to add back to the particular asset. So this is called as a accounting treatment for the capital expenditure, where we need to disclose the capital expenditure in the NPO, in the receipts and payments account and balance sheet, receipts and payments account and income and expenditure account, only income and expenditure account. In the receipts and payments account and balance sheet, we will disclose the capital expenditure. Are you getting the point or not? Okay, capital expenditure will be disclosed in the receipts and payments account, which side? Capital expenditure we will disclose in the income and expenditure account, which side? Say that thing only. We should not record in the income and expenditure account. We will record in the receipts and payments account. Okay, in the receipts and payments account, which side? Payment side. Expenditure means payment, income means receipt. Okay na guys, are you getting the point or not? Okay, next one is called as revenue expenditure. If you know the capital expenditure, easily we can understand the revenue expenditure. We will see salary payment, revenue expenditure, capital expenditure, revenue expenditure. Okay na. Next one, electricity bill paid, revenue expenditure, rent paid, revenue expenditure. The items which are disclosed in the P&L account is called as revenue expenditure. Okay na, whether direct or indirect, we can conclude it as what ma? Revenue expenditure or what ma? Revenue expenditure. Freight inward, revenue expenditure. Freight outward, revenue expenditure. Advertisement, revenue expenditure. Commission, revenue expenditure. All the things which we have recorded in the trading or P&L account is called as revenue items. Revenue items. Whether it is expenditure means revenue expenditure, whether it is income means revenue receipt. Whether it is income means what ma? Revenue receipt. Expenditure means revenue expenditure. The items which are disclosed in P&L account are what ma? P&L account. Nothing but the items which are disclosed in income and expenditure account is called as what ma? Revenue items. So receipts means revenue receipt. Okay na. Expenditure means revenue expenditure. If you see the definition given here, so any expenditure incurred and the benefit is derived less than or equal to 1 year. Less than or equal to 1 year. Such expenditure for as follows. What are the certain expenditures ma? An expenditure incurred for the production activities, whether direct expenditure or indirect expenditure. What is the direct expenditure example ma? Direct material, direct labor, direct expenses. These are all called as what ma? Direct expenses. So advertisement expenses, selling and distribution, finance expenses, asset maintenance expenses, non-cash expenses. What is the meaning of administration expenditure ma? For example, imagine this is the building overall for the administration purpose. Okay na? Any admission will be carried on from here itself. Okay na? For this building we are incurring certain rent. That rent is called as what ma? Administration expenditure or selling and distribution. Advertisement expenditure. Next one is called as what ma? Selling and distribution. Okay na. For the selling and distribution of goods, we have incurred, we have purchased one caravan. We have purchased one what ma? One caravan for the distribution of goods to the persons who have purchased. Okay na. For that caravan, we are paying the rent of rupees 1 lakh every year. So that rent is called as what ma? Revenue or capital? Revenue. Selling and distribution expenditure or what? Selling and distribution expenditure. For example, we have given advertisement. Advertisement is also called as what ma? Selling and distribution expenditure. Next one, what is the meaning of finance expenses? Interest is also called as what ma? Finance expenses. Asset maintenance means repairs. Repairs is called as what ma? Asset maintenance. Next one, non-cash expenditures means depreciation is called as a what ma? Non-cash expenditure. Trade discount is also called as what ma? Non-cash. But the trade discount will be recorded, will not be recorded? Will not be recorded. Okay na? Discount allowed will be recorded. That is one is called as non-cash expenditure. Are you getting the point or not? So discount allowed is also called as what ma? And depreciation. These are the non-cash expenditures. Whatever the name is called as, it is called as revenue expenditure or capital expenditure. Revenue expenditure, whether direct or indirect, whether selling and distribution or what ma? Administration, finance or asset maintenance. Okay, normal servicing expenses for the particular asset is also called as revenue or capital. Revenue. Okay, now for the one asset we have incurred of rupees 1 lakh. For maintenance of asset we have incurred for rupees how much ma? 1 lakh. Okay, now for that maintenance the benefit of the asset is increasing more than 1 year. The benefit of expenditure increasing how much ma? More than 1 year. Then that repairs and maintenance we are going to conclude it as capital expenditure or revenue expenditure. Capital expenditure. For any expenditure we have incurred benefit more than 1 year, that too related to fixed asset means what ma? Capital expenditure. I think did you get the point or not? Okay, revenue expenditure will be recorded in trading account or P&L account. If it is a direct means will be recorded in the trading account. If it is indirect means will be recorded in the P&L account. Trading account debit side or P&L account debit side. Are you getting the point or not? So next we are going to discuss the very important one called as deferred revenue expenditure. What is the meaning of deferred revenue expenditure ma? Here also from this expenditure we will get the benefit more than 1 year or less than 1 year? More than 1 year. Okay, but not related to fixed asset. But not related to fixed asset. Okay na guys? Related to fixed asset or not related to fixed asset? Not related to fixed asset. For example, what ma? Underwriting commission. I think so. You know the underwriting commission. What is the meaning of underwriter? The guarantee given by a particular person for the minimum subscription or maximum subscription? Minimum subscription. What is the minimum amount of subscription ma? 90%. If in case 90% was not subscribed by the public, then who will subscribe ma? Underwriter will subscribe the remaining amount of shares. For that risk we are paying a commission to the underwriter. Benefit more than 1 year or less than 1 year ma? More than 1 year. So related to fixed asset, not related to fixed asset. That one is related to capital. That one is related to capital. So share capital means what ma? Capital. It is liability asset, liability. So not related to fixed asset, but it was related to liability. So that this is called as deferred revenue expenditure. If in case that particular expenditure related to asset means capital expenditure. This underwriting commission related to liability or related to asset? Related to liability. For the purpose of subscription of amount, we are incurring certain expenditure. So subscription of capital means what ma? Capital means asset or liability? Liability. For the purpose of liability we are paying commission, so that this expenditure related to asset or related to liability? Related to liability. So that this is called as deferred revenue expenditure or what ma? Deferred revenue expenditure. So what is the accounting treatment for the deferred revenue expenditure, sir? We need to amortize. Do you remember the point or not? So we need to amortize based on benefit. Imagine we paid commission to the underwriter of rupees 1 lakh. Of rupees how much ma? 1 lakh. For the purpose of underwriting, we are getting benefit more than 5 years. Up to how much ma? 5 years. So divided by 5. For each year how much? 20,000. For each year how much ma? 20,000. That means in the each year we need to transfer 20,000 to the P&L account. Each year how much ma? 20,000. First year 20,000. Second year 20,000. Third year 20,000. Fourth year 20,000. And fifth year 20,000. So this 20,000 presented in the P&L account called as amortization. 20,000 debited to the P&L account is called as what ma? Amortized or unamortized? Amortized. Are you getting the point? So in the first year what is the amortized amount? 20,000. In the same first year what is the unamortized amount? 80,000. In the second year what is the amortized amount? Amortized 40. For the second year 20. Overall how much ma? 40. What is the unamortized amount? Okay. In the third year 60. Unamortized 40. In the fourth year 80 amortized, 20 unamortized. In the fifth year full amount is amortized, and unamortized is equal to how much ma? 0. Amortized portion will be transferred to where ma? To the extent of amortized portion should be recognized in the debit side of P&L account. To the extent of unamortized portion should be disclosed under the asset side, under the head of what ma? Non-current assets in the balance sheet. Okay na? Why we are going to call it as asset ma? Why we are going to call it as asset? Benefit? But we have incurred a certain expenditure. Why you are calling it as asset? It is an expenditure. Why you are calling it as asset ma? Because till now we have not get the benefit. Till now we have not get the benefit. If you get the benefit, then we are going to recognize it as expenditure. Otherwise it is an asset. Otherwise it is an asset. Are you getting the point or not? Unamortized portion will be presented in the asset side of the balance sheet under the head what ma? Other non-current assets. Okay na? Amortized portion will be presented in the P&L account debit side. What is the meaning of amortization? Debited to P&L account is called as amortization. What is the meaning of unamortization? Balance sheet asset side presented amount is called as unamortization. What is the example? Totally we have paid 1 lakh to the underwriter commission. Okay, underwriting commission we have paid how much ma? 1 lakh. Because of underwriting commission we are getting benefit more than 1 year. Up to how many years ma? 5 years. Up to how many years ma? 5 years. If you transfer the total amount in the first year itself to the debit side of P&L account, means what will happen? We will get the losses. We will get what ma? Losses. Okay, now more amount of expenditure on the debit side means we will get a loss or we will get a profit. We will get a loss. So that what is the accounting treatment we need to do? We need to transfer based on the benefit. We need to transfer what ma? Based on the benefit. So overall how many years we are getting a benefit? 5 years. That means what is the first year benefit ma? 20,000. So will be transferred to P&L account. What is the unbenefit item? 80,000 will be recorded as an asset. Will be recorded an asset. Otherwise, if you disclose the total amount in the P&L account in the first year itself, means we'll get a losses or we'll get a profit sir. We'll get losses. So because of that reason, what is the accounting treatment ma? So based on the benefit, please record in the P&L account debit side. Okay na? Otherwise, if you are not getting the benefit, means record in the balance sheet asset side. Are you getting the point or not? Why sir? Why we need to do like this? Sir, here benefit more than 1 year means large amount we will incur, less amount, large amount. So if you write the large expenditure in the debit side of P&L account means we will end up with losses. In the previous year we will get the profits, but in the current year we are getting a losses because of large amount of expenditure. Because of large amount of expenditure. So that we are transferring based on the benefit, based on the years, based on benefit. The portion debited to the P&L account is called as amortization. The portion presented in the asset side of the balance sheet is called as unamortization. Are you getting the point or not? So here certain deferred revenue expenditures are treated as revenue expenditures. Certain deferred revenue expenditure are going to treat it as what ma? Revenue expenditure as per para 56 of 26 AS. As per para 56 of 26 AS, intangible assets, any expenses incurred which benefit of more than 1 year, nature is what ma? Revenue, not possible to create the asset, should be recognized as an expenditure in the year in which incurred. Recognized as an expenditure means where we need to record ma? We need to record in the P&L account debit side. Recognize as an expenditure means what ma? We need to record in the P&L account debit side. In the year of incurred or in the year of benefit? In the year of incurred. That means this type of expenditures are called as revenue expenditures, capital expenditures, deferred revenue expenditures. Revenue expenditure. Sir, revenue expenditure will be transferred to P&L account debit side. Revenue expenditure will be transferred to P&L account debit side. Capital expenditure will be recorded in asset side. Capital expenditure will be recorded in balance sheet asset side. Are you getting the point or not? Deferred revenue expenditures will be recorded in the both the sides. Will be recorded in the both, in the income and expenditure account debit side and the balance sheet asset side. The amount recorded in the P&L account debit side means it is called as amortization. The amount recorded in the balance sheet asset side means it is called as unamortization. Are you getting the point or not? Based on the benefit we are transferring or based on years? Based on the benefit. Are you getting the point or not? Okay, that means what they are saying, sir, these 5 expenditures are deferred revenue expenditures or revenue expenditures? Deferred revenue expenditures only. These 5 expenditures are what ma? Deferred revenue expenditures. Normally these 5 expenditures are deferred revenue expenditures. But as per para 56 on 26AS, what they are saying, sir? Treat it as expenditure in the year of incurred. Treat it as expenditure in the year of incurred. That means what, ma? We need to treat it as what, ma, now? Revenue expenditure. Even though they are deferred revenue expenditures. Even though they are deferred revenue expenditure, we need to treat it as what, ma? Revenue expenditure. What are there? Advertisement, research and development, preliminary expenses, pre-operating expenses, employee training expenses. These 5 expenditures are normally deferred revenue expenditures or revenue expenditures. Normally they are deferred revenue expenditures only, because benefit more than 1 year or less than 1 year, more than 1. Related to fixed asset, not related to fixed asset. Sir, advertisement, it is related to sales. It is related to sale, related to income, related to income. So, but the benefit more than 1 year or less than 1 year? More than 1 year. So that it is called as deferred revenue expenditure. But as per 26AS, para 56, revenue expenditures. Are you getting the point? Now, if in case in the examination, they ask to you one MCQ. Advertisement is a dash expenditure. Deferred revenue expenditure or revenue expenditure? Revenue expenditure only. It is not a deferred revenue expenditure. As per para 56, 26AS. R&D is a dash expenditure. Revenue expenditure. Even though it is a deferred revenue expenditure, we are going to conclude it as revenue expenditure. What is the accounting treatment for the revenue expenditure? Debited to P&L account or debited to trading account. What is the accounting treatment for the capital expenditure? Should be disclosed in the balance sheet asset side. Nothing but adding to the assets. Adding to the asset. What is the accounting treatment for the deferred revenue expenditure? Both. Both means what, ma? Debited to P&L account and balance sheet asset side. Debited to P&L account portion is called as amortized. Okay, na? Balance sheet asset side portion is called as unamortized. Guys, are you getting the point or not? Remember these 5. First one is called as what, ma? Advertisement, research and development. Next one what, ma? Preliminary expenses, pre-operating expenses, employee training. These 5 expenditures are normally deferred revenue expenditures, but now onwards, revenue expenditure. Okay, na? Next one, receipts. Easy, na? Receipts are so much easy. Repetitive means what, ma? Recurring means revenue. Non-recurring means capital. For example, we sold a good. Is called as recurring nature or non-recurring nature. Repetitive nature or non-repetitive nature. Sale of goods means repetitive. Daily we will sell the goods. So repetitive means recurring or non-recurring? Recurring. So recurring means revenue receipt. Recurring means what, ma? Revenue receipt. Non-repetitive means non-recurring. For example, we sold an asset. Sale of asset. Daily we will sell of assets. Daily what we will do, ma? We will sell the goods. Okay, na? But in a middle of the time certain situations we will sell the assets. Sale of good is called as a recurring nature. Sale of asset is called as a non-recurring nature. For the non-recurring nature, we received any amount means that receipt is called as what, ma? Capital receipt. That receipt is called as what, ma? Capital. For example, we have taken a loan. Daily we will take the loans or sometimes. Recurring or non-recurring? Non-recurring. But we have received or not received? Received. So non-recurring means whether it is a capital receipt or revenue receipt? Capital receipt. So capital receipt. What is the accounting treatment for the capital receipt, sir? It should be disclosed in the liability side. Or reduced from the particular asset. What are the 2 examples for the capital receipt? Sale of asset and loan taken. What are the 2 examples for the capital, ma? Capital receipt. Sale of asset and loan taken. If you take the loan, it should be disclosed in the liability side of balance sheet. If you sell the asset, it will be reduced from the particular asset. Are you getting the point or not? So if you see the capital receipt, what are the 2 adjustments? It should be disclosed in the liability side of balance sheet. Nothing but what is the example, ma? Loan taken. Okay, now what is the second accounting treatment? Reduced from the concerned asset which was disclosed in the asset side of balance sheet. What is the example? Sale of asset. Are you getting the point or not? If you sell the asset, reduce from the balance sheet asset side. If you take the loan, will be recorded in the liability side of balance sheet. Sir, each and every point is an MCQ. Simple MCQs they will ask in the examination. Okay, now we are end up with putting a wrong answer. So that is a sad thing. We are end up with putting a wrong answer or right answer. Just now I will ask you a question. Capital receipt will be recorded in liability side of balance sheet. Okay, na? But in the examination you will put asset side. Because receipt. If you see the receipt, automatically it is an asset. Receipt asset. Receipt means asset. Capital receipt means it is a liability or reduced from the asset. Next one, revenue receipt means normal incomes. Revenue means normal income. Sale of goods is called as what? Revenue receipt. Commission received. Revenue receipt. Okay na. Next one, sale of newspapers. Revenue receipts. Okay na. Revenue things will be disclosed in the P&L account credit side or P&L account debit side. P&L account credit side or trading account credit side. So these are the main importance adjustments. So sometimes depend upon the situations, the capital receipt will be changed as revenue receipt, like that. Nature of organizations. So purchase of motor vehicles. Normally purchase of motor vehicle is called as what? Capital expenditure. Purchase of motor vehicle is called as what? Capital expenditure. If the same motor vehicle is purchased by a dealer, revenue expenditure. For him it is called as purchases. For us it is called as purchase of asset. For him it is called as purchase of good. For his point of view, that one is called as a purchases. For our point of view, this one is called as an asset. So for our point of view, it is called as what? Capital receipt. For his point of view, that one is called as capital expenditure, revenue expenditure. Capital expenditure will be recorded in the asset side or liability side? Asset side of the balance sheet. Okay, now revenue expenditure will be recorded in the debit of trading account or debit of P&L account. Direct means debit side of trading account, indirect means debit side of P&L account. If you come to the income and expenditure, if you come to the NPO, where we will record in the receipts and payments account and in the income and expenditure account. Other capital means receipts and payments account and balance sheet. Are you getting the point or not? So this is the overall conclusion. Okay, after knowing of this one, we can easily solve what? NPO related sums. Okay, now after the break, I will discuss again what? Asset account, income account and expenditure account from the point of view of NPO. Okay na guys? So this is the overall information. Okay, we are going to solve 1 or 2 questions and I will take a leave. Then that means this concept will be completed. So please open the workbook. Just a 10 minutes, we are going to conclude. Okay na? Shall I open directly previous examination paper? How many marks, 7 marks. So that only I am saying, please don't leave the basics while going to the examination. Sir, state the reasons whether the following is a capital expenditure or revenue expenditure. That means from the below options there is no deferred revenue expenditure. Yes or no? Easily we can find out whether it is a capital or revenue. Sir, expenditure incurred in connection with the obtaining of license for starting a factory of rupees how much? 10,000. Capital expenditure or revenue expenditure? Capital. That one related to asset or liability? Asset. Benefit more than 1 year or less than 1 year? If you write just capital means they will not give the marks. What you need to write, it is a capital expenditure because benefit more than 1 year, that too related to fixed asset. So that we are going to conclude it as capital. So now we are going to discuss about BRS. What is the meaning of BRS? Bank reconciliation statement. So bank reconciliation statement. We are having the 2 books or 1 book? 2 books. First one is called as cash book. Cash book is equal to cash account. Cash book is equal to cash account. So, debit side we will record the receipts or payments. So, debit record on the credit record. Debit side we record the receipts. On the credit side we record the payments. Credit side we record the payments. Next, what is the book? Another book called as passbook. What is the meaning of passbook? Nothing but bank account. Nothing but what, Bank account. So imagine our business name is Bhanu & Co. What is our business name? Bhanu & Co. So Bhanu & Co. account maintained by the bank called as HDFC. Account maintained by the HDFC bank. We are going to prepare the HDFC bank account or Bhanu account. HDFC bank account. First of all, in the cash book, we need to consider only bank column or cash column. Bank column. We need to consider only the bank column or cash column or bank column. So nothing but HDFC account or Bhanu account. HDFC account. So in the HDFC books of accounts, they will maintain the account called as which account ma? Bhanu & Co account. Which account? Bhanu & Co account. So for a HDFC point of view, debitor will record the receipts and creditor will record the payments. In the Bhanu account, debit side they will record the concept called as what ma? Withdrawals or deposits. Withdrawals. On credit side we record the deposits. So here we need to find out the favorable balances and unfavorable balances. What is the meaning of favorable, sir? Normal situation. What is the meaning of favorable? Receipts are more than payments is called as a favorable. Receipts are more than payments is called as a favorable. Yes or no ma? No, no. So if you see the HDFC account point of view, receipts are more than payments means debit is more than creditor, credit is more than debitor. Debit is more than credit. So that means debit balance is called as favorable balance. In the cash book or passbook? Cash book. HDFC account is nothing but which book ma? Cash book. So in the cash book we need to consider only cash column or bank column? Bank column. Okay na? So here in the cash book favorable balance means debit balance. In the cash book unfavorable balance means credit balance. What is the meaning of favorable balance? Receipts are more than payments. So receipts are more than payments means debit is more than creditor, credit is more than debitor. Debit is more than credit. So in the cash book point of view, favorable balance means what ma? Debit balance. Unfavorable balance means what ma? Credit balance. When come to the bank, nothing but bank. Bhanu & Co means which book ma? Passbook. So in the passbook, favorable means what? Deposits are more than withdrawals. As per passbook, favorable means what ma? Deposits are more than withdrawals. Nothing but credit is more than debitor, debit is more than creditor. Credit is more than debit. So as per passbook, favorable balance means credit balance, unfavorable balance means debit balance. Okay, this one is clear or not clear? How many books are there? 2 books. Cash book. In the cash book, we need to consider only cash column or bank column? Bank column. Okay na? So that means nothing but bank account or cash account? Bank account. So in the cash book, we need to consider only the bank account. In the passbook means our account maintained by the bank or bank account maintained by us? Our account maintained by the bank. That account is called as passbook. That account is called as what ma? Passbook. As per cash book point of view, favorable balance means debitor, creditor, debit. What is the normal balance of favorable? What is the normal favorable balance means what ma? Receipts are more than payments. If you see the cash book, receipts are recorded on the debit side and payments are recorded on the credit side. So debit side is more than the credit side, then it is called as a favorable balance. If the credit is more than the debit means unfavorable balance. If you see the passbook point of view, what is the favorable balance ma? Credit balance. What is the unfavorable balance? Debit balance. Opposite to the cash book is called as a passbook. Here debit means in the passbook credit. In the passbook credit means in the cash book debit. Okay na? These 4 points do you understand or not? Okay na? Okay. Next. We are having the 4 methods in the bank reconciliation statements. How many methods are? 4 methods. For example, if they have given the cash book favorable means, what is the balance they have given ma? Cash book favorable means, what we need to find out? We need to find out the passbook favorable or unfavorable? Favorable. Okay na guys? For example, if they have given the passbook means, we need to find out the cash book. So vice versa. If they are given the cash book means, we need to find out the passbook. If they are given the passbook means we need to find out the cash book. In the same way, if they are given the cash book unfavorable balance means we need to find out the passbook unfavorable balance. So if they are given the passbook unfavorable balance means we need to find out the cash book unfavorable balance. Okay, there is a one method in order to record the transactions, either add or less. What is the ultimate objective? We need to find out which transaction we need to add and which transaction we need to less. Okay, do you know all the formats and all the things? What is the format, ma? Particulars, amount rupees and amount rupees. First we will start with the given balance or ungiven balance. Given balance. Then we will add certain things, then we will less certain things, then we will get the remaining another book balance. Okay, na? If they are given cash book means we will find out the passbook. If they are given the passbook means we will find out the cash book. For adding or deduction, we are having certain methods. Method 1. What is the method 1, sir? For example, they have given the cash book favorable balance. They are given which balance, ma? Cash book favorable balance. We need to find out what? Passbook favorable balance. If you understand method 1, you can get to know method 2, 3 and 4 easily. Simply, what are the books are available here? 2 books. First one is called as cash book and second one is called as what, ma? Passbook. What is the given balance? Cash book favorable balance. Cash book favorable means debit balance or credit balance? Debit balance or credit balance? Okay, previous faculty, whatever the method they have taught, I don't know. Follow this method, easily we can add or easily we can deduct. Okay, even I have taught, no problem. Okay, now you are getting a doubt, sir. Okay. Okay, follow this method, easily we can overcome whether which item we need to add or which item we need to less. What is the given balance? Given balance is cash book favorable. We need to find out the passbook favorable. Okay, what is the cash book favorable balance? Debit or credit? Debit. Please put the debit side at ma minus and credit side plus. Same symbols in which book, ma? Passbook also. Minus and plus. If any transaction recorded in the cash book debit side means what we need to do? Minus. What we need to do, ma? Minus. If any transaction recorded in the cash book credit side means what we need to do? Add. If any transaction recorded in the passbook debit side, what we need to do? Minus. If any transaction recorded in the passbook credit side, what we need to do? Add. For the given balance or for the ungiven balance? For the given balance. Okay, na guys? For example, they are given the transaction like what, ma? Checks deposited into bank but not collected. What is the transaction? Checks deposited into bank but not collected. Okay. Recorded in cash book or recorded in passbook? Recorded in cash book but not recorded in passbook. Okay. Deposited means receipt of payment? Receipt. We need to record on which side? Cash book debit side or passbook debit side? Cash book debit side. That means I have recorded the amount called as 7,000. What we need to do this 7,000? Minus. That's all. What we need to do 7,000 minus. In the same way, checks issued but not presented for payment. Check issued but not presented for payment. What is the meaning of that one? We have issued the checks worth rupees of 10,000, but they were presented or they were not presented? Not present. Not presented means the customer has not gone to the bank. Okay, na? The creditor went to the bank or not went to the bank? Not went to the bank. That means the particular transaction recorded in the passbook or recorded in the cash book? Recorded in the cash book. Okay, na? Issued means payment. Okay, deposited means receipt. Issued means payment. Deposited means okay. In which side we need to record? Imagine we are recording 10,000 on the credit side of the cash book. What we need to do? Add. What we need to do, ma? Add. Okay. Next one. Checks deposited but forgot to record in the cash book. Checks deposited but no entry made in the cash book. What is the meaning of this one? Recorded in the passbook but not recorded in the... Okay. Passbook, which side we will record? Deposit means debit side or credit side? That means, imagine I am taking 8,000. What we need to do? Add. What we need to do, ma? Add. Okay. So, Checks issued but not recorded in cash book. Recorded in passbook but not recorded in cash book. Issued means which side? Payment side. Nothing but which side ma? Debit side or credit side? In the passbook, debit side or credit side? So imagine I am recording 6,000. What we need to do? For the given balance or for the find outed balance? For the given balance. That means where the balance will be presented? In the cash book debit side. Where the balance will be presented ma? In the cash book debit side. Yes or no? Cash book favorable balance means which balance is was? Debit balance or credit balance? Debit balance. So for this particular amount, we are going to minus 7,000. We are going to add 10,000. We are going to reduce 6,000 and we are going to add 8,000. Are you getting the point or not? Sometimes there will be a difference amount. There will be a difference amount. What is the meaning of difference amount, sir? In the cash book, we have recorded 10,000. In the cash book, we have recorded how much ma? 10,000. In the passbook, credit side, we have recorded 7,000. What is the difference amount? 3,000. In which book we have recorded? Cash book or passbook? Sir, did you get the point or not? In the cash book, we have recorded how much ma? 10,000. But in the passbook, we have recorded only how much? 7,000. That means, in which book we have recorded the highest amount? Cash book. Cash book. So that the difference amount we can record in only one book called as which book ma? Cash book. Cash book. Cash book. Okay na? The difference we need to record in which book ma? Cash book. Highest amount where it was recorded? It was recorded in the cash book. The difference amount directly we are going to record in the cash book itself. Are you getting the point or not? In the case of difference amount, we need to record in the highest recorded book or lowest recorded book? Highest recorded book. Are you getting the point? First of all, what is the first type of transactions? In one book they will record, another book they will not record. Okay, now we need to record in recorded book or unrecorded book? Recorded book. Sir, what I am saying to trying to teach you means, what is the meaning of 7,000? What is the meaning of 7,000? This 7,000 ma, what is the meaning of this first 7,000? What is the meaning of 7,000? Checks deposited into the bank but not present, but not collected. Checks deposited into bank but not collected. That means recorded in which book? Cash book or passbook? So that I am recorded in the cash book. Are you understanding the point? What is the meaning of 10,000? Checks issued but not presented for payment. Recorded in cash book or passbook? Recorded in the cash book but not recorded in the passbook. So that I am recording in the cash book. Are you getting the point or not? What is the meaning of 6,000? Checks issued but not recorded in the cash book. Checks issued but not recorded in the cash book. That means recorded in the so that I am recording in the passbook. Okay na? Record the amount in which it was recorded. Record the amount in which it was recorded. In the case of difference, highest book or lowest book? Highest amount recorded. Difference amount or both the amounts? Difference amount. Different amount. Are you getting the point or not? What are the symbols? How did we put the symbols ma? Cash book favorable balance means, please put the which balance it was? Debit balance or credit balance? Debit balance. So on the debit side minus, credit side plus. The same symbols are different symbols? Same symbols we need to put in the another book as well. Are you getting the point? Okay, next, where we need to record? In the recorded book or unrecorded book? In the recorded book. In the case of difference amount, highest recorded book or lowest recorded book? Highest recorded book. Okay, now what the transaction is happened, record the same situation in the cash book or passbook, whatever it is. That is the first step. What is the second step ma? Symbols. What? Given cash book favorable means minus plus, minus plus. Given cash book unfavorable means plus minus, plus minus. Given passbook favorable means minus. Passbook favorable means passbook favorable means plus minus, plus minus. Passbook unfavorable means minus plus. Once again, cash book favorable, cash book unfavorable, passbook favorable, Plus minus, plus minus. Passbook unfavorable. Okay, first of all symbols okay na. Next one, we need to record in the recorded book or unrecorded book? We need to record in the recorded book only. We need to record in the recorded book. In the case of different highest amount recorded, lowest amount recorded. Same side or different side? Same side. Whatever the transaction happened, record the same transaction. Whether it was recorded in the cash book means record in the cash book. Whether it was recorded in the passbook means record in the passbook. Same side or different side? Same side. Whether it was debit means record in the debit side. Whether it is credit means record in the credit side. Are you getting the point or not? There are certain situations like dishonor situations. What ma? Next one, dishonor. Dishonor of a check, dishonor of a bill. Dishonor of a check, dishonor of a bill. Are you getting the point or not? Till now, okay na? What are the two books available here? Cash book and passbook. Cash book means only bank column or cash column? Only bank column. Okay na? If you, in order to find out the bank balance, we are having how many ways? Two ways. We are having how many ways ma? Two ways. Whether we can see in the passbook or we can see in the cash book bank column. We can see in the cash book bank column. This both the balances should be equal or unequal? Equal. In the case of unequal situation, we will do what ma? Reconciliation. We will do what? Reconciliation. Both are equal or unequal? Unequal. So in this, we are having the favorable balances and unfavorable balances. As per cash book point of view, what is the favorable? Debit balance. As per cash book point of view, what is the unfavorable? Credit balance. As per passbook point of view, what is the favorable? Credit balance. As per passbook point of view, what is the unfavorable? Completed. Now we are going to discuss about the symbols. Given the cash book favorable means, what is the symbols? Given the cash book favorable means minus, plus, minus, plus. Given the cash book unfavorable means? Given passbook favorable means? Same, plus, minus, plus, minus. Passbook unfavorable means? Where we need to record? In the recorded book or unrecorded book? Same side or opposite side? Sometimes we will record the highest amount in one book, lowest amount in another book. In that situation, highest difference amount, not a difference. Difference amount that too in a highest recorded book. Difference amount that too in a highest recorded book. Are you getting the point or not? For example, in the passbook credit side, in the cash book credit side, we have recorded 10,000. We recorded how much ma? 10,000. So the same amount which was recorded in the passbook debit side, 13,000. How much ma? 13,000. Now in which book we need to record? Passbook. How much? 3,000. Which side? A side means. A side means what? Debit side. Okay na? Okay. Now again, we are recorded in the cash book debit side 10,000. Here debit means in the passbook credit side. We are recorded 15,000. Okay. In the passbook and in the cash book? Which side? What is the amount difference? What is the amount difference? 5,000. So we need to record 5,000 in the passbook credit side. Are you getting the point or not? Next we are going to discuss about the dishonor. We are going to discuss about what ma? Dishonor. Dishonor of a check and dishonor of a bill. What happened? Huh? What? Dishonor of a check and dishonor of a bill. In the case of dishonor of check, we are having how many types of checks ma? Two types. Check issued dishonor. Next one, check deposited dishonor. Check issued dishonor. And next one what ma? Check deposited dishonored. So we have issued the check but honor or dishonored? We have issued the check but honor or dishonored? Issue of check means payment or receipt? Where we will record? We will record in the cash book credit side, not recorded in the passbook. Dishonor means banker will accept the check or will not accept the check due to certain reasons like, okay na, wrong dated, wrong signature, wrong amount, okay na, the wrong name, okay na. Due to certain reasons, banker is not going to accept the check. That means banker not accepted means, okay na, entry recorded in the passbook or not recorded in the passbook? Not recorded in the passbook. So dishonor, check issue dishonor means what ma? Recorded in the cash book which side? Credit side, but not recorded in the passbook. So what is the meaning ma? Recorded in cash book credit side, but not recorded in passbook. Now what is the check deposit dishonor? Check deposit dishonor. Sir, deposit means receipt or payment? Receipt. Issued means payment. That means recorded in the cash book or recorded in the passbook? Recorded only in the cash book. Why ma? Because it is honor or dishonor? Dishonor. What is the meaning of dishonor? Banker will accept, banker will not accept. Banker will not accept. Banker not accepted means recorded in the passbook? No. No entry will not going to record in the passbook unless banker has accepted the particular transaction. Are you getting the point or not? So here in this situation, record in the cash book which side? Debit side, but not record in the passbook. So Brahma recorded in cash book, debit side or credit side? Debit side, not recorded in. Not recorded in passbook. Okay na? So next one. Sir, bill, dishonor of a bill. What is the meaning of bill? What is the meaning of bill? Bills? Bills receivable. What is the meaning of bill ma? Bills receivable. Okay. What is the meaning of bill dishonor? In the case of bill of exchange, in which case we are related to bank. Okay, the relationship between the bank and the debtor, discounting situation. In the case of what ma? Discounting. Please listen very carefully. Discounting. In the case of discounting, we are going to collect amount from the bank. That's all, ma. We are going to collect amount from the bank. That means, in the cash book, we will record on which side? In the cash book, we will record on which side, ma? In which case? Discounting or dishonor? In the case of discounting, in the cash book, sir, whether in the case of discounting, we will get the amount or we will pay the amount? We will get the amount. Get the means receipt or payment? Receipt. Where we will record? Debit side of the cash book. Here the debit side of the cash book means in the passbook where we will record? Credit side. Okay. Now this was honored or dishonored? Dishonor. Dishonor means drawee made the payment, we need to make the payment. We need to make the payment. For whom we need to pay the payment? Banker. For the banker. So the banker having a right, okay na, he can auto debit. He can auto debit. What is the meaning of auto debit? Without asking permission to us, they can collect amount in the bank account which was available. They can collect amount from the bank account which was available. In our bank account, in another bank account? In our bank account only, yeah. That means in which side they will record? Debit side only, yeah. What is happening here? We made the bill discounting. Bill discounting means we will receive the amount, we will make the payment. Receive means receipt or payment. In which side we will record? Debit side or credit side? Which book is debit side? Cash book debit side, passbook credit side. Okay, we are not going to discuss about the discounting concept. We are going to discuss about the discounting or dishonor. Dishonor. Now, this particular transaction was dishonored. This particular transaction was dishonored. That means drawer made the payment or not made the payment? Drawer is not made the payment to the bank. That means who need to pay? We need to pay, na? Okay. We are paying, we are not paying. Bank are only collecting the amount for us. Yes or no? How we will collect? We'll make the entry in debit side or credit side? They will make the entry in debit side or credit side? Debit side. That means what is the meaning of dishonor of a bill, sir? Recorded in the passbook, debit side, but not recorded in the cash book. What is the meaning of dishonor of a bill? Recorded in the debit side, but not recorded in the cash book. Debit. Okay na? We don't know whether it is honored or dishonored, we don't know. Okay na? We will get to know after seeing our passbook without seeing the passbook. After seeing the passbook, then we will record in the cash book. That means what is the ultimate meaning? Recorded in the passbook debit side, but not recorded in the cash book. What is the meaning of What is the meaning of check deposited dishonor? Recorded in the cash book debit side, but not recorded in the passbook. What is the meaning of check issued? What is the meaning of check issued dishonor? Recorded in the cash book. Recorded in the cash book credit side, but not recorded in the passbook. What is the meaning of dishonor of a bill? Okay, these are the certain entries will be appeared to you in the questions. Okay, there is another concept called as what ma? Amended cash book. First we are going to solve one question regarding what ma? Normal BRS sum. Please open workbook which was given. Okay, question number 3. Afterwards, we are going to solve question number 4 regarding what my amended cash book. We can expect amended cash book question in the upcoming examinations. Okay, na guys? Okay, please be very thorough with this. In the previous examination, they directly asked question number 3. For how many marks? 7 marks. 5 transactions of 7 are given. 5. Okay. On comparing the cash book of Saksham with the bank passbook for the year ended 31st March 2022, following discriminations were noted. So, which balance is given, ma? Prepare the bank reconciliation statement as on 31st March 2022. If the balance as per cash book is on 31st March was how much? 1,58,250. Whether favorable balance or unfavorable balance? Favorable balance. Given balance is cash book favorable. What is the symbols? Minus, plus, minus, plus. Okay, I am going to take the symbols. Don't do anything. Please participate, that's all. So this is a cash book. This is a passbook. DR and CR. DR and CR. So, receipts, payments, withdrawals, deposit. What are the symbols? Minus, minus, plus. What is the amount of balance? 1 lakh? 1,58,000? 2? 280. This is the balance. Rakesh Anko, what you are doing? Okay, what is the first transaction? Okay, anyone from the back side? Dharmanko. Anyone from the Dharmanko? Can you please read the first transaction? Pawan. So, okay, I will read, no problem. Because repati kosam. Out of 82,000 paid in by check into the bank on 25th March. So, what is the date, ma? On which date we are going to? 31st March. Okay, na? Anything happened after 31st March? 31st March means? Not happened before 31st March. Ante kada. Anything match, not a match, it is a March. Anything happened after 31st March means not happened before 31st March. Yes or no? Okay. Please remember the date 31st March. Okay. Out of how much, ma? 82,000 paid in by check into the bank of rupees how much? 25,000 on 25th March. The checks amounting to 30,000 were collected on 5th April. That means after 31st March or before 31st March? It was collected after 31st March means, okay na, not collected before 31st March. Yes, what is the meaning? Check deposited into bank but not present, but not collected. How much amount was not collected before 31st March? This 30,000 were collected on after 31st March. That means not collected before 31st March. So that means this is a difference amount. This is a difference. Okay, what is the meaning of this sentence? Check deposited but not collected. So record in the cash book or record in the passbook? Record in the cash book but not record in the passbook. Okay, which side we will record? Debit side. Which side will record, ma? Debit. So that I am recording on the debit side. How much? 30,000. Okay, na? It was collected on which date? 4th April. That means after 31st or before 31st? But we are doing reconciliation on 31st March. That means before 31st happened or not happened? Not happened. Okay, next one. What is the next transaction? Out of checks drawn amounts to how much? 31,200 drawn on date of 28th March. The checks drawn on 28. Drawn means issued. Drawn means what, ma? Issued. How many checks worth rupees we have issued? 31,200. A check of rupees 10,000 were presented on 3rd April. That means before or after? After. That means these 10,000 were presented for payment or not presented for payment? What is the transaction? Check issued but not presented for payment. And that means recorded in cash book, not recorded in issued means payment or receipt? So in which side we have recorded? Debit side or credit side? Which book? Cash book. How much? I will record in the cash book itself. Yes or no, ma? Next one. A check of rupees 400 entered in the cash, 4,000 entered in the cash book but omitted to be banked on 31st March. Whether the check issued or deposited? Deposited. We are assuming it as what, ma? Deposited. Because there is no clear information provided in the question. So that we need to write the note point. We are assuming that particular check as a deposited check. As a deposited check. So nothing but what, ma? Check deposited but not collected. Checks deposited but not collected. We are recorded in the cash book. We are not recorded in the passbook. Which side we have recorded? Which side we have recorded? Debit side of a cash book. How much? 4,000. Guys, are you getting the point or not? Okay. Next one. What is the fourth point? A check for rupees 2,400 deposited but omitted to be recorded in the cash book. But omitted to be recorded in the cash book and was collected by the bank on 29th March. So issued, collected, but omitted to be recorded in the cash book. That means recorded in the cash book. So issued or deposited? Issued. Deposited. Okay, sorry. Okay, deposited how much? 2400. Recorded in the cash book or not recorded in the cash book? Not recorded in the cash book, but recorded in the passbook. So deposited means debit side or credit side? Credit side. How much? 2000. Okay, now we are recording in the recorded book or unrecorded book? In the recorded book itself. Okay, na? So next one. Bill receivable of rupees how much? 2080, previously discounted. Okay, this was already discounted. At the time of discounting, the amount was recorded in the cash book. Which side ma? Debit side. In the passbook, credit side. At the time of discounting, the amount already recorded in the cash book and already recorded in the passbook. In the cash book, which side ma? Debit side. In the passbook, credit side. This was already happened or not happened? Already happened. Okay, no problem. With the bank, had been dishonored, has been dishonored, but adverse was received on 3rd April. So adverse was received on 3rd April means we get to know on the 3rd April. We get to know the notice on the 3rd April. That means this particular transaction recorded in the passbook, which side? Recorded in the passbook, debit side, but not recorded in the cash book. How much? How much more? 20. Guys, are you getting the point or not? What I am saying? Sir, check discounted dishonor or what ma? Check discounted dishonor. We know the information on which date? 4th April or 3rd April? 3rd April. That means we don't know before 31st March. That means we recorded in the cash book on 3rd April. So on the 31st March, we have recorded in the cash book? No, we have recorded only in the passbook. We don't know the information. We don't know the information. So in the passbook means they will record on which side ma? Debit side. Because they will collect amount from our bank. They will collect amount from our bank. So collecting means withdrawn or deposited? Withdrawn. What is the next one? A bill of rupees 40,000 was retained. Means nothing but what ma? Paid. Okay, paid by the bank. Who has paid the amount? Bank. Okay na guys? Who paid the amount? Bank. Instead of us, bank is going to make the payment. On a rebate of 600. On a rebate of 600. What is the meaning of rebate ma? Discount. Okay. But the full amount of the bill was credited in the bank column of the cash book. That means in the cash book, how much amount we have recorded? 40,000. Yes or no ma? In the cash book, how much amount we have recorded? 40,000. But in the passbook, how much amount they have recorded? Same 40,000. Huh? We have got the rebate of rupees how much? 600. That means bank had paid only how much ma? 39,400. Guys are getting the point or not? As our point of view, what is the actual payment? 40,000. For the bank paid only how much ma? 39,400. But we know the information or we don't know the information? We don't know the information. What is the difference amount? What is the difference amount? In which book we have recorded the highest amount? Cash book or passbook? In which book we have recorded the highest amount? Which side? Debit or credit? Huh? Payment or receipt? Payment means which side? Credit side. That means what is happened ma? Actually we have recorded 40,000 in the debit side, but bank has recorded only 39,400. In which book is the highest amount? Cash book. What is the difference amount? 600. So what we need to record? 600 in the credit side. Are getting the point or not? Okay na? Is there any doubts? In the case of difference amount, highest book recorded la, lowest book recorded? Highest book. We need to record only difference amount or full amount? Difference amount. Are you getting the point or not? Or otherwise, if you want, you can record here 40,000. Here how much ma? 39,004. No problem. What ma? In case if you are getting confusion means, in the cash book we have recorded how much? 40,000. Record the 40,000. In the passbook we have recorded how much? 39,400. Record the 39,400. Then at that point of time you should not record what? 600. Okay na? Or record 600 in the cash book credit side, or otherwise record 40,000 in the cash book and record 39,400 in the passbook. No problem. What is the concept we are following? We are going to record in which book it was recorded. Yes or no, ma? Now also, record in which book it was recorded. Record in the cash book how much? 40,000. Record in the passbook how much? 39,400. Okay, no problem, huh? Okay, na? Fine, na? Okay, next. What is the next concept? A check of rupees 10,000 wrongly credited to the passbook. Check of rupees 10,000 wrongly credited to the passbook. In our account, wrongly credited 10,000 means what we will do, Rakesh? Which was adversely on 2nd April. The mistake was rectified on which date, ma? 2nd April. That means 31st March. Rectified or not rectified? Wrongly credited means in which book it was recorded? In the passbook credit side. How much? How much, ma? 10? Okay, na? Wrongly credited. The situation is happened to us means what you will do? Party. Based on this concept, there is a one film called as what, ma? Subramanya, I think so. Subramanyeswara colony. Maruti Subramanya. Because of this concept, there is a one thing. One film was come to the picture. Okay, what is the? Okay. Focus is missing. Bank had wrongly debited. How much? 20,000. If the situation is happened means Rakesh will go to the bank and will jump and will kick into the bank manager. So wrongly debited or wrongly credited? But reversed is on the April 1st. That means 31st March. Where we will record? Passbook debit side. Next one. The final point, please. A check of rupees 800 drawn on the savings account has been shown as a drawn on current account in cash book. Recorded in cash book or recorded in passbook? Recorded in cash book. Okay, which side? Drawn means? Drawn means what, ma? Payment side. How much amount? 800. Okay, now payment side 800. Now we will get the, for this balance, minus, plus, minus, plus. What is the total balance, ma? 1,26,000. Answer tallied, Okay. 1,26,000. As per passbook, as per cash book? As per passbook. Favorable, unfavorable? Favorable. Positive or negative? Positive means favorable, negative means unfavorable. Okay. Guys, did you understand the concept? So, what is the next concept? Amended cash book. What is the meaning of amended cash book, sir? Amended cash book means already we have prepared one cash book. Once again we are going to prepare the another cash book. Is called as with the name of amended cash book. Same rules will be applicable or different rules are? Same rules. Debit side we will record receipts. Credit side we will record payments. The same rules only, but again we are putting the word called as what, ma? Amended. Why we are putting the amended cash book? Because already we have closed one cash book. So that in order to differentiate the another cash book, we are putting the amended cash book. In this cash book, which transactions will be recorded? The transactions, okay, I will, which are not recorded in the cash book but recorded in the passbook will be considered. What is the things, ma? The transactions which are not recorded in the cash book but not recorded in, not recorded in the cash book but recorded in the passbook will be considered. Okay, na? So that means that particular transaction we have recorded in the cash book now and we have recorded in the passbook. Once again, while doing the bank reconciliation statement, that particular transaction we will consider or we will not consider? We will consider or we will not consider? Sir, what is the transactions which we are recording in the amended cash book? The transactions which are not recorded in the cash book. That means recorded in the passbook, not recorded. Okay. In the previously only that particular transaction recorded in the passbook. Now we are recording the cash book. That means whether this transaction is a BRS transaction or not a BRS transaction. Not a BRS transaction. What is the meaning of BRS transaction? Record in the passbook, not record in the cash book. Record in the cash book, not record in the passbook. But this particular transaction already we are recording in the passbook. Now we are recording in the amended cash book. Record in the amended cash book means is equal to what ma? Is equal to record in the cash book. Record in the amended cash book means what? Is equal to recorded in the cash book. Already recorded in the passbook and now we are going to record in the amended cash book. That means this particular transaction again we will consider, we will not consider, we will not consider for the bank reconciliation statement. Are you getting the point or not? So at this situation, what are the transactions will be considered? The transactions which are not recorded in the passbook. Are you getting it or not? Okay, please put the heading called as. I will say one example in order to get the understanding. What is the example, sir? Check issued but not recorded in cash book. Check issued but not recorded in cash book of rupees 10,000. Of rupees what ma? 10,000. What is the meaning of this one? Recorded in the passbook or recorded in cash book? So already we have recorded in the passbook debit side. Already we are recording the passbook debit side. How much ma? 10,000. That means we are not recording the cash book. Now we are going to record in which book? Amended cash book. Now we are going to record in the which book ma? Amended. Which side we will record? Credit side. Already it was recorded in the passbook. Now we are recording the cash book. Once again we will consider. Once again this transaction is not going to consider for the BRS preparation. While preparing the bank reconciliation statement, once again we will consider this transaction. We are not going to consider. We are not going to transact. Why? Already recorded in the passbook. Now we have recorded in the amended cash book. That means this particular transaction recorded in the cash book and recorded in the passbook. So that we should consider, we should not consider. We should not consider while preparing the bank reconciliation statement. Are you getting the point or not? This is the main point. This is the main. Okay, there is another example. Please take the same example as per not recorded in passbook. If I put the word called as what ma here? Passbook means already recorded in the cash book. So what is the sentence ma now? Check issued but not recorded in the passbook. Check issued but not recorded in the passbook. But recorded in the? Once again we will record in the amended cash book. Already recorded in the cash book. So now we can rectify this entry in the passbook. We cannot. We cannot. In the passbook who need to write? Banker need to write. We are not having any right to enter in the passbook. To enter in the passbook. So that this type of transactions is not recorded once again in amended cash book. Will be recorded, will not be recorded? Will not be recorded. This type of transactions will be considered while preparation of bank reconciliation statement. This type of transactions will be considered while preparation of bank reconciliation statement. Are you getting the point or not? Yes or no? Why we are going to consider? Because this transaction recorded only in the cash book but not recorded in the passbook. We can rectify this error. We can rectify this error. We cannot rectify this error. We cannot rectify. Why sir? In the passbook who is going to write? Only banker has right to record in the passbook. We are not having any right to record in the passbook. So that this particular transaction we need to consider only at the time of preparation of bank reconciliation statement. Are you getting the point or not? In the case of amended cash book, first we need to prepare the amended cash book, or first we need to prepare the bank reconciliation statement? First we need to prepare the amended cash book. While going to start the preparation of BRS, we need to take the amended cash book balance or cash book balance. We need to take the amended cash book balance. The 3 points we need to remember. What are the 3 points ma? In the amended cash book, we will consider the transactions which are not recorded in the cash book but which are recorded in the passbook. Once again, this transaction will not be considered for the preparation of bank reconciliation statement. Why sir? this particular transaction already recorded in the passbook. Now we have recorded in the cash book. That means recorded in the both the books or recorded in only one book? Recorded in both the books. Once again we will consider for the BRS. No, this is not a BRS transaction. This is not a BRS transaction. Now, while going to start the BRS, we will start with the amended cash book balance or normal cash book balance? Amended cash book balance. Okay, now after preparation of amended cash book, the transactions will be considered for the BRS means which type of transactions we will consider? The transactions which are not recorded in the passbook but recorded in the cash book. Are you getting it or not? Okay, na? So we on this we are going to solve question number 4. Guys, okay na? Not okay na? Okay na? Within a less time we can complete, no problem. In the case of amended cash book situation, first we need to prepare amended cash book or BRS amended cash. On 31st January 2022, say the cash book showed the bank order of balance of rupees how much? 2,50,000. Say the cash book is showing means cash book balance or passbook balance? Cash book balance. Cash book balance means nothing but bank column or cash column? Bank column. So that means we are going to prepare the amended cash book. We are going to prepare what ma? Amended cash book. So what is the starting point for the amended cash book? Cash book balance. What is the starting point for amended cash book ma? Cash book. What is the cash book balance given? Overdraft or favorable? Overdraft means unfavorable or favorable? Debit balance or credit balance? To balance brought down or by balance brought down? By balance. How much? 2 lakh? Okay na? In this amended cash book, what are the transactions we need to record? The transactions which are not recorded in cash book or which are not recorded in passbook? But already recorded in the? Okay. We are going to find out the transactions which are not recorded in the cash book first. Okay na guys? Okay. What is the first transaction? Cash and checks amounting to 26,800 were sent to the bank on 27th January. What is the date ma? We need to remember 31st January. So on which date we are going to prepare the bank reconciliation statement? 31st January. After 31st January means not happened before 31st January. So on which date we have sent ma? 27th January. But the checks amounts to 4,600 were credited on 2nd February. And one check of rupees how much ma? 900 were returned by them as a dishonor. Sir, check dishonor means recorded in cash book or recorded in passbook? Recorded in cash. Sir, check, not a bill. Check dishonor. Recorded in cash book but not recorded in passbook. Sir, amounting sent means check deposited or issued? Deposited. Sir, deposited check dishonor means recorded in cash book or recorded in passbook? Recorded in cash book. Which side? Debit side. That means this particular transaction already recorded in the cash book. Now we are not going to record in the amended cash book. Guys, are you getting the point or not? Okay na? Next one. During the month of January, say the issued checks rupees how much ma? 33,400 to his creditors. Out of this, a check of rupees 27,400 were presented for payment on which date? That means after 31st January or before 31st January? After 30. What is the transaction ma? Check issued but not collected. Check issued but not presented for payment. Okay, now that means recorded in cash book or recorded in passbook? Recorded in? This both the transaction we will consider at the time of preparation of BRS. We are not going to consider for the amended cash book. Yes or no? Why sir? Already recorded in the cash book. Already recorded in the cash book. Now, what is the third point, sir? According to the say the standing order. What is the meaning of standing order ma? We will give the instruction to the bank whether to make the payment or whether to collect the amount from another parties. Are you getting the point? What is the meaning of standing order ma? We'll give the instructions to the bank whether to collect the receipts or whether to make the payments as on due dates without asking permission to us. Without asking, if you see certain applications like Hotstar or Netflix or AHA, we will give the auto debit option. will use the auto. If you enable that particular auto debit option, automatically the amount will be debited or credited. The amount will be debited from our particular bank account. So that one is called as standing order. That one is called as what ma? Standing order. Likewise, we will pay the EMIs. EMIs also auto debiting or we will pay na? Auto debit. That means we are given the standing order, we are not given. We are given the standing order. So likewise, Sethi also given the standing order. The banker have made the following payments. On the due dates, banker had made the following payments. So we know na? We don't know na? We don't know. Because we have given the standing order or we only said to pay na? We have given the standing order. On that particular date, banker will pay automatically. They will ask permission to us automatically. So they are make the payments regarding life insurance premium and television license. So for life will be presented for the owner or business? Owner. Life will be there for the owner. Life insurance means personal or business? Personal. And the television license is also for the personal. Business will see the television or owner will see the television? Owner will see the television. So both of them collectively we are going to call as drawings. Collectively we are going to call as what ma? Drawings. Recorded in cash book. Recorded in cash book. Sethi given the standing order, but we don't know. On the due date, who will make the payment? Banker. That means this particular transaction recorded in the passbook, but not recorded in the cash book. Now we need to record on which side? Cash book. Amended cash book or cash book? Which side? Debit side or credit side? Payment or receipt? Payment means we need to record on. Why are you saying debit side? By drawings or two drawings? What is the amount? 3840 plus 2000 4,000. 6,240. Okay. 3,840 plus 4,000. 62. How much ma? 6,240. What is the next one? Sethi banker has collected. Who has collected the amount? Banker has collected the amount. We don't know. We don't know. Na. Collected means which side? Receipt or payment? Receipt. This particular transaction we are going to record in the amended cash book. Because not record in the cash book, now we are going to record on the amended cash. Which side? What we need to write? How much? 3,000. What is the next one? Interest charged by the bank. Sir, interest charged by the bank means payment. Okay na? Interest deducted by the bank. Okay, that means in the passbook which side it was recorded? Debit side or credit side? Debit side. Here credit side. So okay na? By interest or to interest? By interest. How much? 2,000. What is the next one? Bills receivable of rupees how much ma? 2,000. Discounted with the bank on December 2021. Was dishonored or honored? Dishonored. What is the recorded in the passbook but not recorded in the? They will record in the passbook debit side or credit side? Debit side. Passbook debit side means here? Cash book credit side. So by dishonor. How much? 2,000. What is the balance? 2 lakh. 2,60,740. Here also 2,60,740. What is the balance? Favorable, unfavorable? Favorable, unfavorable? Favorable. Unfavorable. That means what is the symbols? Plus, minus. From which balance we need to start? 2,57,740. Yeah? Our opening balance 2,50,000. 2,57,740. Okay na? Now, what are the transactions we need to consider? AB or CD? AB. Okay. What is the A transaction? Checks amounting to 26,800 was sent, but only collected how much? 4,600 collected. Collected on which date? 2nd February. That means recorded in the cash book but not recorded in the passbook. Sir, whether amount sent for collected, okay. Deposited or issued? Deposited. So now we need to record on which book? Cash book only. We need to record on which book? Cash book. Which side? Debit side or credit side? Debit side. How much? 4,000. How much? 4,600. Okay, next there is another amount also. What is the another amount? What happened the 900? Check deposited, dishonor. Check deposited, dishonor. Record in the cash book or record in the passbook? Recorded in the check deposited, dishonor, not the bill. Record in the cash book which side? Debit side. How much? How much? 900. Next one. Next one. During the month of January, say the issued checks amounts to how much? 33,400. To his creditor, out of which the check amounts to how much? 27,000. Presented for payment on 5th February. That means 31st January presented or not presented? Record in the cash book, debit side or credit side? Credit side. How much? 6,000. 27,000. 27,400. 2 lakh? 35,000. Okay na? Okay na? Amended cash book okay na? In the amended cash book, we will record only the transactions which are recorded in the passbook but not recorded in the cash book. Again, that type of transaction will be considered or will not be considered? Will not be considered. While going to prepare the passbook after the amended cash book, we need to take the balance of amended cash book. Amended cash book. Amended cash book balance. Okay na? Next one, what we need to do? After preparation of amended cash book, what are the transactions we will consider for the preparation of BRS? We will consider the transactions which are not recorded in the passbook, already recorded in the cash book. Those type of transactions we will consider. Are you getting the point or not? These are the two questions. Question number 3 and 4 is sufficient for the preparation of bank reconciliation statement. So in the previous examination also same question was asked, a different question. Same question. So I will try to search the different question is available or not there. Okay, this is one of the past question. We are trying to solve this one. When you proceed to reconcile the bank account starting with the debit cash book balance. Debit cash book means favorable and unfavorable. What are the symbols? Minus plus. Okay, check issued but not presented for payment. Check issued but not presented, recorded in cash book but not recorded in passbook. So that means what? Issued means which side? So add a plus or minus? Plus or minus? Next one, check deposited but not yet credited. Recorded in cash book but not recorded in passbook. Which side we need to record? Check deposited but not at credited means recorded in the cash book but not recorded in the passbook. Which side we have recorded? Debit side. Minus or plus? Minus. Bank charges charged by the bank not recorded in the cash book. So charged by the bank means which side? Passbook, debit side. Minus or plus? Minus. Interest allowed by the bank not recorded in the cash book. Interest allowed by the bank means receipt or payment? Receipt. It will be recorded on the passbook credit side. What we need to do? That's all. How many marks? We need to write the reasons, man. See the same question. I think so. This is the same question regarding to the question number 4. Regarding to the question number 4. How many marks? ఎప్పుడు చూడ Okay, the next concept is non-profit making organization. What is the meaning of NPO? In observation, I did not ask the full form. I am asking the meaning of non-profit organization. Completed, huh? Okay. Mainly for the service for the public, not having motive of the getting profits. We need to register under the section 8 of companies act. Then only we are concluding it as non-profit making organization. So what are the main purpose, main reasons to get registered under the non-profit making organization, sir? Tax benefit. We'll get what, ma? There are different slab rates for the profit making organization and different slab rates for the non-profit making organization. Yes or no? For the non-profit making organization, what are the slab rates? What are the slab rates? Okay. Okay. How many types of persons are there? How many types of persons are there? 8. What are they? NPO belongs to which person? NPO belongs to which person? Artificial judicial person. Okay. That was related to taxation. Okay, we are going to discuss about the accounting point of view. So in the accounting point of view, we need to find out the profit for the non-profit making organization. Sir, you are saying non-profit making organization. Again, you are saying to find out the profit. It is possible, possible. In each and every business, we are getting a profit, sir. We are not getting the profit, sir. We are getting a profit. Here in the NPO situations, so the profits need to be spent only for the organization itself. Owner can use only for the organization purpose. Here the owners are called as what, ma? Members. Okay, now members will share the profits, or they will not share the? They will not share the profits. They need to use only for the organization purposes. Okay. So in order to find the profits, we are having how many financial statements? We are having the 3 financial statements. First one is called as receipts and payments account, income and expenditure account, balance sheet. Okay, now in the income and in the receipts and payments account, we will start with the opening balance of cash and bank. We'll end with the closing balance of cash and bank. It is a summary of cash book or what, ma? It is a summary of cash book. Okay, you know all the rules and regulations, how to prepare the receipts and payments account. So in the receipts and payments account, we will record capital transactions as well as revenue transactions. In the previously, we have discussed about the what is the meaning of capital transaction, what is the meaning of revenue transaction, what is the meaning of capital transaction, benefit more than 1 year, what is the meaning of revenue transaction, benefit less than 1 year. In the income and expenditure account, we are going to record the expenditures on the debit side and income on the credit side. Sir, so many members will think like this. In the receipts and payments account, debit side we record receipts and credit side we record the payment. In the income and expenditure account, debit side we record expenditure and credit side we record incomes. So many students are thinking like this. The receipts are equal to income, sir. Receipts are equal to income, sir. 80% are equal. 80% are equal but not 100%. But not 100%. So many students are thinking like that. Payments are equal to expenditures, no. Say, payments are equal to expenditures, no ma. 80% of the cases it is correct, but remaining 20% of the cases it is not correct. Are you getting the point or not? So now we are going to discuss that remaining 20%. That remaining 20%. Normally the payment is equal to expenditure, receipt is equal to income. Normally payment is equal to what? Expenditure, receipt is equal to income. In all the cases, in only some cases, in only some cases. So now we are going to discuss the same asset account which we have discussed in the morning section from whose point of view? NPO point of view. That means opening balance will be recorded where ma? Will be recorded in the opening balance sheet. Will be recorded in the opening balance sheet. Why we are going to prepare the opening balance sheet? To find out the capital fund. To find out the capital. In the normal business we will call it as a capital, but in the NPO point of view we are going to call it as capital fund. In order to find out the capital fund, we need to prepare the opening balance sheet. In the question they have given the capital fund means we no need to prepare the opening balance sheet. Are you getting the point or not? So in the asset account, the opening balance will be recorded in the opening balance sheet and the closing balances will be recorded in the closing balance sheet. Completed? Next. We have purchased the asset. We have purchased the asset. So that we have recorded on which side ma? Debit side. This purchase of asset will be recorded in the receipts and payments account, income and expenditure account. In the receipts and payments account. We purchase the asset means comes in na outflow na cash. Cash comes in na goes out. Goes out. Payment or receipt? Payment. So purchase of asset will be recorded in where ma? In the receipts and payments account. Which side? Payment side. Which side ma? Payment. Opening balance will be recorded in opening balance sheet. And closing balances will be recorded in closing balance sheet. Are you getting the point or not? Sir, one by one I am saying. Opening balance in the opening balance sheet, closing balance in the closing balance. Purchase of asset will be recorded in the receipt side or payment side? Payment side of receipts and payments account. Next, sale of asset. Okay na? Where is the sale of asset ma? This one only na? Okay. Sale of asset will be recorded again in the receipts and payments account. Sale of asset will be recorded only in the receipts and payments account. In the receipts and payments account, which side? If you sell the asset, we will receive the cash, we will pay the cash, we will receive. So receipt side or payment side, amma? Receipt side. Purchase of asset, payment side. Sale of asset, receipt side. Are you getting the point or not? In the income and expenditure account, we will record only the depreciation. We will record the depreciation in income and expenditure account. Which side? Which side, ma? Nothing but debit side. Nothing but which side we are going to record? Debit side. Are you getting the point or not? In the P&L account, depreciation will be recorded or will not be recorded? Will be recorded. P&L account? Yes or no? Here also, P&L account means nothing but what ma? Income and expenditure account. Sir, this is a non-cash expenditure, so that in the receipts and payments account we will record or we will not record? We will not record. In the receipts and payments account we will record only cash related transactions. Are you getting the point or not? Once again, opening balance will be on the opening balance sheet, closing balance will be on the closing balance. Purchase of asset, payment side, okay na, sale of asset, receipt side of receipts and payments account. So depreciation will be recorded in income and expenditure account, debit side. Income and expenditure account, debit side, because it is an expenditure. Expenditure will be recorded on the debit side, income will be recorded on the credit side, because it is a nominal account. Debit all expenditure and losses, credit all incomes. In any account, we are going to find out the surplus or deficit or profit or loss, means that particular account is called as what ma? Nominal account. So in all the nominal accounts, we will record, where we will record ma? We will record expenditures and payments on the debit side, receipts and receipt side, incomes on the credit side. Okay na guys? Expenditure and losses on the debit side. Next, incomes and gains on the credit side. Okay. Now, profit on sale of asset will be recorded in. Profit on sale of asset will be recorded in income and expenditure account. Yes or no ma? So in the income and expenditure account, which side? Income side. Nothing but credit side or debit side? Credit side. Loss on sale of asset will be recorded in income and expenditure account. Which side? These are the principles you need to remember from the asset point of view. From the asset point of view. Once again, opening balance in the opening balance sheet, closing balance in the closing balance. At which time we are going to prepare the opening balance sheet?
in order to find out the capital fund. Already capital fund given in the question means we no need to prepare the opening balance sheet. Guys, are you getting a point or not? So purchase of asset, receipts and payments account, payment side. Sale of asset, receipts and payments account, receipts side. Depreciation, income and expenditure account, debit side. Gain, profit on sale of asset, income and expenditure account, credit side. Loss on sale of asset, income and expenditure account, debits. Okay now. We have closed the information related to what ma? Information related to asset account. Okay now. We have in the morning section we have prepared, we are known about what ma, how to prepare the asset account. Now we are discussing same asset account where we need to record in the NPO point of view. Are you getting the point or not? Next we are going to discuss about income account and expenditure account. In the morning section, okay now. We are recorded the income received. What is the entry for the income received? Cash or bank account debited to income account. Income received account. In the income account, which side we need to record? Debit side or credit side? Credit side or debit side? Credit side. What is the meaning of by cash and bank, sir? By cash and bank means nothing but we need to record this amount. Where we need to record this amount, ma? We need to record this amount in the receipts and payments account. We need to record this amount in receipts and payments account. Instead of P&L account, where we need to record this amount? In the income and expenditure account. Are you getting the point or not? If they have given the receipts and payments account means we will get the balancing figure of income and expenditure account. If they have given the income and expenditure account means we will get the balancing figure of receipts and payments account. Are you getting the point or not? Okay, now just we need to prepare the income account in the case of subscription. In the case of what ma? Subscription. Receipt payment ma? Receipt. Capital or revenue? Revenue. Recurring nature. Every year we are going to receive the subscription amounts. What is the meaning of subscription? Amount collected from the persons in order to incur from the operating expenditure of a particular organization. Are you getting the point or not? What is the meaning of subscription? Amount recovered from the members in order to incur the operating expenditure of a organization is called a subscription. It is a receipt to the organization point of view. Recurring nature or non-recurring nature? Recurring nature. Revenue receipt, capital receipt? Revenue receipt. That means we are going to record in the receipts and payments account. We are going to record in the income and expenditure. In the income and expenditure account, we will record the closing balance. In the receipts account, we will record all the receipts, whether it was related to previous year, whether it was related to current year. Is considered or not considered? Not considered. Not considered. Because in the cash, in the receipts and payments account, we will follow which basis ma? Cash basis. In the income and expenditure account, we will follow which basis ma? Accrual. Just we will prepare the subscription account same as income account. Subscription account same as income account. In the income we are having how many categories? 3 categories. Income received, income receivable, income received in advance. Income received, what is the entry? Cash or bank account debited to income account. In the income account, which side we will record? Debit side or credit side? Credit side. By cash or bank. This amount will be recorded in receipts and payments account or where? Receipts and payments account. So income receivable means asset or liability? Asset. To balance brought down, by balance carried on. To balance brought down means previous year or current year? Previous year. By balance carried on means current year. Next, income received in advance, asset or liability? Asset or liability? Income received in advance, liability. By balance brought down, to balance carried on. By balance brought down means previous year. To balance carried on means current year. Okay na? It will be completed. Now the balance figure will get what ma? Either income and expenditure account or receipts and payments. In case they have given the receipts and payments account means what is the balancing figure? Income and expenditure account. In case they have given the income and expenditure account means receipts and payments account. In the same way, the opening balances will be recorded in the opening balance sheet. Opening balances will be recorded in. So receivable means asset or liability? Asset. So this opening balance will be recorded in the opening balance sheet. Which side ma? Asset side. Opening balance sheet, asset side. So the closing balances will be recorded in closing balance sheet, asset side or liability side? Asset side. In the case of received in advance, liability or asset? Liability. The opening balance will be recorded in opening balance sheet, liability side. This will be recorded in closing balance sheet, liability side. Are you getting the point or not? Sir, for each and every item I am discussing where we need to record in the as per NPO point of view, as per regular point of view, as per NPO point of view. Sir, income receivable, asset or liability? Asset. To balance brought down, by balance carried on. To balance brought down means previous year or current year? Previous year. By balance carried on means current year. Previous year means opening balance sheet, asset side. Current year means current year balance sheet, asset side. Completed. Okay na. Income received in advance, asset or liability? Liability. By balance brought down, to balance carried. By balance brought down means previous year, to balance carried on means current year. For the previous year, opening balance sheet, liability side. For the current year, closing balance sheet, liability side. Are you getting the point or not? Okay na. In the place of cash and bank, what ma? Receipts and payments account. In the place of P&L account, what we need to put? Income and expenditure account. Okay na. Okay. In the same way, we need to discuss what ma? Which account? Expenditure account. Now you need to say. Okay. In which place we need to put the word called as receipts and payments account? Cash or bank. In this place we are going to transfer to which account ma? Receipts and payments account. In which place we need to transfer to income and expenditure account? In the place of P&L, we need to transfer to the income and expense. They have given the receipts and payments account means we need to find out the income and expenditure account. If they are given the income and expenditure account means we need to find out the receipts and payments account. Next, prepaid means asset or liability? Asset. To balance brought down, by balance carried on. To balance brought down means opening or closing? Opening. Opening means opening balance sheet or closing balance sheet? Opening balance sheet, asset side or liability side? Asset side. Prepaid closing means closing balance sheet, asset side. Are you getting the point or not? Next one. Outstanding means asset or liability? Liability. Opening balance will be on the credit side. So balance, by balance brought down, to balance carried. By balance brought down means opening balance sheet, liability side. To balance carried on means closing balance sheet, liability side. Guys, are you getting a point or not? These are only all the things we need to check. What are the three accounts? Asset account, income account, expenditure. If you know these three accounts, easily we can overcome the NPO, non-profit making organization. Once again, within a span of 5 minutes, while I am going to open once again what ma? Which account? Asset account. Asset account opening balance will be recorded in the opening balance sheet, asset side. Closing balance will be recorded in the closing balance sheet, asset side. Completed. Okay, now purchase of asset. Receipts and payments account, payment side. Outflow na inflow na? Outflow. Okay, sale of asset. Receipts and payments account, receipt side. Okay, now we have purchased the asset, we have sale the asset means outflow na inflow na? Inflow of cash. Inflow of cash. Next one. Depreciation. Income and expenditure account, debit side. Profit on sale of asset. Income and expenditure account, credit side. Loss on sale of asset. Okay na. Next one, completed. Next, which account ma? Income account or expenditure account? Income account. Okay, income account. By cash or bank means nothing but what ma? Receipts and payments account. To P&L means income and expenditure. In the income we are having the two things, income receivable and income received in advance. Income receivable means asset or liability? To balance brought down, by balance carried on. To balance brought down, where we need to record? Opening balance sheet, asset side. Opening balance sheet, assets. By balance carried on. Closing balance sheet, asset side. Income received in advance, asset or liability? Liability means by balance brought down, to balance carried on. By balance brought down, where we need to record? Opening balance sheet, liability side. To balance carried on. Closing balance sheet. That's all completed. Next, in the same way, we are going to think about the expenditure also. Okay na guys? Now we are going to solve directly one question. Okay na? Please remember these three accounts. Easy, sufficient. Easily we can overcome the non-profit making organization. Okay na? Recurring nature of transactions will be recorded in the income and expenditure account and receipts and payments account. Non-recurring nature of transactions in the receipts and payments account and the balance sheet. Okay na guys? So please open workbook. What is the page number? Sir, first two sums you can neglect. Okay, now question number 1 and 2 is not needed. You can strike it off. Next we are going to discuss 3, 4 related to, they will give the income and expenditure account. We need to prepare the receipts and payments account. What are the questions ma? 3 and 4. 5 and 6, they will give the receipts and payments account. We need to prepare the income and expenditure account. 7. Okay na. I will discuss question number 5 in this class, and I will discuss question number 4 or 3 in this class. And tomorrow I will discuss question number 7. These accounts are sufficient. These sums are sufficient. What are the sums? 5, 7 and 3. 5, 7 and 3. If you want, you can practice which sums are. You can practice question number 9. Write the practice sums. You need to practice question number 9, question number 3 and question number 6. 9, 3 and 6 you need to practice. I will solve 5, 3, 5, 4 and 7 I will solve. Okay na guys? Okay na. Sir, don't know, we don't know. He will change the paper pattern. In that situation, we should not be, we are not able to write means we will use unnecessary how many marks ma? 14 marks. So that we need to solve, we need to prepare the non-profit making organization also. Okay now, please don't leave any concept, because easily we can get how many marks? 14 marks. If suddenly they have twisted means we cannot do anything. But last previous 4 attempts, what is the method they have given ma? Single entry only. Okay now. So that means which chapter is very important? Single entry. After that NPO. Okay now. So 5th question I am going to solve. We are going to solve in a faster manner. So first one, JB Club furnishes you a receipts and payments account for the year ended what ma? 31st March 2022. What is the current year? 21-22 is the current year. What is the previous year? 2021 is the previous year. What is the starting point of this year ma? 1/4/2021. What is the ending of the year? 31st March 2022. Remember the 3 accounts, they will play the crucial role in the non-profit making organization. So easily they have given what ma? Information. What is the information? Cash in hand and cash at bank on the date of 1/4/2021. That means opening data, closing data. Opening, where we need to write these amounts? In the balance sheet. Opening balance sheet or closing balance sheet? Opening balance. Okay, where we need to post these closing balances? In the closing balance. Opening balances will be recorded in the opening balance sheet, and closing balances will be recorded in the closing balance. I will discuss each and every point where we need to write. That's all. Okay na? Next one, donation. For the donation, they will mention, I think so. Anything given? 50% of the donation need to be capitalized. So what we need to do ma? 50% we will add back to the capital fund in the balance sheet. Which balance sheet? Closing or opening? Closing balance. Remaining 50% will be transferred to income and expenditure. Sir, here in the debit side means, here in the receipt side means, there we need to record on the income side. Are you getting the point or not? So if you remember, the same amounts will be presented in income side means this will be wrong, this will be right, this will be wrong. Are you getting the point or not ma? So please don't mug up the concepts. Please do the sums as a conceptual knowledge only. You can get the marks even though the balance sheet or tallied or not tallied. Even though if it is not tallied, also you can get the marks. Please learn the concept as a conceptual. Please don't mug up. Okay, now if you mug up, at the end of the point, the balance sheet will not be tallied. And again you will end up with less marks or more marks? Less marks. So next one, subscription. For the subscription, we need to prepare the account called as which account ma? Subscription account. Receipt means income or expenditure ma? Income account. So see here, we are having the balances. Subscription in arrears of rupees how much? 9,000. Related to 21-22 or 22-23? 21-22 means current year or previous year? Current year. Next one, subscription in advance for the year how much? 3,500. But received during the current year, received during the previous year? Received during the current year, but related to next year. But related to which year ma? Next year. So imagine we need to prepare which account? subscription account. We need to prepare which account ma? Subscription account. So I am writing here which account, guys? Subscription. How much amount we have received during the year ma? We have received 12 lakhs. What is the entry for the income received? Cash or bank account debited to income account. Nothing but cash or bank account debited to subscription account. Yes or no ma? So by receipts and payments we can write a. By receipts and payments we can write a. We cannot write a. We can write. So how much? 1 lakh. Okay. Next, income receivable and income received in advance. For the income receivable, what we need to write ma? To balance brought down, by balance carried on. Yes or no? Income receivable is asset or liability? Asset. So to balance brought down and by balance carried on. So income receivable given or not given? Given. Subscription in arrears means what ma? Income receivable. During the year or previous year? During the year. How much? 9,000. Current year or previous year? Current year. Closing or opening? Closing. So they have given the amount of 9,000 for the closing, but they have not given the opening amount. They have not given the opening. Guys, are you getting the point or not? Sir, this subscription in arrears for the current year or previous year? Current year. That means closing or opening? Closing. So how much? 9,000 will be recorded in the balance carried on or brought down? Carried on. Brought down is how much? 0. Not given means how much ma? 0. Are you getting the point or not? Next, income received in advance. Asset or liability? Income received in advance, asset or liability? Liability means by balance brought down, to balance carried on. So they have given current year information or previous year information? Current year. That means to balance carried on or by balance brought down? To balance carried on. How much? 3,500. Sir, guys, are you getting the point or not? Sir, both the points are given only for the current year. Only for the current year. So that we are recording the closing balance or opening balance? Closing. Again here how much? 0. Then what is the amount will be? 1,29,000. Here also how much? 1,26,000. Need to be transferred to 1,25,000. 25,500. Where we need to transfer? To income and expenditure. In the income and expenditure account, income, that thing but debit side or credit side? Credit side. By subscription or to subscription? Guys, are you getting the point or not? Again, these balances, where we need to record ma? These closing balances, we need to record in the closing balance sheet or opening balance sheet? Closing balance sheet. What is the meaning of this one? Receivable. What is the meaning of this one ma? Receivable. What is the meaning of this 3,500? Received in advance. So received in advance is a liability. In the liability side, we will record what ma? 3,500. In the asset side, we will record how much? 9,000. 1,20,000 need to be recorded? No need to record. No need to record. We are not going to prepare the receipts and payments account. They have given the receipts and payments account. Are you getting the point or not? Like this, we need to make the adjustments. Firstly, they have given the receipts and payments account. In the receipts and payments account means what ma? Amount received or paid? Amount received. What is the entry for the amount received? Cash or bank account debited to subscription account. In the subscription account, by cash or bank or to cash or bank? Nothing but by receipts and payments account only. Yes, sir. How much? 1,20,000. 25,000. 1,20,000. Next, we are having the income receivable of current year or previous year? Current year. So that we are recorded only on the by balance carried on or to balance brought down? By balance carried. So there is no amount of to balance brought down, so that we have kept the amount of 0. Next, in advance also, current year or previous year? Current year. That means closing balances or opening balance? Current year means opening or closing? Closing. Previous year means opening. Having doubts? Is there or not there? Next one. Entrance fee. For the entrance fee also, generally the entrance fee is called as what ma? Capitalized item. Entrance fee is called as a capital receipt or revenue receipt? Capital receipt. Please see whether there is any adjustment is there or not there. Entrance fee treated as revenue. Treated as revenue means total amount we need to transfer to the income and expenditure. So here debit means there credit. Here receipt means there what ma? Income. So in the income means credit side or debit side? Credit side. So interest on investments, how much ma? 1000. So please see there is an adjustment to the interest on investment. Sir, interest on investment for how many months? 5 months. How much the percentage? 8%. What is the percentage ma? 8. Whether there is any interest? What is the investment value? 60,000. What is the investment value? 60,000. Sir, 60,000 into what is the percentage? 8% into 5 by 12. How much? 2,000 means we have received only 1,000. 2,000 means we have received only what ma? 1,000. So that 1,000, another 1,000 is called as what? Receivable. In the income and expenditure account, we need to record totally how much? 2,000. 2,000 or 1,000? 3,000. We need to receive 2,000. We have received only 1,000. In the income and expenditure account, we will record total amount related to current year. That means how much amount we will record? 2,000 in the income and expenditure account. In the current year balance sheet, 1,000. Income receivable, asset or liability? Asset. So that interest receivable will be recorded on the asset side. Are you getting the point or not? Okay na? Okay, next one. Interest from banks. Interest from bank means what ma? Income or expenditure? Income. How much? Is there any adjustment? No. So directly we are recording in the income and expenditure account. Which side? Credit side. Next one, sale of old newspapers. Income and expenditure account, credit side. Sale of drama tickets. Income and expenditure account, credit side. Completed. Next is salary. Is there any adjustment ma? So next, income and expenditure account, which side? Debit side. Repairs. Income and expenditure account, debit side. Buy furniture, capital will be transferred to the current year. What is the meaning of buy furniture? We have purchased the asset. What is the meaning of buy furniture ma? We have purchased the asset. The same furniture appearing in the debit side means, receipt side means sale of asset. This is called as a purchase. In the case of purchase, we are having a balancing factor means what we will get? Depreciation. Will be transferred to which account? Income and expenditure account, debit side. In the case of sale, we can get either profit or loss. In the case of profit, will be transferred to income and expenditure account, credit side. In the case of loss, will transfer to income and expenditure account, debit side. So investment means purchase of investment or sale of investment? Purchase of asset, balance sheet, asset side. Miscellaneous expenses. Income and expenditure account, debit side. Nothing but expenditure side. Insurance premium, expenditure side. Builder's table and other sports equipment. How much ma? 80,000. Adjustment is there? For what? Insurance premium. Miscellaneous prepaid. Prepaid means what ma? Asset or liability? Asset. We will record in the asset side. In the income and expenditure account, we need to reduce because not related to current year. Not related to current year. Okay. Next one. Builder's table. So see here, the builder's table is the important point. Is the important point. So please don't talk ma. So here the builder's table, another sports equipment costing how much ma? 3 lakhs, which was purchased in the year financial year 2021. That means previous year or current year? We have purchased in the previous year for how much? 3 lakhs, of which 80,000 was not paid in the 31st March 2021. That means we are not paid or we have paid? We are not paid. That means in the opening balance sheet, we are having the creditors of rupees 80,000. Yes or no? 80,000. The same 80,000 we have paid in the current year. The same 80,000 we have paid in the current year. That means in the closing balance sheet, we are having the creditors or we are not having the creditors. Sir, once again, I am repeating. In the previous year, we purchased the total worth rupees of how much ma? 3 lakhs. In that we have not made how much? 80,000. That means we have paid during the current year, we have paid during the previous year. We have paid during the current year. How did we get the information? Because in the receipts and payments account credit side, 80,000 was there. What is the meaning of that 80,000 ma? Previous year creditors, we have paid in the current year. For the previous year, we are having the creditors. For the current year, we are not having the creditors. Are you getting the point or not? In the opening balance sheet, liability side, we are having the creditors of rupees how much? 80,000. But in the current year, we are not having the creditors of rupees how much ma? 80,000. Okay na? Completed. Is there any adjustment? No, only that particular adjustment. Next one, stationery. Is there any adjustment ma? No, straight away we need to record on the debit side. Drama expenses. We can set off the drama receipts and drama expenditure, or we can write directly on the debit side and credit side, no problem also. What I am saying, ma? We are having the drama receipts of rupees how much? 10,500. Expenses of rupees how much, ma? 5,000. If you set off, what is the amount? 5,500. Income is more, receipts are more, expenditures are more. Receipts are more. We can record directly 5,500 on the income and expenditure account credit side. Or you can record 10,500 on the income and expenditure account credit side and 5,000 on the income and expenditure account debit side. So these are the information you can do on your own. What is the important point here? Builder's table. What is the important point, ma? Builders. Sir, builder's table was purchased during the previous year, but we have not paid amount of rupees how much, ma? 80,000. We have made the payment in the current year. That means in the opening balance sheet we are having the creditors. In the closing balance sheet we are not having the creditors. So please think. So now, so we need to prepare which account, ma? Furniture account. We need to prepare which account, ma? Furniture. Is there any depreciation calculation for the furniture? No, na? So furniture will be available in the closing balance sheet or opening balance sheet? In the closing balance sheet. That means we have purchased in the current year or previous year? We have purchased in the current year. So in the closing balance sheet only we are having the furniture and we are having the investments. That's all. There is no information related to depreciation. No need to calculate the depreciation on the furniture. Straight away we will record only on the closing balance sheet or opening balance sheet, ma? Closing. Investments also same thing. In the closing balance sheet. We are not going to record in the opening balance. Okay, na? You can try on your own. Okay, na? In the next class, I will discuss which sum. I will discuss question number 7 and question number 4. 7 and 4 I will discuss. Okay, na? You need to practice question number 6. Question number 6 and question number. Please solve question number 6 is enough today. Tomorrow you can solve question number 3 and question number 9. Okay, na guys? So, is there any doubt? Try immediately on your own, now itself. Okay, na guys? Okay, thank you. Have a nice day. Or otherwise, if you wait for another half an hour, up to 5:30 we can discuss. Now the time is only, class is at 6 or 6:30? 6:30, okay. Doubt? So, which question do you want? Third or fourth? Where is Pawan? Fever? Okay, question number 4. It will be completed. I will explain the income account in detail here. Okay, na? Half an hour. The income and expenditure account of association for the year ended 30. Okay. If those who are not interested, you may leave. No problem. I will give 5 minutes of time. Those who are not interested, you can go. Okay, now those who are interested, they will sit and they will listen the class. I am not having any problem. The income and expenditure account of an association for the year ended 31st March 2022 is as under. So which account was they have given, ma? Income and expenditure account. Debit side we are having the information of expenses and credit side we are having the incomes. So expenditures and incomes. So 2 salaries of rupees how much, ma? 1,20,000. Is there adjustments? Yes. we are having what ma? Salary outstanding for the 31st March 2021. Salary outstanding for the 31st March 2022. So first I am going to discuss about the subscription. What is the subscription amount ma? 1,70,000. Given in income and expenditure account, given in receipts and payments account. Income and expenditure account means closing balance or opening balance? Closing balance. So now I am going to prepare the income account. What is the income account ma? Nothing but subscription account. So please listen carefully. Subscription account. Subscription account closing balance. What is the opening balance for the subscription ma? Whether it is an income or expenditure? Income. Income account opening balance generally will be on the which side? Credit side. But will be there or will not be there? Will not be there. Closing balance will be on the debit side. To income and expenditure account. How much they have given? 1,70,000. Okay na guys? Please participate. 1,70,000. In the adjustment, subscriptions outstanding for the 31st March 2021. So outstanding means what ma? Received or receivable? Receivable. Okay na? Outstanding means what ma? Here we need to think from the income point of view. Receivable. Opening balance or closing balance? Opening balance. And what is the closing balance? 18,000. Opening balance 16,000. So receivable means asset or liability? Asset. What we need to record? To balance. To balance. So to balance brought down. In the bracket what ma? Receivable. How much? 16,000. By balance carry down. In the bracket what ma? Receivable how much? 18,000. This we need to transfer to. Where we need to record this one ma? In the opening balance sheet. Receivable means asset or liability? Asset. In the opening balance sheet, asset side. This we need to transfer to closing balance sheet, asset side. This we need to transfer to closing balance sheet, asset side. Okay na guys, up to here. Next, what is the another information provided related to subscription? We are having the received in advance. Yes or no? Subscriptions received in advance how much ma? 13,000 is the opening and 8,400 is the closing. Advance means asset or liability? Liability. That means what we need to write ma? To balance or by balance? By balance brought down. So nothing but what ma? Advance. How much? 13,000. And to balance carry down. Nothing but what ma? Advance. How much? 8,400. This we need to transfer to. This we need to transfer to opening balance sheet liability side. This we need to transfer to closing balance sheet liability side. What is the balancing figure we will get? So what is the total? 1,70,000. 8,400, 16,000. 1,94,400. Here also how much ma? 1,94,400. What is the balancing figure? 1 lakh. What is the meaning of this one? By receipts and payments account. In the receipts and payments account we need to record on receipt side or payment side? Receipt side. How much? 1,63,400. So opening balances and the closing balances. Like this we need to prepare the subscription account. Guys, are you getting it or not? Okay. Next one. What is the next point? Salaries outstanding. Salaries outstanding. So directly we can write. Without preparation of account also we can prepare or we cannot prepare? We can prepare. We cannot. So what is the salary amount paid ma? 1,20,000. So this was presented in where ma? Income and expenditure account or receipts and payments account? Income and expenditure account. If you want, you can prepare which account? Salary account. If you want, you can prepare what ma? Salary account. So salary paid or closing balance of salary? Closing balance of salary. Okay na? Because the information available in income and expenditure account or receipts and payments account. Income and expenditure account. That means the closing balance payment. Closing balance. Generally the salary means what ma? Expenditure. Expenditure opening balance will be on the debit side and closing balance will be on the credit side. So by income and expenditure account to income and expenditure account. By income and expenditure account. How much? 1,20,000. Next case we are having the outstanding prepaid. Outstanding. Outstanding means what ma? Asset liability. Liability. Liability means by balance brought down, to balance carried on. How much ma? Brought down how much? 6,000. Carried on 8,000. There is no another information related to salaries. Having a, not having a, not having. So what is the total? 1,26,000. Here also 1,26,000. What is the balancing? 1,00,000. What is the meaning of this one? Receipts and payments account or another thing? Receipts and payments account. We are not having the prepaid. We are not having the prepaid. If in case we are having the prepaid means by balance brought down, to balance carried on. Are you getting the point or not? Sir, okay na? In case we are having the prepaid means by balance brought down, to balance. Prepaid means asset or liability? Liability. Prepaid. Okay. Prepaid means asset now. So to balance brought down, by balance carried on. So to balance brought down means opening balance, by balance carried on means closing balance. Okay na? So here the information given or not given? Not given. This information we need to transfer to closing balance sheet, asset or liability amma? Liabilities. This 6,000 we need to transfer to opening balance sheet, liability side. Are you getting the point? This one we need to transfer to receipts and payments account, which side? Payment side or receipt side? Payment side. Nothing but here in this account debit side means in the receipts and payments account credit side. Okay na? Okay na? Not okay na? What is the next one? In the same way we need to prepare which account ma? Audit fee. Audit fee also same thing. Audit fee also having outstanding prepaid. Outstanding. So liability. By balance brought down, to balance carried on. What is the by balance brought down? 2,000. To balance carried on 2,500. So the balancing figure will be transferred to receipts and payments side. By balance brought down will be recorded in the opening balance sheet, liability side. To balance carried on will be recorded in the closing balance sheet, liability side. So guys, are you getting a? So in this way we need to conclude. So next one. For printing and stationery, is there any adjustment? So straight away where we need to record? In the receipts and payments account, which side? Payment side. So next one, telephone. In the receipts and payment side. Postage, payment. General expenses, payment. Interest on bank charges, payment. Audit fee, we will prepare the adjustment. Okay na? Annual dinner expenses, payment side. Next one, depreciation, payment side. Yes or no? No. Here in case we are having the depreciation means we need to prepare what ma? Asset account. We need to prepare what ma? Asset. So next one, surplus. Entrance fee, where we need to record? In the receipts and payments account, receipt side. Contribution to dinner, in the receipts and payments account, receipt side. So there are certain adjustments. That building owned by the association since 2004 how much ma? 1 lakh. Opening balance sheet and closing balance sheet. Opening balance sheet and closing balance sheet. Equipment as on 31st March 2021 valued at how much ma? 52,000. Okay na? At the end of the year, after depreciation of 7,000. What is the meaning of depreciation of 7,000? This 7,000 only, yeah? What is the meaning of depreciation 7,000 ma? The depreciation given in the income and expenditure. That means we need to prepare which account ma? Asset account. What is the asset account opening balance? 1,90,000. To balance brought down or by balance brought down? To balance brought down. 1,90,000. Where we need to record the opening balance ma? In the opening balance sheet. If in case they have given the capital fund means no need to prepare the opening balance sheet. Are you understanding the concept? So next one. So depreciation, where we need to record? Debit side or credit side? Credit side. By depreciation, how much? 7,000. Equipment amounts to how much, ma? 63. Whether it is a closing balance or opening balance, sir? Sir, opening balance 52,000. Yes or no? Why you are saying 1,90,000? Opening balance how much? 52. Closing balance how much? 63. Where we need to record the closing balance? Opening balance sheet or closing balance sheet? Closing balance sheet. Opening balance will be recorded in the opening balance sheet. So guys are getting it or not? In the asset account, opening balance will be recorded in the opening balance sheet. Closing balance will be recorded in the closing balance. Depreciation will be transferred to income and expenditure. Then we will get the balancing figure on which side? Debit side. What is the meaning of that one? Purchase of asset or sale of asset? How much? What is the balancing figure? 80,000. Here also how much, ma? 80,000. So 80,000 minus 52,000. 70,000. Okay, calculation mistake. 70,000 minus 52,000. What is the meaning of 18,000? Purchase. Where we need to record the purchase? Receipts and payments account. Payment side or receipt side? Payment side. Purchase means outflow na inflow na? Outflow. That means we need to record in the payment side. Are you getting the point or not? So first of all, you need to understand the asset account. After understanding the asset account, opening balance will be on the opening balance sheet, closing balance will be on the closing balance sheet. Purchase of asset means where we need to record? In the receipts and payments account, payment side. Sale of asset means receipts and payments account, receipt side. Next one, profit means income and expenditure account, credit side. Loss means income and expenditure account, debit side. Depreciation, income and that thing only we are doing. I am doing anything. The same situation I am repeating. So what is the meaning of 18,000, ma? Nothing but to purchase. To cashier bank we will record or anything. To cashier bank. In the place of cashier bank, what we need to substitute the word? Receipts and payments account. In the place of cash and bank, what we need to substitute? To receipts and payments account. In the receipts and payments account, which side? Debit side or credit side? Nothing but payment side or receipt side? Payment side. So next one, what is the cash in hand amount? Sir, loan still unpaid or paid? Loan is still not paid. So that opening balance sheet how much? 30,000. Closing balance sheet also how much? 30,000. So liability side or asset side? Liability side. So next one, cash in hand opening balance 28,000. What is the purpose of opening balance, ma? While going to prepare the receipts and payments account, we need to start with the opening balance and we need to end with the closing balance. Capital fund given or not given? Given. So that no need to prepare the opening balance sheet. No need to prepare the opening balance. So these are the rules and regulations. First of all, you need to learn what are the accounts. Income account, expenditure account and the asset account perfectly. Then we can easily solve any type of question in the non-profit making organization. Okay na guys? In this question we need to prepare the opening balance sheet or no need to prepare the opening balance sheet? No need to prepare the opening balance sheet. Okay na guys? So this is the conclusion. Okay na? We can discuss further concept in the next class. Okay, a very good morning to one and all. Sir, previously we have started discussion with the NPO, non-profit making organization. We have seen question number 3 and 5. Yes, no? Okay. In the non-profit making organization, in case 4 and 5. Okay, I have given homework of question number 3 and question number 6. Now we are doing question number 7. These questions are sufficient while going to the examination. Please, these questions. And we need to solve question number 9 after discussion of question number 7. So, in the NPO concept, we have seen the asset account. What is the asset account as per the NPO, ma? The opening balance will be recorded in debit side. The opening balance of asset will be recorded in the opening balance sheet. Okay, na asset side or liability side, ma? Asset side. Next, closing balance will be recorded in the current year balance sheet, nothing but closing balance sheet. Asset side or liability side, ma? Asset side. Next, purchase of asset will be recorded in the receipts and payments account. Payment side or receipt side? Payment side. Sale of asset will be recorded in the receipts and payments account, receipt side. Next, profit on sale of asset will be recorded in the income and expenditure account, credit side. Loss on sale of asset will be recorded in the income and expenditure account, debit side. Next, when come to the depreciation, will be recorded in the income and expenditure account, debit side. So next we have seen the expenditure account and the income account. What is the expenditure account, ma? So in the expenditure we are having how many types? Totally 3 types. Income received, income receivable and income received in advance. What is the entry for the income received? Cash or bank account debited to income received. Income received account or income account. So in the income account, in the place of cash or bank, we need to put the word called as receipts and payments account. Here by receipts and payments account means in the receipts and payments account, receipt side or payment side? Receipt side. To income. To Atma income. So income is nothing but we will prepare the important income account called as subscription account. Okay na? So next one, income receivable means what? Asset or liability? Asset. To balance brought down, by balance carried on. To balance brought down means opening balance or closing balance? Opening balance will be recorded in the opening balance sheet, asset side or liability side? Asset side. By balance carried on means closing balance sheet, asset side or liability side? Asset side. Next, when discussing the income received in advance, it is asset or liability? Liability. We are having obligation to provide the goods or provide the services. So liability means having the opening balance on the credit side, by balance brought down, to balance carried on. By balance brought down will be transferred to the opening balance sheet, liability side. To balance carried on will be transferred to the closing balance sheet, liability side. Next, we will find out the result called as the closing balance. Normally, in the general cases, income is called as which balance? Credit balance. Closing balance will be on the debit side. Normally, what we need to write? To balance carried on. Instead of to balance carried on, we need to transfer to the P&L account in the general cases. But in the chapter of NPO, we need to transfer to the income and expenditure account. To income and expenditure means in the income and expenditure account, which side we need to record? We need to record in the credit side. Okay na guys? So if they have given the income and expenditure means we will get the balancing figure of receipts and payments account. If they have given the receipts and payments account means we will get the balancing figure of income and expenditure account. So next, in the same way, we are going to prepare the expenditure account. So in the expenditure, we are having the 3 items called as expenses paid, next one outstanding expenditure and prepaid expenditure. So what is the entry for the expenditure paid? Expenditure account debited to cash or bank account. But instead of cash or bank, we need to put the word called as receipts and payments account. Here 2 receipts and payments means in the receipts and payments account, payment side. Nothing but credit side. Okay na guys? So next one. Outstanding expenditure means asset or liability? Liability. By balance brought down, to balance carried on. By balance brought down will be recorded in the opening balance sheet, liability side. To balance carried on will be recorded in the closing balance sheet, liability side. Next, prepaid expenditure. It is an asset or liability? Asset. To balance brought down, by balance carried on. To balance brought down will be recorded in the opening balance sheet, asset side. By balance carried on will be recorded in the closing balance sheet, asset side. Then the expenditure will have which balance? Debit balance. For the debit balance, closing balance will be on the credit side and opening balance will be on the debit side. But generally we are having the opening balance, we are not having the opening balance. We are not having the opening balance. The closing balance will be transferred to P&L account in the general cases. But in the case of non-profit making organization, we will transfer to the income and expenditure account. What we need to put by income and expenditure means in the income and expenditure we will transfer to the debit or creditor, debit side. So these are the overall discussion we have seen in the previous section. So now we are going to solve question number 7. In the question number 7, we are going to learn one new point. So in the case of, they will give the opening stock and they will give the closing stock. We need to find out the purchases. We need to find out what purchases. So then directly we need to record in the income and expenditure account called as consumed. Income and expenditure called as what consumed. Opening stock will be recorded in the opening balance sheet, asset side, and closing stock will be recorded in the closing balance sheet, asset side. In the question, if they have asked us to prepare the trading account means we need to prepare the trading account. Are you getting the point or not? You need to prepare the trading account. Otherwise, no need to prepare the trading account. Directly, we need to record consumed in the income and expenditure account. Which side? Debit side. Okay. We'll get clear clarity after solving the question number 7. So question number 7.
Following is a summary of receipts and payments account of RR Clinic for the year ended 31st March 2022. What is the current year, ma? 21-22 is the current year. Then what is the previous year? 2021. What is the next year? 22-23. So the current year is called as 21-22. The previous year is called as 2021, and the next year is called as 22-23. So 21-22 means what is the starting point of the year? 1st April 2021. What is the end of the year? 31st March 2022. Okay, clearly. So they have given the opening balance of cash. They have given the opening balance of cash. It is a summary, it is a receipts and payments account. It is a summary. Then we need to prepare the receipts and payments account, we need to prepare the income and expenditure account, and we need to prepare the balance sheet. If they have given the capital fund, means no need to prepare the opening balance sheet. Otherwise, we need to prepare the opening balance sheet also. Same like what, ma? Single entry. Same like what? Single entry. So, opening cash balance. Where we need to record the opening cash balance? In the receipts and payments account, the starting point is called as what, ma? Opening balance. And again, we need to record in opening balance sheet or closing balance sheet. Opening balance. Asset or liability? Asset side. Next one, donation received. How much more total donations? 1,55,000. In that 50,000 for the building fund. Sir, here anything fund was created means, anything fund created means it should be recorded in the balance sheet liability side. It should be recorded in the balance sheet liability side. If any expenditure incurred from the fund means we need to reduce from the particular fund itself. What I am saying is, what is the fund, ma? Fund is created for the building. Fund is created for the building. What is the total amount of fund? 50,000. So this fund will be utilized only for the purpose of construction of a building. Only for the purpose of construction of a building. Imagine we have incurred 30,000 expenditure for the purpose of construction of a building. Where we need to record that one? We need to record in the balance sheet liability side. We need to reduce, that's all. We need to reduce, and again we need to record in the receipts and payments account payment side. What I am saying, sir? Can you repeat it again? Sir, totally we have received how much donations, ma? 1,55,000. In that 1,55,000, consider 50,000 as a capital fund. Nothing but building fund. Building fund. Where will be recorded the building fund? In the balance sheet liability side. If we incur any expenditure from that particular fund means we need to reduce from the particular fund itself. We should not record in the income and expenditure account. We should not record in the income and expenditure account. We can record in the receipts and payments account, whether it is a capital or revenue. We will record in the receipts and payments account. Expenditure means payment or receipt? Payment. We are going to record in the receipts and payments account, payment side. Sir, sometimes we will get income on that building fund also. How, sir? Totally of 50,000 we have invested in the, we have deposited in the bank account. On that bank account we will get interest. We are not going to get interest. We will get interest. Okay. That interest is called as what, ma? Income to the particular building fund. That income is called as what, ma? Income to the particular building fund. Okay, where we need to record the income? In the receipts and payments account, receipt side, and we are going to add it to the particular fund in the balance sheet liability side. Are you getting the point or not? So, the specific fund accounting treatment is, the specific fund will be directly recorded in the balance sheet liability side. If we incur any expenditure related to that particular fund means we need to reduce. If we are going to get any income on that particular fund means we are going to add back. So any expenditure means again we will record in the receipts and payments account, payment side, and any income means again we are going to record in the receipts and payments account, receipt side. This is the accounting treatment for the fund, specific fund which was created. Okay, the totally how much donations we have received, ma? 1,55,000. In that 1,55,000 directly we can record in the receipts and payments account, or only 1,05,000 we need to record in the receipts and payments account. 1,55,000 we need to record in the receipts and payments account. Receipt side or payment side? Receipt side. Okay. In that 50,000 belongs to what, ma? Building fund. So that we need to transfer to the balance sheet liability side. We need to transfer to the balance sheet liability side. Okay. Remaining amount is how much? 1,05,000. Is there any working note or any adjustment related to this, ma? So there is no adjustment. So the specific fund we are reduced means what is the amount? 1,05,000. We are going to transfer it to the income and expenditure account. Income side, expenditure side, income side. That means credit side, debit side, credit side. What is the accounting treatment for this particular donation, ma? So totally we have received the donation of rupees how much? 1,55,000. In that specific fund is equal to how much? 50,000. This 1,50,000 we will record in the receipts and payments account, receipt side. In that 50,000 we are going to record in the balance sheet, liability side. And what is the remaining amount? 1,05,000 we are going to record in the income and expenditure account, income side. Nothing but credit side. Nothing but credit side. Okay, na guys? Is there any doubts? Is there any doubts? So next one. Payment to creditors for the medicine supplies. Sir, this is the new point. Yes or no, ma? In the previous sums, we are getting this point, we are not getting this point. We are not getting this point. This is a new point of this question. So, first of all, payment to creditors means whether receipt of payment, payment will be recorded in the receipts and payments account, which side? Payment side. And again, this will be considered for the preparation in order to find out the purchases value. This will be considered again what, ma? In order to find out the purchases value. Okay, please wait for 5 minutes. Next one, salaries. How much, ma? 70,000. The total salaries of 70,000. Whether payment or receipt, ma? Payment will be recorded in the receipts and payments account, payment side. So each and every point will be recorded twice. Why, sir? Because we need to think this all given in the adjustments. All given in the adjustments. So next one, is there any working out to the salaries? There is no working out to the salaries. So directly the salaries will be recorded in the income and expenditure account, expenditure side. So purchase of medical equipment. Purchase of medical equipment. So equipment means asset or liability, asset. So purchase of asset will be recorded in the receipts and payments account, payment side. And again in the balance sheet, we need to write the closing balance of particular asset. Okay, na. Next, medical camp collections, receipts or payments, receipts will be recorded in the receipts and payments account, receipt side, income and expenditure account, credit side, income and expenditure account, credit side. Next one, subscriptions received, we are having adjustment. Okay, na. We need to prepare which account, ma? Subscription account, and then we need to find out the recording. Next one, interest on investments at the rate of 9% per annum, how much? 63,000. How much, ma? 63,000. Is there any investment purchases? So the same value is presented, ma, here. Here how much? 7 lakh. Here also how much, ma? 7 lakh. There is no purchase of investment in the current era. There is having a purchase of investment in the current era. So there is no purchase of investment in the current year. So please calculate the interest. How much amount we need to receive, ma? 7 lakh into 9%. How much? 63,000. Okay, we have received the 63,000. We are not received. We have received. So there is no income interest receivable. There is having a interest receivable. There is no interest receivable. Directly the 63,000 we need to record in the receipts and payments account, payment side, in the receipt side, in the income and expenditure account, credit side. Okay, now is there any doubt or not? Sir, how much amount we need to receive in the current year? 63,000. We have received how much, ma? 63,000. There is no interest receivable. There is no interest receivable. Sometimes they will get, we will get what, ma? Interest receivable. In that situation, while recording in the income and expenditure account, we need to add back the interest receivable, and again we need to disclose in the balance sheet asset side. Are you getting the point or not? Sometimes we will get interest receivable. Imagine here the amount is given only 60,000. Imagine here the amount is given only how much, ma? 60,000. This 60,000 will be recorded in the receipts and payments account, receipt side. Okay, na. But in the income and expenditure account, how much amount we need to record? 63,000. In the income and expenditure account, how much, ma? 63,000. And next, in the balance sheet, 3,000 will be recorded in the asset side, interest receivable. Okay, na, guys. So next one. Honorarium to daughters. What is the meaning of honorarium? Nothing but salary. Salary how much, ma? 1,90,000. Is there any adjustment? So there is no adjustment. So that what we need to do, ma? In the receipts and payments account, payment side, income and expenditure account, debit side. Next one, telephone expenses, same. Receipts and payments account, payment side. Next, income and expenditure account. So medical camp expenses and miscellaneous expenses amounts to medical camp expenses how much ma? 10,500 and miscellaneous expenditure how much? 7,000. Both will be recorded in the receipts and payments account, payment side, income and expenditure account. Okay na guys? Okay. Next we need to discuss the main point is, so these two are this one. What we need to do the payment to creditors for the medical supplies. So if you see here, the stock of medicines was given. What they have given ma? So these 2 points we have considered, we have not considered. We have considered the subscriptions due and subscriptions received in advance. What is the meaning of stock of medicines, sir? Opening stock and closing stock. Sir, what is the our business ma? RR clinic. What we will do in the RR clinic? We will sell the medicines, we will purchase the medicines. Yes or no? In the 9th sum, they will give the bar trading sum. They will give what ma? Bar. In that they will sell the medicines only. That medicine is for boost. Okay. Okay, stock of medicines means what ma? Opening stock of 70,000 and 1,05,000 is called as closing stock. Opening stock will be recorded in opening balance sheet. We can prepare the trading account also. We can prepare the trading account. Trading and income and expenditure account we need to prepare here. What we need to prepare ma? Trading and income and expenditure account. From the trading account what we will get ma? Gross profit will be transferred to income and expenditure account. Okay, now to get the clarity. In the same way we need to prepare what ma? You need to do the question number 9. Guys, are you getting it or not? If you respond, I will get the clarity, then I can move in a free manner. Next one. Closing stock will be recorded in the trading account credit side and again in the closing balance sheet or opening balance sheet. Closing balance sheet. Asset side or liability side? Asset side. Okay. We know the opening stock, we know the closing stock. We are having the sales, not having the sales. Not having the sales. So please remember. So medicine consume. Medical equipment means opening equipment and closing equipment. In the current year we have purchased one equipment. So what we need to do? We need to prepare the account called as medical equipment. What is the opening balance? 1,47,000 will be recorded in the debit side or credit side? Debit side. To balance brought down. Again it will be transferred to the opening balance sheet or closing balance sheet? Opening balance. 2,14,200 will be recorded in the closing balance sheet. By balance brought down. By balance carried on. Again it will be recorded in the closing balance sheet asset side. Next having the building. So building 3,50,000 and 3,15,000. There is no purchase of building. Yes or no ma? So that means what is the difference amount? What is the difference amount? 3,50,000 and 3,15,000. Okay, 35,000 only. What is the meaning of that difference amount? Depreciation. Where we need to record the depreciation? In the income and expenditure account debit side. Okay, now in the income and expenditure account debit side. 3,50,000 will be recorded in the opening balance sheet asset side. 3,15,000 will be recorded in the closing balance sheet asset side. Next, creditors for the medical supplies. Creditor means asset or liability? Liability. Opening balance will be recorded in the opening balance sheet liability side and closing balances will be recorded in the closing balance sheet liability side. And again we need to prepare the creditor account. Again we need to prepare what ma? Creditor. Opening balance how much? 63,000. Okay, now will be recorded on debit side or credit side? Credit side. By balance brought down or by balance carried on? By balance brought down. 63,000. To balance carried on how much ma? 91,000. We have paid to creditors. Yes or no? Okay, how much amount we have paid to creditors ma? 2,10,000. So what is the entry for the payment to creditors? Creditor account debited to cash or bank account. Nothing but to receipts and payments account. Nothing but what ma? To receipts and payments account. Then we will get the balancing figure called as purchases. Where we will record in the purchases? Trading account or income and expenditure account? Trading account. So in the trading account we will get a gross loss. Nothing but consumed. Nothing but what ma? Consumed. Why we are getting a gross loss? Because there is no information related to sales. There is no information related to what ma? Sales. We should not call it as what ma? Gross loss. We need to call it as consumed. We need to call it as what ma? Consumed. Opening stock plus purchases minus closing stock is equal to what ma? Opening stock plus purchases minus closing stock is equal to what?
Cost of goods sold. That cost of goods sold we are going to call it as here what ma consumed. Where we will record this consumed in the income and expenditure account. Debit side or credit side? Debit side. We'll get the balancing figure in the credit side. It will be transferred to the debit side of income and expenditure account. Okay na? So now we are going to solve this question. Will you please participate? Okay na? Can I start? Investments, opening balance is same and closing balance is same. Opening balances will be recorded in the opening balance sheet. Closing balances will be recorded in the closing balance. Sir, no need to prepare the investment account. We need to prepare the investment account. No need to prepare the investment. You are required to prepare the receipts and payments account and income and expenditure account for the year end the 31st March 2022 and the balance sheet as on 31st March 2022. Even though they are not asked us to prepare the trading account, I will prepare the trading account in order to get the clarity. Shall I start? Will you participate? Or otherwise you will do on your own? No, sir. Okay. Can anyone please turn on the AC? AC on. Okay. Please draw the format. What is the first format, ma? Trading account. First receipts and payments account, trading account, income and expenditure account. They have given the capital fund. We need to find out. So that closing balance sheet, opening balance sheet. And again we need to prepare the accounts called as medical equipment and next one creditors account. Medical equipment and creditors account. Okay, please start. So I am not going to put the headings all like one. Okay, now in a shortcut format I will prepare. So what is the question number? What is the first one, ma? Receipts and payments account. What is the next one? Trading account. What is the next one? Income and expenditure account. What is the next one, ma? Closing balance sheet. Balance sheet as on, what is the year end, ma? 31st March 2022, current year 2022, previous year 2021. From here onwards, working notes are main answer. Working notes. So working note number 1. Sir, if you want, you need to prepare all the working notes at the beginning of the question or at the end of the question. Okay na? Main answer should be in a same place. Okay na? In the middle of the main answer, you should not write the working notes. Not only preparation of working notes is important, we need to refer the working notes where we are going to record the amounts from the working notes result. Are you getting the point? So not only preparation of working notes is important, we need to refer where the amount is going to be recorded. So what is the first working note, ma? Balance sheet as on 31st March 2021. What is the second working note, ma? Creditors. What is the third working note?
medical equipment. What is the fourth one, ma? Subscription account. Okay, what is the first one? Receipts and payments account. What is the next one, ma? Trading account. What is the next one? Income and expenditure account. Balance sheet as on 31st March 2022. What is the first working note? Balance sheet as on 31st March 2021. What is the second working note? Creditors. What is the third working note? Medical equipment. What is the fourth working note? Subscription. Okay na guys? Shall we start? Okay. What is the first point given in the question? So opening cash balance. Where we need to record the opening cash balance, ma? In the receipts and payments account, starting point to balance brought down. And again we need to record in the opening balance sheet or closing balance sheet. Opening balance sheet. Working note number 1 na main answer. Working note number 1. How much, ma? 56,000. So we are going to record in the receipts and payments account, starting point to balance brought down. How much, ma? 56,000. And next, where we need to record this one? Opening balance sheet. Opening balance sheet, asset or liability, amma? Asset. So we should write cash in hand or cash at bank. How much? 56,000. Okay na guys, up to here? Is there any doubts? So next one. Donations received. Totally we have received how much, ma? 1,55,000. Where we need to record this one? Received means receipt or payment? Receipt. So in the receipts and payments account, 1,55,000 we need to record in the receipt side. Okay na? By donation or to donation? To donation. Next, 50,000 need to be recorded in the balance sheet liability side. 1,05,000 need to be recorded in the income and expenditure account. Debit side or credit side? Debit or credit? Credit side. So income. We need to treat it as what, ma? Income. Receipt is equal to income. Payment is equal to expenditure. So what is the first one? In the receipts and payments account, receipt side to donation. 1,55,000. This is a receipt and this is a payment. So in the trading account, in the income and expenditure account, how much? 1,05,000. Expenditure or income? Income. So buy or to? Buy. Buy donation. 1,55,000 minus 50,000. That is equal to how much, ma? 1,05,000. So where we need to record the 50,000? In the balance sheet liability side. Current or previous? Current. So working note or main answer? Main answer. So asset or liability? Liability. So to or buy? Building fund. Guys, are you getting it? If any expenditure incurred for the building fund means we need to reduce from the building fund and we need to record in the receipts and payments account, payment side. If any income on the building fund means we need to add it to the building fund and we need to record in the receipts and payments account, receipt side. Okay, completed? Okay, next one. Payment to creditors. Where we need to record the payment to creditors, ma? In the receipts and payments account, payment side, and in the creditors account. And in the creditors account. So in the receipts and payments account, to or buy, amma? Buy. Buy creditors or to creditors? Buy creditors account. How much? And again we need to record in the creditor account, debit side or credit side? Debit side. In this particular account, credit side means in the creditor account, debit side. What we need to record? To receipts and payments account or by receipts and payments account? To receipts and payment account. How much?
2,10,000. Okay, na guys, up to here. Okay, next one. Salaries how much? 70,000. There is no adjustment. So in the receipts and payments account, payment side, and income and expenditure account, expenditure side. 2 buy amma buy. Buy salaries, 2 salaries. Buy salaries how much? 70,000. And 2 salaries how much? 2 salaries, 70,000. Completed up to here. Okay, Rakesh, what you are doing? Huh? Okay, what is the next point? Purchase of medical equipment. Purchases of medical equipment means in the receipts and payments account we need to record in the payment side. How much ma? 1,05,000. So payment side in the receipts and payments account by medical equipment. How much? In the medical equipment account, which side we need to record? Debit side or credit side, amma? Debit side. So medical equipment, debit side. What we need to record? 2 receipts and payments account. We are having the opening balance. Please give the space. 2 receipts and payments account. How much ma? 1,05,000. Next one. Medical camp collections. Receipts or payments amma? Receipts. So in the receipts and payments account, receipt side. In the income and expenditure account, credit side. Income side means credit side. What is the amount? 87,500. So go to the receipts and payments account. Receipt side 2 by amma 2. 2 medical camp collections. $87,500. And in the income and expenditure account, buy medical camp collections. How much? 87,500. Okay, and up to here. So next one. Subscriptions received. What is the entry for the subscriptions received? Cash or bank. In the place of cash or bank, we need to put the word called as receipts and payments account. So receipts and payments account debited to subscription account. So 2 subscription or by subscription amma? 2 subscription. So 2 subscription. How much? 3 lakhs, huh? 3,50,000. And again, where we need to record ma? In the subscription account, debit side or credit side? Credit side. By receipts and payments account or 2 receipts and payments account? By receipts and payments account. How much ma? 3,50,000. Guys, are understanding each and every point how many times we are recording? 2 times. Okay, next one. Investments. So interest, total overall interest was received. Is there any receivable? Overall interest was received. 7 lakh into 9% means how much ma? 63,000. Okay, where we need to record the interest received? In the receipts and payments account, receipt side, debit side. Here debit means in the income and expenditure account, credit side. So in the receipts and payments account, 2 by amma 2 interest received. How much ma? 63,000. And next, in which account ma? Income and expenditure account by interest received or interest on investments received. How much? 63,000. Guys, okay na? Up to here, okay na? So next one. Honorarium to daughters. Payment or receipt? Payment. In the receipts and payments account, payment side. Their credit means in the income and expenditure account, debit side. So 1,90,000. So going to record in the receipts and payments account, by honorarium or to honorarium? By honorarium. How much? 1,90,000. Here to honorarium. In the income and expenditure account or trading account? In the income and expenditure account, 1,90,000. What is the next one? Telephone expenses. How much ma? 6,000. Where we need to record in the receipts and payments account?
payment side by telephone. How much? 6,000. Here, to telephone by telephone. To telephone. How much? 6,000. What is the next one? Huh? Medical camp expenses. Again 10,500 in the reception payments account, payment side by expenses. How much? 10,500. Sir, we can set off also. We can set off means what ma? We are having the medical camp collections of how much? 87,500 and we are having the expenses of 10,500. If you set off means what is the net amount? 77,000. So we can record directly 77,000 in the receipt side. We can do like that or we can do like this also, no problem. So here in the income and expenditure account, two expenses. How much ma? 10,500. What is the miscellaneous expenses? So by miscellaneous expenses, how much? 7,000. Here two miscellaneous expenses. 7,000. Guys, okay na? Okay, next we are going to see the balances. Subscription due means what ma? Receivable la prepaid? Receivable. So receivable. Asset liability? Asset. To balance brought down, by balance carried down. What is the to balance brought down? 10,500. What is the by balance carried down? 15,400. And 10,500 again will be recorded in the balance sheet, asset side or liability side? Asset side. Opening balance sheet or closing balance sheet? Opening balance sheet. And 15,400 again we need to record in the closing balance sheet, asset side. So first we are going to record in the subscription account. Open the subscription account, guys. So subscription account, receivable means what ma? To balance brought down and by balance carried down. So how much? 10,500, 15,000. This 10,500 recorded in opening or closing? Opening. This 15,400 closing. So in the opening means working out 1 or 2 amma. Work on. Receivable means asset or liability? Asset. So subscriptions receivable 10,500 and a closing subscriptions receivable 15,400. Guys, okay na? This one we have already discussed a new point. Already we have discussed. So that I am going in a fast manner. So next one. Received in advance means asset or liability? Liability. By balance brought down, to balance carried down. How much by balance brought down? 8,400. To balance carried down 4,900. So going to record in the which account ma? Subscription account. By balance brought down. How much? 8,400. To balance carried on 4,900. 8,400 in liability side or asset side amma? Liability side. Opening balance. 4,900 in closing balance sheet, liability side. So in the liability side of subscriptions prepaid, sorry, received in advance. How much? 8,400. And again in the closing balance sheet, how much? Subscriptions received in advance. How much? 4,900. What is the next point ma? Stock of medicine. Opening stock how much? 70,000. Closing stock how much? 1,05,000. Where we need to record? Opening stock in the trading account debit side and again in the opening balance sheet or closing balance sheet? Opening balance sheet. So in the trading account I am going to record directly to opening stock. How much ma? 70,000. We can write closing stock also na? By closing stock or by closing stock. Where we need to record? 1 lakh. So opening stock in the opening balance sheet or closing balance sheet? Opening balance. Working out 1. Okay na guys? So stock how much? 70,000. In the closing balance sheet stock how much? 1,05,000. Guys, are you getting it or not? Okay, now is there any difficulty? So second one. What is the next one? Medical equipment. Opening balance in the medical equipment account debit side to balance brought down and closing balance by balance carried on. So please record there. So what is the account? Medical equipment account.
To balance brought down. How much ma? 1,47,000. And by balance 2,14,200. 1,47,000 again in opening balance sheet or closing balance sheet? Opening balance. 2,14,000 again in closing balance sheet or opening balance sheet? Closing balance sheet. So going to record in the opening balance sheet. So how much ma? Medical equipment. How much ma? 1,47,000. Here also how much ma? Medical equipment. How much? 2,14,200. Okay na guys? So what is the next one? Building, having the opening balance and having the closing balance. So directly I am going to record the depreciation. The closing balance will be recorded in the opening balance sheet. Sorry, opening balance will be recorded in the opening balance sheet. Closing balance will be recorded in the closing balance sheet. Okay, can you please say ma? So in the opening balance sheet, building, how much? 3,50,000. In the closing balance sheet, 3,15,000. What is the difference amount ma? 35,000. We need to record in income and expenditure account to depreciation or by depreciation? To depreciation. How much? 35,000. How did we get ma? 3,50,000 minus 3,15,000. Guys, are you getting it or not? Why we are not prepared the billing account ma? Because there is no purchase of building and there is no sale of building. What is the next one? Creditors opening balance how much ma? 63,000, 91,000. So going to record in the creditor account. So creditor opening balance will be in the credit side or debit side amma? Credit side. So by balance brought down how much? 63,000. And to balance carried on how much? 90. So opening balance will be recorded in the opening balance sheet, liability side. Closing balance will be recorded in the closing balance sheet, liability side. Are you getting the point or not? So opening balance sheet means working out 1 or 2 amma? 1. So creditor how much? 63,000. Next one what ma? In the closing balance sheet, creditor how much? 91,000. Okay na guys? What is the next one? Investments, opening balance 7 lakh, closing balance also 7 lakh. We don't need to record anything related to income and expenditure account because we are not having any purchase of investments or sale of investments. On the investments we get the interest. Already we have recorded in the income and expenditure account and receipts and payments account. So directly we are recording in the opening balance sheet how much ma? How much? 7 lakh. And in the closing balance sheet how much? 7 lakhs. Completed? Is there any information amma? Investments also completed. So we have already posted all the things. First of all, close the opening. So close this one ma, creditor account. So where it was? If you close the creditor account, what is the balancing figure? Purchases. So 2,10,000 plus 91,000. 3,01,000. Here also 3,01,000. How much ma? 3 lakh? 2,38,000. What is this one? By purchase. Where we need to record these purchases? In the trading account. Debit side or credit side? Debit side. 2 purchases. How much ma? 2,38,000. If you do the balance, what is the balance ma? 3,08,000 and 3,08,000. What is the balancing figure? 2,03,000. We need to consider it as what ma? Consumed. We need to consider it as what ma? Consumed. So by consumed, or we can write it as what? Sales. Consumed, or we can write it as what ma? Sales. But it should be transferred to the income and expenditure account. It should be transferred to the income and expenditure account. Where we need to record in the income and expenditure account? Debit side. Normally we can call it as what ma? Consumed. Okay na? Consumed means nothing but sales. Where we need to record this consumed? In the income and expenditure account, debit side. To trading account. We can write. How much ma? 2,03,000. Okay na guys? Do you understand this point? Normally we can call it as what ma? Sales, but as per income and expenditure account, we are going to call it as what ma? Consumed. This should be transferred to income and expenditure account. Okay na? So next, close the opening balance sheet. One lakh, sorry, 15,400, 1,05,000, 2,14,200, 3,15,000 and 7 lakhs. What is the total? Is closing? Oh, sorry, opening. 56,000, 10,500, 70,000, 1,47,000, 3,50,000 and 7 lakhs. 13 lakh, 33,500. 13 lakh, 33,500. How much ma? 12 lakh, 62,000. What is the meaning of this one? Capital fund. Where we need to record this capital fund? Opening balance. How much? 12 lakh. Closing balance sheet. 12 lakh. 62,100. Okay na. So capital fund. From this we need to add what ma? Surplus. Okay. Close the medical equipment account. Two lakh 52,000. 37,000. What is the meaning of 37,800? What is the meaning of 37,800? Depreciation only na. There is no sale. Yes or no? We are having only purchases. Then we need to consider it as what ma? Depreciation. Where we need to record this depreciation? In the income and expenditure account, debit side. To depreciation by depreciation. How much? 37,800. Then close the another account. What is the another account ma? Subscription. Shirisha, calculate 3,50,000, 15,400, 8,400. How much? 3 lakh 70 na? 73,800. 3 lakh 73,800. How much? 3 lakh 3,58,000. Where we need to transfer? So in the income and expenditure account, debit side or credit side? Credit side. To a buy? Buy subscription. How much? 3,58,400. Now, what is the closing balance ma? Here we need to find out the closing balance of cash. How much? 56,000, 1,55,000, 87,500, 3,50,000 and 63,000. 7,11,000, 7,11,500. What is the balancing figure? 1 lakh. What is the meaning of 1,13,000? Closing cash balance. Where we need to record the closing cash balance? Current year balance or previous year balance? So cash in hand how much? 1,13,000. Then please close the income and expenditure account. 1,05,000, 87,500, 63,000, 3,58,400. 6 lakhs, 13,500. 6,13,900. What is the surplus? Minus 37,800, minus 2,03,000, minus 35,000, minus 7,000, minus 10,500, minus 6,000, minus 1,90,000, minus 70,000. 54,000. Where we need to record this 54,600? Added to capital fund. Then make the tally. Whether it was tallied or not, we need to see. $14,62,000. Here also how much? Same, but triple X. No money. Completed, huh? Okay. Have you solved? $14 lakhs, sir. $14,62,600. Okay. Sir, did you understand the concept? In the same way, you need to solve question number 9. Question number 9, practice. Okay, now we are going to see the chapter called as insurance claims. So, confirm 7 mark question plus 1 MCQ. Totally how many marks? 9 marks. So 7 mark plus 2 marks MCQ. That is equal to how much ma? 9 marks. We are having the two methods, loss of stock and loss of profit. First of all, what is the meaning of insurance? So, what is the meaning of insurance? We need to find out. Then after, what is the meaning of claim? We need to calculate. Okay, now guys, in this chapter, there is no accounting treatment like that. Just we need to calculate the claim amount. We need to calculate the claim amount. What is the meaning of insurance? Insurance is a contract between the two parties, insurer and insured. Who is the insurer? For example, we are the business. We are taking the insurance from LIC Corporation. We are taking insurance from the LIC Corporation. So LIC Corporation is called as a insurer. Okay, na? We are going to call it as what ma? Insured. Okay, na? Who is the insurer? The person who will give the insurance policy is called as a insurer. The person who take the insurance is called as a insured. Where the insurer agrees, what he will agree, amma? Agree to compensate the loss suffered by the insured in return of consideration called as premium. If you pay the premiums, then we will compensate the loss which was suffered by us. So the types of insurance, generally we are having the two types of insurance. First one is called as life insurance and second one is called as general insurance. So the life insurance for the human beings. Life insurance for the human beings. So we need to think in the accounting point of view, what ma? Business, human beings, business, so that we are not going to learn about the life insurance. In the general insurance, we are having the fire insurance, marine insurance and other insurance. But we are going to discuss only about the fire insurance. Because of fire insurance, we may lose certain things like what ma? For example, if the fire is occurred, okay na, how many types of losses we can incur? Stock will destroy. Okay, now based on stock destroyed, we can lose the profit. Or sometimes we can lose the human being's life. Yes or no ma? There will be different types of losses will be occurred at the time of fire occurred into the business. So in that we are going to discuss only the two types of losses. First one is called as what ma? Loss of stock and loss of profit. Okay na? Here we are having the two aspects of insurance. First one is called as accounting and second one is called as what ma? Computation of amount of loss. So we are going to discuss about the accounting, we are going to discuss about the computation. We are going to discuss about the computation. The accounting treatment will be discussed in the CA, corporate accounts. Okay na? You get to know there will be schedules. Okay, now already I think so we have learned that one. So now we are going to concentrate only on the computation. What is the amount of loss? So how many types of losses are there? Two types of losses. First one is called as what ma? Loss of stock. Second one is called as loss of profit. So here in this chapter we need to think from the point of view of whose point of view ma? Insured. Insured means from our point of view, from the life insurance corporation, from our point of view, we need to say the amount of loss. Then only the insurance company will compensate. Who need to calculate the amount of loss? We need to calculate the amount of loss. Then if you give the statement to the insurance company, then insurance company will compensate the loss. Are you getting the point or not? Okay, now. So just we are writing in the one piece of paper and writing, we have got the loss of rupees 1 lakh means he will give a. We need a proof of documents. We need a proof of documents also. Are you getting the point or not? So who will calculate the loss amount? We will calculate the loss amount. And who will compensate the loss? Insurer. Okay, now insured will calculate the amount of loss and the insurer will compensate the amount of loss which was incurred to the insured. Based on what ma? Insured need to pay the premiums. Insured need to pay the what ma? Premiums. Are you getting the point or not? So what is the concentration on this chapter? Computation and accounting. Computation. So in that we are going to discuss first one what ma? Loss of stock. So while calculating the loss of stock problem, we are having how many steps, sir? Means we are having the 4 steps. 8. Not a loss of profit, this is a loss of stock. We are having how many steps ma? 4 steps. Step number 1 is called as calculation of gross profit percentage from the previous year trading account. Calculation of gross profit percentage from the previous year trading account. What is the gross profit percentage ma? Gross profit divided by sales into 100. Why we need to take the previous year gross profit? Because we will compare the loss with the previous year. We'll compare the loss with the previous year. So we need to take the previous year gross profit. Are you understanding the concept or not? In order to know the previous year gross profit, what we need to prepare? Previous year trading account, current year trading account, previous year trading account. In some of the questions, he will give the gross profit percentage directly. In that situation, we no need to prepare the previous year trading account. Are you getting the point or not? If he has given the previous year gross profit percentage directly in the question, means we no need to prepare the trading account, we need to prepare the trading account. We no need to prepare the trading account of previous year. Okay, now if in the question they have not mentioned about the gross profit percentage, means we need to prepare the previous year trading account. We know how to prepare. Yes or no ma? Opening stock, purchases, closing stock, sales and like that. So after that we can find out the gross profit. What is the formula for the gross profit percentage? Gross profit divided by sales into 100. What is the step number 1? Prepare the trading account of previous year or current year? Previous year. What is the step number 2? We need to calculate the closing stock as on date of fire. We need to calculate the closing stock as on date of fire. That is the ultimate objective. Okay, loss of stock or loss of profit? Loss of stock. What is the meaning of loss of stock, sir? What is the amount of stock which was presented at the time of what ma? What is the amount of stock which was presented at the time of at the time of fire occurred? At the time of fire occurred. Imagine we are doing the business. In our business we are having the inventory of rupees 1 lakh. Inventory of rupees how much ma? 1 lakh. This is the closing stock or opening stock? Closing stock. Suddenly fire accident was occurred. So that stock value we need to find out. So in order to find out the closing stock as on the date of fire, we need to prepare which account? Memorandum trading account. Why we are going to call it as memorandum trading account ma? Because it is for the full year or half year. Only for the period from the beginning of the year to date of fire. Full year or half year ma? Nothing but 6 months or 9 months or 3 months like that. So that this is not for the full year. So that we are going to call it as what ma? Memorandum trading account. So memorandum trading account will be prepared for the period of which year ma? From the beginning of the year to in which the fire occurred till the date of fire accident. Are you getting the point or not? What is the first point? Calculation of gross profit percentage by way of preparation of previous year trading account. What is the formula? Gross profit percentage into gross profit percentage is equal to gross profit divided by sales into 100. what is the ultimate objective of the loss of stock? We need to find out the stock which was presented at the time of fire accident. So that one is called as a loss of stock as on the date of fire. In order to calculate the loss of stock as on the date of fire, we need to prepare what? Memorandum trading account. Why we are calling it as memorandum trading account? This is for the full year, only for some months. Only for some months. So this memorandum trading account will be prepared from the period beginning of the year in which the fire accident was, beginning of the year in which the fire occurred till the date of fire accident, we will prepare the memorandum trading account. In this trading account, we will find out the balancing figure called as what? Closing stock. What is the meaning of that closing stock? The closing stock which was presented at the time of fire accident. At the time of fire accident. Then next we need to find out the loss of stock. So directly we are not going to call it as closing stock as a loss of stock. Directly we are not going to call it as what? Closing stock as a loss of stock. Why, sir? If the fire accident is happened, okay, the total stock will be destroyed, or some of the stock will be there. Some of the stock will be there. That stock is called as a salvage value. That stock is called as what? Salvage. Imagine at the time of fire accident we are having 1 lakh. Before the fire accident we are having how much? 1 lakh. After the fire accident we are having the 30,000 of stock. We are having the 30,000 of stock. So the insurance company will compensate 1 lakh 70,000. 70,000. How much worth rupees of stock was destroyed? Only 70,000. So what is the meaning of salvage value? The stock which was left out after the fire accident is called as a salvage value. The insurance company will compensate this one, will not compensate, will not compensate, so that we are going to reduce from the closing stock which was available as on the date of fire. Are you getting the point or not? Why we are reducing the salvage value? What is the meaning of salvage value? The stock which was left out after the fire, before the fire, after the fire. Next, why we need to add the firefighting expenditure. What is the meaning of firefighting expenditure? During the fire accident, okay, now we have incurred certain expenditure in order to stop the fire. In order to stop the fire, okay, now we have called to the fire station. Fire station have charged 10,000 rupees. If you are not going to take the precautions, then the total stock will be destroyed. Then the total stock will be destroyed. Okay, now, or otherwise, okay, now, if this expenditure will be compensated by the insurance company or will not be compensated? Will be compensated. If this expenditure is not compensated by the insurance company, then we will try to save the stock, or we will sit simply. We will sit simply. Why, sir? Because we are having the insurance. He will compensate, he will not compensate. He will compensate. If you try, you need to compensate. If you try means we need to compensate. Are you getting the point or not? What, sir? Okay. So what is the formula for the loss of stock? Closing stock as on the date of fire. Nothing but step 1 or 2, step 2 minus salvage value. What is the meaning of salvage value? The stock which was left out after the fire accident. The stock value will be compensated, will not be compensated. Will not be compensated. That means we need to reduce. Next we need to add the firefighting expenditure. Why we need to add the firefighting expenditure? Because of incurring this kind of expenditure, the loss was mitigated. The loss was mitigated. So what is the formula? Closing stock as on the date of fire minus salvage value minus, add firefighting expenditure. Then we need to calculate the claim amount. Then we need to calculate the claim. We are having the two types of insurances, over insurance and under insurance. So we need to compare the policy value with the which one? Closing stock. We need to compare the policy value with the closing stock. So closing stock means which closing stock? Closing stock as on date of fire. Imagine we are having the policy value of 1 lakh. We are having the policy value of 1 lakh and we are having the closing stock as on the date of fire is equal to 1,20,000. 1,20,000. So under insurance or over insurance? Under insurance. Under insurance or over insurance? Under insurance. Because we are having the stock 1,20,000, but the policy value is only how much? 1 lakh. So this is called as under insurance. In the case of under insurance, the average class will be applicable. Which class will be applicable? Average class. What is the average class, sir? So in the case of under insurance, I am not going to compensate the full value of loss of stock. I am not going to compensate what? Full value of loss of stock. I will compensate in a proportionate basis. I will compensate in a proportionate basis. So what is the proportion, sir? Which proportion? So loss of stock into policy value divided by closing stock as on the date of fire. Why we are applying this formula? Because we are in under insurance situation or over insurance situation? Under insurance. So in the case of under insurance, we will apply the which class ma? Average class. What is the meaning of average class? Proportionate basis or full? Proportionate basis. So loss of stock I need to compensate, but full value or proportion? A proportion. Which proportion ma? Policy value divided by closing stock as on the date of 5. In the case of over insurance, what is the meaning of over insurance? Imagine the policy value is equal to 1,20,000. What is the policy value? 1,20,000. What is the loss of stock, sir? 1 lakh. What is the loss of stock? 1 lakh. What is the situation? Under insurance or over insurance? Over insurance. In the case of over insurance, they will give the claim is equal to loss of stock or policy value, whichever is lower or higher? Whichever is lower. Okay, now imagine you are in a situation, you are the insurer. You are the insurer. You will give the lowest amount or highest amount? Lowest amount. Even though the policy value is equal to 1 lakh, but the loss happened is only 50,000. How much amount you will give? 50,000. So whichever is lower, whichever is higher? Whichever is lower. So once again I am repeating, sir. We need to calculate the claim amount. We need to calculate the claim amount. We need to compare with the two amounts. What are the two amounts, ma? Policy and closing stock. If the policy value is more than the closing stock, is called as a over insurance. In the case of over insurance, what is the claim amount, ma? Policy value or loss of stock, whichever is lower. In the case of under insurance, what is the meaning of under insurance? Policy value is less than the closing stock as on the date of fire. In this case, under insurance, then we will compensate the full amount. You will compensate the full amount, or you are not going to compensate the full amount? You are not going to compensate the full amount. Why, sir? Under insurance or over insurance? Under insurance. So under insurance means I will compensate only up to the policy value. I will compensate only up to the policy value. That is the condition. Sir, can you please explain with an example? Simple. What is the policy value? Is equal to 1 lakh, ma. Policy value is equal to 1 lakh. Next one, what, ma? Closing stock is equal to 50,000. Oh, sorry. Under insurance, 1,50,000. Closing stock is equal to how much, ma? 1,50,000. So the policy value is for only 1 lakh, but the closing stock is how much? 1,50,000. Sir, imagine why we are going to compare these two values, sir? We can compare with the loss of stock now. So why we are comparing means based on the stock we need to take the policy. Based on the closing stock we need to pay the policy. Why, ma? Suddenly the fire accident was happened. Closing stock full will be destroyed, only half full. So that we need to take the policy value for the closing stock, not for the loss of stock. Not for the loss of stock. Okay, now closing loss of stock can be equal to what, ma? Closing stock also. Loss of stock can be equal to closing stock. Why, sir? All the times we are having the salvage value. In some of the situations the full stock will be destroyed, half stock, full stock. So that we need to compare the which two values, ma? Policy value and closing stock. Okay, you made the under insurance. Whose mistake? Our mistake. You made the under insurance. Whose mistake, ma? Our insurance. So that I will give the loss of stock. What is the compensate? What he need to compensate, ma? Loss of stock. Not for the 1,50,000. Not for the 1,50,000. I will compensate only for the 1 lakh. I will compensate only for the 1 lakh. How did we calculate, sir? This loss of stock. Imagine this loss of stock is equal to 50,000. This loss of stock is equal to how much, ma? 50,000. 50,000 is equal to 1,50,000. Yes or no? 50,000 is for how much? 1,50,000. But we have taken policy for only 1 lakh. Cross multiply. 50,000 is equal to 1,50,000 means for 1 lakh how much? How did we get, ma? 50,000 into 1 lakh divided by 1,50,000. Are you getting the point or not? Okay, now this is only formula. What is the formula, ma? Loss of stock into policy value divided by closing stock as on the date of file. Did you get the point? Or otherwise I need to repeat it once again. Once again. Okay, next we are going to discuss about the abnormal items. Please listen carefully. So abnormal items. In some of the situations, this abnormal items is also called as scrap. Is also called as what, ma? Scrap. Okay, I will call it as abnormal item. Sir, Abnormal items need to eliminate, need to add, need to eliminate. Why, sir? Because of abnormal items, we will get the correct profit or loss, wrong profit or loss, wrong profit loss. So that we need to eliminate. Eliminate means reduce or increase? Reduce. Okay. Reduce the abnormal items where it was presented. Where it was presented. If it is presented in the purchases, we need to eliminate. If it is presented in the closing stock, we need to eliminate. Okay, na? So, what is the abnormal item, sir? Nothing but scrap, we can call it as. The abnormal items given in the question, then how to find out the gross profit and closing stock as on the date of fire is the important point. We have to eliminate the total abnormal items from which they were incurred. If it is incurred in the purchases means we need to eliminate from the purchases. If it is incurred in the closing stock means we need to eliminate from the closing stock. Because of the gross profit percentage should be applied only on normal items or abnormal items, amma? Normal items. Gross profit percentage we need to apply only on normal items, not on abnormal items. Okay, sir. Can you please explain one example? Sir, imagine the opening stock is equal to how much, ma? 1 lakh. Purchase is equal to how much? 4 lakhs. Sales is equal to 4,80,000. Then closing stock is equal to 1,34,000. Okay, trading account. I am going to prepare the trading account. So opening stock will be on the debit side. That is equal to how much, ma? 2 opening stock, 1 lakh. Purchase how much? 4 lakhs. I am recording in the inner column because we are having the abnormal item. Okay, I will explain it later. Next one, what, ma? Sales in the debit side or credit side? Credit side. Next closing stock how much? 1,34,000. I am recording in the inner column. Okay, na? So in valuation of closing stock, in which one, ma? In valuation of closing stock, certain damaged goods costing how much, ma? 30,000 was valued at 24,000. In the closing stock, we are having 24,000, we are having 30,000. Sir, please read once again. In valuation of closing stock, certain damaged items, nothing but abnormal items or normal items? Abnormal items are costing how much? 30. Okay, na? That cost price is 30, but was valued at how much, ma? 24,000. The difference between these two is called as written off. The difference between these two is called as written off. Okay, please wait a second. How much abnormal item is presented in the closing stock? 24,000 or 30,000? 24,000 or 30,000? 24. What is the cost price? 30,000. Okay, na? So from the closing stock, how much amount we need to eliminate? 24,000. What is the value of abnormal item presented in the closing stock? 24,000. So we need to eliminate 24,000 directly from the closing stock. Okay. What is the cost value? 30,000. Sir, in the closing stock, which items will be presented, ma? We need to take only purchases are presented in the closing stock. We need to take only purchases are presented in the closing stock. What is the cost value of that abnormal item? 30,000. The cost value we need to eliminate from the purchases. Guys, are you getting it or not? The cost value will be eliminated from the purchases, and in the closing stock we will eliminate whatever the value presented or highest presented. We need to eliminate overall abnormal item or only sum? Overall abnormal, where it was presented. Now the abnormal item is presented in purchases and closing stock, but in the closing stock presented how much, ma? Only 24,000. So that we are eliminating 24,000. What is the cost value of that 24,000, ma? 30,000. That will be presented in where, ma? Purchases. Because in the closing stock, only the stock included what, ma? Only purchases, opening stock, only purchases. Even though in this closing stock, sometimes they may presented what, ma? Opening stock also, but in our assumption we need to take only what, ma? Purchases. Only purchases. This 1,10,000 is came from purchases or opening stock? Is came from purchases. So the cost value we are going to reduce from the purchases. And what is the value presented in the closing stock, ma? 24. We need to eliminate from the closing stock. Did you get the point or not? Yes or no? If you see the sentence here, return of 20,000, which originally cost is 30,000. Return of 20,000, which originally cost is how much, ma? 30,000. There is a lot of difference between previous sentence and this sentence. What is the meaning of this sentence? The stock, the abnormal item presented in the closing stock is how much, ma? 24,000. What is the actual cost? 30,000. That means how much amount you have written off? how much amount you have written off. Are you getting the point or not? The actual cost price is 30,000, but the value presented in the closing stock is how much ma? 24,000. That means how much amount you have written off from the closing stock? 6,000 already you have written off. 6,000 already you have written off. Now how much amount we need to reduce? Only 24,000. How much amount we need to reduce? Only 24,000. Okay. Please apply the same concept for this point. Which concept for this point ma? Written off 20,000. Okay, already we have reduced the closing stock how much ma? 20,000. What is the cost value? 30. Now how much amount we need to reduce? 10,000. How much amount we need to reduce? Guys, are you getting the point or not? Sir, in the previous scenario, we are having 24,000 in the closing stock and 30,000 in the purchases. Clearly they have given. Now the sentence is called as what ma? We have already written off how much? 20,000. What is the cost value? What is the cost value? 30,000. Okay, now then how much amount we need to reduce from the closing stock? 10,000 we need to reduce from the closing stock. From purchases? 30,000. From purchases how much ma? 30,000. Okay, now are you getting the point or not? So next one, written off 20,000. We have written off how much ma? 20,000. The cost value is only 15,000. The cost value is only 15,000, but how much amount you have written off from the closing stock? 20,000. Okay, now more amount you have written off or less amount? More amount. More amount you have written off. Even though the cost value is only how much ma? 15. How much amount you have written off? 20,000. So you have reduced the more amount. So now we need to add. Now we need to add. So added to closing stock and reduce from the purchases. Reduce from the purchase how much? 15,000. Added to closing stock how much? That's all. Completed. This is called as abnormal item. What is the first situation? The cost of 30,000. How much amount presented in the closing stock? 24,000. So reduce the closing stock from 24,000 and reduce the purchase by 30,000. But the same sentence in our books, in our workbook or board book, what they have given ma? Written off. What is the meaning of written off? Already we have reduced. Already we have reduced. What is the second example ma? We have written off 20,000. What is the cost value? 30,000. That means still how much amount we need to written off? 10,000 from the closing stock. Now we need to reduce from the purchase how much ma? 30,000. What is the third example? Written off 20,000. What is the actual cost? 15,000. That means we have made the written off of more amount or less amount? More amount. So that is a wrong. That is a wrong. So that you need to add back the closing stock of rupees how much? 5,000. And we need to reduce from purchase how much ma? 15,000. Okay. Shall we do one sum? On abnormal items directly. Okay, now if you do the abnormal items directly, then all the points will be covered. So I will teach you question number 5. You need to solve question number 6. Shall we start? Please open workbook. Guys, okay na? Is there any doubts? Huh? Insurance claims page number what ma? 116. Only one sum. After discussion of this sum, we can take a break. The most important model, this is the most important model in previous IPCC examinations. Okay na? In each and every attempt, they will ask question number 5. They will ask what ma? Question number 5 is so much important. Even though we are having so many methods to solve this question, please follow this approach. Is the simplest approach. Please follow this approach. Is the simple or hard ma? Simple. Hard. Okay, what is the question ma? Question number 5. On 1/4/2021, question number 5. On 1/4/2021, go down of Y Limited as destroyed by the fire. Okay, what is the date of fire ma? 1/4/2021. The records of the company revealed the following. The stock on 1/1/2021. Sir, 1/1/2021 means they are following the calendar year or financial year, amma? They are following the calendar year. So what is the current year then? Current year is 2021. Previous year is 2022. Current year 2021, previous year 2020. Stock on 1/1/2021 means opening or closing? Opening. Opening stock is how much? 75,000. Closing stock is how much, ma? 80,000. So these two amounts need to be recorded in memorandum trading account or trading account? Trading account or memorandum trading account? Trading or memorandum trading? Trading accounts, okay. Next one, purchase during the 2021 how much, ma? 3,10,000. Sales how much? 4 lakhs. Purchase from 1/1/2022. So current year 2022. So please rectify 1/4/2022. Please rectify what, ma? 1/4/2022. That means what is the current year? 2022 is the current year. 2021 is the previous year. Now it fine. Okay. The opening stock of previous year is how much, ma? 75,000. Closing stock is how much? 80,000. Purchase during the previous year how much, ma? 3,10,000. Sale during the previous year how much? 4 lakhs. So purchase from 1/1/2020 to the date of fire how much? 75. This 75 need to be recorded in the memorandum trading. Memorandum trading account. Sale of rupees how much? 1 lakh. This 1 lakh need to be recorded in the memorandum trading. Memorandum. See, please see the point here. In valuing the closing stock of 2021, that means previous year closing stock, current year closing stock, previous. That means trading account. That means trading account. 5,000 was written off. How much amount they have written off, ma? 5,000 was written off. Whose cost is how much, ma? 4,800. The actual cost is only 4,800. You made the written off how much? 5,000. X is written off or less written off? X is written off. We need to add or we need to less? Add. How much? From the closing stock we need to add. Purchases how much amount we need to reduce? 4,800. Next one. The part of this stock sold for rupees how much, ma? This is the most important point. We have discussed this point or we have not discussed? We have not discussed. The part of this stock which was sold on 2022, that means memorandum or trading account? Memorandum trading account. At a loss of 400, at cost of rupees how much, ma? 2,400. What is the actual cost? 2,400. But we sold at a loss of 400. That means how much amount of sales? 2,000. This is a sale of abnormal or sale of normal? Sale of, we need to reduce or we need to increase? We need to reduce. We need to reduce the from sales. What is the sale value? 1 lakh. From the 1 lakh we need to reduce how much, ma? 2,000 or 2,400? 2,000. So because it is a abnormal sale amount. Because it is abnormal sale amount. What is the abnormal item? Wherever the abnormal item is presented, we need to reduce. Wherever the abnormal item is presented, we need to reduce. It is presented in the closing stock, but we have written off more amount or less amount? More amount, so that we need to add back. It is presented in the purchase, we have reduced, and it is also presented in the sales, we have reduced. That's all. The stock salvaged is how much, ma? 5,000. What is the meaning of stock salvaged? Which was destroyed or which was not destroyed? Which was not destroyed. Easily we can solve. Easily we can solve. Shall I start? Okay, please participate. Question number how much? 5. Question number 5. What is the first step? Trading account or P&L account? Sir, is there any percentage given in the question? No. That means we need to do the first step or second step? First step. Step number 1. Trading account or memorandum trading account? Trading account for the year 2021. What is the starting point? Opening stock or closing stock? Opening stock. To opening stock. How much? 70. Is there any abnormal item? No. The abnormal item is presented in the purchases and presented in the closing stock. Two purchases how much, ma? 3,10,000. Inner column minus how much? So what is the cost value ma? 4,800. What is the purchase value? 3,10,000. So if you reduce, what is the amount? 3,05,200. Okay na guys? Okay na? Next one, sales. What is the amount of sales? Sir, in these sales we are having the abnormal item in the memorandum trading account. In the memorandum trading account we are having the abnormal item of 2,000. We need to reduce from the memorandum trading account. So buy closing stock how much ma? 4 lakh. 4 lakhs. Closing how much ma? 4 lakhs. See. 80,000 plus 200 minus 200. Because we are written off more amount or less amount? More amount. The cost price is only 4,800. We made the return of 5,000. The excess we have made the return of. So add back 80,200. So what is the balancing figure? 4,80,200. 4,80,200. What is the balancing figure ma? GP. 1 lakh. What is the balancing figure? 1 lakh. So what is the GP percentage? Gross profit 1 lakh. Divided by sales how much ma? 4 lakhs. Into 100, that is equal to how much ma? 25% need to be applied in the sales of next year. Sometimes they will give what ma? Increase it 10, decrease it 10. At that point of time what we need to do? Add back the increased 10 or decrease the decreased 10. So next one, memorandum trading account or normal trading account? Memorandum trading account. 2 opening stock. Closing stock for the previous year, closing stock for the current year. Closing stock. 2 opening. What is the previous year closing stock ma? 80,200. Next one. 2 purchases. How much? 75,000. 75,000. There is no abnormal item in the current year ma. Abnormal item having presented in previous year. But we are having in the sales. By sales how much? 1 lakh minus 2,000 or minus 2,400? Actual value is 2,400, but we have sold at a loss or at a profit? Loss. So how much? 98,000. By closing stock. We need to find out. What is the GP ma? 98,000 into 25%. 24,500. What is the balancing figure? 81,007. Okay. 81,700. So what is the loss of stock formula ma? Loss of stock is equal to closing stock as on the date of fire minus salvage value. What is the salvage value given? 81,700 minus salvage value how much? 5,000. What is the policy value given or not given? Given. Policy value given or not given amma? 76,000. In the case of policy value is not given, what is the claim amount? Loss of stock. In the case, whenever the policy value is not given, what we need to consider the claim amount ma? Loss of stock is the claim amount. So in this case the claim amount is equal to 76,700. Next you need to practice what ma? 6th question. So if you open the 6th question, I will explain you. Okay na, here we are having the 2 types of approaches. Okay na, please follow this approach. It is a simple, I think so. If you want, you can follow any approach. I am not having any objections. So please see the working note given under the table. Please wait for 5 minutes. In valuing the stock on 31st March 2022. In valuing the stock on 31st March 2022. First of all, on 1/4/2021 means what ma? What is the previous year? 21-22 is the previous year. So 31st March 2022 means what ma? Previous year closing stock or current year closing stock? Previous year closing stock. Due to obsolescence, 50% of the value of stock, which originally cost of rupees how much ma? 12,000 was written off. What is the meaning of this sentence? The cost value is 12,000. In that cost value, we have written off how much ma? 6,000. We have written off how much ma? 6,000. Now we need to reduce how much? 6,000 from the closing stock, and from the purchase how much ma? 12,000. Okay na? So completed. Then that year will be completed or will not be completed? Will be completed. When coming to the sales, the sales abnormality will be presented in current year or next year? Current year. 3/4 of these stocks have been sold. 3/4 means what, ma? 12,000 into 3/4, 6,000 into 3/4. 12,000 into 3 by 4. How much? 9,000. At a loss of 9. But we have sold for 90%. That means what, ma? 9,000 into 90%. 8,100. So what is the amount of sales? 8,000. What is the sales, ma, here? 3,68,100. Reduce 8,100 from the sales. That's all completed. Okay, Nagesh. Previous year or current year? Current year. The sale we need to reduce in the current year. The closing stock on purchase we need to reduce in the previous year. In the step 1 we will reduce the purchase of rupees 12,000. We will reduce the closing stock of rupees how much, ma? 6,000. In the current year sales, how much amount we need to reduce? 8,100. This is the overall discussion. Okay, na guys? Easily we can conclude. And there is another sum I need to explain. At the time of change in sales value, we should not apply the gross profit directly which we have got in the previous year. Okay, na? I will explain that concept after the break. Are you getting the point? In the case of change in sales value, we can apply the gross profit percentage directly on the sales, or we cannot apply. We cannot apply. That concept we can see in the next class. Question number 4 we need to solve, I think so. Question number 4. Easy concept. Okay, now after discussion of question number 4, I will start the loss of profit. Okay, now guys, is there any difficulty? Did you understand? Thank you. Okay, we have started discussion with the insurance claims. In that we have started the discussion of loss of stock. How many steps are there? 4 steps. Calculation of gross profit from the previous year trading account. What is the gross profit percentage? Gross profit divided by sales into 100. So then afterwards we need to prepare the memorandum trading account in order to find out the closing stock as on the date of fire. Closing stock directly we can consider as a loss of stock. We need to do certain adjustments. So closing stock as on the date of fire minus salvage value. What is the meaning of salvage value? The stock which was left after the fire accident is called as a salvage value. And add back the firefighting expenditure, then we will get what, ma? Loss of stock. So next, in the step number 4, we need to find out the claim amount. While calculating the claim amount, we are having the 2 situations. First one is called as under insurance, second one is called as over insurance. We need to compare the policy value with the closing stock or loss of stock. Closing stock. If the policy value is more than closing stock, then we will consider it as over insurance. Then the policy value or loss of stock, whichever is lower, will get the claim amount. Next, in the case of under insurance, what is the meaning of under insurance? Policy value is less than the closing stock as on the date of fire. Then we need to apply the average class. What is the average class formula? Loss of stock into policy value divided by closing stock as on the date of fire. Then we will get the claim amount. So, and we have discussed about the abnormal items. Abnormal items, wherever it is presented, we need to write off we need to reduce we need to add we need to reduce. So next we are going to discuss the important concept called as when there is a change in sales. When there is a change in sales, the gross profit in the step number 1, we should not apply directly on the current year sales. What is the meaning, Amma? When there is a sales, when there is a change in sales amount, the gross profit percentage which we have find out in the step 1, we should not apply directly in the current year sales. Why, sir? Because the sale value is increasing or decreasing? Increasing. In order to get the clarity of this sentence, we need to solve certain question. So please open question number 4. What is the page number? One 114. అరే శ్యామ్ బాబు పేనమ్మది ఎత్తనా. So this is the most important model. After discussion of this question, I am going to teach you what ma loss of profit. Okay, illustration number 4. Please see very careful. A fire accident on 15th September 2021. What is the fire occurred date? 15th September 2021. In the premises of Sen and Co. From the following figures, calculate the amount of claim to be lodged with the insurance company for the loss of stock or loss of profit, loss of stock. So they have given certain information. So stock at 1/1/2020. That means we are following the calendar year, we are following the financial year. We are following the calendar year. So the loss happened during the 2021. That means what is the current year ma? The current year is 2021. The previous year is called as what ma? 2020. So what is the previous year beginning date? Previous year beginning date 1/1/2020. What is the previous year ending date? 31/12/2020. What is the current year beginning date? 1/1/2021 is the current year beginning. 1/1/2020 is the previous year beginning. So what is the meaning of stock at 1/1/2020 ma? Previous year opening stock, current year opening stock, previous year opening stock. And stock at 1/1/2021 means current year opening stock is equal to previous year closing stock. So previous year opening stock is 40,000 and previous year closing stock is 60,000. Purchases in 2020 means previous year purchases, current year purchases, previous year purchases. So purchases from 1/1/2020 to 15/9/2021 means current year purchases. So these purchases of rupees 1,76,000 need to be right in the memorandum trading account. This 80,000 need to be right in the trading account. So sales of rupees how much ma? 1,20,000. Memorandum trading account or trading account? Trading account. So 2,10,000 in memorandum trading account. So the most important sentence is this one. What is the important sentence ma? During the current year, that means 2021 or 2022? 2021. During the current year, the cost of purchase has risen by 10%. The cost of purchase has risen by 10%. When compared to the previous year, the current year purchase has raised, not raised, raised. The above last year's level, from the above last year's level, during the current year rising. That means what ma? Current year purchases will be at 110% or 100%? 110%. Previous year purchases will be for 100%. Next one, selling price have gone up to how much ma? 5%. Now again the selling price also increasing or decreasing? Increasing. Sir, the gross profit for the previous year we can apply directly on the sales or we cannot apply, sir? We cannot apply because the reason called as selling prices have been rising. Selling prices have been rising. Selling price rises means selling price per unit increases. Selling price per unit increases. In costing we can learn that type of questions. For example, in the marginal cost, if we take the marginal cost, we are having what ma? PV ratio. We are having what ma? PV ratio. What is the PV ratio? Contribution divided by sales into 100. Okay na? If there is no change when compared to the previous and current, we can apply directly PV ratio on the contribution or sales. Yes or no? If there is any change means we can apply. If there is any change means we cannot apply. In the same manner, if there is no changes in sales, we can apply the previous year gross profit on the current year sales. Okay na? If there is a change, if there is no change, if there is no change. But in this question we are having the changes in sales, either increase or decrease, increase. So that we can apply the directly or we cannot apply. We cannot apply directly on the current year sales, but we can apply directly on the previous year sales. Are you getting the point or not? What is the meaning of previous year, sir? Here the meaning of previous year means, so 1/1/2021 to 15/9/2021 is the current year. 1/1/2021 to 15/9/2021 is the current year, previous year, current year. The same period for the previous year. That means what ma? 1/1/2020 to the 15/9/2020. Are you getting the point or not? This is called as previous year in my example. Are you getting the point or not? What is the current year, ma? 1/1/2021 to 15/9/2021 is the current year. What is the previous year? 1/1/2020 to 15/9/2020. Are you getting the point or not? Okay, I will explain you, no problem. Okay, what is the ultimate objective? We can apply directly the gross profit which we have got in the step number 1. We can apply or we cannot apply? We can apply. Why? Because there is a change in sales. In the same way as what, ma, in the marginal costing, PV ratio we can apply directly when there is no changes. Okay, now PV ratio we cannot apply directly when there is a change. So in the same way, here also gross profit we cannot apply directly on the sales because there is a change or there is no change. There is a change. Okay. First of all, what is the first step? What is the first step, ma? Trading account. What is the second step? Memorandum trading account. From the first step, we can find out the gross profit percentage. From the second step, we can find out the closing stock as on the date of file. In the third step, we can find out the loss of stock. In the fourth step, we have to calculate the claim amount. Okay. So now I am going to start the question solving. So what is the first step, ma? Trading account or memorandum trading account? Trading account. In the trading account, there is no changes. There is a changes or there is no changes, ma? There is no, all the changes are happening during the current year, during the previous year, during the current year. So what is the question number? Question number 4. What is the step number 1, ma? Trading or memorandum trading? Trading account. Why we are going to prepare this particular account? In order to find out the gross profit or gross loss? Gross profit or gross loss. So trading account. For which year, ma? 2021 or 2? 2020. 2020. What is the starting point of the trading account, ma? Opening stock. Opening stock means 1/1/2020 or 1/1/2021? 1/1/2020. So 2 opening stock. How much, ma? 40,000. Are you getting the point or not? So next one. What is the closing stock? Buy closing stock or 2 closing stock? This information we are recording directly because there is no changes in the previous year. There is only changes in the current year. So what is the closing stock, ma? Closing stock means 1/1/2021. This opening stock for the 21 and closing stock for the 20. So how much? 60,000. So next one. What is the purchase during the year? So 2 purchase or buy purchase? How much, ma? Purchase for 2020 is 80,000. Sales for 2020 is 1,20,000. So 80,000 and buy sales how much, ma? 1,20,000. What is the balancing figure? The total is 1,80,000. Here also how much, ma? 1,80,000. What is the difference amount? 60,000. What is the meaning of this 60,000? 2 gross profit or buy gross profit? What is the gross profit percentage formula? Gross profit is equal to 60,000 divided by sales how much, ma? 50% only, yeah? So into 100, that is equal to how much? 50%. Now we can apply this 50% in the next year sales. We cannot apply. We cannot apply. Why? Because there is a changes in sales. Changes means increasing or decreasing? Increasing. Nothing but selling price per unit is increasing. Okay, na guys? Okay. Now we need to draw what, ma? Memorandum trading account or trading account? Memorandum trading. Step 1 is completed. What is the step 2, ma? Memorandum trading account. Now in this memorandum trading account, we need to open 2 columns. How many columns we need to open, ma? 2 columns. Because the current year we need to compare with the previous year. The current year we need to compare with the previous year. Here the current year means, what is the period? Current year means 1/1/2021 to 15/9/2021. What is the meaning of previous year, sir? The same period which we have taken for the current year, we are considering for the previous year. That means how much? 1/1/2020 to 15/9/2020 is the previous year. I am not going to take the overall previous year. I am not going to take the overall previous year. I am going to consider the period which was considered in the current year. Are you getting the point or not? So, okay. So, how many columns we need to open, ma? 2 columns. One column is for current year, one column is for previous year. So, this is called as memorandum. Why we are calling it as memorandum trading account, ma? Because only full year for certain period, only for certain period, so that we are going to call it as memorandum trading account. So, previous year, current year and previous year, current year and previous year. Okay, now, first of all, fill the current year information. What is the current year, ma? 2021 or 2020? 2021 is the current year, 2020 is the previous year. So 2021 is the current year, 2021 is the previous. Overall year only for certain period. Only for certain period. Nothing but current year means from where to where? 1/1/2021 to 15/9/2021. Previous year means 1/1/2020 to 15/9. We are considering overall previous year only for current year period. Only for current year. Okay. So, what is the opening stock, ma? 2 opening stock. What is the amount? So, previous year closing will be the current year opening. What is the previous year closing? 60,000. So, please record 60,000. In the current year, previous year, current year. So, what is the purchases during the year? Purchases how much, ma? 1,76,000. Sale is equal to how much? 2,10,000. 1,76,000 and 2,10,000. Okay, na. So 2 purchases how much, ma? 1,76,000. Buy sales 2 lakh. Okay, na. This information we have. They have given, or they have not given? They have given. Okay. Now we need to find out the closing stock. We can find out so please wait. Here what will be my gross profit? Okay. Here there is a changes in only current year purchases and current year sales. Yes or no, ma? There is only changes in what, ma? Current year purchases and current year sales. Okay. Current year purchases are increased to how much? Increased by 10%, and current year sales are gone up by 5%. Okay. Sir, is there any changes in the opening stock? Is there any changes in the opening stock? No. There is a changes in the purchase? Yes. There is a changes in the sales? Yes. Can I take same 60,000 for the previous year? What is the current year opening stock? 60,000. Is there any changes? No. Can I take the same amount? Okay, na. So please participate, guys. Can I take the same amount or different amount? Same amount. Because there is any changes, sir? There is no changes, sir. There is no changes. There is a changes in the purchases. Yes or no, ma? Yes. When compared to the previous year, current year purchases are raised by how much? 10%. So can I write like this? 100 plus 10%. Can I take like this? 100 plus 10%. That is equal to how much, ma? 110. That is equal to how much, ma? 110. Current year is equal to 110 means what is the previous year? 100. Current year is equal to how much, ma? 110 means what is the previous year? 100. Okay, na, guys? Okay, na? Sir, when compared to the previous year, current year cost of purchases have raised by how much? 10%. So that I am considering it as current year purchase is equal to how much? 100 plus 10%. That is equal to how much, ma? 110. What is the amount related to previous year? 100 or 110, na? 100. So, what is the calculation, ma? 1,76,000 equal to 110. What is the amount for 100? So, what is the calculation, ma? 1,76,000 into 100 divided by 110. How much? 1,60,000. 60,000. Okay na? Okay na? Is there any doubt? Oh, next. In the same way, can you say the previous year sales? Can you say the previous year sales, ma? Current year sales are gone up by how much, ma? 5%. So that means 100 plus 5% is a, that is equal to how much? That is equal to how much, ma? 105. So 2,10,000 is equal to 105. What is the amount for 100? What is the calculation, ma? 2,10,000 into 100 divided by 105. 2 lakhs. Okay, guys. Now the previous year gross profit percentage we can apply on 2 lakhs. We can apply on 2,10,000. We can apply on only 2 lakhs because the current year sales was increased or decreased? Increased, so that we cannot directly apply the previous year gross profit on current year sales, but we can apply on the previous year sales. Are you getting the point or not? So that means we can find out the previous year gross profit. We can find out the previous year gross profit. So what is the meaning of previous year? Overall previous year, only for certain period? Only for the certain period. Okay. How we can find out the previous year gross profit, ma? 2 lakhs into what is the percentage? 50%. That is equal to how much? 1 lakh. That is equal to how much, ma? 1 lakh. Then we can find out the previous year closing stock. Then we can find out the previous year closing stock. How, sir? 1 lakh plus 1,60,000 plus 60,000 minus 2 lakhs. How much, ma? Balancing finger only, yeah? So what is the total amount here? 3,20,000. Here also how much, ma? 3,20,000. What is the balancing figure? 1,20,000. Okay, na? 1,20,000 is the closing stock. Based on this, we can find out the current year closing stock. Based on this, we can find out the current year. How? In the case of abnormal items, okay, now in the case of abnormal items, we have discussed one thing. What is that one, ma? Whatever the amount presented in the closing stock, that closing stock we have brought from purchase or opening stock, we have brought from the purchase. Whatever the amount presented in the closing stock, we have taken from purchase or opening stock, we have taken from purchase. That means this amount of 1,20,000 is came from 1,60,000. Is came from where, ma? 1,60,000. Are you getting the point or not? This amount of 1,20,000 is came from purchase or opening stock. Is came from only purchases. So purchase we are having 1,60,000. From this we have sold how much, ma? Only 40,000. From this we have sold only how much, ma? 40,000. That means what is the stock left out here? 1,20,000. Now this 1,20,000 is equal to 100, is equal to 110. Sir, this 1,60,000 is equal to how much? 100. That means this 1,20,000 is equal to 100, 110. 100. If this is a 100, if this is a 100, what is the amount should be presented here? 110, 100, 110. What is the amount to be presented, ma? 110. So that means how we will get the calculation? 1,20,000 is equal to 100. For 110 how much? 20,000 into 110 divided by 100. How much, ma? 1,32,000. This is the ultimate answer. So what is the closing stock as on rate of fire? 1,32,000. If you know the closing stock, then easily we can find out the loss of stock. We can easily find out the loss of stock. We are having any salvage value, ma? Is there any salvage value? How much? 4,000. What is the loss of stock value? 1,32,000 minus 4,000. 1,20,000 into minus 4,000. 1,32,000 minus 4,000. That is equal to how much, ma? 1,28,000. This is called as a loss of stock, and this is called as, sorry, closing stock as on date of fire. What is the meaning of this one, ma? Closing stock as on date of fire. And this 1,28,000 is equal to what, ma? Loss of stock. Is there any policy value? So in the case of not having any policy value, what is the claim amount, ma? Loss of stock will be the claim amount. Loss of stock will be the claim amount. Are you getting the point or not? So in this manner, we need to compute in the case of changes in sales or changes in purchase or changes in sale. For example, in this question, only there is a changes in purchases. In this question, only there is having only changes in purchase or changes in sales or changes in purchases. Then we can apply directly gross profit percentage on sales. Yes or no, ma? Then we can apply directly gross profit percentage on sales. But here we cannot apply directly gross profit percentage on sales. Why, sir? Here there is a changes in sales, so that we are comparing with the previous year or current year. We are comparing with the previous year. Are you getting the point or not? Previous means overall previous year only for certain period. Only for the certain period. What is the previous year, ma? 1/1/2020 to 15/9/2020. That's all. What is the current year? 1/1/2021 to 15/9/2021. Are you getting the point or not? So this is the overall discussion. If you solve these three questions, is sufficient for the loss of stock or loss of profit, ama? Loss of stock. Are you getting the point? What is step number 1? Trading account. In order to find out the gross profit. What is the gross profit percentage formula? Gross profit divided by sales into 100. What is the next step? Memorandum trading account. By way of preparation of memorandum trading account, we can find out the closing stock as on the date of 5. Okay, now then what will get, ma? Loss of stock. Closing stock as on the date of 5 minus salvage value, add back firefighting expenditure. Then we will get what, ma? Loss of stock. Okay, now this loss of stock will be the claim amount. We need to compare these which things, ma? Two things. If the policy value is more than the closing stock, is called as over insurance. In that situation, what we will get, ma? Average class. If the policy value is more than the closing stock, is called as over insurance. So loss of stock or policy value, whichever is lower. In the case of policy value is less than the closing stock, we need to apply the average class. What is the average class formula? Loss of stock into policy value divided by closing stock as on the date of 5. If you want logic, you can remember in the logical manner, or you can remember the formula, no problem. But here in this situation, they have given the policy amount, they have not given the policy amount. They have not given the policy amount. In this situation, loss of stock is equal to the claim amount. Loss of stock will be the claim amount. How much more? 1,28,000. Did you get the point? What is the next concept, sir? Loss of profit. What is the next concept, ma? Loss of profit. In this loss of profit, we are having certain steps. 1, 2, 3, 4, 5, 6, 7, 8. Okay, 8 steps. We are having how many steps, ma? 8 steps. Okay, I will start the discussion of loss of profit or loss of stock, ma? Loss of okay, now what is the meaning of loss of profit? What is the meaning of loss of profit? What is the meaning of loss of profit? What is the meaning of loss of stock? We have lost certain goods. Insurer need to compensate the loss which was incurred by the insured. If the insured has to pay what, ma? Premium amount. Then what is the meaning of loss of profit? What is the meaning of loss of profit? For example, what is the example, sir? The fire accident is occurred on the date of 15/5/2024. The fire accident is occurred on the date of 15/5/2024. Imagine we are following the calendar year. So 2024 is the current year, and what is the previous year, ma? 2023 is the previous year. So if you prepare the memorandum trading account, from where to where we will prepare, ma? From 1/1/2024 to 15/5/2024. Okay, na? Imagine from here onwards, the sales will get affected. The sales will get what ma? Affected for a period of 4 months. For a period of how many months ma? 4 months. So what is the 4 months up to here? From here, May, June, July and August. That means what ma? 15/8/2024. So from here to here, the sales will be affected. The sales will be affected. What is the meaning of sales affected, sir? When we compare the previous year, current year sales will be reduces or increases, sir? Reduces. Why, sir? Because of fire accident. Because of fire accidents, we cannot sell the sales when compared to the previous year. More, we can sell the sales more than previous year or less than previous year? Less than previous year. We cannot able to sell. We cannot able to sell. Why, sir? Due to the fire accident. Due to the fire accident, we can sell more amount of previous year or less amount of previous year? Less amount of previous year. So that means we are unable to make the sales. That means we are unable to make the sales. Okay. If you make the sales, we will get the profit. If you make the sales, we will get the profit. Otherwise, we will get the profit. No. That means loss of profit. That means what ma? Loss of. Imagine in the previous year, we have made the sales of rupees 1 lakh. We made the sales of rupees how much ma? 1 lakh. On that, gross profit is equal to 20%. How much profit? 20,000. What is the amount of profit ma? 20,000. Based on the previous year, in the current year, we should make sales more than previous year, less than previous year. Normally, we will make the sales more than previous year. But due to the fire accident, we made the sales of rupees only 40,000. We made the sales of rupees only 40,000. Okay, now 40,000 into 20% how much? 8,000. In the previous year, we have got the profit of 20,000. In the previous year, we have got the profit of how much ma? 20,000. But in the current year, we have got the profit of 8,000. That means we have lost the profit. We have lost the profit. That profit need to be compensated by the insurance company. Are you getting the point or not? That point, who need to compensate ma? Insurance company need to be compensated. What is the difference amount? What is the difference amount? 12. What is the difference amount ma? 12,000. So this is the normal way of discussion. This is the normal way of discussion. Okay. In the loss of profit, we are having how many steps? We are having the 6 steps or 7 steps or 6 steps. Okay now. What is step number 1? Indemnity period. How we will get the indemnity period? Whichever is lower. What are the whichever is lower? The period which was covered in the insurance policy under dissolution or disruption period, whichever is lower. What is the step number 2? Gross profit for the current year or previous year? Percentage for the current year, but we will take the data for the previous year. What is the meaning of gross profit formula here? Net profit plus insured standing charges. So that the previous year net profit plus insured standing charges divided by previous year turnover into 100. Then we will get the gross profit percentage. We need to adjust what ma? Trend. We need to adjust the trend. So next one. What is the third step ma? Calculation of gross claim. Gross claim means per annum per certain period per annum. So because when compared to the net claim, gross claim will be the more. So that we will take the 12 months data or 4 months data. 12 months data. So we need to consider the adjusted annual turnover. What is the meaning of adjusted turnover, sir? Adjusted turnover means 12 months immediately preceding the date of fire. If you adjust the increasing trend or decreasing trend, then we will get adjusted annual turnover. Always we will get gross profit or turnover? Gross profit. So adjust annual turnover into gross profit percentage. What is the formula for the gross profit percentage? Step number 2. What is the step number 4 ma? Gross profit on short sales. What is the meaning of short sales? Standard turnover. What is the meaning of standard turnover? Preceding to the indemnity period is called as a standard turnover. So for that we are adding increasing or decreasing trend, then we will get the estimated turnover. So minus actual turnover during the indemnity period is called as a short sales. On that we need to calculate what ma? Gross profit percentage. We will get the gross profit short sales into gross profit percentage, then we will get the gross profit on short sales. What is the step number 5? Actual allowable expenses. Okay, now actual allowable expenses will compensate whichever is lower or whichever is higher. Whichever is lower. What is the first step? Actual additional expenditure incurred. Next one, gross profit on sales generated by the additional expenses. And next one, what ma? Additional expenses incurred into gross claim divided by gross claim plus unissued standing charges. What is the meaning of gross claim? Gross profit on AAT. So next one, net. What is the net claim formula? Gross profit on short sales plus actual allowable expenses. That means step number 5 or 6? 5. So this is step number 4. Step number 4 plus 5 minus what ma? Savings in ensued standing charges. Then we will get the gross profit on short sales. Next, what is the final step ma? The final step is called as calculation of claim amount. The policy value is greater than gross claim means over insurance or under insurance? Over insurance. In the case of over insurance, policy value or net claim, whichever is lower. So that in order to get this one, we are treating it as what ma? Gross claim is equal to the closing stock as on the date of fire, and net claim is equal to the loss of stock as on the date of fire. If you compare these two things, easily we can follow the previous method only. So next one, sum assured is nothing but what ma? Policy value. Sum assured is nothing but what ma? Policy value. If the policy value is less than the closing stock, here the closing stock means what ma? Gross claim only. Gross claim. Then we will follow the actual. What is the average class formula? Policy value into net claim divided by gross claim. What is the formula? Policy value into net claim divided by gross claim. So these are the steps we need to follow for the loss of stock or loss of profit amma, loss of stock. If you follow these steps and you can solve the question, we can easily provide the answer. So this is the overall information about the insurance claims. This is the overall information about the insurance claims. So next we are going to discuss about the hire purchase. Sir, questions avasam ledhu kada? Important question. Okay, the next concept is hire purchase. So what is the meaning of hire purchase? Can anyone in the class? What is the meaning of hire purchase? So hire purchase transaction is a sale transaction. Is a sale transaction in which the possession of will be given immediately. Possession will be given immediately and consideration will be received in the form of installments. So the ownership will be transferred on the payment of last installment or first installment? Last installment. Normally there are two parties. What are the parties ma? Hire purchaser, hire vendor. The person who is the hire purchaser? The person who purchased the goods on a hire purchase basis is called as a hire purchaser. Who is the hire vendor? The person who sells the goods on a hire purchase basis is called as a hire vendor. So normally we are having two types of transactions. First one is called as trading transaction and second one is called as what ma? Trading cum finance transaction. What is the meaning of trading, sir? Cash sales or credit sales? What is the meaning of trading ma? Cash sales or credit sales? Then what is the meaning of trading cum finance, sir? Here we will get not only consideration, not only the sale consideration, we also get what ma? Interest. We also get what ma? Interest. In the case of sale trading transaction, we will get what ma? We will get profit. Only profit, only sales, only profit. In the case of trading cum finance, we will get what ma? Two forms of incomes. One is called as profit, another one is called as interest. Okay, nothing, no problem. So what are the parties? Hire vendor and hire purchaser. The person who sells the goods is called as a hire vendor. The person who purchases the goods is called as a hire purchaser. So normally imagine the cash price is equal to 7 lakhs. The cash price is equal to 7 lakh. What is the meaning of cash price, sir? What is the meaning of cash price? Sorry, cost price is equal to how much ma? 7 lakhs. Cost is equal to 7 lakhs. On that we are going to add what ma? Profits. This is called as cash price. What is the meaning of cash price ma? No, general meaning of cash price means if the consideration we have get immediately means we will sell for how much? We will sell for 10 lakh rupees. Immediate settlement or installment settlement? Immediate settlement. If the settlement is happen immediately, we will sell for how much ma? 10 lakhs. that is equal to what ma? Cash price. Cash settlement or credit settlement? Cash settlement. So that the name is called as what ma? Which price? Cash price. For that we are going to add back the interest. For that we are going to add back the interest, because the consideration will be received in the form of installments or immediately. The consideration will be received in the form of installment, so that we are going to add back the interest, then we will get the higher purchase price. Sir, why we need to add back interest? Why we need to add back interest? Imagine the consideration we are getting in 4 installments. How many installments ma? 4 annual installments. For example, if the consideration we have got at the same time, that means what ma? Immediate settlement means, imagine the consideration how much ma? 10 lakhs. If we receive the 10 lakhs in the same time, means again what we will do ma? By way of using this 10 lakhs, what we will do? We will purchase the goods. We will purchase the goods and we will sell in the market. That means again we will get profit. We are not going to get profit. Again we will get the profit. In the case of immediate settlement, turnover will be more. And we'll get the more number of profits. But here in the case of installment settlement, we are losing the profits. So that we need to add back the interest. Are you getting the clarity or not? Why we are adding the interest ma? In the case of immediate settlement, okay na, what we will do? Again by way of using that cash, we will make the purchase and we will make the sales, and again we will get the profits, or we need to wait. Immediately we will get the profits. So because of losing the profits, we are adding the interest. Okay now, if you understand the concept, then it's fine. Or otherwise what ma? Cash price plus interest, that is equal to how much? Higher purchase price. What is the meaning of higher purchase price ma? Cash price including interest or excluding interest? Including interest. From that, if you reduce the down payment, we will get what ma? Installments. What is the formula for the higher purchase price? The formula for the higher purchase price is equal to cash price plus interest. Or installment, or what ma? Installments minus down payments. Cash price plus interest, or what ma? Installment minus down payment. What are the two formulas ma? Cash price plus interest is equal to higher purchase price. What is the another formula? Installment minus down payment, we will get the higher purchase price. From downward we are having one formula, from upward we are having installment plus down payment, and interest, cash price plus interest, we will get the higher purchase price. What is the meaning of cash price ma? It is the price at which the higher vendor will buy the goods, or cost price. What is the cash price? It is a price at which the higher vendor usually sell the goods on outright basis. Outright means immediate settlement or installment basis. Immediate settlement. What is the higher purchase price ma? The total amount recovered or recoverable from the higher purchase sale. What is the meaning of down payment? Immediate payment or later payment? Immediate payment. What is the meaning of installment value? The balance that can be collected in from the installments. So in this we are having, what is the main objective of this chapter, sir? The first objective is called as, we need to calculate the principal amount and interest amount which are presented in the installment. What we need to find out? The installment amount presented in each and every installment is the first main objective. We will concentrate on this only. Okay na? What is the second objective ma? Accounting treatment for the higher purchase in the books of higher vendor and in the books of higher purchaser. So normally who is the owner of the particular good? Normally higher vendor is the owner as per the legal terms. When come to the higher purchase chapter, in our point of view, based on substance over legal form. Based on what ma? Substance over legal. What is the meaning of substance over legal form? Here the substance is important, not the legal terms. What is the meaning of substance, sir? Who will maintain the asset? Who will use the asset ma? The asset is used by the higher purchaser. Okay na? In the higher purchaser hands only the economic life will be there. Okay na? Most years of economic life will be there in the hands of whom? Higher purchaser, higher vendor, higher purchaser. So as per accounting terms, the owner is called as hire purchaser. As per legal terms, the owner is called as what ma? Hire vendor. So based on which concept? Based on substance over legal form. What is the meaning of substance over legal form ma? Substance is important. Substance means what? Priority. Okay na? The more number, imagine the asset value is equal to, the asset life is equal to 5 years ma. Asset life is equal to how much? 5 years. This 5 years will be presented in the hands of whom? Hire purchaser or hire vendor? Hire purchaser only. Yes or no? Because here the substance means what ma? The more number of economic life is presented in the hands of hire purchaser or hire vendor? Hire purchaser. So that as per accounting terminology, who is the owner? Hire purchaser is the owner. As per the legal terms, who is the owner? Hire vendor is the owner. Based on the concept called as substance over legal form. Here the legality is not important. The important is called as what ma? Who is the real owner? Hire vendor. But as per accounting terms, hire purchaser. What is the rule here? Based on substance over legal form. What is the meaning of substance? Priority కాదు. ఎకనామిక్ లైఫ్ ఎవరి చేతిలో ఉంటుంది? హైయర్ పర్చేజర్ చేతిలో ఉంటుంది. ఈ 5 years కూడా మొత్తం ఎవరి హ్యాండ్స్లో ఉంటుంది? హైయర్ పర్చేజరా హైయర్ వెండరా? హైయర్ పర్చేజర్. సో అసెట్ యూజ్ చేస్తుంది ఎవరమ్మా? హైయర్ పర్చేజరే. కాబట్టి హూ ఇస్ ద రియల్ ఓనర్? హైయర్ పర్చేజర్. యాజ్ పర్ అకౌంటింగా, యాజ్ పర్ లీగలా? యాజ్ పర్ అకౌంటింగ్. యాజ్ పర్ లీగల్ టెర్మినాలజీ, హూ ఇస్ ద ఓనర్? హైయర్. So in the asset account will be prepared in the books of hire purchaser. Hire purchaser. So in the hire purchaser books, we will prepare the which accounts ma? Hire vendor account and the and asset account. In the hire purchaser books, what are the accounts we will prepare? Hire vendor account and asset account. And in the hire vendor account, in the hire vendor books, we will prepare only one account called as hire purchaser. Are you getting the point or not? Okay, first of all, what is the main concentration? We need to calculate the interest presented in each and every installment. Okay na? We are having how many methods, sir? We are having nearly 5 types of problems. How many types ma? 5 types. Question number 1, 2, 3, 4 and then one MCQ will be there in our book. That is a different type of solution. We need to solve that 5 models. Okay na guys? What is the main objective ma? We need to find out the interest which was presented in each and every installment. So directly I will discuss from the workbook only. So please open the workbook. What is the page number? What is the main objective of this chapter? We need to calculate the interest which was presented in each and every installment, and we need to calculate the principal amount also. Okay na? We are having the 2 types of problems. First one is called as when interest rate is given. When interest rate is given. Second one is called as what ma? When interest rate is not given. When interest rate is given and when interest rate is not given. So in the case of interest rate is given, we are having 3 models. How many models we are having, sir? 3 models. What are they, sir? The main important terms of this chapter is, first one is called as what ma? Hire purchase price. First one is called as what? Hire purchase price. Next one, cash price. Next one, rate of interest. What is the next one ma? Installment. What are the four terminologies? Cash price, higher purchase price, rate of interest and installment. Okay. The first model, what is the first model, sir? They will give cash price, they will give higher purchase price, and they will give rate of interest, and they will give installment. The overall information will be given or will not be given? Will be given. This is called as model number 1. What is the second model, sir? They will not give the cash price. They will not give the cash price, but they will give the higher purchase price, rate of interest and installments. They will give the higher purchase price, rate of interest and installment. What is the model number 3, sir? Model number 3 is when interest rate given or not given? Not given. This is called as model number 3. Nothing but question number 1, question number 2 and question number 3. In the question number 4, they will give the interest rate. They will give the interest rate and they will give the annuity factor. They will give the present value annuity factor. In that case, how we need to find out. This is the question number 4. And there is another question called as, okay, at that point of time we can discuss. Okay, we are going to solve question number 1. In the question number 1, what is the information they will provide, ma? They will provide the cash price, higher purchase price, rate of interest and installment. While solving this question, we are having so many types of approaches. We are having how many types of approaches, ma? So many types. Okay, I will take the columns. What are the columns we need to take while solving this question number 1? The columns are here: opening cash price, opening cash price. What is the next one, ma? Installment. What, ma? Principal. Okay, if you want, you can do. Okay, I will say that model also. Firstly, principal. Next one, what, ma? Interest. Closing cash price. But in your books of accounts, I think so, you will not take the principal amount. You will not take the principal amount. But in my approach, I will take the principal amount in order to get the clarity, that's all. In order to get the clarity. Even though without opening of principal amount, we can do or we cannot do. We can do. But only for the clarity purpose, we are opening the principal amount, principal column, that's all. Only for the clarity or what, ma? Only for the clarity. Even though without preparing the principal column also, we can do or we cannot do. We can do. So I am starting the reading of question number 1. What is the question number 1, ma? X purchased a car on hire purchase system. That means this question came from which chapter? Hire purchase. On the date of 1/1/2018, the total cash price of a car was how much, ma? 4,50,000. Payable 90,000 as a down and 3 installments of rupees how much, ma? 1,70,000, 1,50,000, 1,08,460. Payable at the end of the first year, second year? At the end of the first year. At the end of the first year means we are following annual installments or half-yearly installments? Annual installments. First year ended, second year ended and third year ended. The rate of interest is how much, ma? 10%. What are the information they have provided? We know installments, we know rate of interest, we know down payment, and next one what, ma? We know the cash price. We know all the details or only one detail? We know all the details including down payment. If you know the down payment, easily we can find out the higher purchase price, or easily we cannot find out. Easily we can find out the higher purchase price. Okay. So how to do, sir? Please write the information given in the question. So what are the information provided in the question, ma? What is the cash price? 4,50,000. What is the rate of interest? 10%. Installments? 1,70,000. 1,70,000. 1,70,000, 1,50,000, 1,08,460. 1,50,000, 1,08,460. These are the installment. What is the down payment, ma? 90. Okay, na? Okay. What is the year one? What is the starting of the year, ma? 1/1/2018. They were purchased in the beginning of the year, middle of the year, beginning of the year. So that for the first year also full year interest, half year interest, full year interest. Sometimes they will purchase in the middle of the year. In that situation, we need to consider only how many, okay, number of months divided by 12 months, like that. Are you understanding the concept? Here we have purchased the asset on the beginning of the year, middle of the year, beginning of the year. Okay, what is the, in the year column we need to write the year. What is the year, ma? 1/1/2018. Opening cash price means the total cash price. Opening cash price means what, ma? Total cash price. What is the total cash price? 4,50,000. Okay, now 4,50,000. I am writing in the 4 lakh. What is the meaning of 4,50,000, ma? Total cash price means cash price. Opening cash price means what, ma? Total cash price. Only principal amount of this one, including interest. This is called as only principal. This is called as only principal. In Telugu we can say what, ma? Asalu. Asalu oddi antaru guttunda. Okay. So what is the meaning of opening cash price? Total principal amount. Total principal amount. We have made the installment. We have made installment, nothing but what, ma? Down payment. What is the amount of down payment we have made, ma? 90,000. This 90,000 belongs to principal or belongs to interest? Belongs to principal. Belongs to what, ma? Principal. So that I am writing in the principal column. So that I am writing in the principal column of rupees how much? 90,000. In your point of view, what you will do? You are directly reducing from the opening what, ma? Installment. Reducing from the opening installment. So that means, okay, we are having interest or we are not having interest? We are not having interest. Down payment means only principal amount, installment, only principal amount. Then what we will get, ma? Opening balance minus principal amount. That is equal to how much? 3,60,000. 3,60,000. Are you getting the point or not? Sir, what is the logic behind this? What is the total principal value? Initially 4,50,000. We made the installment. But in this installment, we are having only principal or we are having interest? We are having only principal. The starting principal value is how much, ma? 4,50,000. We have made the 90,000 as a principal value. We are repaid the amount, we are not paid. We are repaid. So now in order to calculate the interest, we will calculate only on the 3,60,000 or we will calculate only on 4,50,000? 3,60,000. Whatever the amount we have to repay, on that amount only what we will do, ma? We need to calculate the interest. Yes or no? Initially how much amount we need to pay? 4,50,000. Already we have made the principal of how much? 90,000. That means how much amount we need to pay? 3,60,000. Now in order to calculate the interest, on which amount we will calculate the interest? On 4,50,000 and 3,60,000? 3,60,000. That 3,60,000 will be the opening balance once again. This is the closing balance. This closing balance will become what, ma? Opening balance. How much? 3,60,000. Okay, now 3,60,000. Are you getting the point or not? This closing balance will become the opening balance or another one? The closing balance will become the opening balance. Year ended or year beginning, amma? Year ended. Okay, now we are going to pay the installment on the year end. Okay, now. So what is the year end, ma? 31st December 2018. 31st December 2018. So what is the installment amount? 1,70,000. What is the installment amount? 1,70,000. Okay. In this 1,70,000, we are having the principal and we are having the interest. In this 1,70,000, we are having the principal and we are having the interest. We can find out easily what, ma? Interest amount which was included in the installment amount. What we can find out? We can find out the interest which was included in the installment. How, sir? We need to calculate the interest only for the remaining amount or total amount. What is the remaining amount we need to pay? we need to pay only 3,60,000. So while calculating the interest, we need to calculate on 3,60,000 or 4,50,000? 3,60,000. So in the interest column, which column? In the interest column, what is the calculation, sir? 3,60,000 into rate of interest is how much, ma? 10%. That is equal to how much? 36,000. Okay, na guys? 36,000. This interest is available in where, ma? This 36,000 is available in installment or not available? Available in installment. What is the meaning of installment formula? Principal plus interest. In this 1,70,000, the interest available is equal to how much? 36,000. If you reduce the 36,000 from the installment, what we will get, ma? The principal amount which was presented in that particular installment. So what is the calculation here? 1,70,000 minus 36,000. That is equal to how much? 1,34,000. What is the meaning of this 1,34,000? The principal amount which we have repaid in the current installment. The principal amount which we have repaid in the current installment. In the next year, for the next year, while calculating the interest, which amount we need to consider, ma? We need to consider 3,60,000. 3,60,000 minus 1,34,000. We already paid how much? 1,34,000. We already paid what, ma? 1,34,000. But how much amount need to pay now? So 3,60,000 minus how much, ma? Already we have made the payment of rupees how much? 1,34,000. That is equal to how much? 2,26,000. This is the closing balance. What is the meaning of closing balance? The amount we need to pay, na? Already we have paid. The amount we need to pay. Sir, this is a closing cash pledge means principal amount or what, ma? Only principal amount. Opening balance of cash pledge means only principal amount or interest? Only principal amount. Guys, are you getting the point or not? Sir, cash pledge means only principal amount. We are having the opening balance and closing balance. Okay, na? The closing balance will become the opening balance or another thing. The closing balance will become the opening balance. Now in the third year, second year ending. What is the second year ending, ma? 31st/12/2019. What is the closing balance? 2,26,000. So what is the opening balance? 2,26,000. What is the opening balance? 2,26,000. What is the meaning of this 2,26,000? On that amount we need to calculate the interest or we need to calculate interest on 3,60,000. We need to calculate the interest amount on the 2,26,000. What is the meaning of 2,26,000? Remaining principal amount we need to pay. Already we have paid. Remaining principal amount we need to pay. Guys, are you getting it or not? Okay. So how we need to calculate the interest, ma, now? 2,26,000 into 10%. That is equal to how much? 26,000. 22,600. Guys, are you getting it or not? That means what is the installment amount, ma? 1,50,000. What is the meaning of installment? Principal plus interest or only principal? Principal plus interest. So we need to reduce 22,600 from the installment in order to get what, ma? Principal amount which was presented in the installment. Principal amount which was presented in the installment. If you reduce 22,000 from 1,50,000, what is the amount? 1,27,400. Guys, are getting it or not? So what is the initial opening balance, ma? 2,26,000. In that we have made the repayment of principal amount how much? 1,27,400. What is the balance closing value? 98,600. Are you getting the point or not? So what we are doing, sir? Opening balance we'll get from the closing balance. What is the calculation from the installment? We'll take the installment in the installment cases. Next, how we'll get the principal, ma? How we are getting the principal? So imagine this is a 1, 2, 3 and 4, 5 and 6. How we are getting the principal amount, ma? 2 2 minus 5. Yes sir, no, 3 minus 5. 3 minus 5. We are getting the principal amount. How we are getting the interest amount, ma? Interest amount means opening balance into 10%. What is the opening balance? 2 into rate. Column number 2 into rate. How we are getting the closing balance, ma? Closing balance means 2 minus 4. 2 minus 4. Are you getting the point or not? Are you getting a point? Okay, now say ma, what is the final installment, ma? What is the date of final installment? 31st/12/2020. So again the closing will be the opening. How much, ma? 98,600. What is the installment value? 1,08,460. Okay na. In this installment we are having the principal plus interest. Okay na. Now we need to calculate the interest amount. Okay na. On which amount we need to calculate the interest, ma? On 98,600 or 2,26,000? On 98,600. So 98,600 into 10% is how much, ma? 9,860. What is the balance amount? 98,600. Then it will become what, ma? 0. Are you getting the point or not? Or otherwise I need to explain once again. Okay na. In your book, I think so the principal column will be missing. Okay na. You are directly, what you will do, ma? You will directly compute. I think so the opening balance is how much? 4,50,000. From this amount you are minusing what, ma? Installment amount. You are minusing what, ma? Installment. When come to the second one, opening balance is 3,60,000. From this you are reducing what, ma? How we are getting the closing balance? Installment minus interest. Installment minus interest. I think so we'll get like that, I think so. Installment minus interest, then we'll get what, ma? Closing balance. Installment minus interest. So this is model number 1. Are you getting the point? Or otherwise I need to explain once again. Okay now. We can follow both the approaches. What are the both the approaches, ma? You can open the columns of year, opening cash price, installment, interest and closing cash price. Or either we can open the year, opening cash price, installment, principal, interest and closing cash price. So in the first year, how much amount we have taken? 4,50,000. What is the meaning of 4,50,000? Total cash price. What is the meaning of 4,50,000? Total cash. What is the meaning of cash price? Principal or interest? What is the meaning of cash price, ma? Only principal. If you observe this scenario, sir, here the cash price means having interest or not having interest? Not having interest. The cash price means before charging interest. The cash price means what, ma? Before charging interest. Higher purchase price means after charging interest. Cash price means before charging interest. Higher purchase price means after charging interest. That means the cash price is equal to principal. The cash price is equal to what, ma? Principal. This is the total principal amount. So that we are taking in the opening cash price is equal to what, ma? Total principal amount, that is equal to cash price. That is equal to what, ma? Cash price. This is the opening cash price. This is the opening cash price. In the first installment, first we have made the down payment. First we have repaid what, ma? Down payment. Sir, here the down payment we have repaid in the now or later? Now. We are repaying now means only principal amount including interest? Only principal amount. Only principal amount. So that what is the principal amount will be presented now? The cash price is 10 lakh. We made the down payment of rupees how much? 3 lakhs. What is the meaning of this 7 lakhs? What is the meaning of this 7 lakh? Closing cash price or opening cash price? Closing cash price. And again it will become the opening for the second year. Opening for the second year. Are you getting the point or not? Yes or no? Lohit. What is the second method, ma? In the second method, we are having informations of, what are the informations, ma? They will not give the cash price. They will not give the cash price, but they will give information related to down payment. Next one, rate will be given or will not be given? Rate will be given. Next one, what, ma? Installments. Will be given or will not be given? Now we need to find out the cash price and interest available in each and every installment. Now we need to find out what, ma? Cash price and interest available in each and every installment. Here I will follow one approach. After discussing of this approach, I will teach you that approach also, which was discussed in your book. So here I will follow the backward method. Which method, ma? Which method I will follow here? Backward. Why, ma? Because in order to start from the front, what is the starting point? Cash price. But we are having the cash price? No, we are not having the cash price. So that we need to start from the end. Because what is the end point of the point? 0. So that we know the 0 value. From there we are starting. In order to start from front, we are not having the information of what, ma? Total cash price. If you are having the total cash price information, then we will start from the front. If you are not having the total cash price, means we need to start from the backward. Okay, na? If you want, I will teach. Otherwise, I will skip this chapter and I will teach the remaining chapters. What? Then you are not participating with me. So that I am getting doubt. If you want, I will teach this chapter, or otherwise I will skip this chapter. Shall I skip this chapter? Or shall I start the rectification of errors? Okay, you are getting doubts and you are asking with another person. It is fine, huh? Are you doing the one, huh? So what is the second method? So we know the cash price, or we don't know the cash price? We don't know the cash price. If you follow this approach, what is the starting point? Cash price. So that we can follow this approach, or we cannot follow this approach? We cannot follow this approach. Why? We are not having the cash price. In order to start this method, we need a missing figure called as cash price. So that we are coming from the backward. Okay, na? So what are the columns are again? Here, opening cash price, installment, interest, okay, we need to skip the principal. Principal. Even though if you add the principal, nothing worry. You will get the clarity, that's all. Next one, what, ma? Closing cash price. Okay, na? I will ask certain questions. Please answer. Opening cash price means only principal, principal plus interest. Only principal. Installment means principal plus interest. Interest means only interest. Principal means only principal. Okay, now closing balance of cash price means principal. Principal only, yeah? Principal. What is the meaning of closing balance of cash price? The remaining principal which was available after the repayment of existing principal, existing installment. What is the meaning of closing cash price? The remaining principal which was available after the repayment of installment or before the repayment of installment? After the repayment of installment. Okay. We are going to solve second question. So is there another approach also? I will teach after discussion of this method. Okay na? There is an approach called backward approach. I will discuss after the doing this method, because you have followed this method only na. You have followed this method or different method ama? This method. Or shall I teach only this method? Okay. We need to get the data. So what is the question number 2 ma? X purchased a TV on hire purchase system. As per the terms, he required to pay how much? 3,000 down. What is the down payment? 3,000. 4,000 at the end of the first year. What is the meaning of 4,000 at the end of the first year? First installment. 3,000 at the end of the second year. And 5,000 at the end of the third year. Okay na? Interest charged at the rate of 12%. You are requested to calculate total cash price and the rate of interest. So cash price given or not given? Not given. Okay. How we need to calculate? Let us see. So what is the information given ma? Down payment is how much? Down payment is 3,000. And what is the rate of interest? What are the installments? 4,000. 5,000. 4,000, 3,000, 5,000. Okay. Are the interest? Rate of interest 12%. There is no information regarding to the cash price. So what is the starting year? Year evaleda. Okay. How many installments? 3 installments. Year 0, 1, 2, 3. Have you satisfied? We are starting from the backward or front? Back. That means here 0 na? Okay, okay. Next one. We know the installment, we know the principal. We know the how much? We know the installment of rupees 5,000. Okay. Installment including principal plus interest. We know the interest rate. How much? So imagine principal is equal to 100. Imagine principal is equal to 100. So what is the rate of interest ma? 12%. The rate is equal to 12%. That means 100 into 12% means how much? 12. So that is equal to installment is equal to how much? This is a interest. This is called as what ma? Interest. This is an installment. This is an installment. Are you getting the point or not? Imagine the principal is equal to how much? 100. 100 into 12% means how much ma? 12. So interest is equal to 12. How will get the installment ma? Principal plus interest, principal minus interest, principal plus interest. So that means I can imagine this is equal to 112. This is equal to how much ma? 112. So if you apply for 12, if you apply for 12, what we will get ma? Interest. What will get ma? Interest, principal, interest. If you apply for 100, what we will get? Principal. If you apply for 100, what will get ma? Principal. If you apply 12 means we will get the interest. Okay. What I am doing is 5,000 is equal to 112. 5,000 is equal to how much ma? 112. So for 12 how much? So 5,000 into 12 divided by 112. How much? 536. Okay na? So 5,000 minus 536. 4,464. This is the principal available in the installment. This is the principal available in the installment. Okay na? This principal only will be available in the opening balance or different principal? In the opening balance. What I am asking is, in the opening, if you see the before approach, so here also how much ma? 98,600. Here also how much? 98,600. Same principal amount will be left or different? Same principal. Sir, that means this is only the outstanding value. This is only the outstanding value at the beginning of the installment. Okay, now what is the outstanding value, sir? Total outstanding. The total outstanding is equal to 5,000. The total outstanding is equal to 5,000. In that we are having the installment how much, ma? 536. Principal is equal to how much? 4464. Is there any remaining amount? No. So this will be the opening or this will be the opening? 4464 is the opening balance. So how much? 4464 is the opening. Again this will be the closing or opening? Closing. So can I write like this? 4464. Okay. Closing. 4464. It is an outstanding amount or paid amount? Outstanding. Yes or no, ma? If you think from the second installment point of view, what is the installment amount first of all? 3,000. What is the amount, ma? 3,000. This is an amount outstanding or not outstanding? Outstanding. That means we need to pay na? We no need to pay na? We need to pay na? We no need to pay, mama? We need to pay. So not only this one, this is also outstanding. Not only 3,000, 4464 is also outstanding. Will you accept it or not? So even though this is a principal or even though this is an installment, no problem. So what is the total outstanding, ma? I need to pay 4464 and I need to pay 3,000. At the time of second installment or first installment? At the time of second installment, the total outstanding is how much, ma? 4464 plus 3,000. What is the total outstanding? 7464. Okay, 7464 is the total outstanding. Will you accept it or not? So total outstanding means it is in the 7464 we are having the interest or we are not having the interest? We are having the interest. Sir, first of all, will you accept the 7464? Total outstanding or not? Only second installment outstanding? Total outstanding is equal to 3,000 plus 4464. This is equal to how much, ma? Again 112. Sir, why you are saying this one is a 112? Because in this 7464 we are having the installment amount or we are having the principal amount? We are having the installment amount also. We are having the installment amount also. That means this 7464 including the interest. Including the interest. Now, if you calculate for 12, how much we will get? 800. So we need to record here only, yeah? So 3,000 minus 800, that means how much? 3,000 minus 800, how much, ma? 2,200, okay. 2,200. This is the principal amount which we have paid and this is the principal amount which we have to pay. Yes or no, ma? What is the principal amount, ma? This 2,200 is already paid, have to pay na? Already paid. And this 2,000 you have to pay. That means the total principal which was available in the opening balance is how much? 2,200 plus 4464. Will you accept it or not? What is the total opening balance of principal, ma? 2,200 and 4464. That is equal to how much? 6,664. Again this will be the closing balance or opening balance? 6,664. Okay. What is the installment? 4,000. At the time of first installment. What is the meaning, ma? At the time of first installment, what is your total outstanding amount? The total outstanding amount is equal to 6,664 plus 4,000. Yes or no, ma? The total outstanding is equal to how much? 6,664 plus 4,000. What is the total amount, ma? 10,664. That is equal to 112. What is for 12? 1,143. 1,143. If you reduce 1,143 from the installment, what will get, ma? Principal. How much? 2,857. What is the opening balance of principal, ma? The principal of 2,857 and the principal of 6,664 is the opening balance. Yes or no? So how much? 9,521. This will be the closing or opening? Closing 9,521 for the 0 year. For the 0 year, this will be the opening. So here we made the down payment. Of rupees how much? 3,000. This is interest. In this we are having interest. We are having only principal. We are having only principal of 3,000. Then the installment amount will be, interest amount will be 0. So we are adding the closing cash price and we are having the principal amount. Then we will get what, ma? 11,000. 521. In this way we are calculated what, ma? Cash price. What is the total cash price, ma? 12,251. 521. And what is the interest amount available in the first installment? 1,143, 800 and 536. This is one kind of approach. What is the another kind of approach, sir? Easy approach. Easily we can solve. Okay, na? If you want, you can remember. Otherwise, you can skip. Okay, na? No problem. So we are starting with the last installment, first installment, last, third installment, first installment, third installment is equal to how much, ma? 5,000. This 5,000 is equal to 112. I am going to reduce the interest. So interest is equal to how much, sir? 5,000 into 12 divided by 112. How much, ma? 536. If you reduce, what we will get? 464. Next one, we need to add the second installment. What is the second installment amount? 3,000 only, na? What is the amount? 7,464. This is the total outstanding. At the time of second installment. This is the total outstanding. In this we are having the 4,464 of principal and we are having the interest of installment of 3,000. That means 4,464 is equal to 112 because we are having the installment. We are having what, ma? Installment also. So then we can reduce what, ma? Interest. What we will get? What is the interest amount? 7,464 into divided by 112. 800. If you reduce, what is the amount? 3,664. So again add back first installment. 4,000. How much? 10,660. This is the total outstanding. Minus what, ma? Interest. How will get, ma? 10,664 into 12 divided by 112. 1143. If you reduce, what we will get, ma? 9,521. Add back down payment of 3,000. That is equal to how much? 12,000. This is the easiest method. Are you getting the point? First we have started with the third installment, reduce the interest, and then we'll get the cash price. What is the meaning of this cash price, sir? Opening principal amount. Okay. Next we are adding the installment. The same process which we have done in the statement. Now we are doing we are done in the columns. Now we are doing in a statement format. That's all. If you want to, you can remember this process or what, ma? Or previous one. So what is the third installment interest, ma? 536. What is the second installment interest? 800. What is the first installment interest? 4,413. What is the total cash price? 12,521. So this is the most important model. We can expect this type of questions in the examination. Are you getting the point? If you want, you can follow the previous method, or if you want, you can follow this method also. And next one, third question. Question number 1 or 2 or 3, amma? 3. What is the third question, ma? Here the rate of interest will be given or will not be given? Rate of interest will not be given, but one clue point will be given. One clue. What is that clue, sir? So see here, X and Co have purchased a motor car on April 1st, 2019 on hire purchase, paying of rupees 60,000 cash down payment. What is the down payment, ma? 60,000. And balance in 4 annual installments of rupees how much, ma? 55,000, 50,000 and 45,000 and 40,000. The installment comprises of equal amount of cash price. Installment comprises of equal amount of cash price. So this is the most important point. Equal amount or unequal amount? Equal amount of cash price. Okay. At the end of the each accounting year, you are required to calculate the cash price and amount of interest in each and every installment. So here the rate of interest given or not given? Not given. Cash price? Total cash price given or not given? Not given. But we know the installments. We know the installment. We know the down payment. We know the down payment. That's all. We don't know the remaining all the things. Yes or no, ma? So now in this case, we are assuming the principal is equal to P. What is the meaning of principal, sir? The principal which was presented in each installment is equal to P. The principal which was presented in equal installment is equal to what, ma? P. We are having how many installments? 4 installments. The interest which was presented in the installment is equal to I. The interest portion which was presented in the installment is equal to what, ma? I. Are you getting the point or not? So if you observe the scenarios, if you open the second question, what is the second question, ma? If you observe the interest rates, in the first installment having the interest of how much? 1143. In the second installment 800. In the third installment 536. What is increasing trend or decreasing trend? Interest will be decreases from one installment to another installment. Okay, na? The more interest will be presented in first installment when compared to the second installment. We are getting more interest in first installment. So we are having how many installments, ma? We are having the 4 installments, so that the first installment is equal to, I am considering it as P plus 4I. Will you accept or will not accept? P plus 4I means what, ma? P is equal to principal. 4I means when compared to the, in the second installment, P plus 3I. In the third installment, P plus 4I. Sorry. P plus 2I. In the fourth installment, P plus I. Why I have taken P? Can I take the 4P? We should not take the 4P, 3P, 2P, P. Why? The same amount of cash price or different amount of cash price? Same amount of cash price. In order to differentiate, the highest interest will be available in the first installment when compared to the highest, next one what, ma? 3I, 2I and I. So these are the equations. From based on this one, we need to prepare the equations. By solving the equations, we can get to know the what is the P value and what is the I value. So if you solve, we can get what, ma? Interest available in each and every installment. Are you getting the point or not? If you solve the first 2 equations, what are the first 2 equations, ma? P plus 4I is equal to how much? 55,000. P plus 3I is equal to how much? 50,000. Now we know the in maths we will do minus 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 minus. If it will get cancelled, I is equal to in the fourth installment what is the interest? 5,000. In the third installment 10,000. In the second installment 15,000. In the first installment 20,000. We need to find out the P value. How we can find out, ma? Here the P plus I is equal to how much? 40,000. So P plus I is equal to 40,000. We know the I value or we don't know, na? I. That is equal to how much, ma? 35,000. In each and every installment, what is the principal value? 35,000. In the first installment, what is the installment value, ma? 55,000. So 55,000 means 35,000 plus 20,000. 35,000 plus 20,000. Here 50,000 means 35,000 plus 15,000. Here the 45 means 35 plus 10. And here what, ma? 35 plus 5. So this is how we are finding out the principal amounts and the installment interest amounts available in the each and every installments. So there is a clue point called as what, ma? Only one point. Equal amount of cash price, unequal amount of cash price. Equal amount of cash price. Now we are going to discuss question number 4. Okay na, guys? Are you getting the clarity or not? We need to frame the equations. When compared to first installment, in the second installment, the interest will be increases or decreases? Decreases. The highest interest will be presented in where, ma? First installment. When compared to the first, second is somewhat less and somewhat less. We are having the 4. So that 4i, 3i, 2i and I. In case we are having the 5 means 5i, 4i, 3i, 2i and I. Are you getting the point or not? Why we are taking the p value, ma? Same amount of principal or different amount of principal? Same amount of principal. Are you getting the point or not? Okay, na? Okay. Next, question number 4. Here, what is the value will be given, ma? Here, present value annuity factor. In the case of interest rate, we need to use the annuity factor. We need to use what, ma? Annuity factor. So, once reading the question, after that I will explain you, no problem. On 1/1/2018, X purchased a plant from Y. X purchased a plant from Y means X is a higher vendor or higher purchaser? X purchased plant from Y, higher purchaser. Y is a higher vendor. Okay, now on a higher purchase system, ఏమైంది వద్దా ఈ క్వశ్చన్ వద్దా స్కిప్ చేస్తా చేసుకుంటారా మరి ఎందుకు అసలు అవుతారు ద హైయర్ పర్చేస్ రేట్ వాజ్ సెటిల్ వాజ్ హౌ మచ్ మా 60,000 వాట్ ఇస్ ద మీనింగ్ ఆఫ్ 60,000 higher purchase price. What is the meaning of 60,000? Higher purchase payable as 15,000 on 1/1/2018. The same data, different data, same date. Down payment, installment, down payment, and 15,000 at the end of the each successive 5 years. Successive years. That means what, ma? This 15,000 means installment or principal amount? Installment. So totally we are having how much, ma? 60,000 is the higher purchase price. 60,000 is the higher purchase. If you reduce 30,000, sorry, how much, ma? 15,000. If you reduce the 15,000, what is the remaining amount, ma? 45,000 divided by how many installments, ma? Divided by 3, that is equal to how much? In the 15,000. This is the installment amount or principal amount? Installment amount. Okay, now based on using the factor, what is the factor here? The interest is charged at the rate of 5% per annum and the asset is to be depreciated at the rate of 10% on reducing balance method. Given the present value annuity factor for 5% rupees, how much, ma? 2.7232. Because of this sentence, the approach will be different. Because of which sentence, ma? Present value annuity factor. Okay, na? We are going to solve like FM. Do you remember the columns in the FM? No, na? Year 0. What, ma? Year 0. Year 1. Year 2. Year 3. That's all. Okay, na? What is the down payment? 15,000. What is the first installment? 15,000. What is the second installment? Okay, na? 1, 2, 3 and 4. What is the factor given, ma? Annuity factor. What is the factor which was given? Annuity. So nothing but present value annuity factor. What is that one? Present value annuity factor. Sir, అర్థం కాకపోతే లేసి వెళ్ళిపో, నా క్లాస్లో ఉండొద్దు, అంతేగాని గొడవ చేయొద్దు. నేనేం అనుకోను, అర్థం కాలేదా వెళ్ళిపో, లేదా ట్రై చేయి. నాకు కష్టమే ఇంగ్లీష్లో చెప్పటం, కానీ చెప్తున్నా. నీకు అర్థం కాకపోతే ఏం చేస్తావు? వెళ్ళిపో, మొహమాటం కూడా లేదు, వెళ్ళిపోయి చదువుకో. ఎవడే వద్దన్నాడు? ఇక్కడ కూర్చున్నా వేస్టే కదా అర్థం కాకపోతే. అంతేగాని గొడవ చేస్తావా? చేయొద్దు. నాకు అర్థమవుతుంది సార్, స్ట్రెంత్ని బట్టి నాకు అర్థమైందిగా, ఎవరికి అర్థమవుతుంది ఎవరికి అర్థం కావట్లేదు. నేను అన్నానా రాకపోతే? నేను పిలిపించాను అన్నీ లేదు కదా. అర్థం కాకపోతే ఏం చేస్తారు? సైలెంట్కి వెళ్ళిపోండి, అంతేగాని క్లాస్లో ఉండి గొడవ అయితే చేయొద్దు. ఇక్కడ చెప్తున్నా, ఇయర్స్ రాస్తున్నా, చెప్పండి. చెప్పలేకపోతే సైలెంట్గా ఉండు. మీలో మాట్లాడుకుంటే ఏమొస్తుంది? లేదా డిస్కషన్ కావాలా? బయటికి వెళ్ళి చేసుకో. ఇంకెంతమంది తిట్టాలా చెప్పాలా? ఓకే సార్, 15,000 at the year 0 and 15,000 in the remaining 3 installments. What are the 3 installments? Year 1, 2, 3 and 4. Equal amount of installment or different amount? Whether this is a principal or installment? Installment. This is an installment. So they are given the present value factor for how much percentage? 5%. How much? 5% is a 10. 5 okay. What is the present value annuity, present value factor formula? 1 divided by 1 plus whole power n. 1 divided by 1 plus r whole power n. We know the shortcut while by using the calculator. What is the formula? 1 divided by, what is the r means? Rate. R means what? Rate. What is the percentage here? 5%. So can I write like this? 0.05 divided by how many years? Okay, please first year and second year and third year. I am going to take the columns like years. Like what? Year. What is the first column? Year. 0, 1, 2, 3. Next one what? Installments or down payment. Installments are down payment. What is that first year? Down payment. And first year is called as installment, down payment, installment. And third one is called as installment and installment. We know the present value factor. For which percentage? For 5%. Present value factor at the rate of 5%. How we are going to calculate? 1 divided by 1.05 plus 1 time equal to how much? So here we need to put 1, 0.9. In the year of 0 we need to put what? 1. Okay na? Because what is the meaning of 1? We are in the present situation. Here 1 rupee is equal to 1 rupee, 1 rupee is equal to 90 paisa na. 1 rupee is equal to 1 rupee. After 1 year the 1 rupee value will be decreases or increases? Will be decreases. So that 1 divided by 1.05 means how much? 0.95. 0.952. What is the meaning of this one? After 1 year, 1 rupee value is equal to 95 paisa. 1 rupee value is equal to 95 paisa. Press again equal to 0.907. After 2 years is equal to 1 rupee is equal to how much? 90 paisa. Or equal to 91 paisa. Okay na? 0.864. So multiply 15,000 into 1. How much? 15,000. Multiply 15,000 into 0.952. 14,000. 280. 280. Next one. 13,600. Okay, next one. 12,960. 12,960. Okay. Can I call these values as present values? Can I call these values as present values? Nothing but principal. Nothing but what? Principal. Present. At which situation? We are in the situation of year 0. All the values are called as year 0 na year 1 Year 0. These values are called as nothing but principal amounts. Nothing but what? Principal amounts or present values or present value. The difference between installment and these values is called as interest. Is called as what? Interest. Based on present value factor, we are deciding the interest. Based on present value factors, we are deciding the interest. Now, what is the amount of interest present in first installment? 15,000 minus 14,280. How much? 720. Okay. Next, what is the amount of interest present in the second installment? 15,000 minus 13,605. 1395. What is the third installment interest? 2040. What is the total interest? 4155 is the total interest. Are you getting the point or not? By way of using this one, we are calculating the interest in each and every installment. Okay na guys? Same answer or different answer? Cash price is equal to how much? Calculate this total ma. How much we will get? What is the total? 15,000, 14,208, 13,605, 12,960. 40? 55,000. 55,000. 845. There is a rounding of errors. That's all. Because he has taken the annuity factor, we have taken the factor, present value factor. Because same amount or different amount or same amount. He is straight away calculating what ma 15,000 into. So add this all the plus 0.952 plus 0.07 plus 0.864. Then we will get what ma annuity factor. 2.7232. Directly we can take the factor which was given in the question. What is the factor which was given in the question ma? 2.7332. Same answer? Okay. So we can apply what ma? 15,000 into 2.7322. How much we will get? 55,000 something we will get. That one is called as principal amount. That one is called as what ma? Principal amount. But in the answer, we don't know the interest in each installment, but we know the interest in each installment. In the first installment, how much? 720. Second installment, 1395. And third installment, 2040. So in this way, we need to calculate. In the case of present value, vanity factor was given. This kind of approach will be asked in the examination. We don't know. We may get or we may don't get. Why, sir? Because this present value annuity factor calculation will be available in the first group or second group, second group. So mostly the students appearing for the first group means they will prepare only for the first group or second group. First group. So this kind of situations may be happen, so that this kind of calculation will be asked or will not be asked. Will not be asked. Okay na guys? So this is the conclusion. Or if they have asked means we should do what ma like this. You to get the clarity. This kind of calculation you have seen in the capital budgeting. Capital budgeting. Okay. The same kind of approach we have followed. And the last one is the important. After discussing of this one, we are having the time. Okay, the last. So please open the concept book, and in that MCQ number, I don't know. I will say. Sir, okay na? 3 models or 4 models? 3 models only. MCQ number 115. Page number 170, MCQ number 115. Okay, try on your own. What is the answer? Try to solve that question. We have seen certain regarding this method. We have done what ma question number 3. In that also we are not having the rate of interest. Having the rate of interest or not having the rate of interest? Question number 3. Question number 3. But we are having one hint point. What is that one, ma? In each and every installment, equal amount of cash price, unequal amount of cash price. So that we have taken that kind of approach. But here we are having that type of, no. But we don't know the interest, we know the interest. We don't know the interest rate. Then how to find out the interest rate? How to find out the interest in each and every installment? So what is the question mark given? What is the cash price? 8,64,000. What is the cash price? 8,64,000. What is the amount of down payment? 2,16,000. How many installments, ma? 3 installments with an equal amount of 2,88,000. We need to find out the rate of interest. We need to find out the rate of interest, as well as we need to find out the interest in each and every installment. We need to find out the interest in each and every installment. Can I know the hire purchase price? Easily we can find out, we cannot find out. Easily we can find out. What is the formula for the hire purchase prices? We have 2 formulas. What is the first formula, ma? Cash price plus interest is called as a hire purchase price. Here given what, ma? Cash price, but down payment, and they have given what, ma? Installments. So there is another formula called as what, ma? Installments plus down payment. Installments plus down payment. So what are the installments, ma? 2,88,000 into 3 into 1? Into 3, that is equal to how much? 8,64,000 plus down payment how much? 2,16,000. That is equal to how much? 10 lakh. Okay, na? Higher purchase price is equal to how much, ma? 10,80,000. We know the total interest. We can get the interest, yes or no? How will we get the total interest, ma? Higher purchase price minus cash price. Higher purchase price minus cash price. That is equal to how much? 2,16,000. We know the total interest. We know the total interest. We need to find out the interest in each and every installment. We need to find out the interest in each and every installment. How we can find out? Divided by 3. We should not put the, do the simple average. We should not do the simple average. Why, sir? In each and every installment, equal amount of interest will be presented, unequal amount, unequal. If in case we are having the equal amount of interest, means we can do what, ma? Simple average. What is the meaning of simple average? Sum of observation divided by number of observations. What is the sum of observations? What is the interest? Total interest is how much, ma? 2,16,000. Okay. By 3 means equal amount of interest, unequal amount of interest, equal amount. But we know one formula. What is that thing, ma? In the first installment, we are having the highest interest. In the second installment, we are having the somewhat lowest and somewhat lowest. Yes or no? So that we should not do the simple average. Then what we need to do? We need to do the weighted average. What we need to do, ma? Weighted average. How we will get the weights? First installment is the highest weight. Second installment is the highest weight. First installment is the highest. How many installments we are having? 3 installments. So that I can divide in 3:2:1 ratio. I can divide in 3:2:1 ratio. That means what, ma? 2,16,000 divided by 6. Divided by 6. Divided by 6 into 3 equal to 1. Into 2 equal to. Into 1 equal to. That is equal to how much? 1,08,000, 72,000, 36,000. So this is how we need to calculate. Sir, are you getting the point or not? Why did you take 3:2:1, sir? How many installments we are having? 3 installments. If in case we are having 4 installments, means 4:3:2:1. Are you getting the point or not? There is another logic also. There is another. So this ratio we have got as per total outstanding basis. As per total outstanding amount basis. At the end of the first installment, so what are the installments, ma? 2,88,000, 2,88,000 and 2,88,000. What is the total outstanding amount presented in the first, at the time of first installment? The total outstanding means how much, ma? We need to pay 2,88,000, 2,88,000 and 2,88,000. What is the total amount? 8,64,000. What is the total amount, ma? 8,64,000. So directly we can do, what is the direct manner, ma? 3:2:1. We can do like that also. What is the reason, sir? Reason means, what is the total outstanding amount we need to pay at the first installment, ma? 2,88,000, 2,88,000 and 2,80,000. That what is the total amount? 8,64,000. What is the total outstanding amount at the time of second installment? 2,88,000 plus 2,88,000. What is the amount? 5,76,000. What is the total outstanding amount at the time of third installment? 2,88,000. Based on these weights, we have divided. Based on these weights, we have divided 3:2:1. Are you getting the point or not? If you understand, you can do like this, or otherwise directly how we have to do 3:2:1. In case of 5 installments, 5:4:3:2:1. Are you get the point or not? Wait a second. Okay, next one, accounting treatment. What is the next concept ma? Accounting treatment of hire purchase. Till now we have seen what ma? Calculation of interest in each and every installment. In some of the cases we have seen the calculation of cash price also. So accounting for hire purchase. In the hire purchaser books we will record asset account and hire vendor account. In the hire vendor books we will record the hire purchase account. So methods, we are having the two methods, cash price method and interest suspense method. How many methods we are having ma? Cash price method and interest suspense method. Cash price method is also called as sales method. Cash price method is also called as sales method. So first we will discuss in cash price method, then after we will discuss about the interest suspense method. First in the books of whom? Hire purchaser. What are the accounts we need to open? Asset account and hire vendor account. Okay. What is the meaning of hire purchaser? He will purchase the goods, he will sell the goods. Purchase. For his point of view, he will purchase the asset, he will purchase the good. He will purchase the asset. Normally, what is the entry for the asset purchase? Asset account debited to cash account. Or in the case of credit purchase, asset account debited to creditor account. Here the creditor is called as what ma? Hire vendor. So asset account debited to hire vendor. We need to record only for the cash price. We need to record only for the cash price. Means total principal or normal principal? Total principal amount. Only for the cash price or different price amma? Only for the cash price. Next, what we will do? We will do the down payment. What will do ma? Down. So first we will purchase the asset. Credit purchase of asset, cash purchase, credit purchase. So asset account debited to. Next we will make the down payment. For the down payment, if you make the payment, cash balance increases or decreases? Decreases. Who is the receiver? Hire vendor. So hire vendor account debited to cash or bank account. In the hire vendor account, to cash or bank, by cash or bank? To cash or bank. Next we need to write the interest due entry. What we need to write ma? Interest due. Sir, why we need to write this interest due? Means at the time of making the installment payment, we are paying not only the cash price. We are also paying the interest including which was included in the installment. First we have taken the due entry only for the cash price. First we have written due entry only for the cash price, interest only for the cash price. Are you getting the point now? What is the meaning of due entry? Due entry means firstly we have recorded the entry for only cash price. That means we need to pay only cash price to the hire vendor. Yes or no? We need to pay only cash price installment, cash price. But at the time of making the installments, what we are paying ma? We are paying not only the cash price. We are paying cash price plus interest. But here at the time of writing in the first journal entry, here we are included the interest, we are not included the interest, so that before writing the installment payment entry, we need to write the interest due entry separately for each and every installment. Are you getting the point or not? Why we are recording the interest due entry ma? Because at the time of making the payment to the hire vendor, we will pay the installment, we will pay the principal, we will pay the installment. In the installment amount, we are having what ma? We are having not only the principal amount, we are having the interest amount also. Okay na? But at the initial first entry called as what? We are written only for the cash price. That means we are payable only principal amount, we are payable only interest, we are payable only principal amount. So that at the time of payment of installment, before writing the installment entry, we need to write the interest due entry. What is the interest due, sir? We need to pay to the hire vendor. Which one ma? Interest. We need to pay to the hire vendor what ma? Interest. So interest is expenditure to us. Interest is expenditure to us. We need to pay now, we already paid. We need to pay. So that interest account debited to hire vendor. Now we need to pay the cash price and we need to pay the interest of first installment. We need to pay the interest of first installment. We are paying the first installment means we are paying the principal amount and we are paying the interest amount. At that point of time, hire vendor is the receiver or giver amma? Receiver. So hire vendor account debited to cash or bank account. Are you getting the point or not? Next. Asset is belongs to us, asset is belongs to hire vendor. Asset is belongs to us. What we will need to charge ma? Depreciation. So depreciation account debited to asset account. All the nominal accounts will be transferred to the P&L account. So P&L account debited to interest account to depreciation account. So this is the first year entries. These are the first year entries. In the time of second year, we will record the first entry? No. We will record the second entry? Down payment entry. We will record, we are not going to record. No. From third entry onwards, the repeating. Yes or no? So, in any subsequent year, repeated entries are 3, 4 and 5 and 6 with a respective figures for the year concerned. Are you getting the point or not? What is the first entry ma? Asset account debited to hire vendor. Only cash price or total hire purchase price? Only cash price. What is the down payment entry? Hire vendor account debited to cash or bank account. What is the interest due entry? Interest account debited to. Did you understand the concept why we are writing the interest due? Because initially we have to pay only principal. Now we are paying not only the principal amount, we are paying the interest of first installment. So that we are writing separately interest due for the first installment. And again, while paying the second installment, we need to pay again in due entry or no need to pay na? We need to record the again due entry. This is only for the first installment or second installment? In the second installment, while making the repayment of second installment, I need to record the second installment due entry. What is the same entry or different entry? Same entry. Interest account debited to hire vendor. At the time of making the installment, hire vendor account debited to cash or bank. Depreciation same entry and interest is same entry. And transferring the nominal accounts into the P&L account. So next one. If you prepare the hire vendor account, what is the first entry ma? We need to pay to the hire vendor, we have purchased the asset. So asset account debited to hire vendor account. To asset or buy asset? Buy asset. So what is the down payment entry? Hire vendor account debited to cash or hire vendor account debited to cash or bank. So in the hire vendor account to cash or bank, buy cash or bank, to cash or in bracket we are writing the down payment. So what is the interest due entry ma? Interest account debited to hire vendor account. So in the hire vendor account, which side we need to record? By interest. First installment or second installment? First installment. So next one. We need to pay the installment. What is the entry? Hire vendor account debited to, in the hire vendor account to cash or bank. Then we'll get the closing balance. What is this balance? Can you say? Only principal amount or interest amount? Only principal amount. Closing balance of interest we will write in the last column. Yes or no? That amount only this one. Closing balance of interest we will write the last column. That one amount only the what ma? Interest. In the second year, what are the entries will be repeated ma? So they will not be having the purchase of asset and they will not be having the down payment. Interest due. What is the interest due entry? Interest account debited to by hire vendor or to hire vendor? Interest account debited to hire vendor account. We are preparing the hire vendor account or interest account? Oh, by interest or to interest? By interest. Okay, now next installment payment. What is the entry for the installment payment? Hire vendor account debited to cash or bank. Okay, now again to cash or bank account. So we will get the what is the balancing figure we will get? Again the closing balance for the first installment after completing of first installment. Like that we need to prepare the hire vendor account. Next, we know the asset account, right? We know the asset account. In the asset account, while we have purchased the asset on the credit basis, so asset account debited to hire vendor account. In the asset account, to hire vendor, by hire vendor, to hire vendor. If you charge the depreciation, by depreciation. Again the closing balance and the opening balance. Like that we need to prepare the asset account. Okay, the next one. Journal entries in the books of whom? Hire vendor, hire purchaser. Hire vendor. Okay, now straight away I will discuss only the reposition sum. Okay, now so that please be very patient. I will discuss only journal entries here. After the lunch we can discuss the reposition sum. When the goods are sold under a hire purchase method, now we have to think from the point of view of whom? Hire purchaser, hire vendor, hire vendor. We will sell the goods. We will sell the goods. At the time of selling the on a credit sales, what is the entry? Debtor account debited to sales. Who is the debtor? Hire purchase. We should not write the normal sales because it is a hire purchase sales. So to hire purchase sales. Which price may again? Cash price. Which price may again? Cash price. And next, then after we will receive the down payment, or we will pay the down payment. We will receive. We will receive means cash comes in, goes out, comes in. Who will give to us? Hire purchaser. So what is the entry? Cash or bank account debited to hire purchaser. Next, what we need to write? Interest due. Interest due. Nothing but we have to receive, we need to pay. We have to receive. So that means we have to receive from the hire purchaser. Hire purchaser, debtor or creditor? Debtor. That interest is income to us or expenditure to us? Income to us. So what is the entry? Hire purchaser account debited to interest account. Hire purchaser account debited to interest. We are going to collect the installment, we are going to pay the installment. We are going to collect the installment. Cash comes in, goes out, comes in. So cash or bank account debited to hire purchaser account. So again the interest will be transferred to P&L account. Here the interest is income. So that we need to transfer to the P&L account credit side. What is the entry? Interest account debited to P&L account. The closing balance of hire purchase sales we need to transfer to the trading account. So hire purchase sales account debited to trading account. So again, what are the repeated entries? 3, 4, 5 and 6 are the repeated. So also 3, 4 and 5 are the repeated entries. If you see the hire purchaser account, what is the entry? First entry? Credit sales or cash sales? Credit sales. So hire purchaser account debited to hire purchase sales. In the hire purchaser account, to hire purchase sales. We are going to collect the down payment, we are going to pay the down payment. Collect. So cash or bank account debited to hire purchase. In the hire purchase account, by cash or bank, to cash or bank. That means if you see, hire vendor account is opposite to the hire purchaser. There we will get the to cash or bank. Here we will get what? By cash or. So we are going to, what is the interest due entry? For us interest is an income. Who will pay to us? Hire purchase. Hire purchase account debited to interest. To interest or by interest? To interest. What is the installment we are going to pay? We are going to collect. We are going to collect. So cash or bank account debited to hire. So by cash or bank, to cash or bank. On the closing balance. And again it will be the opening. In the next year, what are the entries will be repeated? We are going to collect the down payment. Already happened. Already completed. Only interest due entry. What is the interest due entry? Hire vendor, hire purchaser account debited to interest account. To interest or by interest? To interest. While collecting amount from installment, what is the entry? Cash or bank account? By cash or bank. And we will get what? Balancing figure like that. So this is how we need to record the, we need to post into the hire purchaser account and hire vendor account. These are the entries. Next one. We need to discuss the interest suspense method. Which method? Interest. In the case of cash price method, what is the first entry we have recorded? We have recorded only for the cash price. First entry we have recorded only for the cash price. But in the case of interest suspense method, we will record first entry for the higher purchase price. We will record first entry for the higher purchase price. So imagine we have purchased one asset. On cash price, on which price? There will be a higher purchase price, but asset should be debited for which price? Cash price. Asset should be debited for which price? Cash price. The total interest we need to transfer to interest suspense account. The total interest we need to transfer to interest suspense account. For us, the interest is called as, in the books of hire purchaser, in the books of whom? Hire purchaser. For us, the interest is called as expenditure. Debited or credited? Debited. But instead of writing the interest, we are debited to interest suspense account. Instead of writing the interest account debit, what we are writing ma? Interest suspense. It is a temporary account. It is a temporary account. At the stage of initially, we are recognizing the total interest, normal interest, total interest. Total interest we will transfer to interest suspense account. So we are going to collect from the higher vendor what ma? Cash price plus interest. We need to pay to the higher vendor how much ma? Totally higher purchase price. In the case of interest due, entry, interest is debited or credited? Debited. For us it is an expenditure. Which balance will be reduces? Interest suspense account balance will be reduces. Which balance will be reduces ma? Interest suspense account balance will be reduces. Initially we have transferred the total interest to a account called as interest suspense account. But at the time of interest due entry, what we are recording ma? What is the entry we need to record? Interest account debited to interest suspense account. What is the entry we need to record? Interest account debited to interest suspense account. Okay na? Did you get the point or not? So now we are going to start the discussion of reposition in the higher purchase chapter. Sir, reposition will be asked, will not be asked in the examination, sir, means will not ask. If you observe the previous 5 items or 10 items, one time also they did not ask in the CMA inter examination. But I will explain, no problem. What is the important point in this chapter higher purchase ma? Calculation of interest in each and every installment. And next one what ma? Calculation of cash price when in the case of given, in the case of not given, in the case of not given. And second one is the asset account we need to prepare in the higher purchaser books. These are the 2 most important topics from the higher purchase chapter. Okay na? If you are having the time means then only refer the reposition, otherwise no need to refer the reposition. Okay na? 99.99% reposition will not get in the examination, because in order to give the reposition he has to give for 14 marks. How many marks ma? 14 marks. So that what is the weightage of this chapter? Only 7 marks. So that they will give or they will not give? They will not give. But even though for the safe side we are learning, that's all. So how many types of repositions will be there? 2 types. First one is called as full reposition and partial reposition. Sir, what is the meaning of reposition? Transferring the right to use is called as a position. What is the transferring the right to use called as what ma? Position. We are taking back the position from the higher purchaser. We are taking back the position from the higher purchaser is called as reposition. Reposition. అంటే గూడ్స్ అనేవి ఏం చేస్తామమ్మా? అసెట్ అనేది పొజిషన్ కోసం ఇస్తామా లేకపోతే ఓనర్షిప్ కోసం ఇస్తున్నామా? పొజిషన్. We are taking the back. We are means who will take back? Higher vendor will take back the rights of position. So that it is called as reposition. What is the meaning of full reposition? Taking the total assets is called as a full reposition. What is the meaning of partial reposition? Imagine we have purchased totally 5 vehicles. How many vehicles ma? 5 vehicles. The higher vendor is taking back totally 5 vehicles. In that case is called as full reposition. If the higher vendor is taking only 3 vehicles as a reposition, then it is called as partial. Okay. First we are going to discuss in the concept of what ma? Full reposition. Whether full or partial, both are having same entries or different entries? Both are having same entries. Okay na ma? Whether the full reposition or partial reposition, different entries are same entries? Same entry. So imagine we are discussing entries in the books of higher purchaser. We are discussing entry in the books of higher purchaser. Higher purchaser will prepare the accounts called as asset account and higher vendor account. Asset account and higher vendor account. Initially we are having the balance. What is the meaning of 2 balance ma? Opening balance or closing balance? Opening balance. Opening balance is how much? 80,000. In the higher vendor account, we'll have which balance ma? Debit balance or credit balance? For the hire purchaser, hire vendor is the debtor or creditor? From the hire purchaser point of view, hire vendor is a debtor or creditor? Creditor. Will have which balance ma? Credit balance. So by balance brought down or to balance brought down? By balance brought down. So we are having the balance of 50,000. We are having the balance of 50,000. But what is the asset value ma? 80,000. The asset, what is the asset book value? 80,000. What is the balance? Total balance we need to pay to the creditor, how much? 50,000. So here the asset was repossessed. Asset was repossessed. What we need to write the entry in the books of hire purchaser. In which book ma? Hire purchaser books. So asset comes in, goes out? Goes out. Who will take back the asset? Hire vendor. Hire vendor is the receiver or giver? Receiver. So what is the entry? Hire vendor account debited to asset account. Hire vendor account debited to asset account. In the asset account, by hire vendor or to hire vendor? By hire vendor. That is equal to how much ma? 50,000. This is called as full reposition. This is called as what ma? Full reposition. What is the balance amount? 50,000. The asset was taken for how much? 50,000. So what is the asset value presented in our books of accounts? 80,000. But the asset taken over for how much ma? 50,000. The asset taken over from how much? 50,000. That means we are getting a profit or loss? Loss. That means we are getting what ma? Loss. What is the asset value? 80,000. We sold for rupees only for 50,000. That means you are getting a loss, should be transferred to P&L account. Are you getting the point or not? So what is the book value of asset? 80,000. For which value the hire vendor taken over? 50,000. So that we are selling the asset on a loss basis or on a profit basis? On a loss basis will be transferred to P&L account. In the P&L account we will record debit side or credit side? Debit side. So what we will write ma? To loss on reposition. To loss on reposition. So in the asset account we will record on which side ma? Credit side. In that particular account debit side means in the asset account we will record on the debit side or credit side? Credit side. So normally in the previous section, in the yesterday's class we have discussed the asset account. Yes or no ma? So what is the opening balance of asset? To balance brought down. We have sold the asset to the hire vendor. We sold the asset to the hire vendor. So what is the entry for the sale of asset to the hire vendor? Hire vendor is given cash, he will give the cash, he won't give the cash. He won't give the cash. Credit sales or cash sales? Credit sales. What is the entry for the credit sales? Credit sale of asset. What is the entry for the credit sale of asset? What is the entry for the credit sale of asset? Debtor account debited to debtor account debited to asset account. So here who is the debtor? Hire vendor is the debtor. So he has to pay how much ma? 50,000. But what is the asset value? 80,000. That means we are getting a loss or we are getting a profit? Sir, here even though we need to pay. What is the first entry amma? So hire vendor account debited to asset account. Loss on reposition will be transferred to which account ma? P&L account. In that case what is the entry? P&L account debited to loss on reposition account. Is there any doubts? Is there any doubts? Next one. In the books of whom ma? Hire vendor. In the books of hire vendor. So up to the date of reposition, we need to calculate the interest. We need to calculate the interest and we need to calculate the depreciation also. What are the two items we need to calculate? Up to the date of reposition, in the hire purchaser books, we need to calculate the interest and we need to calculate the depreciation. In the same way, in the hire vendor books also, we need to calculate the interest or no need to calculate the interest? We need to calculate the interest. Up to the date of reposition or before? Up to the date of reposition. For the interest, what is the entry ma? Hire purchaser account debited to interest account. So hire purchaser, we will collect from the hire purchaser. So that hire purchaser is a debtor or creditor? Debtor. To interest or by interest? To interest. Nothing but interest due entry. We will record up to the date of reposition or before amma? Up to the date of reposition. On reposition of the goods on agreed value. What is the meaning of agreed value, sir? We need to calculate. What is the meaning of agreed value ma? We need to calculate as per the question. Okay na? So here the goods reposition means Asset comes in or goes out? Comes in. From who will give the asset? Hire purchaser. Okay. Giver, debit the receiver, credit the giver. Okay, now we should write asset. We can write. We can write asset. What we need to write? Goods repossessed. We cannot write the asset. For us, it is a good. For us, it is a good. So that instead of writing an asset, what we need to write, goods repossessed account debited to hire purchaser account. Are you getting the point or not? In the hire purchaser books, what is the entry, hire vendor account debited to asset account. In the hire vendor books, what is the entry? Goods repossessed account debited to hire purchaser. Hire purchaser, receiver or giver? Giver. Asset comes in, but we should not write the asset. For us, it is a good, it is an asset. For us, it is a good. So instead of writing the asset, which account we are debiting? Goods repossessed account we are debiting. Okay, now next, for transfer of balance in the hire purchaser account to the P&L account. Imagine, so we are having what, hire purchaser account. We are having what, hire purchaser account, and we are having the which balance, hire purchaser account. For the hire vendor, hire purchaser is debtor or creditor? For the hire vendor, hire purchaser is a debtor or creditor? For the hire vendor, hire purchaser is a debtor or creditor? Debtor. So that means debit balance or credit balance? So two balance brought down. Imagine 50,000. Imagine what, 50,000. We need to calculate the interest or no need to calculate the interest? We need to calculate the interest up to the due date. What is the entry? What is the entry, Interest, due entry. Hire purchaser account debited to interest account. Much better. Hire purchaser account debited to interest account. So next one, what is the goods repossessed entry? Goods repossessed account debited to hire purchase. If there is any balance, we need to transfer to which account, P&L account. Okay. Next one, expenditure incurred for the goods repossessed. So after repossession of goods, we will incur certain expenditure in order to repairs, in order to get the repair, and then we can sell that particular asset. Are you getting the point? Imagine this is a hire vendor account. In the hire vendor books, which account will prepare, hire purchaser account. What is this account? Hire purchaser. In the books of hire vendor, we are preparing the hire purchaser account. Normally we will have which balance? Which balance we will have, For the hire vendor, hire purchaser is a debtor or creditor? Debtor. For the debtor, what is the opening balance? Two balance brought down. Sir, completed. So imagine this here, how much, 50,000. And next, up to the date of repossession, what we need to calculate? We need to calculate the interest. What is the interest entry? In the books of hire vendor, what is the interest due entry? We need to collect from the hire purchaser. So interest for us, what, income or expenditure? Income. What is the entry? Hire purchaser account debited to interest. To interest account, how much, 10,000. Imagine interest account is equal to how much? 10,000. Now we are repossessing the goods. Now what we are doing? We are paying the installment, or we are not paying the installment? We are not paying the installment. Now hire vendor want to repossess the goods. What is the entry for the goods repossession, Sir, who is the giver? Who is the giver? Hire purchaser. Debit the receiver, credit the giver. What we will do? We will do the credit side. In the debit side, what we need to record? Goods repossessed or asset? Goods repossessed. So in the hire purchaser account, what we need to record, Buy goods repossessed. Okay, na? So how much? I have given only 40,000. I have given only how much, 40,000. What is the balancing figure? 60,000 and 60,000. What is the balancing figure, 20,000. We need to transfer to which account? P&L account. We will receive or we are not going to receive? We are not going to receive. How much amount we need to collect? We need to collect totally 60,000. But you have collected only how much, 40,000. That means we are getting a loss or profit? We are getting a loss should be transferred to P&L account. Okay, up to here. Next we are going to discuss which account ma? Goods repossessed account. Which account ma? Goods repossessed. What is the entry for the goods repossession? Goods repossessed account debited to hire purchaser account. To hire purchaser or by hire purchaser? To hire purchaser. After repossession of goods, we will incur certain expenditure. We will incur certain expenditure in order to restate the asset. In order to restate the asset. After that repair only we can sell. Otherwise we can sell or we cannot sell. We cannot sell. We are incurring that expenditure on the goods reposition. On the asset, on what ma? On the asset. So that kind of expenditure is called as capital expenditure or revenue expenditure? Capital expenditure. Capital expenditure. So we need to add back to the asset, we need to reduce the asset, add back. Okay, now we are having which balance ma? Goods repossessed having which balance? Debit balance. In order to increase that particular asset, what we need to do? We need to do debit. That means what is the entry ma? Goods repossessed account debited to cash or bank account. So to goods repossessed account, to cash or bank account, expenses. To cash or bank account what ma? Expenses. After incurring certain expenditure, we will make the sales. We will make the sale. At the time of sale, what is the entry ma? We will collect the cash. Cash or bank account debited to goods repossessed account. Comes in the goes out. Goes out. So credit side. In the credit side, what we will record ma? By cash or bank account. The balancing figure will be transferred to P&L account. Imagine we are having the goods repossessed of rupees how much ma? 40,000. We incur certain expenditure of rupees 10,000. We are sold for 60,000. That means we are getting a profit or loss? Profit. What is the total asset value? 50,000. But you are sold for rupees only 60,000. What is the balance amount? 10,000. It should be transferred to P&L account. In the P&L account, debit side or credit side? Credit side. Profit or loss? Profit. Are you getting the point or not? These are the entries will be recorded in the which books ma? Higher purchaser, higher vendor. Higher vendor. Once again we are going to discuss. What is the first entry for the goods reposition? Sir, in the books of higher vendor, what is the first entry ma? We need to charge the interest up to the date of reposition. What is the first entry? We need to charge the interest. We don't need to charge the interest. We need to charge the interest. So what is the opening balance? 2 balance brought down, buy balance brought down. 2 balance brought down. Because for the higher vendor, higher purchase is a debtor or creditor ma? Debtor. So we are having the debit balance or credit balance? Debit balance. First we need to charge the interest. What is the entry for the interest charge? Higher purchaser account debited to interest account. So in the higher purchaser account, which side ma? Debit side to interest. Then after what ma? We will repossess the goods. At the time of repossession of goods, who is the receiver? Who is the giver? Higher purchaser. So debit the receiver, credit the giver. We should write the asset, we should not write the asset. We should not write the asset. Instead of asset, we are recording the word called as what ma? Goods repossessed. What is the entry? Goods repossessed account debited to higher purchaser account. In the higher purchaser account, buy goods repossessed. In the goods repossessed account, what ma? To higher purchaser account. Are you getting the point or not? After that, if there is any balance, means we need to transfer to which account ma? P&L account. In the case of complete reposition only. In the case of complete reposition. In the case of partial reposition, we are having any balance, means what we need to write ma? Carry down. Balance carry down. In the case of partial reposition, in the place of P&L account, what we need to write ma? By balance carry down. That's all. And left out. We can leave that question. Okay na? In the case of complete reposition, the balance will be transferred to P&L account. In the case of partial reposition, the balance will be carried on. We will maintain that balance, or otherwise we will pay that balance. Are you getting the point or not? In the case of complete reposition, we will transfer to which account ma? P&L account. In the case of partial reposition, we will make the carried on, or we will make the brought down. We will make the carried on. Okay na? Are you getting the point or not? Sir, what is the agreed value, sir? Okay, next in the higher purchaser books, what ma? We need to charge the interest or no need to charge the interest? We need to charge the interest. For charging the interest, what is the entry? Interest account debited to higher vendor account. And again we need to charge the what ma? Depreciation also. For the depreciation, what is the entry? Depreciation account debited to asset account. On the return of goods, what is the meaning of return of goods? Reposition. What is the meaning of return of goods ma? Reposition. Asset comes in, goes out. Goes out. Who is the receiver? Higher vendor. Higher vendor account debited to asset account. Depreciation we will charge, and the balance will be transferred to P&L account. In which balance will be transferred to P&L account ma? Asset balance will be transferred to P&L account. Here in the higher purchaser account, balance transferred to P&L account. This is in the case of complete reposition or partial reposition. complete reposition. In the complete reposition, we'll get the balancing figure in the higher purchaser books. In which account ma? Higher vendor account, asset account, asset account. Okay na, we'll get the balancing figure in the asset account. That balancing figure we need to transfer to which account ma? P&L account. Are you getting the point or not? In the higher vendor books, in which account we'll get the balancing figure? Higher purchaser account. In the higher vendor books, which account ma? Higher purchaser account. It will be transferred to P&L account. In order to understand this question, we need to solve certain question. Okay na? Please take the workbook. With the help of question, I will explain, no problem. What is the first basic thing we need to remember? In the case of reposition, we need to charge the interest and we need to charge the depreciation up to the date of reposition or middle of the year. Up to the date of reposition, in which books ma? Higher purchaser books. In the higher vendor books, what we need to charge? In the higher vendor books, up to the date of reposition, we need to charge the interest and then we need to pass the reposition entries. Are you getting the point or not? Please open question number 7. This is called as partial reposition. This is called as what ma? Partial reposition. In the case of full reposition, in the higher vendor books, we will get a balancing figure in the which account ma? Higher purchaser account will be transferred to which account? P&L account. In the case of full reposition, in the books of higher purchaser, we will get the balancing figure in the books of, in which account ma? Asset account will be transferred to P&L account. Okay. So next one, on 1/1/2020, A purchased 5 machines from B. Who purchased ma? A. A purchased means A is a higher vendor or higher purchaser? Higher purchaser. B is a higher vendor. A is equal to higher purchaser. B is equal to higher vendor. Okay, next one. Payment was to be made how much ma? 20% down and the balance in 4 annual installments of rupees how much ma? 2,80,000. 2,60,000 and 2,40,000 and 2,20,000 commencing from 31/12/2020. That means yearly or monthly or yearly. The installments are called as yearly installments. Okay na. The higher vendor charges the interest of rupees how much ma? 10% per annum. A return of the depreciation of percentage how much? 20% on original cost. That means straight line or WDV. Original cost means straight line or WDV amma? Straight line method. So next one, on A's failure to pay the installment due on 31/12/2021, which installment was not paid? First installment or second installment? First installment due date on 31/12/2020. So what is the second installment due date? 31/12/2021. So here the higher, who is the higher purchaser? A. A was unable to make the repayment. A was unable to make the second installment. Which installment ma? Second. That means up to the second installment we need to calculate the interest and we need to calculate the depreciation in the A's books. And in the B's books we need to calculate the interest up to the date of default on from up to the date, which date ma? 31/12/2021. After negotiations on 1/1/2022, which date ma? 1/1/2022 means next day to the second year. Yes or no? What is the date of reposition? 1/1/2022. What is the date of reposition ma? 1/1/2022. B agreed to leave 2 missions with A. B agreed to leave what ma? How many missions? 2 missions with A. Adjusting the value of the another 3 missions against the same amount due. Okay. Against the amount due. The missions bring the value of what? Which value ma? Cost less 40% per annum, depreciation on the WDV basis. Sir, here B was taking the goods on which value ma? Cost less 40% per annum. So depreciation on WDV or straight line? WDV. This calculation for calculation of agreed value. This calculation for what, ma? Calculation of agreed. What is the meaning of agreed value? The repossessed value by a higher vendor is called as a agreed value. How to calculate this agreed value, sir? We can see, no problem. B, after spending 6,000 on the repairs of each of such machine was sold for how much, ma? 70,000. So repairs of rupees how much, ma? 6,000 per mission, total per mission. Sales also 70,000 per mission, total permission. Both are given for permission or total per mission. Not permission, per mission, per one mission. Okay. On which date they have sold, ma? 30th June 2022. Prepare the relevant accounts in the books of A and in the books of B. Shall we start? Okay. What is the given information? Partial reposition. Okay, what is the information given? 20% down. They are given the rate of interest. What is the rate of interest? 10%. And they are given the installments. Okay, now. First of all, we need to calculate the interest in each and every installment and the cash price. Cash price given or not given? Cash price given or not given? Not given. Then how we need to find out? Reverse method. Okay, I will follow my method. If you want, you can follow your method. No problem. What is the first thing? Question number, ma. Please be participate. You will get understand. No problem. Okay, na? Okay, now the time is 3:10. We can complete by the end of the 3:30. Okay, now after discussion of this question, I will leave the hire purchase. I will not discuss any more related to hire purchase. Okay. What is question number 7? What is the first one? Partial reposition only. Okay. What is the working note number 1? Don't write anything. Don't write anything. Please participate. I will do the question. Okay, na? What is working note 1, sir? Calculation of interest in each installment and cash price. Okay, na? Which method we need to follow, ma? Backward method. That means how many installments we are having? 4 installments. That means I will start with the 4th installment. Sir, participate means not to talk. You should say the things related to the question. Okay, na? So 4th installment. What is the amount of 4th installment? 2,20,000. We need to reduce the interest. What is the rate of interest? 10. So minus interest. 2,20,000 into 10 divided by 110. Yes or no, ma? How much? Reduce 20,000. How much we will get? 2 lakhs. This is the amount outstanding or not? Outstanding. At the end of the 3rd installment, before the payment of 3rd installment. Before the payment of 3rd installment. Before the payment of 3rd installment, not only the 2 lakhs, we need to add back what, ma? 3rd installment also. So what? How much? 2 lakh. What is the total amount? 4,40,000. Reduce what, ma? Interest. 4,40,000. If you reduce, how much will get? 4 lakhs. Boys are talking, girls are participating. Okay. Add back. Not interested means I can leave and I can skip this concept. Okay, na? If you are interested or not interested? Okay, then participate. 2nd installment, how much? Minus interest, how much, ma? 6 lakh. Add back first installment. How much, ma? 2 lakh. If you sorry, 8 lakh. 80,000. Reduce interest. 8 lakh. Add back. Given or not given? Sir, down payment 20% means this is how much, ma? 80%. This is 100%. How much? Down payment 20% means this is 80%. Okay, na? What is the first working note? Calculation of interest in each and every installment. Okay, we know the interest amount and we know the cash price. We can write the entries, or we cannot write the entries, sir. We can write. So directly we are going to prepare the accounts. Okay, na? Please participate. First, which account we are going to prepare, ma? Before that, we are going to calculate the profit on reposition, loss on reposition, we need to calculate. So calculation of profit or loss on goods repossessed. Calculation of profit or loss on goods repossessed. Sir, what we need to calculate, ma? Agreed value or book value? Agreed value. So we need to calculate the agreed value and as well as book value. We need to calculate the agreed value as well as book value. For the agreed value, how much percentage we need to take? What is the percentage we need to take, ma? Agreed value. The higher vendor is taking at a 40% of WDV or SLM, ma? WDV. In our books, what is the rate of depreciation? 20% SLM. 20% SLM. Up to how many years we need to do the depreciation? 2 years or 1 year? 2. At the end of the second year, the higher purchaser is not made the payment at the end of the first year, at the end of second year. That means for how many years we need to do this calculation? 2 years. So, okay. Agreed value means how much, ma? 40% WDV or SLM, ma? WDV. Okay. Book value means 20% SLM. 20% SLM. Participate, Rakesh. First, what is the actual amount? How many assets are repossessed? 6, 7, 8. We are having 5 missions. They have repossessed how many, ma? 3. Per mission how much? Per one mission? 2 lakhs. That means what is the starting purchases value? Purchase value is equal to how much? 6 lakh. Here also how much? How did we get 6 lakh? 2 lakh into 3 missions. 2 lakh into 3 missions. Next one, reduce the depreciation. Sir, here how much, ma? 6 lakh into 40%. How much? 2 lakh. If you reduce, how much we will get? 3 lakh 60 minus depreciation. Now, on which amount we need to calculate, ma? WDV or SLM, ma? WDV. That means 3,60,000 into 40%. How much? 1 lakh. If you reduce, how much we will get? 2 lakh. What is the meaning of 2,16,000? Agreed value. Okay, agreed value means goods repossessed value. Goods repossessed. For this amount, the higher vendor is taking back the goods. What is the amount for which amount hire vendor is taking back ma? For 2,16,000 hire vendor is taking back the goods. What is the book value we need to find out? What is the book value? Why we need to find out the book value? In order to know the profit or loss on the reposition. So what is the rate we need to use ma? 20%. SLM or straight line? Both are same. SLM and straight line. Okay, 6 lakhs into 20% is? Huh? 1,20,000. How much ma? 4 lakh? Again 4,80,000 into 20%. Same amount or different amount? 1,20,000. How much? 3 lakh? What is the meaning of 3,60,000? Book value. In our books, what is the value of the assets ma? 3,60,000. But we have taken for 2 lakhs. That means we have sold for 2,16,000. Yes or no? From the higher purchaser point of view, getting loss or profit? Loss. How much? 1 lakh? 44. Loss or profit? Loss. Should be transferred to? Should be transferred to P&L account. So these two working notes are important. Remaining we can do easily only. Okay na? So what is the first working note? Calculation of interest in each and every installment. We have followed what ma? Backward approach. You can do any type, no problem. Next one what ma? Calculation of profit or loss on sale on reposition. So agreed value means what ma? For the value which was taken over by the higher vendor. What is the book value of asset taken over? 3,60,000. But how much value the asset taken over ma here? 2,16,000. That means we are getting a loss or we are getting a profit? We are getting a loss. Okay na guys. Now we need to do the accounting in the books of higher purchaser and in the books of higher vendor. Who is the higher purchaser? Higher purchaser means A. So in the A's books of accounts, which account we need to prepare ma? Which account we need to prepare ma? B account and okay, remember the entries. Interest method or cash price method? Cash price method. What is the first entry in the books of higher purchaser? We will purchase the goods or we will sell the goods? We will purchase. We will purchase the nothing but in our point of view that one is an asset. Asset comes in or goes out? Comes in. Credit purchase or cash purchase? Credit purchase. So what is the entry? Machinery account debited to B account. So who is in the B account? By machinery or to machinery? By machinery. What is the amount we need to record? How did we get ma? 2 lakhs into 5 machines. How much? 10 lakhs. In the machinery account. What is the entry? Machinery account debited to 10 lakhs? 10 lakhs. Okay, what is the next entry? Next entry. How much amount we have made the down payment? Are interest unda leda? But participate cheyandi. 2 lakhs how much ma? What is the entry? B is the receiver. Cash comes in or goes out? Goes out. So what is the entry? B account debited to cash or bank account. How much? 2 lakhs. In bracket down payment. What is the next entry? Interest due entry or interest paid entry? Interest due. What is the entry? Interest account debited to? In the B account, by interest or to interest? By interest. What is the interest in the first installment? First installment how much ma? 80. Second installment 60,000. Okay, that one is sufficient, no problem. 80,000. How much amount we have made the first installment? 2,80,000. What is the entry? Higher. Who is B account debited to cash or bank account? How much? 2 lakh. What is the balancing figure? 10,80,000 and 10 lakh. 6 lakh is the balancing figure. 2 balancer by balancer. 2 balance carry down. Carry down. By balance brought down. How much ma? 6 lakh. Okay. We are not paid what ma? Second installment or first installment? Second installment. Up to the date of reposition, we need to calculate the interest. So what is the interest for the second installment? 60,000. What is the entry for the interest due? Interest account debited to? By interest or to interest? By interest how much? 60,000. Okay. Now we need to calculate the depreciation for the machinery. What is the entry for the depreciation? By depreciation or to depreciation? Okay, what is the percentage? 20%. So 10 lakhs into 20 means 2 lakh. SLM or WDVM? SLM. So how much? 10 lakhs, 10 lakhs. How much ma? 8 lakh. This will be carried on or brought down? Brought down. 2 balance brought down. So do for the second year also, because we are not 2 lakhs. So by depreciation or to depreciation? 2 lakhs. What is the balance amount? 6 lakhs. By balance carry down. Okay. Up to the date of reposition, we have calculated the interest and we have calculated the depreciation. From here onwards, we need to pass the reposition entries. Here onwards, what we need to pass ma? Reposition. What is the agreed value? 2,16,000. What is the agreed value? 2,16,000. But the reposition has happened on which date ma? That means next year or current year? On which date ma? 1/1/2022. On which date? 1/1/2022. What is the current year ending? What is the date of current year ending? What is the date of purchase? Date of purchase is how much? 1/1. So this one is also 1/1/2020. This one is on year end. What is the year end? This one is also 31st or 2020. So that means 1/1/2021. Here what is the ending? 31st/12/2021. What is the date of reposition? 1/1/2022 or same data? 1/1/2022. That the reposition happened current year or next year? Next year. Immediately. Next year immediately. That means no need to charge the interest for the next year. No need to charge the depreciation for the next year. Okay na guys? So that means we can close here. If you close, what is the balance? 6,60,000. So what is the brought down value? 6,60,000. Now we can write the reposition entry. Yes or no ma? So what is the goods reposition entry? Who has taken over? Higher vendor. Who is the higher vendor? Mr. B. Okay na? Comes in na goes out? Goes out. So what is the entry ma? Mr. B account debited to mission account. Mr. B account debited to mission account. To mission or by mission? To mission. How much ma? What is the agreed value? 2,16,000. So we are getting a loss or we are getting a profit? We are getting a loss. Where we need to transfer? P&L account. We are getting a loss means in the machinery account, which side ma? Debit side or credit side? In the machinery account, debit side or credit side? Credit side. So what we need to write here? First we need to close na? What is the balance? 6 lakh. We need to carry forward. We need to carry forward. What is the entry for the goods reposition? B account debited to B account debited to asset account. What is the asset here? Machinery. B account debited to mission means by B or to B? By B. What is the reposition value? 2 lakh? 2,16,000. We are getting a loss or we are getting a profit? We are getting a loss. How much? By P&L, 2 P&L. 1,44,000. And remaining, do the balance carry down and brought down sufficient. Remaining what ma? Balance carry down and brought down. It will be sufficient. Okay na? So this is called as complete reposition or partial reposition. Partial reposition. In the case of complete reposition, the account will be closed. The account will be closed. Okay na? Is there any doubt? In the same way we need to do for which account ma? In the books of hire vendor or hire purchaser? Hire vendor. Which account we need to prepare ma? A account. Same account opposite or reverse? Same. B account is opposite to the A account. Here the debit side means there the credit side. That's all. But we need to transfer to which account ma? Goods repossessed account. We need to transfer to which account? Goods repossessed account. Can I prepare the goods repossessed account? What is the entry for the goods reposition in the books of hire vendor? Okay na? In the books of hire vendor, what is the goods repossessed account entry ma? Goods repossessed account debited to. This is called as goods repossessed account. Okay na guys? Goods repossessed account. What is the entry? Goods repossession account debited to hire purchaser. Who is hire purchaser? Mr. A na B? Mr. A. What is the agreed value? 2,16,000. 2,16,000. After that, we have incurred certain expenditure for the goods repossessed. Whether it is a capital expenditure or revenue expenditure, capital expenditure. We need to add back to the asset. What is the asset here? Goods repossessed. So what is the entry? Goods repossessed account debited to cash or bank account. To cash or bank, by cash or bank? To cash or bank. How many missionaries we have repossessed? 3 missionaries. Each one carries how much? 6,000 or 4,000? 6,000. So that means what ma? 6,000 into 3 into 4? 6. How much? 18,000. 18,000. After that we have sold the particular missions. Yes or no ma? So for how much value we have sold? 70,000. Per mission total? Per mission ma? 70,000 per one mission into 3. That is equal to how much? 2 lakh? 2,10,000. What is the entry for the goods sold? Cash or bank account debited to goods repossession account. By cash or bank? To cash or bank? By cash or bank. How much? 2,10,000. What is the balancing figure? 24,000. Debit side or credit side? Credit side. 24. What is the meaning of this one? Profit or loss? Loss. Loss on sale of goods repossessed. Loss on sale of goods repossessed will be transferred to the P&L account debit side. In this way we need to prepare the goods repossessed account. Are you getting the point or not? Whether it is a complete reposition or whether it is a partial reposition, same entries are different entries are same entry. So one second. So this is the overall discussion about the hire purchase. Please give the last priority for the reposition of goods. Okay na? In the examination they will ask, they will not ask. They will not ask, no problem. Even though if they have asked means we can try, no problem. Okay na? What is the main principle? Please remember, we need to charge the interest and depreciation up to the date of reposition. What is the meaning of agreed value? Goods repossessed value by the hire vendor. We need to see the difference and difference will be transferred to the P&L account. In the case of partial reposition, we are having the balance means, please write what ma? Carry down values. Please write what? Carry down. So this is the total discussion of hire purchase. Thank you.